as severely, but they are down significantly, simply because the airlines have been allowed to continue with connections and points, just with much less frequency. So the world market has been stunned.
You're alive, finally.
A bit frozen, but we remain confident that it will come back. We talk to airline CEOs every day, every week. Most of the governments have come forward with their support. Certainly here in the United States, they have. That has caused, there's been a real thaw with respect to the thinking and the planning forward with respect to markets. So I'm, believe it or not, I'm more confident right now than I've been in quite some time, and I believe the thaw is beginning.
Dave, you guys are announcing that you're going to be cutting your payroll by 10%, basically 16,000 of the company's 160,000 approximate employees, with the biggest impact being on the commercial airplane division. Are you confident that those job cuts, along with the slower production rates that you're introducing,
Ben is raging
now all the way over the next couple of years, will be enough? In other words, that you guys are taking the steps that will avoid having to come back and perhaps cut even further, let's say 9 months or a year down the road?
Well, I'm never going to say that with pure authority, because I'm not sure what the world's going to look like in 9 months. But we have factored in everything we can think of. The recovery with respect to passenger traffic that we have modeled is roughly 3 to 5 years before we get back to the environment that existed pre-COVID. We get back to 19 levels in around 3 years, and then to get back on the growth track, it might take another couple of years. So we've been conservative in that respect. Our planning is mostly built around the refleeting of a variety of airlines. Everyone is looking at their fleet plans. The retirements are going to be significant, and the investments, while not what they used to be, will continue to be made to get more fuel-efficient, cleaner airplanes in the sky and create competitive advantages for each of our airlines. So that's what we've modeled. We have stress tested the model in as many ways as we can think of. The production rates are tailored for that model, and we believe the markets and the credit markets and liquidity will be there for us. But I don't want to suggest that in 9 months, if there's another spike, that things won't change.
Hey, Dave, let's talk about liquidity. You guys have $15.5 billion in cash on hand. That's how much you had at the end of the quarter. But you've made it clear you're going to have to borrow billions more, likely from the private market, but also potentially from the federal government. Where do things stand in your discussions with the Treasury Department?
Well, we have kept the Treasury Department apprised of our situation for quite some time. I think they know precisely our situation, our needs broadly. The Fed program in combination, when they got announced, credit markets did loosen up a fair amount, which means that we have private options or public options available to us. At this stage, just know that we're going to evaluate all of those options. We need liquidity. Our industry needs liquidity. Our supply chain needs liquidity. So we'll evaluate all those options. We'll file applications where appropriate, and we'll be in the public markets.
Kramer, thank you for coming on. I want to follow up on what Phil just said. To me, the optimal thing for you would, just because of the way that the Federal Reserve is working, giant loans. I would like to think that you could take off the table that you want to go to Treasury and give them warrants or stock. People don't want that. They want to be shareholders of a company that is borrowing money, not shareholders of a company that is co-shareholder with the government. Can't you take that off the table?
Jim, I don't want to predict any outcomes here. We will be in the markets. We will explore all of these options. We believe we have good credit. We believe in the future of our company and the ultimate ability to pay down debt. So we'll be in the credit markets. We will. At least
somebody believes in you.
Secure our liquidity, and we will explore all of these options. But I don't want to predict outcomes, certainly not at this time.
Okay, yesterday we had Gary Kelly on from Southwest, a good client of yours. And one of the things he said was that a lot of people do want to fly, but they don't know where they want to go.
Market set to jump on some Gilead shit, huh? Here's your Dow Jones. We're up more than 400%, applied opening of 500 points. S&P 500 NASDAQ futures traded higher by 2%. A study of the Gilead remdesivir drug conducted by the National Institute of Allergy and Infectious Disease Met its primary endpoint, the drug maker said, lifting expectations for a potential coronavirus treatment. Gilead also released the results of its own study, showed improvement in patients taking remdesivir to treat the virus. Gilead shares jumped 9.3% after a brief halt. Sentiment was also lifted. As Alphabet shares gained 8.6% pre-market after the tech giant reported a revenue growth decline that was less steep than forecasted. Company's YouTube ad revenues also beat expectations. All our eyes are on the Fed. Let's go, baby.
And with masks, you're correct, and that prevents that, that proximity question. So it really is a much safer environment than most of the public understands. I do see the industry beginning to rally around all of the protocols that will be required going forward. I don't want to go too fast because I want it to be as fact-based as it can.
Of course, pants are dipping.
All of the agencies that are involved in this, the FAA, the TSA, the CDC, they all similarly want the facts. They want to lay it out. The protocols and guidelines, I think, will be reasonable, and it will lead to a recovery of our industry.
Mr. Calhoun, it's David Faber. I just want to see if I can get a bit more clarity from you in terms of your various efforts to raise capital. You said you will go to the public markets. There is some reporting that says you'll be offering bonds, a large amount of bonds in the public markets soon. Is that going to be the case? And if so, when? And does it mean that you don't in any way access government aid?
Yeah, David, I hate to give the same answer to a slightly different question, but we are going to look at all of our options. The public markets are in better shape than they were several weeks ago, post the CARES Act, post the Fed program. So we're going to look at those. We're going to look at the tools that are embedded in the CARES Act. We're going to look at the Fed program, and we're going to make decisions that are in the best interest of the Boeing company and our share owners. I just don't want to get ahead of ourselves, and I can't predict the outcomes.
Okay.
Hey, Dave, workforce reduction, 10%. There had been reports that you told some union officials that percentage could be much higher. Is 10% firm?
Yeah, I don't know of any.
Coffee is what we needed. My God.
Other than what we've announced this morning, which is a 10%.
Sweet Lou, what's good?
And a bigger percentage, obviously, in our commercial business. Roughly 45% of our revenue comes from the Defense Department, government, and defense programs.
That's what we needed right there.
So the
Nice
headcount
cup of coffee
reductions
to
in
get
those
us up.
areas, of course, are far, far less.
How you doing, Sweet
as
Lou?
we continue to invest in what are otherwise growth opportunities.
I tried to update my futures ripping. Yo!
Dave, it's Phil LeBeau again. You guys have with the
tried to
737
update
Max. Well, you have
my
not
alerts
publicly
and
said
overlay
that the
last
timeline
night.
is slipping and pushing a little bit
Stayed up
further
till
into
midnight
the
trying to
third quarter.
figure that shit
For
out
everybody
for
that
what you
we've
guys
talked
were
to, it's
asking
pretty
for
clear
yesterday, and I
that's
couldn't
happening.
figure it the fuck
What seems
out.
to be the issue when it comes to these software glitches? That it seems like you guys identify them. There was work being done on them. But, it seemed like
Wish y'all yesterday had some other shit going on.
where these
It was
continue
a
to
flat
pop up.
day.
Are
That
you
was yesterday
confident you
right
can
there.
hit
It's
that
flat
third
as
quarter
fuck. Nothing
delivery,
happened.
or at least on grounding of the Max?
Yeah, Phil, we are.
Kept the stream on for you though. Let's
start out
go,
by saying
futures
the
ripping.
Max
We
program, believe it or
appreciate
not,
that.
Despite these deferrals or extenuating moments,
Wow, why is 80 a
it's
day
going
all
very
fucked?
well. The work is going well. The flight tests are going incredibly well. We've had almost 400 ferry flights, all of them without a hitch. So it's all going well. There is a mountain of
293 was what it
documentation
last
that
traded
has
at?
to be completed. Sometimes the documentation work is confused.
Like
with
the whole
what-
market is
what
raging up.
referred to as
ADMA
a
is still
software
fucking
glitch.
down. Nobody gives a
We
shit.
have software glitches in the performance of the airplane at all, on our test flights or otherwise. So we're going to complete the documentation. There is no doubt COVID and the virtual work that has to now get done between our folks and the FAA, that's taken a little bit of a toll on this process as well. But I remain confident and constructive about the whole thing. And if I could put a bigger
He
context
remains
on it,
confident and
as you
constructive,
know, the
Chad.
Max for us was a supply issue, of course, in the first quarter because we paused our production, etc. But there was a market, a significant market. That is now sort of
Sweet
transitioned
Lou, what's
to
good?
a
It's
demand
lit,
issue.
baby.
So yes, we have 450 airplanes that are ready to be shipped. but we are working with all of our customers to defer and to move
Took some
deliveries,
allergy
etc.
medicine.
We're confident we
Took
can
a
do
swing
it.
position
Priority
yesterday in
for
PFE,
us,
looking good this morning.
Moved from a bit of a supply issue to
My
now
buddy
a
last night
demand
was calling
issue.
me about
And,
pets.
We'll work our way
He really
through
likes
it. We'll work our way
pets.
through it steadily.
Just
but
doing this
that's the big
JOB
picture.
thing.
Dave,
Market
one
Tech,
last
what's
question.
good?
It has to do with
What's
COVID-19
good?
impact, not only for your company, but
Look at
really
Pets
all
jumping,
of the
though. One second,
industrial
let me blow my
manufacturers, really
nose.
all companies around the country and around the world as they start to open up again and get back to work. How slow will you expect this process to be? Because clearly you're not going to have people reporting to shifts in the same fashion. There are safety protocols that have been put in place. How slow do you expect this ramp up in not just production, but getting back to work to be?
Well, I'll describe it a couple of ways. First, we are opening factories as we speak. We are getting back to work. Of course, our big locations are in the Puget Sound and now in South Carolina. Our supply chains, believe it or not, are in the
It's too early for me. I almost tripped and fucking fell
and so
down
if
my
we can
stairs.
rely on the supply chains.
Did you touch my
now
drum
with
set?
our reduced production rates. We do think we can steadily.
I touched
improve.
the drum set,
It
bro.
will cost us.
I put my
in
balls
terms of productivity,
on your drum set.
because of the circumstances you're describing. We've engineered the work differently. We do have different shifts coming in at different times. So there will be productivity penalties associated with that, probably for a quarter or two. And then I think we can achieve the kind of stability,
17
maybe
and a
even
quarter.
better stability than we had pre-virus, simply because of the
Where did we
reduced rates.
open yesterday?
So I think that's the way, at least for Boeing, it's likely to unfold over
We're going
the
to
next
open at
couple
the same
quarters.
price?
We're focused
Pen.
first and foremost on the safety of our people. We've taken every precaution we can think of. We get data every day.
ADMA
See any
opened
trends
way
that look
higher.
against us, we will not be afraid to take the right actions and suspend again. But at any rate, we're in a decent
What's the
place.
SPY doing today?
Like I said at the beginning, I'm feeling a bit of a thaw, and I'm hoping it's a thaw, and we're going to continue to work towards reopening.
Boeing CEO Dave Calhoun joining us remotely. Guys, just within a couple of hours of the company reporting its first quarter results. Dave, we appreciate you joining us. Carl, I'll send it back to you.
Dave, we
Busy
appreciate
morning.
you
I know you guys
joining
have a lot
us.
of other big guests and a lot of news coming out.
This 5-1 calls on
Busy
GE
news,
printed
Dave.
for me
Thanks,
yesterday.
As always, our Phil LeBeau for bringing
Boeing
us,
just
Dave
reported
Calhoun
well,
of
so that's
Boeing.
probably good.
Jim,
GE?
I mean, the thaw is beginning is the line that's made the wires.
Looks like
and
it did
does
good.
seem like the
Looks like it
market's
did good
starting to
through
get
the
its-
call.
starting
Went
to get its
down
head
and
around the
then
idea
up.
that the recovery traffic is 2 to 3 years, and as Dave said, maybe 3 to 5 years on production.
Well, there are
60
obviously demand
contracts
issues, but I think
in
that
at 17
2 weeks
cents
ago,
out
we
of
understood that
25.
Boeing went
Fuck
out.
yeah.
How's Boeing going to be able to raise money?
Hell
Is
yeah,
Boeing,
dude.
Going to be a ward of the state. And now we're just thinking how much are they going to borrow and what's the rate? And they may not need any sort of give any sort of warrants or stock. David may think that that's too Pollyannish, but I think that the credit markets are so thawed that Boeing's just going to be able to get through this.
Yeah, I mean, he would not give us any specifics, and we asked the question, as he acknowledged, a couple of different ways, a couple of different times, in terms of what their plans are, Jim.
They're
there
like,
are
we're gonna borrow
expectations,
money.
Of course, they are going to come with a large bond offering. I think we can probably expect that will be the case. What
We're
will be
gonna
interesting,
borrow
and
a
you pointed
fuck
this
ton
out,
of
I think
money.
You just tweeted it also, Jim, is that maybe they don't in any way come to the
What's the
government
QQQ
because they
doing?
don't want to give up equity in some fashion.
Yeah, I think it's for real. I think that's why the stock's really moving up. But there's so much happening, and David, I got to.
What about our guy with the LABD? What about Vlad? How is Vlad doing?
Since down in after hours, as opposed to Boeing being up, is Advanced Micro Devices (AMD), and I'm not sure that that's right. It's been wrong several times when this has happened. So let's go right to the doctor, Dr. Lisa.
How's his
Sue,
XPI
who joins us
doing?
now in another exclusive interview. Lisa, it's great to see you, and want to get things
Think he's
straight
gonna come in
right from the
today?
beginning. I've got 4 pieces of research. Tell us about how you lowered expectations, you lowered your number, you lowered your number. That's just not true. You maintain your number. And
That's
I think
just
we
not
gotta
true.
Clarify the record right now, because that's why the stock's getting hurt.
That's
Am I
just
right?
not true.
Well, good morning,
That's
Jim.
just
It's
not
great
true.
to be here with you guys this morning. I appreciate the time. Look, we're very pleased with our performance this quarter. There's no question that it's an unprecedented time, and there are no rules for this. But that being the case, we saw 40%
I kind of want to
growth
sell some of these
year-over-year,
pen
5
contracts
points
and
of margin
get some
expansion.
money liquid
When
here.
we look forward, we see
to trade with.
25% growth in a market that does have some uncertainties. But what we have is some strong product cycles, and we're excited about those product cycles, and so we feel good about our performance.
What do you have to say first? It's just about that there's some softness from COVID-19.
Why does ADMA suck balls?
And some in China, but in general, you've got a good story for both work at home and also play at home. Both sides are working in your favor.
Yeah, so I would say in this world that we're living in, there are a couple of secular trends.
Kramer chirping away with an ain't happy talk with a horse. Sorry, Jim. We shouldn't be that thrilled with Gilead. We should maintain some reserve, and I still think more better platform, ultimate, better long. Hope hysteria doesn't cloud the reasoning thinking here along ADMA. Gilead just put out good COVID news, not good for ADMA. Why not good for ADMA?
So, that's a nice secular trend. Consoles, gaming, another important trend for us. The Microsoft and Sony console launches later this year are two of the most anticipated launches, and from everything that we see, those are on track, and we're very excited about those. So, and I should also mention the data center, Jim. We talk a lot about the trends and the fact that we're all doing video conferencing and we're all doing this work from home. It requires a lot more cloud computing. And we've seen some nice trends there as well. So overall, I think there are some pockets of softness, and the pockets of softness were around. In the first quarter, we saw a little bit of softness in China as they were shut down. That's now come back a bit here in April. But overall, I would say all things considered, we're very fortunate that we're in markets where people need more computing. So that's really our focus.
I'm glad you mentioned the cloud, Lisa, because there are very few things right now.
36-month beta value. ADMA stocks at 212. All the analysts out of zero who provide ratings. Stock is a buy. ADMA market performance. I don't care. Analytics. Tell me about the fucking business. Like, I hate these stupid auto-generated fucking articles that are just like, here's where the price is. Here's where it was. Here's where it could go. Sniffles, what's good? More than several insider trading activities at ADMA, starting from Perceptive Advisors LLC, who bought 500,000 shares at the price of $210 back on March 19th. After this action, Rushing now owns 16 million shares, valued at 1.5 million, 1.05. Director of ADMA Biologics bought 20,000 shares at the value of $3.50 during trading that took place back on February 11th, which means the Guhui Lawrence is holding 70,000 shares at the value of $70,000 based on the most recent closing price. That's good to know. $94K more till the coffee mug. Current profitability levels are settled at 141.14 for the present operating margin and 37.48 for gross margins. The net margin for ADMA Biologics stands at below. Total capacity value is set at 47. Wellness and capital management. I don't even know what any of this fucking means. Company's capital structure generated 323.48 points for debt to equity in total. What the fuck does that fucking mean? Well, total debt to capital is set at the value of 76.39. What value? What? Total debt to assets settles at the value of 66. Long-term debt to equity ratio rests at negative 4.61. What do these even fucking mean, dude? Can you put that in fucking English? This is the exact same fucking article, just regurgitated on a different website. Let's get a banger update. We've been keeping up on the cleaning. Uh-oh. Banger's dirty from last night. Banger is dirty. We need to clean it up. Loss-making ADMA expected to break even. Performance infectious diseases. All right. Performance Specialty Immune Globulin Company develops, manufactures, and markets special plasma-derived biologics for the treatment of immune deficiencies and infectious diseases. $267 million market cap post a loss of on December 31st. Okay, loss of $48 million for its most recent year as a path to profitability is a topic on the ADA investors' minds. Have decided to gauge market sentiment. Below, I'll provide a high-level summary of the industry. According to the 6 industry analysts covering ADMA, the consensus is break-even is near. They anticipate the company to incur a final loss in 2021 before generating positive profits of $15 million in 2022. ADMA is therefore projected to break even around 2 years from now. How fast will ADMA have to grow each year in order to reach the break-even point by 2022? Working backwards from analyst estimates, turns out they expect the company to grow 63% year-on-year on average, which is extremely buoyant. At this rate turns out to be too aggressive, ADMA may become profitable much later than analysts predicted. Underlying development driving ADMA growth isn't focused on this broad overview. However, take into account the typical biotechs, depending on the stage of the product development, have irregular periods of cash flow. So a high growth rate is not out of the ordinary, particularly when a company is in a period of investment. One thing I would like to bring into light with ADMA is its debt to equity ratio of over 2x, so they have a lot of fucking debt. Typically, debt shouldn't exceed 40% of your equity, and ADA has considerably exceeded this. A higher level of debt requires more stringent capital management, which increases the risk around investing in the loss-making company. Oh, shit. There are too many aspects of ADA to cover in a brief article. Historical track record. What has ADA's performance been like over the past? Go into more detail. Tracking free visual reputation. Blah, blah. Management team. An all-experienced management team on the helm increase our confidence in the business. Other high-performance stocks. Are there other stocks? Blah, blah, blah. That's it? You're not going to fucking write it out? You wrote this fucking half an article here? You fucking piece of shit? Who does this? Simply Wall Street? Who the fuck are you? What do I think about the quality of your article? I think it's a fucking 0. Details. Next time, take a minute, take a second, and write a full fucking article on something. Next. Close. Get fucked. Right? Like... Beware the high valuation on ADMA, and this is on NASDAQ Newsfeed. I don't even know what NASDAQ Newsfeed is. It's probably some fake, just using the name of the NASDAQ. Here we go again. Let's go! EPS growth is an important number. Give the suggested EPS growth rate. EPS is an important measure of administration performance because it shows how much money the company is making for its investors and shareholders. ADMA belongs to the healthcare sector and biotechnology industry. The company market capitalization 259 M's, baby, with an outstanding share of 422. With the total outstanding shares of 422 million, I'm assuming. On Monday, ADMA stock construct a change of 392 in total of its share price and finished its trading at 318. Looking into profitability, earnings per share, blah, 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 historical performance. Taking a look at the performance and stock, the investor will come to know that weekly performance for the stock is valued at 13.57%, resulting in a performance for the month of 2.25. Therefore, the stated figure displayed quarterly performance of negative 23.56%, bringing 6-month performance to negative 32 and year-to-date performance of negative 20. Okay, thanks. I can look at the chart and fucking know that. More regurgitated bullshit, dude. The world is full of bull crap, yo.
Big sales are going to be better in Q2. Do you have any feel that the analysts who are saying
There's
that
tons of crap
this was
everywhere.
really the high water mark in terms of share for AMD? That's a true
Meanwhile, Penn National Gaming
Jim,
is going to make
I
your boy
would say
rich.
I don't agree with that. I would say that, look, you have to take a step back from quarterly dynamics and just take a look at the big picture and what we see as growth drivers. I think, in any environment, 20+% growth is a great year.
Oh,
I think
for
in
the
this
mug?
environment, especially.
You guys are
we
working
believe
on
that,
mugs,
the
huh?
growth story is
Well, I
a
appreciate
differentiated
it,
story.
dude. Sticking around is where it's at.
When I look going forward,
Extreme
I
Elements
still, every time I talk to you, I
should
say
be
we're in the
different
early
merch
innings,
too,
but
like their merch
Jim, we're still in
changed
the
and I
early
can
innings.
make
I mean,
doper
there's a
shit
lot
now,
of
I
products
think, like
that can
custom
go. We're
t-shirts
very
and shit,
excited
so...
about the large supercomputing wins.
Oh
with,
shit,
Lawrence Livermore
baby.
National Labs,
Where
as
we
well as
at?
Oak
Somebody
Ridge
sell
National Labs.
something.
Those are going to be really exciting projects for us.
What? How does
We
this
have,
not
you know,
jump?
a lot of exciting
Only
projects on the
$500,
cloud
really?
and with gaming. So, you know, overall, you know, as I
Really?
said, it's a challenging environment to predict. But there are some things that we know in terms of our product cycles, and you know, we're going to do the best we can in the
Down
environment.
it goes.
Well, thank you so much, Lisa, for coming
about
on.
ADMA?
Another great quarter. I think the stock is quite wrong.
Jumps to
I
$3.
think Lisa is quite right. And it's
I'm
always great
actually
to see
happy
you.
with that. I'm glad it didn't open up down here.
Thank you so much. Great being with you this morning.
The SPY's going to sell off here into the open.
All right, Jim. We're going to get the opening bell here in a moment. At the big board, it's Robert
Man,
Glorioso,
you know what the play is?
NYSE Chief Building Engineering
today.
Operations, and at the NASDAQ, it's a
Whenever this
Tower,
finds a bottom,
in Times Square.
TQQQ.
Jim, so much to get to. We really haven't touched on
SPY's
advanced
bleeding
Q1
off a little bit at
GDP
the
down
open, which is
4.8.
fine.
We're
We
looking for
fucking
down
went up
4.
so much in after hours.
That's the worst number since the crisis.
It's always an after hours. Why isn't it during the bell?
6 is the worst since
Why
the
isn't it
early
ever
80s.
during the fucking
And you
bell,
couple that,
chat?
Jim, with some of the swipe metrics out of MasterCard today. I mean, the
Whoa,
consumer,
how did I miss
basically
Bartown's
left the
bits?
last 5 weeks.
Bartown, yo.
Anywhere down 20 to
Bartown.
30%, according to MasterCard.
Yeah,
He's
these
a
are
man.
depression numbers.
I'm so sorry I missed the
think that they
bits.
also may be, let's say,
How the
beginning
fuck
of
did I
12.
miss
I'm not
that?
gonna
Why
say
didn't it show up
that
in the
it's
chat
12
here?
Because when we listen to GE later on, they're going to say, listen, Q2 could be
Because that's the
worse. Boeing
restream
certainly
chat. It
saying
doesn't
that
show up in
we're
there. I
seeing a
gotta
12,
make
but
sure I can see this
look,
activity.
I want to
feed
balance
over
that
here.
against
Holy shit.
what we're
I'm
hearing
so sorry,
medically, because
Bartown,
this
if you're
is
still
a-
there. I
remember,
feel like
this
an
is
asshole.
a bio panic, it's not a financial panic. And if you have people who start opening up their states and people say, you know what, I think there's a little less risk that I'm going to die. And I think you have to.
I think
use
there's
that
a little
term.
less risk that I'm gonna
Then
die.
what we're going to see is maybe June is going
PFE?
to be the beginning
Pets?
of when we start seeing some better numbers. So I don't know. I mean, I'm more sanguine than I
PFE.
was because of Gilead, not because
Tough
of what
spot.
I've heard,
What's good,
just
tough
like from
spot?
companies. But AMD was good.
LABD?
I think we're here from
Whoa.
Starbucks. I didn't think it was bad.
Where's
And by the way,
Vlad?
Alphabet is
Vlad
the
should
color
come in
of
here.
the-
Ah, come
Google.
on!
And that was actually very good because they saw some
See his
green shoots
underlying.
at the end of March that continued to April. So not everything is bad. There are some companies that are
Spies
doing quite
down
well. AMD. And then Alphabet, I think, is the non-Gilead.
Good luck today, buddy. I appreciate it.
Yeah, Jim, I think you're referring to the quote from Ruth Porat. Very
We're up
early signs of
$400
recovery
this
in
morning,
search.
but
Right, she
I
did
don't
sort
know.
of
We're down
surround
in
that
ADMA.
quote
I
with
don't
a number
understand
of
what's up
things
with
that said we're
ADMA.
not so
report
sure.
next
We'll
week. I
have
would
to
think
wait
we'd
and
start to
see.
see a run up
But
here.
certainly that is being
Running into earnings. I guess it'll be after earnings,
That is-
hopefully.
it's being seized on, though, as a positive, as you might imagine. And
Who
listen,
knows, Chad?
search fell
I don't
off
know what I'm doing.
dramatically.
Just
of
for
course,
entertainment
these
purposes,
last 2 weeks of
right?
March, as we know.
To spark up the
But
joint, tough
revenue's
spot,
still
or
up
clean the
13%.
banger and take a
The
dab?
company is slowing.
What do you guys think,
it's
Chad?
hiring.
Clean the
By
banger,
way,
tape the
numbers
dab?
at Google are just always
Just
astounding,
light up the joint,
particularly for those
yeah.
of us, I think, who remember the company when it first began, its life as a public company. Just going through these numbers is incredible. 117 billion in cash, 11.5 billion in operating cash flow. Although free cash flow conversion is not so great at 5.4 billion. 4 billion in ads for YouTube.
GG
in the
Zoom.
quarter.
Is
By the way,
Zoom
tax
dead?
rate 11.9%. U.S. government could use some more revenue, guys. 11.9% tax
GG
rate, adjusted
Zoom.
tax rate there for Alphabet. But importantly, the slowing of hiring.
They had a
is
wonderful
also
run,
something
though.
that many are
I mean,
focused on, Jim.
dude.
The company was hiring more than 20% of its workforce each year. They were actually on pace to hire as more than 20% of their existing workforce this year. Just to give
In
you
January,
some
they were
numbers,
75
they did still
doubled.
hire
They've doubled
4,149
already this
people for that first quarter. But they are now going
Really?
to decelerate that. They also are
I knew Facebook
decelerating
did.
their spending on global offices. And
Google already
buildings.
had Google
And
Hangouts.
that
That's
is
nothing
also
new.
making
They're like,
people
we're actually
feel
going to pay
positive to
attention
begin with.
now.
More positive when they look at a company that's trading or a stock that's trading at about 11 times forward EBITDA.
Oh, you're so right, David. It was kind of funny because the things that people kept seizing was maybe green shoot and efficiency, which was the word. That was code for we're not going to spend like drunken sailors anymore. People love
Oh,
that.
really?
So it was possible green shoots, which was
What's going on, Oven Mitts? How you doing today?
maybe not spending so much
Facebook
crazily.
fucking blew up.
Which
That's
they
what's
used to say,
up.
listen, we're more efficient. So you're right. Something to hang your hat on, or two hats. So anyway, let's talk about a situation that
That
people
dude's
were
killing it in
initially were not
LABD.
as sanguine
First quarter
about.
only had 2 weeks of
Which was the
quarantine. We are
quarter from
negative on
Starbucks. We've
GDP.
got CEO, what a show this
4.8%.
CEO
Sounds like
Kevin
second
Johnson
quarter is
joins
going to be
us.
bad.
Kevin, I don't know.
Yeah,
I
but
could
it
take
won't
one of two
matter.
ways. I could say bad
Here's the
numbers,
thing,
or I
though.
could say, look out, you're about to open up around
Exactly.
the country, and there's
He
going to
just
be
said
lines
it.
around the block. And my biggest worry is, How are you going to handle the lines both safely?
If we're open
and
by
in
then,
terms of
nobody's
time?
going to care
And
that we had a bad quarter because we're all looking to the future.
As you know, I like
If
to
we're
take
still
this.
closed and second quarter numbers start to come out, shit's going to get ugly. But it sounds like we're going to be open. It sounds like the whole scare is over.
in China.
It sounds like I'm going out without a mask. I don't give a fuck about the law.
We're in week 8 here in the U.S.
Let somebody cough on me and I'll punch them in the fucking face. But other than that, we chilling.
Phase you go through that we call
Dude,
mitigate.
LABD is on fire.
And that's the phase where governments instruct people to shelter at home, businesses shut down, and really everything stops while we flatten the curve and stop the spread of COVID. Now, we went through that in China for about 3 weeks. We've gone through that now in the U.S. for about 6 weeks.
Whoa,
and as we're seeing the virus flatten and the spread of the virus flatten, we're now entering a new phase, a phase that really
it only gets
is
back to where it
described
was,
as monitor and adapt. Now, we started that in China, and in monitor and adapt, we reopened stores.
That does not imply the company lost chunks of money, which will have implications going forward that affects the speed of future growth. That's true too, and valuation, like
normal patterns. And so starting
multiple,
next week,
valuation
US,
multiple. I agree with that for sure. Like, I don't think we're going right back to the fucking top. But I think people might be understanding that we're getting through this.
In the U.S. And so we are beginning the monitor and adapt phase.
Plus, GDP dictated by consumer spending 70% and consumer unemployed the way they are will not be able to spend as they were. Sup? As he counting, and we're doing good, Swanson.
Or the appropriate treatments to be available for COVID-19.
What if everybody goes back to
so
work?
We're going to be in the monitor and adapt phase while that happens. But by monitoring the number of COVID cases, by adapting the different customer experiences we create in our stores, we're going to be able
if everybody goes back to work, were they really out of a job, or was it just like a fucking 2-month vacation we all just took, Because, like, here's the thing, is the population didn't massively dip. And, like, all of us still need food and cars and clothes and services. And all of us still want to go out, like, you know what I mean? Like, GDP grows because population fucking grows.
We're going to open. We've had drive-throughs open only drive-throughs open. So we've had, roughly 50%
a lot will not go back to work
closed,
because less people
over
ready to work in service industry. A lot are getting better pay,
open,
unemployment. I have multiple friends that are getting better pay.
With mobile order for pickup.
My ass is stacking cash, sitting at home. Hey, I agree with that. I agree with that. But I'm ready to also spend a little bit of what I stack. You know what I mean?
Drive-through, we're going to enable mobile order for curbside pickup.
I have a lot of friends that are staying on unemployment because they were making more on unemployment. I've talked to 2 friends, 3 friends, I think, in the past couple days that are staying on unemployment. But then, they're making more money than they were at their job. Like, they're sitting cushy. They got piles of weed and shit. They're fucking just chilling, drinking, smoking, hanging out, checks coming in. You know what I mean? Like, they're ready to spend. Open the shit up. Let these people back the fuck out. Some of them, one of my friends is getting called back to work. Piles of weed in America right now. Everybody's got piles of weed at their house. Trust. Stem rich bitches. For real, though. For real. I know people that are fucking hood rich right now. Talking about, I don't want to go back to work next week. I'm making more on unemployment and shit. Like, bro, nobody got hurt. The problem here is nobody got hurt. The government handed out a fuck ton of money, and all those people were worried about, all the waitresses and waiters and service people, they are getting bank right now. They're getting regular unemployment, plus another $600 a week. That's $2,400 a month on just the plus side. Plus regular unemployment. Plus all the side hustle everybody does. We know not everybody just fucking only does their job and that's it. Everybody fucking side hustles something. Most people. Like, people are fucking banking right now. And chilling. They're chilling and banking. Pen's bleeding off like normal.
About the new breakfast sandwiches and
dude, it's all about selling at the beginning of the day. Look at this fucking spike in the beginning of the day.
Reopen Starbucks over the next 30 days.
And then we just bleed off. Look, same over here.
Early
Just
June
bleed
comment,
off,
Kevin,
level
is
off.
getting a lot of attention,
And it's always a
even as we
run-up
speak.
in the middle of the night.
We
Why
love to
do
talk
all
about the percentage
why
of
does
stores that are
everything
open,
happen in the
what
morning?
does traffic
From
look like
midnight
in this new
until
world
fucking
where
9:30
capacity is
a.m.
limited,
is
maybe
where
you
all
need
the
more
action
curbside,
happens
more
before I get to
drive-in.
even do a
What
damn
should we get
thing.
used to in the way of traffic, which we in
I'm
even
up
the old
1.5K
world,
on
we're trying to figure out
Zoom.
ways, to get,
Did
big
you have
percentage gains.
puts on it?
Well, here's one thing
Zoom
I think
puts.
that you should be aware of, and something
Killing
that we
it.
just kind of shared broadly is pre-COVID in the United States, 80% of our customer occasions were for takeaway, were for to go. So these were customers that were either ordering in our stores or mobile ordering and picking up their beverage
Pets
or
is
food
raging.
and then
Marty
taking
killed
it
it
away
on
to go
Pets.
consume it somewhere outside of our stores. And so we have the throughput, the capacity to meet that demand. We had it
Tesla
before,
going
we have
down.
it today.
Tesla puts
All we've done is just sort of modify
Zoom
the way that they
5.8
order through
146
mobile
puts.
ordering and the pickup
Damn. Look at this
to really drive
LADD,
that.
dude. This thing is
And
soaring.
what we found when we opened the drive-throughs, people find the channel where they could get access to Starbucks. We had lines around the block in many of our drive-throughs, and even our drive-throughs as they opened, were performing. Some of those drive-throughs were comping positive.
Drive-throughs were
And
killing
so,
it, dude. That's
I
why I
think-
wanted
so I think
Wendy's
the
stock.
first thing we're trying to do is make sure our customers know that
When
we are
Lee's,
reopening
dude.
Starbucks. We are doing it in a safe and responsible manner, and we're there to deliver, a little bit of uplifting experience for their day. To come get your beverage, come get your cold brew,
Come get your
nitro
coffee.
cold brew, and we're
Come
here to
spend
serve
that
you,
government
and,
money with
and
us,
we
baby.
look forward to that. And
Starbucks.
frankly, next week, a significant
Did you get an
number
extra
of stores
600 this
across
week?
the country are going
Latte time. You know what I'm saying?
Right. Kevin, it's
Dude,
David.
how many
Yeah,
people
I
are
think,
going
as
to
you
take
said
some
on the call,
fucking
90%,
some government
approximately
money out
90%
to a
of all
restaurant when they
company-operated
open?
stores, U.S. Starbucks.
Who's taking some of
stores are
that
reopened by
government
early
cheddar
June.
to the bar?
You also, though, talk about this current phase
Not
of
me. I
one
don't
that you're
get
calling
any.
monitor
I'm not
and
getting
adapt.
$1 of government cheddar just to put
and
that
you
out
talked
there.
about your monitoring capability on your conference
Too early for me to
call.
get
What
baked.
actually is involved in that?
So I got a
What
lot
are
of
you
shit to do.
monitoring? What are you watching to help predict how you need to adapt?
Yeah, well, David, these are things that we learned in China. In China, every day we get visibility to if there are new COVID cases by city in China. And the data that we get reports even were those cases imported or community spread. And that's information that government, health officials, and businesses all look at. So when we
Delta
see
Airlines,
that,
it is
it
raging.
gives us a sense of is
I was
there
watching
a
those
potential,
pre-market.
spread of the virus in a
I was
certain
watching
city? And
those
if there is,
pre-market.
what can we do to be responsible and making sure we're dialing back and implementing extra safety protocols? But for the most part in China, that data just gives us confidence that we slowly turn the dial up. In fact, by turning the dial up, we start to now expand the number of services that we provide to customers. So for example, in the U.S., we now get daily feeds by county of the number of COVID cases. And this is combined with some of the technology that our artificial intelligence team has done.
Casinos,
the
baby.
Deep Brew team has come up with ways to get also customer
Delta
sentiment,
Airlines
as well as
is
our partner
raging,
sentiment,
though.
combined with the COVID data.
The
intersected
airlines are
with the
raging
store
right now.
locations.
Is
And
it the
starts to give
time
us a
to
digital
maybe take
picture
out some
by
calls
store
on the
of
airlines
what's happening in
chat?
that community? That
Whoa, whoa, whoa.
data
Give
is
me
now
Delta
allowing
Airlines.
us to figure out the appropriate protocols to implement in that store. And so, next
What
week,
was the
you're
play
gonna see
from
stores
yesterday,
open
Rancorp?
that have
Did you
mobile
bet the
order
farm on
pickups,
that
some
Brazilian
have
airline?
curbside,
Hell
some
no,
have
but the airlines
contactless,
did it for
and
sure.
some
They did
stores
really
maybe
good
might even
today.
be
What was
open
that
for to-go.
Brazilian
You can come in
Airlines
and order,
fucking
take your food and
ticker?
beverage and leave.
That
As we
that
monitor
dude
this
should
data,
like
though, we're gonna
overnight.
start to
Those
see
airlines
communities
fucking
where
killed
we can
it.
now turn the dial up and offer limited
What was
seating
that ticker?
in the stores. Now that's going to happen probably a few weeks down the road as we keep monitoring in certain stores, not some big switch across the country,
Man, I
but
wish
in
I
a
could find
targeted
that.
way. And by offering limited seating, we can
Wonder
now
if I
ensure
could-
social
no, it's
distancing
not
and a
over here.
safe, familiar experience of community in our stores. And so that's what the data is helping us do, is really adapt the formats and the protocols we offer in our stores and do it in a way that meets the needs and meets the aspirations of our customers.
Yep. Kevin, there was a moment on the conference call where it talked about how your numbers weren't as good in China as Yum China. And then you talked about how, well, you're in more in tourist areas. But it made me think that your saturation in China is far less than I thought. That I realized that maybe you've hit the
Started with
traveling
an
rates.
A.
But is it possible that you could do double?
Was
or
it
maybe
like
even triple the number of
ABI?
Starbucks based on what we heard
No,
last
was
night
it
of Yum
like-
China versus you?
Well, look, here's my belief. Pre-COVID, we were opening
knows?
a net
Who knows? Look at Penn raging, baby. This is where you put your money. You know where you put your money when the market's crashing? In casinos, baby, and you gamble. Duh! Duh! Who didn't know that?
Fiscal 21, we're going to ramp it back up to 600 new stores. So we can open.
Where's the poker table at? Oh shit, we do have to open the poker table up. Good call, Demo. Good call. We raced to open the stream up today.
There is immense addressable market for us to go capture in China. Think of it. It is a tea drinking culture that we are introducing premium coffee to.
What's
and
wrong
as
with
we've
me?
done that over the last 20 years, we're now over 4,300 stores, and and there's a phenomenal long-term opportunity for growth in China, and that's why we're so bullish on it, and that's why we continue to invest in it. In fact, we just did
I did my first tourney yesterday and did pretty good.
To build a coffee innovation park. It's another one of the roasting plants
NGL
that we
for someone new? What is that?
Will
What
be
is
built in
NGL?
China, and it will be.
Did you make the money?
Completely green.
Did you cash
it
it?
is an environmentally sustainable.
It's Weed 30
roasting
bong
plant
ribs for breakfast.
in
It's
China.
good,
It's one of the global roasting plants that we will now operate. And so we're
They do
very
a
bullish on
little
China for the long
update over the
All
night,
right,
America's
thank you so
Card
much,
Room,
Kevin.
huh?
Again, a stock that looks down that was wrong. But that's okay. Market gets things wrong. Always good to see you. Thank you, sir.
You know who's getting
Thanks,
something
Jim.
wrong right now?
Thanks,
ADMA.
let's go to,
You know who got something
one
wrong?
where the stock
Scott
the
got
Spotify
something wrong.
CEO,
Scott's
Daniel
pick,
Pat. What a great joy to have
fail.
him on. Joins us post
Fail.
Daniel, it is great to have you on.
No, we'll see.
and
They got a
you've
week. They report
story
earnings next Friday.
about
Jesus,
the way
come
people
on.
consume Spotify that I think surprised people. I think there were people who said, you know what, it's a commuting story.
Made fourth because I went
It
all
looks
in.
like it's
And I
more
shouldn't
of an
have, but now I
at-home
learned to
story.
just
Tell us
fold.
about the
That's
new
what's
narrative
up. Was
Spotify.
fourth in the money?
Well, you know, it's not so much as a new narrative as
I
something
hate
we've been
Spotify
investing in
CEO.
for the past 5
Oh,
years.
God, who's this
it's
guy?
something
I
part of our
use
ubiquity
Spotify. Should I
strategy.
not
So
use
we have over
Spotify?
300 device partnerships. In
I heard
home,
that,
in car, in mobile.
did Sirius
with
XM
the likes
buy
of Sonos,
Pandora?
PlayStation, Xbox, smart speakers, but also of
This
course
guy
cars
does
as
kinda
well.
creep
So what's
me out.
happening now as people are staying home, listening is shifted to in-home instead of just being on mobile.
It's
or
the
in
accent
car.
and the baldness and the
we're
black
very,
shirt.
very
It
pleased with the
kind of makes me
progress.
think of like
130 million subs
he's
and
fucking crazy.
286 million monthly active users.
You, I think some people would be concerned.
Like,
that
the only thing he
advertising
needs is a
was down,
fucking
but when I
trench
look at
coat
the
on.
mosaic
You know what
of
I'm
your
saying?
earnings
Like, give
now,
this kid a trench coat
advertising's really
and some
not a factor.
sunglasses.
And what we should be looking at, I believe, is growth in subscribers.
Yeah,
Not a
you're-
lot, though.
you're
Hey,
right,
winning
Jim.
any money's good. I entered the tourney and
advertising is
won
about
2
10%
tickets,
of our
though.
business.
There you
so it's
go.
a very small part of our overall business, and we're very much a
He looks
subscription
like a
business,
sperm cell.
and that's
So
the primary driver, I think, of our business.
Damn, we're
certainly
going
the
in
near
on
to
this
midterm.
poor cat.
When you were with us last,
Why we
you
gotta
were
go
introducing
so
the
hard
concept
on
of
this
podcasts.
guy?
I think a lot of people were skeptical. They weren't sure about the acquisitions. I remember it was over in Brooklyn.
Wife says hi. Hello,
Podcast
Bucci's
looks like
wife.
it's
How are you
exceedingly
doing
profitable
today?
and well ahead of
I
what
hope
we
all
thought
is
would
well.
Yeah, it's been a great story. A year ago, when I was on this show last time, I introduced the
A
shift
year
in
ago,
our
I was on this
strategy
show
from
last
music to
time,
audio.
creeping
At
people
that
out.
time,
You guys didn't
we
have me
were
back for a
a
year
very
'cause it
small
was
player
super
in
creepy,
audio,
and I really
but
remember
growing
it.
fast. Now we're the #1 player in more than 20 markets around the world, and
Holy
quickly
child,
catching
thank
up in
you
the
for the
markets
follow.
where we're
I
not
appreciate it.
#1. And of course, we have our content, which has grown as well from about 250,000 podcasters now to over 1 million this quarter. And,
Podcasters? There's
I'm just waiting for when
podcasting
you're
on-
gonna join us, Jim, as well as a podcaster.
Spotify? Should we be live on Spotify too?
Well, and me
We're
too.
live
I'm
on
sure,
YouTube
Daniel, it's
and-
David Faber. I know
Of
you
course.
know me as
Of
well.
course.
Of course. Thank you.
We'd
I'm
be
gonna
happy to have both of
multitask
you
with
as
one poker game to
podcasters.
save my
Maybe
life. Fuck it up
competing
every
podcasters.
time.
No, we're always a team. We're always a team.
It takes time, man. It takes
Daniel,
time.
I did want to
I
ask
could play
about,
up
about
to
gross
like
margins because you got a
3-4
number
games
of
max at a
questions on the
time. I don't
call
like to
about
play
that.
4,
You know, in
3
terms of the gross margin
tournaments. If
improvement,
like I'm
whether
just
it's
streaming
sustainable, how
and playing
podcasts
poker,
are
not
playing into
trading,
that in
3
terms of money
tournaments is my sweet
you've
spot.
paid,
But man, there are
perhaps,
other poker
expenses
streamers
that
out
aren't
there
yet
that crank
realized.
it up,
Can you
do like
explain
6
and tell
and
our
8.
viewers what your thoughts are
Fucking
in
10
terms of gross
tables.
margins?
I
whether
think
we can
doesn't
draw a lot from the
Jamie
current
have
quarter?
space for 12 tables or something
Yeah,
like that?
again, we are at the upper end.
Not
of
3
our
to 4
forecast
games while
range in
trading
terms
stocks.
of,
One
gross
game
margin,
while trading
saw
stocks.
lower cost in distribution, saw healthier growth in
2?
streaming
Jesus.
on the
2 is
subscription
all
side
right
as
by
well.
itself. Like, if you're
That's a
just
story that
hanging
we think
out,
will
playing
play out
too,
very
no big deal.
nicely
You know, because
over
there's a
the
lot of
coming
folding
quarters
involved.
as well. So don't see much of a reason other than reiterating our guidance on gross margin.
How are you approaching global expansion? I know you may have delayed
JB's
your,
a robot.
Russia for
Jonathan
a bit.
Little
There are a
plays
number of
20
other
tables
countries
at a
you're planning
time.
on rolling out. Has
Gilead
that been
selling off after their
delayed as a
stupid
result,
news.
of course, of the virus around the globe?
Well, we're always taking decisions.
Dude, whoever's
quarter
in
by
that
quarter
LABD,
as
that guy's
realities
fucking
changes around
printing.
the world.
I gotta
the
say.
strategy that we're taking as it relates to new market launches is we rather want to make
God,
it
it's a
right.
day trade
So
every
to the
morning. Look at
extent, that
Every morning,
you know,
this is
for
a
us,
day
it's not
trade.
just about turning on a switch. We want to be
Because that's what
locally
happens
relevant.
every
We wanna
morning
have
in the
editors
spot.
in
Like, I
place.
mean,
We
it
want to
just
make sure
does it
we
like
have a
clockwork.
great progress of new
Stiflis
music
is
coming
in
onto the
it.
platform that people can come and check out. And
It's a
of course,
great
new
morning day
podcasts as
trade.
well.
Like clockwork, the
So,
SPY
we're
sells
always
off
changing quarter
every
by quarter
fucking
the
morning
mix
when
of
it
what we're
goes live.
doing.
We run
But,
up
again,
pre-market
I
where
would
none
just
of us
come back to
plebes
the
can
user
play the
growth,
fucking game,
and
you know
the
what I'm
increase in
saying?
user growth that
And
we're
we
seeing,
bleed
so we're
off.
feeling pretty
And we
good
bleed
about it.
off. And we
Compared to
bleed
Q1
off.
2019, we have actually increased our growth
Here we
rates,
went up somehow.
in all 4 of our territories. So
Bleed
we're very
off.
pleased about
I
that,
mean,
and
dude,
we'll
it's
keep on
more
making
likely
those
that we're going
adjustments.
to bleed off.
And to those
Where'd we
investors
go
of
up?
yours who would
We
say,
went up
listen, we
there.
love your torrid growth, but we'd
We
like
bled
to
off
see you
there.
kind of put the
We bled
brakes on a
off
little
there.
bit, perhaps pursue
We went
more
up there.
efficiency,
Bleed
cut
off.
costs, similar in the
Bleed
way that
off
they're,
right
that
at the
they're seeing
morning.
Google
Bleed
at
off
least
in the morning.
give some voice to that. What do you say to those people?
Well, if you're just up leveling,
I mean, that's what we need to
it's the
find.
trend
We
that
need to
we're
find the
seeing is
trends.
linear
Morning
radio
designs
is
are rip the
moving
face
to
of
on
shorts.
demand. We're talking about something that has billions of consumers around the world that are now moving their behaviors online. Something like the COVID will likely accelerate.
And then you
that
get it
trend.
back when we go live,
So
though?
for us,
I don't
we're
understand.
really just in the growth stage of trying to capture that growth, and eventually we will, of course, get to a
Spies
more point of
climbing out of the
maturity
hole.
where we'll focus more on profit.
Pens
over
ripping
growth,
up to
but for the
17
next
fucking 50.
few
Let's
years,
go,
it's gonna be
baby!
predominantly growth for us.
Hey, Daniel, you
Dude,
talk about
ADMA
listening in
sucking
cars.
dick
We
right
talk
now.
so much
Oh,
about
no, it's not.
the work
Oh,
from
all
home
right,
dynamic.
okay. Little green. Okay.
Enduring
All
well
right. My bad.
past
Sorry.
the healthcare
Back off.
crisis.
Back
What
the fuck
is
up.
listening in a car going to
I just
seem
can't
like
look
or
at
be
it.
like
You just
for
this one you
most,
just don't look at.
a commuting
Just don't
time in
look at
general.
it.
Do you
I'm
see
not
a
gonna look at
recovery
it
to
for weeks.
pre-COVID levels?
So I can even look at it.
I mean, it's hard.
I'm gonna come back.
Obviously speculating
It's hard
in,
not to though
when
because I gotta
things will
check
go-
how
will go
Penn's
back to
doing,
normal or even
and
what
then I see
normal
that
will
one and I'm
be.
like,
what we've seen is a massive shift in user consumption. We've
Penn
seen
is
obviously no
printing.
sports. We have seen
If it gets back to $20, I'll be fucking
focus
rich.
on health and wellness to a large extent.
We're up
And
a
on the
G in
music
Penn.
side, there's been more focus on classical music.
We're
There's
gaining
been
back
more
all our
focus on chill
losses.
music as well. In terms of just everything here under the corona. I think going forward, I very much believe that people will come back and wanting to get back to a normalcy.
If Penn hits
So,
$20,
when sports will come
I
back,
have the contract
I
till
suspect that we'll
January.
see record
I'm holding the
numbers,
contract till January
of people
15th of
attending
21.
those.
That's how
I
long
know
it
I'm one
it
who's
goes
certainly
till.
craving more sports. So
The ADMA is till the
I believe
21st of
people will
August, so
come back
basically all the way to the end of
more of a
August.
normalcy as well.
What do I stand
And
to
then in
make?
terms of advertising, you're not
on
heavily
Penn?
exposed to the
I
ad
mean, if
market
it
in
hits
general,
$20
but in terms of
relatively soon
categories,
and
I
we get
wonder
in the
which you
money,
think
it'll
will be
be
most
really
resilient
nice.
as we work our way through the summer.
In terms of advertising,
probably be
I
worth,
mean, again,
like,
we're seeing on our podcasting
double?
side,
We probably would double
again,
our money
it being
over
pretty
there if it
resilient.
gets to
I
20.
think,
I would think.
people will move
It also
towards a
depends
better
on
ROI
if
and
it
better
gets to 20 and
measurability, so
it's like
digital
rushing up
will
to
still
20
be
and what the
strong.
options
And I think
market's
the,
like too.
the
You
real
know?
key theme for investors to look at is really the
We
trend
need it to
lines
go
that we've
deep
been
into
seeing. I
20.
believe will be
We need to go
accelerated.
deep.
So physical to digital,
Like get into like
and
25.
linear to on demand.
Like
are
we have
the big
11
trend lines that will be
contracts. If we could
accelerated,
get our
and
11
measurability, of
contracts
course, on
worth
the
like
ad
$11,
side,
like if we
will
could get
also
it up
be the trend line that will be
to
accelerated.
$27,
Daniel, there is a obviously
that would be really nice.
tremendous number
We'd be
of job
rich.
loss worldwide, and I
You
have
know
to
what I
think
mean?
that in terms of competition, you have a good model.
We'd be relatively rich.
60% of your
Rich for what we
of your
put into
users
it.
start free, versus everyone else where they insist that you pay from the get-go.
Yeah, you're right, Jim. We have a freemium service, so you start out being free on our platform, and eventually people move
you gotta
into
measure it.
becoming paid.
Did you watch those
paid
videos,
users, more than 60%
Sniffless,
of them,
or you
just
just
like you
feeling it
mentioned.
out?
And this is a great thing in an uncertain economic environment like this one, because you can easily just
The kid
if
who
you're
makes
feeling
those
economic
videos
pain,
prints millions
you
of
can go
dollars playing
back down to the free service and then
I watched like
go
7.
back
All
up
right.
to the premium service when you
So
have
you
the
kind of
means
got an
to do
idea of
so.
what's going
And
on
we
at this
think
point a
that's
little
going to
bit,
be
right?
a very strong competitive driver in an uncertain environment.
Dude's in the Discord. That's
People
what's
don't realize
up.
I'm a chill guy. I heard what you said about people listening to chill music, but it is true. There is a mindfulness wave that is somehow being captured by the people who work at
People want to
home.
play with us.
Are you able to detect that from artificial
Very nice
intelligence?
stoners.
Because that's not exactly what I thought would
That's
happen.
what's
during
up.
this
That's the community we're trying to build here.
Yeah, you're very much right, Jim. Our personalization is discovering changes
Oh
in
my
consumer
God, dude.
behavior.
If Penn
almost
gets
overnight,
raging
and we
here,
are
like,
seeing
if-
a lot of people
oh my
turning
God.
into wellness and health. Want to de-stress.
The
want to
sooner
focus
it gets
on
to
health.
20, the better.
Those are strong drivers. both
Because
in
then the
podcasts,
contract
and
is
certainly
more
when it
valuable
comes
to other
podcast
people
creators,
buying it
those
for
that are
higher,
doing the
thinking
best are the
higher
ones that are
prices. You know what I
tuning
mean?
into those trends either on news
When
or
our
focusing
$20
on wellness and
contract
health.
is an in the
And
money
similarly on
contract,
music,
and we bought it out of the money,
That's also been a big driver of
that's
our,
where the money is at.
engagement.
We're
these
waiting.
past few
We're
weeks.
holding. We're holding.
Yeah, speaking of
Diamond
engagement,
hands.
Daniel, you mentioned
I don't need
Jim
to sell for
obviously talked about
anything.
Free. What are you seeing in terms of free trials?
Not
right
selling
now?
shit.
Overall, healthy growth across the board. MU growth looking.
I'm
very
not
nicely.
fucking leaving!
Users, I previously.
You know what? I'm not leaving. I'm not leaving. I'm not fucking leaving!
We talked in the past about
Dude,
India
we're
being
not
a big
leaving.
opportunity. I haven't necessarily seen anything mentioned recently. Is that
Give me
still
my
the case,
money.
or are you pulling back there in any way?
Definitely not pulling back. India is still a massive long-term opportunity. It's more like a decade-long opportunity. We're talking about a population of over 1 billion people.
Casinos.
of
Davey
varying,
Day Trader has to be
economic
dancing around right
demographics.
now. He's like,
But obviously,
who
that
gives a
growth will
fuck?
happen
He
in
doesn't
India,
care if
and
he
more and
loses
more
$500,000
people will have more
trading
economic
Bed Bath and
means,
Beyond and cake and
as
whatever
part
the
of that,
fuck,
the overall
Lululemon.
market will
He's
grow,
fucking
and the overall
printing.
opportunity
He is
will grow.
printing. I can
We're
only
there. We
imagine the
just, in
dude's
the
stock
quarter,
options
signed
on this
a bunch
company.
Of new licensing deals,
Did
including
you
Warner
see me
Music,
get banned
that
yesterday
brings
at the
their
Stock
repertoire
Guys
to India,
channel? No, I
and
did not.
local
Oh my
music,
god.
Providers like Sarigama and others.
He's
as
a good
well.
dude. The
So
Stock Guy's a
we're
great
seeing
dude.
more catalog,
Someone
more
use their
content
points
on
to
the
ban me.
service, which will translate to more
Somebody use their
engagement.
points to ban me
So
too.
we're pretty
But that's
happy
the
about
thing they
India.
do over there, dude.
Daniel,
That's
how
the
about
troll
kids?
nature
It
of
seems
the
like
chat.
you're making major effort there. And it might be
They
working.
ban new people.
Yeah, Spotify again. We started
Damn,
very
in
much as a
57
millennial
minutes. We
brand.
got 100 messages in
and,
chat within 57
millennials used to
minutes
be
today. That was
people
tight.
in the 20s,
Just-
but
Restream
more and
just
more
put up a
millennials
little
are also growing
congratulations.
into their
That was
30s and
wild.
having children.
It was funny.
By them, as well, and
Yeah, they banned me
we're
too.
seeing
They
those
had to- they
kids are
banned me
now
too.
asking for content, and their parents are asking for safe ways to.
I love his
access,
channel though, man. Bunch of good
Spotify.
shit
So we
over
launched
there.
a kids product. We've expanded
I'm
the
kind
number
of
of
trolly at
territories
heart, so
that kids product is in, and it's just fascinating.
tomorrow
to
you
see
come as a
how
new man.
Kids are engaging with Spotify.
The
Choosing
market
their
moves, the chat
avatars.
moves.
It's obviously an ad-free environment.
this is
It's a
ripping.
very safe, curated environment, and we're
Let's
seeing
go to
lots and
$18
lots of fun
today.
explorations by kids, both on storytelling, but also of course,
Spotify?
in
Is this
music.
dude still
You can
talking
imagine
about
Trolls
fucking
being
Spotify?
a big soundtrack for us right now.
I know we're always worried that you're running out of expansion. We talked about Russia, but South Korea could be good for you.
Absolutely. South Korea is a massive music market. Obviously, you
Are
have
you looking good?
BTS
Averaging 20 views
and
usually. Let's
K-pop,
fucking
being a
go,
big global
baby.
phenomenon, so we're very excited to
We're gonna do this,
launch
man.
there
We're gonna
as
grow
well. That's a
something
big
here. I
opportunity
promise
for
you.
us. But we shouldn't forget about Africa either. Africa
should
is
not
the
forget
continent
about
for the next
Africa.
decade for sure. That's going to be a big opportunity as well when you think about long-term opportunities for Spotify.
I agree.
This is
That's
really
wild, though.
billions of user opportunity.
Dude,
that
the
we're
world
going
is getting
after.
so fucking
And we're
small.
only in
The
the
world is
beginning
so
of that
small
growth.
now.
All right, Daniel Eck, Chairman, CEO, and co-founder of Spotify, a stock that is up 18 points. Thank you so much for coming on Squawk on the Street.
LABD, dude, did you take
Thank
your
you guys
profits?
so much for having
Did you
me.
take your profits, Sniffless?
All right, Jim, we've processed a lot in the last 60 minutes. You're going to stick around with us a little extra time today, but Dow up 450s, about session highs. As the remdesivir headlines, Jim, sort of drowned out the GDP number.
You know, I think that, remember, the controversy with remdesivir.
Dude, let's break into fucking $18.
You had that terrific study
Like, let's
that Adam
go.
Querstein broke in Stat, which said at University of Chicago that it was working.
I'm still not even profiting? Jesus, fuck. God. Oh.
Was because it was killing.
What did you do to yourself?
Gilead. Now, I think people have to understand, Gilead is not going to.
How are you not
no
profiting
plans to
here?
make any
What did
money
you buy
with
at the
this.
absolute
But what
fucking
it does
top
do,
here?
and I think David's right. I want to temper my.
You need to-
I use the term Tamiflu. What I should have said is.
Yeah, like how?
It's a
Like,
intravenous way
dude,
that if you start
fuck.
early enough, makes it so that
650
doctors
entered.
seem
All right,
to have
go.
a new protocol.
Be gone.
Most of the doctors have a weapon.
Let's
I
be
think that most of
gone.
the articles that we read about.
Get me outta here.
Once you get in, they don't know what to do.
Be gone.
If they have something, then it leads to other
Break
things
even
in
though.
the
Break even real
antiviral.
quick.
I
Make a
think this
penny. Make
Fuji,
2 pennies right
pill
now.
is
Shit.
going to be something that we're going to be listening to. And the vaccine story, I think, has always been overhyped. It's what we absolutely need. But it's so hard to inject a healthy person with something that could kill them.
It's definitely
that the
hard to
government-
inject
and no
somebody
government
with
wants
something
that to
that will
happen.
kill
I hear
them.
China's ahead. But David, as you know, an antiviral is truly something that would make it so you might want to go out and think, you know what, it's not a death sentence to go out. And that does matter, David.
It's not a death sentence to go out.
Without a doubt. There is no doubt that that will be very
See,
important
now all
in
these
terms of
people
the
got to
ability for people
backpedal
actually
all
go
the
about,
scare and fear
leading
they
their
put
lives
into
again,
everybody.
which we all
The
wanna do as
media
quickly
had
as
a
possible.
great time, dude.
Carl?
Watch Joe Rogan's latest
Indeed,
podcast
guys.
I was
Coming
watching
up on
last
10
night.
a.m. on the East Coast,
He
welcome to
had
Squawk
some
Street,
like
everybody.
journalist
Carl Quintanilla
kid.
with Jim Cramer, David Faber,
And they were tinfoil
and
hatting it
Sarah
up,
Eisen,
I'm not
of course,
gonna lie,
coming to
they
you
were
live from
tinfoil and
separate locations,
hard, you
getting
know.
some numbers on pending homes today. In
Wait
addition
for
to
60.
the wave of news
All right.
this morning, let's
Fair
get
enough,
to
fair
Diana
enough.
Olick. Diana?
Well, Carl, pending
But they
home
were
sales in
making
March
sense
fell
about the media and how they're
20.8%
spinning all these
month-to-month,
stories.
and we're
Like a
down
lot of stories are getting spun pretty hard.
16.3% year over year. Sales were hardest hit in the Midwest, down 22%, and out west, 27% for the month and down 22% annually. Washington State and California, of course, seeing the first in the economic shutdowns out there. But the Realtors chief economist Lawrence Yun says he still expects home prices to hold up for the year, up about 1%. He says, of course, there will be some markets that fall, and he does predict weakness on the very high end of the market. He is also, however, lowering his forecast for sales for all of 2020. He expects them to be down 14% year over year because he says even pent-up demand, if it comes back in the fall, will not make up for this spring market. We are, however, starting to see a little bit of improvement. We saw that in the mortgage applications.
I thought
to
Penn was like,
purchase a
all right,
home
it's going
last
to take a
week. They
breather. We're going to go back
jumped
down to 17,
because
go back
mortgage
down to
rates hit
VWAP
a
or
new
something.
record low
Maybe
on the
not.
Mortgage Bankers Association's index. So starting to see some movement in this market, but again, those pending home sales in March down significantly. Pending home sales represent signed contracts to buy existing homes. So you'll see in these in the
Yeah, because
closings
Penn's
in
a
the coming
real
months, and of course,
company.
April is not expected to be
You're
much
invested in a
better. Sarah?
3x ETF that is a bear ETF
Diana,
against
thank
the
you.
market.
Just taking
I
a
guess
look
it
at
is
the
against
stock market rally today.
healthcare
Dow's
that
up
had an
422
insane
points.
run
Guys,
up
this is
during all
a
this.
perfect
That is
example
for sure.
today of how the market has
I mean,
behaved
it might
during this
be
entire
the
30%
right play, to be
plus
honest.
rebound we've seen from the lows in the
Because
last
healthcare
month.
and
that
all these
is
biotechs
very
did have a
strong market
huge
in the
run up
face
for
of
2
very
months.
weak
That was the
economic
only
data.
place
We
to
got
make
the
money.
GDP number for first quarter down 4.8%. That was even worse than economists were looking for. They were expecting a number from 3.5% to 4% down. And if you dive deeper into that number, it was personal spending that was the really weak disappointment, down 7.6%. The estimate was for a decline of 3.6. We knew the economy was going to be bad toward the end of March, and that's what's captured here. But it's apparently it was even worse than it was expected. And as that news was coming out, you know, the market was doing well, Jim, because the Gilead remdesivir data was coming out, giving some hope to that treatment.
What are we talking
That's
about?
been a huge driver of the market. And then the Federal Reserve. And we've got Jay Powell, the Fed chairman, giving a virtual news conference later today. It's that $5 trillion in prospective central bank buying that is also helping fuel this market, and that's what's leading to some of the gains.
You're so right.
Let's get to our Meg Terrell straight
Been
up
good,
the top
William B.
here
How you
for
doing?
more on today's big
White
news out of
Smoke
Gilead,
dropping
Meg,
25
which did
biddies.
come as
Let's
a surprise,
go,
especially
baby.
after that
How's it
disappointment
going,
out of
White
China
Smoke?
last week.
William B. out there?
Yeah, we've seen quite an up and down in sort of reports trickling out about remdesivir, but today we are getting
Meg, is it up? Is it down?
Word. And
Tell
we got
Oven
an official
Mitts.
word we weren't expecting to get. The first news from Gilead this morning was
Tell
actually about the NIH-run study of remdesivir. That's considered the gold standard trial here because it was placebo-controlled, and the doctors and the patients didn't know who was getting placebo and who was getting the treatment. So that's how you're going to tell whether a drug works. And what Gilead said was that that NIH trial met its
little
primary
jump in
goal. And we are
ADMA
expecting to
options
get more
prices
details
there.
on that drug, how well it worked at an upcoming briefing from the NIAID, and potentially Dr. Fauci, as Scott Gottlieb told us this morning. Now, we know that the primary goal there is the time to recovery for patients, so we'll be looking for any more details. Now, separately, Gilead also gave us the update that we were
I don't care what she
expecting
says,
today
just
or
keep
tomorrow,
showing her.
and that was in its own trial of severe patients.
Oven
Now, that was
Mitts
not
only
a
comes for
placebo-controlled
Meg's
trial, so it's
healthcare
difficult to,
updates.
take
That's
any
why he will
takeaways
never
about
bet
how
in
well the drug worked
LADB
there,
or
but the
whatever.
main headline from that
He's
study
all
was that
in.
they compared two different
He's
dosing
all in the
regimens,
other.
5
What's the
days
reverse of
or
this? The
10 days. And that's
XBI? He's
incredibly
all in
important.
XBI
They
to
showed
keep
that
her on
those two
TV.
dosing regimens appeared about similar. So that means there can be a sort of doubling of supply potentially of that drug. Now, Scott Gottlieb saying on Squawk Box this morning, he expects the FDA could move to authorize the drug under an emergency use authorization immediately. And now supply is going to be the main question. Gilead has said that by the end of May, it will be able to supply 140,000 doses of this drug at the 10-day.
Yeah, his is a
So
bear.
if it works as well in the 5-day treating regimen, that almost doubles the supply.
F
of
that,
this
man.
drug.
I'm
David?
in biotech. Go team.
Meg,
He's
thank
in
you. We're obviously
LABD
watching
is
that
a
closely, and the
fucking
market's certainly
a
responding
3
positively
times
to
levered
what is
bear
positive news, as you,
ETF.
explain it for us. Want to move on now to our earnings
LABD.
bonanza and our CEO bonanza as well this morning on Squawk on the Street. GE reporting its first quarter
Bear
2020
3X
results, of course,
shares
severely
ETF.
impacted
It's a 3 times
by the
levered
spread
bear.
of the virus around the globe,
Biotech.
particularly when it comes to aviation, a very important part, of course, of the company's overall business, where they saw dramatic declines in commercial aerospace. And are targeting more than $2 billion in operational costs out.
I'm
Let's
telling
bring
you,
the company's
Sniffles,
chairman
take
and
your
CEO,
money, dude.
Lawrence Culp
You got
to join us
660.
now.
It hit it. It
Larry,
hit it.
always
Set
good
the
to
sell
have you with
price.
us.
Take your money.
Earlier in the program, to my point, we had Dave Calhoun, of course, the CEO of Boeing, who joined us. And he said, Larry, it's going to be perhaps
It
3
might
to
do it,
5
though.
years
You never know.
for them to get back
It's on the
to
XBI. Look at the
2019
XBI tanking,
levels.
though.
When you hear that, how do you have to adjust your business? And do you feel like you've already done it to adjust for that new reality?
David, good morning. Thanks
David,
for having me
good
on.
morning.
I-
Thanks for having me on.
Investor
We're gonna
call
hit
earlier,
$18
but,
in Penn National
Dave,
Gaming
we
today.
speak
Casinos
briefly,
are closed.
as we do
Old
with all
people
of our
are the ones
customers
actually
here.
passing away
I think
from the
what we
virus,
said on
but
our call,
we
and I would
believe,
repeat here,
we
is that
believe
the
in
first
all the
and most important
stoolies,
step we
all the
take as a
chads
company
out there
in the
that
face
want
of
to
this
invest in
pandemic,
this stock, and they're
make
watching
sure we
this
come
tick
out on the
up
other side
13%
better,
this
stronger.
morning
GE
and
is to
clicking that
embrace the
buy
reality.
button to buy it up
And
even more.
clearly
God,
the
I
push
love
is gonna be no
America.
greater
I
in the
love
short
Robin
term and
Hood.
maybe over the
It's
medium
the greatest
term
thing in
for
the
us
world.
than it will be in aviation, given the airlines are trying to conserve cash, parking planes, bringing flight schedules
Hurts.
down, postponing in some cases.
Yeah, I mean, if
orders of new planes. That hits us.
if airlines
We
are
saw that
doing
in the
good,
first
rental
quarter
car
numbers,
companies have to do
numbers
good,
that,
right?
we didn't particularly like and acknowledge that are going to be
I
more
mean, that's like an
challenging here in the second
ancillary
quarter,
travel business,
which is in
basically.
turn why we doubled the amount of cost actions that we're taking in aviation up to $1 billion and cash actions up to $2 billion, all the while broadening.
What was the one we
same
shorted
effort
on the way down?
to
We
a
made some money off the
$2
car
billion level
with
on the
Oven
cost
Mitts,
side
right?
across our company.
You
$3
called the
billion
car short,
on
didn't
the
you?
on the cash side. David, I don't think you're
Larry,
ever done. I don't think you're
Right.
ever done preparing or reacting in a moment like this.
We hit
I
18.
don't think we've taken a particular view as to whether this is a 2-year or a 3-year
Dude, how
or
are
a
these
4-year
not going
recovery.
through the
We're
fucking
mindful of those
roof in
conversations.
value?
We just need to make sure that we're taking the appropriate actions here in the short term while protecting all the things that over
I
decades
should have bought
have made
so
GE
many pen
Aviation
calls,
such a
my
strong
God.
franchise in the commercial aerospace industry.
And to that point, when it comes to liquidity, where a lot of investors, you can imagine, are focused, you end the quarter with $47 billion
poopy
in
stock.
cash. You said on the call that's
gonna
really
pop
to cover
next week.
capital long-term debt.
They're fucking shaking out all the weak hands right now in ADMA. That's what they're doing. They're fucking shaking them out before earnings, dude. I think once we reach the earnings spot, we can short again on the paper tiger companies that are not actually returning to business. Cruises mainly. I fucking agree with that. That was kind of my mark too. Like, we're definitely not going back to 340, the all-time high, but I think like the 290, 300, I think we just, it's just a nice round number that everybody in the world is going to fucking pull back from, right? Like, you have to take profits
what we see in front of us. David, we would never say that that's all we need once and forever, right? Part of the reason we stepped back from offering a formal guide today was there's still, I think, a great deal of uncertainty out there relative to the economy at large, how the pandemic impacts our various businesses.
Maybe this is it.
So we're going to control what we can control.
We're at 290.
We're pleased to have that liquidity position. Again, the cost and cash actions will help us a great deal here in the short to medium term.
I'm scared.
And we will
I'm getting scared.
we'll play it forward from here, mindful that we want to make sure that we continue to bring those leverage levels down. We're unlikely to hit the targets we had envisioned and very much thought possible just weeks ago. But make no mistake, we are committed to making sure that we bring down those leverage levels in time.
Yeah. Well, Larry, you were about a year and a half into what is a long-term turnaround at GE, one that really just appeared to be gaining momentum when the virus hit. How then do you sort of reset now to think about, again, the long-term opportunity
kind of
that
a little
you're trying to seize while you're still dealing with life or death issues for the company?
Well, you know, in many respects, David, having an 18-month running start helps a great deal, right? Because we were already in the process of improving and changing a good bit about our company. So I think we just get up.
It's interesting.
Next day and embrace this reality. We wish it were otherwise, but this ultimately will allow us to drive more change. Our new leaders will assimilate more quickly. The people we've brought into the company the last several months, we're going to be able to drive, again, more, not only cost reduction, but more process improvement. When we talk about actions, we talk about inventory. We're talking about...
I mean, we do need to start looking for that point.
Lean implementation.
And if we're late to that point at 290,
we can't move people around as freely as we could before in our service businesses. It's going to require us to use digital technology. We already are. More today than we were just a few months ago. So those are the sorts of things, when the dust settles, David, that I think are going to show that we really have...
We're bouncing around here at 290. People are starting to think about exactly what we're thinking. Like, are we really about to go to 300 right now?
To make sure we...
like, are we about to go to 300
we work through those near-term pressures.
Larry, it's Jim. Don't know how you do it because it's kind of Job-like at this point. But one thing that also happened this quarter was that the president seemed to be interested in a company that really is chiefly a scanner company. All of us have had MRIs, know that you got to play the music because it's loud, but you make a lot of money on it. The president wanted you to make ventilators, not your strength, but by the end of the quarter, I kind of felt like you became ventilators are us. Pretty important.
We are a proud ventilator manufacturer.
He laughed.
Not our
this dude laughed.
As you highlight, but having been on the front lines in healthcare really since Wuhan, we knew this was going to be an opportunity for us to play a role not only here in the U.S., but really around the world as the case count mounted. So we took our Carestream unit, doubled production. We'll double it again here by the end of the quarter, all the while tending to the rest of the business. And in addition, we are working with Ford to bring on a lower cost unit at higher volumes, where we're handling a good bit of the design, they're handling much of the supply chain. So we're pleased to play a role. It's probably a small role in the grand scheme of things, but so much else of what we do is critical here. We've seen our CT scanners importantly deployed in these same situations, our patient monitors, even some of our digital monitoring solutions have been
Why casinos?
And making sure that the caregivers who are so challenged and
doing
such important work here have the best tools possible at their disposal.
One of the things that I've found this quarter
Spy, are you giving up now,
is that
Spy?
we outsourced a lot of things to other countries. Not always with the highest quality. You're bringing back some manufacturing to the United States, aren't you?
Well, our supply chains are in flux most time, Jim, as demand changes and the like. But we have, in a number of instances, brought back certain operations to the U.S. Yes.
Aircraft, India here.
I'm sorry, Jim. Could you say that again?
Some parts from India to here seem to be a trend. And I'm pointing this out, Larry, because we've taken our future, mortgaged it to a lot of countries that I kind of liked, but now I'm not so sure that are necessarily in our best interest.
Well, I think GE will always be a global company, and as a result, we're going to be in most every market around the world.
Is Jimmy Chill taking shots at foreign nations over
selling
here?
And servicing. I'm a big believer
Don't know
in
if
trade.
it'll have
I
an
think when we
effect.
get
Oil's
to the other side of this, we may have a different trade dynamic, and that
Pending
will
home
require that we
sales
have
tanked nearly 21% in March. But of course,
capability here in the U.S., and that'll be a transition over a number of years. Our standards, Jim, in terms of safety, in terms of quality, the world over.
Who's looking at homes during a pandemic?
That's the way we want to run our company, and that's the way we want to serve our customers all around the world.
Larry, when we would typically bring you on for an interview, which we always appreciate, we might focus on power, of course, which had been certainly one of the key areas you were focused on in terms of the turnaround at the company.
When do they report?
What are we seeing right now, given the dramatic fall in energy prices and oil prices in particular right now?
Aftermarket.
In terms of your gas power equipment business, your gas power services, and your overall power portfolio?
David, the power business, particularly the gas power business that you're asking about, continues, I think, a multi-year turnaround. Though itself will see some pressures here. We shared on the call that by and large we think we're going to see, from a turbine delivery perspective, another strong year in that regard. But I think that as the year plays out, just given some of the financing pressure, say here in the U.S. with the IPPs, perhaps in the Middle East with certain customers, we think that demand for new orders and thus down payments could
Tesla will report poorly purely based on
anticipated.
Elon's desperation to get the workers back in his tweets today about getting back to business. Absolutely, dude. They weren't profitable. And this fucking pushes them back months and all this pay from people and
where that was
leases and all, you know what I mean? Like, they own their own dealerships and all this shit. Like, he's fucking hurting right now for sure.
We certainly had challenges as well, moving our people around the world.
God, how expensive are those shorts right now?
In addition to some of the supply chain friction that we've been working through.
Most expensive puts in the land right here.
It was a decent quarter, another quarter of progress. It wasn't perfect, but I'm encouraged by what I see, as much in the financials as much as I see in the operating reviews we do with the businesses. that they're on their way.
Thousands of
but
dollars.
No GE business is really immune, David, from some form of COVID-induced pressure here.
Man, betting 500 isn't that crazy, though.
Leads me to my next question, which is your decision to cut CapEx.
Oh,
whoa! At this point, in terms of what you need to cut, at the same time without injuring.
Let's see what Elon Musk is tweeting.
Year 2, year 3 down the road in terms of your ability to grow.
David, the current roll-up has us reducing our capital
White
spend
smoke,
year on year
okay.
by 25%. I wouldn't say that's a final number. We don't want to spend $1 more than we need to this year, all the while making sure we don't shortchange the long term. How do you do that? I think it actually started back last summer when we went through the multi-day, in-depth strategic reviews we did with each of the businesses, right, to make sure we have a clear consensus as to where we're trying to take the business and the attendant decisions and commitments and investments we need to make with that.
Free America now.
So we come into a moment like this, rather than it being strictly a financial exercise, let's cut
What's going on, Rand? Hope you've been getting some cheeky.
From X to Y.
Look, we've been doing all right. We've been surviving out here in the world.
Production. We want to apply as much discipline
Give
as
people
we
their
can,
freedom
but all the
back.
while, we want to make sure we retain the context of the strategic intent we have longer term for the business.
Too much
so these are all really
of the
judgment
world.
calls, one by one. but I really think we set the stage for better decision making last summer, of course not knowing we would be in this environment today.
What is going
Larry,
on there?
what happened in Grand Forks, North Dakota? Did you have your employees wearing masks? Did they do any temperature check? What the heck happened?
Aaron, the coal mine Elon tweeting
I
like
need
crazy
to know,
before
were you
earnings,
protecting
justifying
those
bad
employees
numbers.
correctly? Because I do believe that without masks and without temperature checks, we could have something as disastrous as this happen many times.
Yeah, we're Jim. What happened at our renewable energy wind turbine blade facility in North Dakota is really disappointing. We had an outbreak there. The site has been closed for 2 weeks. We've been working with the team on the ground, working with the governor. Everybody's been very supportive. We had our standard PPE and procedures in place. We're still investigating the root cause of what happened to the team members there who have been impacted or infected with the virus. But make no mistake,
did JNO do a reverse split or what? Yes, I think it did.
And
I think it did.
From the time people enter our sites, temperature checks, PPE, physical distancing, and the rest, that very much is the way we have been operating in the facilities that have been up and running through this period, and is certainly the construct and the mindset we have later this year as we look to bring back those who have been working from home.
Chat.
You know, on that note, Larry, to end, how do you view the new world in terms of working together? I mean, do people who put together a jet engine have to remain 6 feet apart? How are you viewing the return to work?
Yes, I'd like to report some people are not living in fear.
Well, David, it will be a challenge in 1,000 different ways, right? As we rethink the way work is performed in a factory, at a job site, in an office. But again, safety will be the overarching priority here. And I think we're going to take it step by step, trying to leverage the experience we have from those facilities, be it in North Dakota, those in China.
I think he is afraid of being closed, for sure.
Let alone all of the help and input we're going to get from local, state, and federal regulators. So it'll be a step-by-step process.
Do I sell one pen contract
to do this
to buy one Tesla put?
To make sure that folks aren't only safe, but that they have that psychological comfort.
I mean, they can't be delivering
Very
fucking cars right now.
As we look forward to the rest of 2020.
Yeah, as we all look forward to perhaps a different day coming as soon as possible. Larry, thank you as always for joining us. Very much appreciate it.
David, Jim, thank you.
All right, I'll pick it up. 2% rally here for stocks. Communication services, a bright spot with Google, Alphabet's 8.5% move post better sales number. Facebook out tonight. We're going to take a quick commercial break. Stay with us here on Squawk on the Street.
Poker Shame, thank you for the follow. This is interesting, chat. Yeah, but we're already up in our... Now we're, like, looking good in our pen contract. We're up a G. We're on the right side of things. You know what I mean? I could sell one pen contract, though, and probably get 2 Tesla puts. No, what if I wanted to get one realistic put? And get a 570? Dude, that bitch could be worth some loot, dude. Poker Shame, what's good? I don't think so. Look at how much loot, though. If this fucking drops down to 600 even, this is worth fucking... All of a sudden, my $400 thing is worth $4 grand again. What are stonks? Snap contract I did yesterday is up 20. Snap. Snap is cranking it, aren't they? What does it say? Stocks? It does. Dude, it was early. I hadn't had my coffee yet, man. I ran down and cranked the stream on at 9 a.m. Dang it! Nah, I appreciate it, Tough Spot. You the man, you the man. Speaking of which, I need some more coffee. Thinking about shorting the fuck out of Tesla right now.
Welcome back. Time for our ETF Spotlight. Today we're looking at the First Trust Dow Jones Internet ETF, ticker FDN, on pace for its best month in more than a decade, having another strong day, up more than 3%.
Everybody says buy it too, but like,
higher on a revenue beat, 13%.
Dude, we had such a
sales growth
run
there.
up.
You also have CFO
From the
Ruth Morat
low.
saying the company has seen, quote, some very early signs of recovery and commercial search behavior by users. As I mentioned,
And that
Facebook
last
out
quarter
tonight, that's
got
helping
us
propel
fucking...
the overall market, which
When
is
was
higher
that?
by about 2%. The S&P 500. The only groups that are down right now are the defensive stocks, utilities, and consumer staples. We're going to take a quick commercial break. Stay with us here on Squawk on the Street.
Anything you could hedge it with? Yeah, the rest of my portfolio. It would be basically taking my profits right now. I would be basically taking the profits I've earned out of Penn and putting it towards fucking... Dude, it's falling as we speak, dude. It's falling as we speak. We should do it. Yeah, they're fucked. Boom. Sold 1 pen at 480 contract. Fair enough. Tesla. Take me to Tesla. Take me to the Tesla. Oh my god, they're expensive. $490. No. Must buy. Single. $475. I'm sitting out over here. Just one of them. Got it. Fair enough. I'm totally happy with that. We're already up. She gone. Good luck. That's a gamble right there. That's a gamble. But I think it's a smart one. It's contrarian, dude. Jimmy Chill has been saying all for the past 2 weeks, buy Tesla. It's the only good car company. Buy Tesla. Dude, they're reporting a fucking shit quarter.
Just a couple days of trading left in April as the S&P...
They weren't profitable. They're not profitable. Gas is down. Oil is down. People are freaking out, not spending money. Who the fuck went and bought a Tesla, dude? The truck, the refundable pre-orders, nobody gives a fuck. I need to see tens of thousands of dollars moving, not $100 pre-order fucking bullshit. No way that fools Wall Street. There's no fucking way. This shit's gonna tank. This is going to be one of those I wake up in the morning and it's worth several $1,000 contracts. Woo! Who's getting in on the USO, baby? XBI is climbing out of the hole. Did you take your fucking profits? Did you take your profits in LADV? Please tell me you took your fucking profits. Please. Please. Oh my god. You're a special one, Sniffless. You're a special one. This some one random guy on the internet thinks it's gonna hit on me. Oh my god. What if I told you pets.com was a better play? Well, no, I don't think so. No. What about... Dude, I don't believe. I hope he took his profits today. Penn. Just Penn National Gaming. And we're in this world that thought under lockdown conditions that oil was a good investment to either get in or stay in.
Welcome
deserves
back,
to lose their
everybody,
entire
and good morning.
portfolio
Here's what we
balance
know
and ever
this hour.
trading.
The Navy is expected
It's so
to
true.
announce an
We call because we have an
investigation into
ace.
the spread
Fuck
of the
you. We need to win a
coronavirus
flip.
aboard the aircraft carrier
We hit an ace?
USS
Yeah,
Theodore
bitch.
Roosevelt.
What? Thanks for the double up.
It effectively delays the reinstatement of that ship's former captain, a move Navy leaders recommended back on Friday. Captain Crozier was fired after a letter that he wrote pleading for help with that outbreak was leaked. Best Buy will slowly start allowing customers back into its stores by appointment only. In-store consultations will begin at about 200 of the company's 1,000 U.S. locations. Best Buy will also resume in-home delivery, installation, and repairs in early May. BP is
Also, I assume
donating
you got a
3
DM
million
from
gallons
Vlad
of
sometime in the last
jet fuel
24 hours
to
showing
help
his
transport
No, hell
personal
no.
gear and other essential goods. The fuel will go to Federal Express for charter flights directed
Not
by
one
FEMA
post
and HHS,
in
and
any
also
of the
to
stock
Alaska Air to support deliveries and emergency
or
services
anything day
for
trading
remote
discussion.
And Mattel's Fisher-Price brand is releasing a line of action figures of essential
Oh my
workers. There are
god.
16
It's doing good though
figures,
again today.
including
Like it ran
doctors,
up.
nurses, and
Not gonna
delivery
lie.
drivers. Net proceeds will go to
XBI
support
soon
first responders.
climbing out of the hole though.
As always, you can get more on a coronavirus coverage by heading to cnbc.com. Carl, I'll send
I'm
it back
not
to you.
on Twitter though, bro.
All right, Sue, we'll see in a little bit. Sue Herrera.
That's Discord,
we'll take a break
dude.
here.
She's
Lots of
Discord.
things are working this morning, including oil,
Discord's
the
dope.
transports, the industrials, the Russell. The VIX continues
Oh,
to
he said he
implode.
had to
When we come
download
back,
it or whatever.
We'll continue to talk about what restaurants may look like in the future with the CEO of Subway.
Heads on top of the table. Shouts Vlad, come back, friend. And now it's down below VWAT. It's a great day trade, let me tell you. That stock is a great day trade. I'm about to buy another Tesla put. No, I'm not. That's enough of a bet right there. That is enough of a bet right there. What's today, Wednesday? I don't think I have any day trades available. Do we have day trades available? Da-na-na-na-na. Did I put the right thing in? They're good, they're outside. They chillin', they chillin'. I need to go get another cup of coffee and let them in after this hand, though. Bye-bye, Tesla.
Retail is tracking for its best month ever, but one trader says there are only 2 stocks worth buying. Find out more on tradingnation.cnbc.com. More Squawk on the Street coming up.
Dude, Penn killing it. Do I even look at ADMA? God, I don't even want to click this button right now. Ah, we're up. Okay, back over $3. Let's go. All right. Okay. Okay. Does TOS not allow you to day trade 4 times, or they do like Robin and just it's not on? That's an FTC thing. It's a Federal Trade Commission rule that if you don't have 25,000 in your brokerage account, you can't day trade. You can do 3 day trades every 5 trading days. So basically 3 a week almost. It's like a week and a day because you have to let that 5th day roll over. You know what I mean? So like mine aren't going to be up until Friday of this week. So basically next week I have day trades available. But that's the same on any account. A TD Ameritrade account, a Robinhood account, any account. You just have to have 25 grand. I got to get to 25K in the account.
With us now
somehow.
on the path forward to reopening the economy, Subway CEO John Chidsey. John, welcome. Thanks for joining us. You've got more than 40,000 locations all over the world. How many are actually open at this point?
Globally, about 75 to 80% are open.
Who's this
and
guy?
In the United States, the ones that are open,
This is the
how do they
CEO
conduct
on
business?
Subway?
Yeah, it's about 85% in the U.S. For the most part, the ones that are in, as you could imagine, colleges, universities, places like that, malls that are shut down, those are closed. But for the most part, the drive-throughs, inlines, et cetera, are open. Obviously, we don't have
Getting crushed in
dining,
Tesla.
But third-party delivery, takeout, that allows the vast majority of our restaurants to stay open in the U.S. and quite frankly, in a lot of countries around the world.
How do you keep the people who work for you safe?
I kind of like some
and
Subway. I wouldn't mind.
How do
getting
you
some
take
Subway.
that and think about how you're going to keep your customers safe when you can fully reopen again?
Sure. Well, obviously, the thing that's of utmost importance is the safety of our crew, our sandwich artists, and our guests as well.
Oh.
So we're very focused on wellness checks, temperature checks when the crew
New
starts.
highs over here, baby.
We'll have all of our
We're
sandwich
making
artists
thousands of
go
dollars,
out.
baby.
We'll make sure all of the food
Thousands
is
of dollars.
at all times.
Let me get a new cup of
So we
coffee.
just
I'll
really
be right
double down on
back.
safety, and I hope
Hertz
when
going ham?
guests come in and pick up food, take out whatever they do, when they see people again in gloves and masks, they'll realize how seriously the industry is taking food safety and coronavirus overall.
Can restaurants like yours operate in a world where we have to social distance for the long run, keep such a space from each other? And how does that change the economics for the restaurant industry if it means ultimately fewer people in a place at the same time?
Yes, well, I think Subway is ideally suited for a couple reasons. One, we're first of all a chain of 100% franchised. Unlike a lot of QSR systems, we don't have a lot of multi-unit operators. We have the average franchisee has 2 to 3 restaurants in the United States, so we are the ultimate mom and pop, if you will, and totally woven into the fabric of local communities out there. But because they're smaller and they own just a handful of stores, they're able to watch over them, make sure the crew handles everything properly, that make sure the guests are spaced out appropriately. But then I think, as you know, the restaurant industry, QSR in particular, has gone much more heavily over the past few years to third-party delivery, to takeout, to catering. And so that part of all of our business has grown, and I think it's obviously going to grow even faster in the coming years. So I just think you'll see a bigger shift to those channels than even what you've seen in the past.
John, I'm curious about how you're dealing with costs right now, given the uncertainty that's out there. Advertising, for example, have you cut it significantly?
don't
Some
use
have
the-
reported
oh,
that
we
you
don't
cut
have
your
any timer
budget by
anyway.
as much as 50%.
Yes, we obviously cut our advertising budget.
Oh
the
my
back half of
God,
March,
Moose, dude,
first couple weeks of
Jesus.
April. I didn't think it made a whole lot of
Jesus,
sense for it. Our
Moose.
marketing team and globally, we did pretty much the same. So yes, we cut back, and now that things are starting to reopen, obviously Asia's a little bit ahead of us.
ADMA, okay, baby.
In Asia, believe it or not,
let's go. Just gotta have the faith, dude. Gotta have the faith.
And we'll ramp back up, and certainly
just
by
gotta
the
have
middle
faith.
of May, we'll be back to our full marketing weight.
I have faith that Tesla's gonna fucking sink when they report this afternoon.
Wow. Okay. So middle of May is back.
This means we have to stay live through the close of the market, right?
How many of these practices that you're putting in place do you expect to stay with well beyond
Bill Gates? If he says the word plasma, yeah, we would be.
Well, I think
obviously Trump saying it isn't working.
And obviously science. I mean, nobody has a crystal ball here. Nobody knows really, will there be a second wave, and what will happen when we hit colder weather come the fall, late fall, early winter. And so I think it's just hard to say. I think we have to go by what science tells us, how the consumer feels. Whatever the industry needs to do, I'm confident we will react that way and ensure that, again, guest safety and
wow, I'm making a big boy fold here, chat. Folding ace queen. There's a raise to 3.5 bigs and then a jam of 17.
There's been a study that was done out of China.
We're gonna go ahead and big boy fold ace queen there.
Air conditioning pushing droplets from one table to another to another. How are you going to avoid a situation
ace 8
where an air
he hits a
conditioning
6
doesn't infect multiple tables?
So
from
sick,
one person
dude. So
who is
sick how we were ahead there.
Fucking
$3.30 tournament. What the fuck?
Well, that is certainly something.
Trump wants you to drink the plasma or rub the plasma on your skin. I think plasma is most effective when ingested anally.
Sort of societal convention and
Moose AA. Oh my god, dude. You are on another one today. Oh, part of that was Bucci's. Holy shit, you guys are both going off.
John, I'm wondering how much Subway's leverage to people going to work.
John, I'm wondering how many footlongs can you sell?
To or coming from to get lunch. In terms
John,
of,
do you eat a footlong every day, John?
I just wonder. We can open all the stores we want, but to what degree are we relying on full employment to drive people coming into the restaurants?
Well, actually, sales have been fairly decent for the most part. As I said, places like colleges, universities closed, malls, things like that.
Yeah, I was kind of thinking, like, where is he at? Like, he just threw up a fucking bed sheet behind him, threw up a shower, like a curtain.
Outlets in the United States, we're sort of ubiquitous. We're everywhere.
It's all loud and shit.
And again, when you consider what percentage of the business, even before coronavirus,
is he in a convention hall? He didn't get the fucking notice that conventions aren't happening or something? He's still setting up his booth at the next convention. Like, where's everybody at?
And I hope that we continue to see that improvement gradually over time. So I'm not so worried.
Dude's ripping it all in.
Countries like Europe where things are completely shut down, restaurants aren't even allowed to be open, whether it's delivery or takeout. Here. That's a different story. But in most countries, like the U.S., I think traffic will continue to improve, and I don't think we need to have the economy back to 100% to have reasonable returns. Again, subways are much smaller.
His money.
I think as you know, we don't have nearly the footprint, so the capital investment's much
smaller.
A flip. The amount of labor in a subway is much smaller.
A little better than a flip there. He only had one over.
Burger King. So therefore, the unit
better
economics
than a flip. Slightly better than a coin flip.
Restaurant footprints of our size, let's say, than some of the larger players. So I actually think we're ideally suited for an environment like this.
We have
Finally,
55
John,
big blinds.
That most of your franchisees did apply for PPP, the small business
a lot of junk stocks are
from
running.
The government. But what do you say? I know you're not a public company, but
everybody got holy shit. Hertz is killing it.
Small businesses that were hanging by a thread. Subway's one of the biggest restaurant chains in the world.
Right, but as I mentioned, we're 100% franchised. Again, unlike a lot of other QSR players that have large, multi-unit operators that have 50, 100, some of them 500, 800. We literally have 10,700 franchisees in the U.S., and on average, they own 2 restaurants apiece. So they are truly the mom and pop that's out there in their community.
Can we move on from this stupid Subway shit?
Feeding American, why we
like, who cares about that, dude? For real? Is there anything dope on Wall Street Bets today? We get any dope fun stuff on Wall Street Bets? A typical look at a Wall Street Bets lab. DD lab. Oh
earthly way of knowing. There is no earthly way of knowing. He's singing. Which direction we are going.
This is perfect. Gloomberg. Oh my god.
Not a speck of light is showing, so the danger must be growing. Are the fires of hell a-glowing?
Dude, yes!
Yes!
Who did this?
The danger must be growing, for the rowers keep on rowing.
Oh, I
and
love
they're
it.
certainly not showing any signs that they are
Oh my god!
So you get nothing. You lose. Good day, sir.
Oh my god, that is fucking great. Using the scene from the rowboat after the chocolate river, that is so good. Oh my god, I love that.
Where did I go wrong? With the opening of my new boating school, I pledge that as long as a student is willing to learn, I shall never give up. Hi,
87 big blinds here. I have fucking tens. I mean, okay, bro. I have an overpair, but Jesus. Set of twos. Take it down, baby. Good fold, man. Excellent fold, sir. We're going long. Wall Street Brett's was a Korean drama. Did she get him killed?
이건 스페셜 땡스상.
Special thank you present. Futures
아까
contract.
누가 왔더라고요. 왜 그 문 똑똑히
Talked about all these crazy alternatives I can add to my portfolio.
맞아. 그 똑똑이 장사가 왔더라고요. 근데 물건들이 다
Cute baby logo.
아마 토마토 묘목이 있길래
Oil
마다마다
futures.
사용하기도 하고.
1,000 barrels right here.
돈이 있어. 감자 반포대랑 바꿨어요.
많이 미치는 거래란 생각은 들지 않았어?
그쵸. 아저씨 바가지. 근데 오늘은 또 마지막 날이고 내가 그쪽한테 많이 고마우니까 그냥 시원하게 질렀어요.
왜 나한테 많이 고마운 마음을 내 감자 반포.
What the hell expiration on these damn contracts?
나중에 내 덕분에 토메이로 먹게 될 때 후회하지다 마셔. 고맙다고 말하고 싶겠지만
And I got Spy 240 what? 240
내
puts.
덕분에 토메이로 먹게 될 때 후회하지다 마셔. 고맙다고 말하고 싶겠지만
240 May 15th. Oh my god. Saw that yesterday. God, how do they come up with such gold every day, dude? Every day. Gold. There's gold in them Nar Hills. Tesla making lower highs every time. Higher lows. So it's just consolidating right here until they report how fucked they are and we go back to 500. And tomorrow my shit is worth bang. It's gonna feel so good. 565 puts. I'm gonna wake up tomorrow. You know? As it climbs out of the hole and I lose my money. As it climbs out of the hole and my money evaporates. It's okay. Penn will carry us to the promised land. Penn is going to carry me all the way to the promised land, most likely by the end of the week. Jesus criminy, what's happening right now? Brrr. It's fucking printing over here, dude. How is American Airlines doing? How is Delta doing? 10%. How's Penn doing? 14%. I'll take 14 over 10 and 12. My number's bigger. We're like printing. 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 How you like that printer? Printing. Printing. ADMA, get your ass in gear. ADMA is crawling out of the hole, though.
That the American
What does this lady have to say? What do you want to say, lady?
Overwhelmingly, 6 to 1, 7 to 1, they say that we should not go out there any sooner than already, and that we should not end the social distancing because of the risk involved to their
money
health.
printer.
Even though we operate in 3 categories. 1, the
Oh God, not
livelihood.
Nancy.
2, the livelihood of the American.
I can only take it
Not
because
in
I'm
that
watching my
particular
money
order, but
print.
lives come first, and then 3rd, the life of our democracy.
Whoa,
so as we go forward, all of
baby.
these are connected. All these are connected, and the people's
Did not
will
expect to be breaking
to
into
say, I'm not
$18
going- I don't wanna
today.
go out there,
Let's
until I
fucking
feel some
go.
confidence. Because if you go out there, you
Win.
bring home what you
MGM.
bring back to your family and your children. So
Man,
science,
it is popping
science,
off.
science.
It is
The-
popping off in the casino sector, baby.
Calibration has to be factually based, scientifically.
Think she got a facelift?
evidence-based
She
as
kind
to
of does.
what
Maybe
the
she got some
prospect
Botox
is of
shots.
opening up certain,
I could see it. She
certain
does look a lot.
businesses and the rest.
Look at how. Are
But
those
we have to be
fake?
very
How are
careful
those so
because we're
like
going to,
Jesus?
waste
What is
the
going on
investment
here?
we've already made and keeping people safe at home, safe home shelter, whatever.
Are those
you want to
real?
call
Is
it.
those painted on? What do we got
Again,
going
as
on
we
here?
engage in
Is this lady
distant
real? Is
learning,
this a fucking
telemedicine,
robot?
Buying things online and all the rest.
Poker
We have
Chef
to
Jeff,
also
what's
respect,
good?
That there are many
She's in her
people
80s?
who are risking their
How old is she?
lives
She's not in her 80s,
to
dude.
save
There's no way
lives,
she's in her 80s.
and their jobs may be lost if we don't do the state and local. That is essential to both the lives, the livelihood, and the life.
Facelift for sure.
Madam Speaker, as I listen to the changes that you're talking about, telemedicine, studying.
She's been around forever.
Okay, we're in a world where people who are wealthy, people who have jobs,
My God,
contracts,
Penn
they can
is
stay
just
at home.
fucking
I
racing
see
right
another
now.
world. I see the possibility of 2 societies developing. Society that has to be out there every day,
What
in the
is
masses,
happening?
subways, risking themselves. And then this other group of people who are safe at home with all sorts of computers, very rich, a society that is not what you and I want to see. How do we prevent it?
Well, let us do it all
I
together.
mean, we're
This
fucking
is a
about to
moment
be
of
in the
truth
money
for our
on this
country
bitch.
About who we are. What is the humanity of America? We wanted to support the small businesses. They are the vitality of our economy. The
Turns
dreams
80 this
that
year. She
people
was
have,
born before
the
D-Day.
entrepreneurship, the risks they're willing to take.
Jeez, she's
for an
80?
idea. And so that's why we all gathered and wrote the PPP for that, so that we can try to reach as many people as possible for their jobs and their businesses. But that was not being done.
Dude, I hope
in a
I'm
way
not
that
with it
reached
when
the
I'm 80,
underbanked and the
dude.
rest
Honestly,
to
that is
address your
fucking
disparity
props to her.
Issues, and in our
Holy
second
shit.
bill, we were very proud to be able to do that as we.
Please let me be that functional at 80, dude.
Essential to how soon we can open up. But if you gave
My
everyone
God, then I will
every
enjoy
child
all
in
the hard
America,
work we're putting in
a
today.
laptop,
I will be
he or she may
fucking
still not have access or
constantly on
anything but think about
vacation,
the kids
dividend
in school
account
and
just
the rest,
printing
but
out
they
money.
don't have service. So one of the things we'd like to see, and as we go forward, is that we will have funding for broadband.
Dude, this is
always
going
on,
apeshit
high
crazy
speed,
right now.
all
Like,
over
what
America.
is happening?
Because kids now, even if they have
We're
a laptop,
breaking
they
new
can't even
highs
go to a
every
library
second,
or
dude.
a school or a
We're already at
cafe or any
1850
place
over here.
in order to have access.
I
to
dare
the network.
Tesla to
So that
report
is a
bad
big part.
tonight.
Digital divide is now
I
becoming
dare you to sell some motherfucking cars, Tesla.
address that. So there are many disparities, whether it's access to
Dude, it's
testing,
going back the fuck
healthcare
down.
would go with that, whether it's access to credit, which is what we try to correct in the other bill, whether it's access to the.
I might lose
internet,
$400
which is our
on this
means of
Tesla put,
cooperating,
but I'm okay with
for,
that.
Communication.
I think
And
it's the
also,
smart contrarian
with
bet.
respect, for the Postal Service.
We're at
which is
800
many of these
right
people,
now.
and especially largely in rural areas, as well as urban, how they get their
We're
medicines.
800 in a pandemic. Where the price of gasoline, it took me less than $20 to fill my car up. Why would I pay for an overpriced fucking electric car? Is it contrarian? I mean, I think so. Fucking Jim and all these people on CNBC have been sitting there saying the whole time it's the only car stock to own. Tesla, 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 right? Have they not been saying that? Has Jimmy Chill not been fucking parading this motherfucker all over the place for the past couple weeks?
The public sector, when we do our bills, state and local,
They don't even pay a
that really
dividend.
means
They're not even
honor,
profitable.
honor,
They're not even manufacturing motherfucking cars right now. Besides the fact that nobody even wants their fucking car. Have you taken a ride in Tesla before?
services,
I have not taken a ride in one. I hear from people that they are amazing to ride in, and I'm okay with that.
the list goes on.
My problem is their actual manufacturing.
Things that I think we have to address because the unemployment.
Like if I look at all these reviews on YouTube, people love the car, don't get me wrong, but they also say that they come with a lot of issues. Paint issues, panel issues, and gapping and things like that. I don't think the car call thing in a parking lot is, it seems scary. Everybody I've seen doing it fucking lets their finger, you gotta stand out there and be super close and fucking hold a button and shit. Like, I don't think it's fucking as good as they tout it, you know? Like, I want one. Trust me, I own Tesla in the M1 account. I'm long Tesla, long term. But right now, come on. $800 a share and it's not even fucking profitable and shit. It's an idea. It's a great idea. I love it. But I'm short for today.
Into the future. We also need to ramp up, because suppose, Jim, that tomorrow someone will have a vaccine or someone will have a cure. We're not prepared to.
I heard they're super fast. I heard they're extremely fast. I mean, the electric motor and stuff. There's also no maintenance to them. I mean, trust me, I want an electric car. I want one. But gas is fucking cheap as balls right now.
A cure or vaccine elsewhere, they're going to treat their own people first.
Let me tell you how cheap some gasoline is.
But again, we could start right now.
And man, you can get a really nice gasoline car for the same price. Like a really nice gasoline car. Fucking real nice.
Make that happen for us. It could take a year to do 100 million syringes and vials and the rest. Let's get moving.
Like, I'm getting a fucking Mercedes or an Audi or something before I'm getting a Tesla.
So we need to have, as you suggested,
if I'm spending that much money on a car.
What is needed at the time, the manufacturing and the supply chain here. And then we have.
But we'll see. I could be completely wrong. This is for entertainment purposes. I don't need that money. Penn National Gaming is fucking over here printing me thousands of fucking dollars right now. So, you know, it is what it is.
So values-based and so beautiful. Everyone in our country would know that he or she would have.
That's just a play I'm making.
To whatever that cure or that vaccine might be. I mean,
I could be completely wrong. Fucking Tesla could shoot back up to 1,000, and this could go to 0. Be worth nothing tomorrow, and I just sell it for the loss, whatever.
And know how to get it. It's about outreach, whether it's outreach to the vaccine, outreach to the care, outreach to the credit. We all have to be unified in this, because it's not only the right thing to do, it's what's going to make everything better for our country, our health, the health of our economy, and the health of our democracy.
Thank you for those kind words.
How far can Penn fucking run? This is insanity right now. 1850? What is going on?
Particularly when it comes to meat packing plants, when people are still exposed and have to go to work. I'm quickly trying to understand, where is our Manhattan Project? Where is our taking all the great people, the J.
Rug pull on what?
Glaxos, and the Sanofi, and getting them together so it's not just working against each other.
I was hoping you were saying Tesla.
What the CDC's role here is, and what happened to the CDC?
On the spy? What are we talking about? Rug pull where? Where are we rug pulling?
In the world, they're not delivering, Madam Speaker.
Where are we pulling?
Well,
where are we pulling the rug?
Please, but you have to know that even in the face of this pandemic,
Oh my Jesus! Fucking fuck. What happened? What just happened? What just happened? What could have possibly happened?
They said in the beginning they rejected the World Health Organization test.
Whoa.
They said they were going to make their own. They made their own.
Somebody was caught cheating on the numbers, huh? No, I don't know. Don't. Entertainment purposes only. Entertainment purposes only, chat.
Because of the cuts that the administration made.
I don't know dick. I don't know dick.
Knowing that the pandemic was
Holy
here.
shit,
So
dude.
That has to be a very vital force.
Hertz, you know who's
Center
next?
for Disease Control
Tesla.
is the main prevention
Doesn't look
and
like it.
outreach.
Looks like I'm gonna get
organization
fucked
in our
hard in
government.
Tesla. That's
and they
okay,
work
though.
closely with the World Health Organization, exchanging ideas, scientists.
Where were we at? Where's
clinical
our
knowledge
Hertz?
and all the rest. And yet now the White House is saying we're not
Hertz
going to
bankruptcy?
World Health Organization. That's horrible. But
No
even worse is
way.
that they're racing World Health Organization
No
from any
way.
of our initiatives that we're not going to cooperate with them.
Why
It's a
would I search it
pandemic.
on Twitch?
It knows no borders. Even if you don't like an institution, you have to recognize
Client earnings, what to look
that
out
it's
for.
in the interest of every person in our country for the World
Car
Health
tanking
Organization
too.
To succeed, especially in the Southern Hemisphere now.
Okay, Nancy, you're dying. Like, chill out. Get a glass of water, lady. It's cool. Halted due to volatility. Prepares for bankruptcy. Oh, shit. Oh, shit. Doesn't that hurt the airlines at all? No. Shit. Does that hurt Penske? I own Penske. I like my Penske. Get wrecked, Tesla. Get fucking wrecked, you little bitch. Get wrecked. Damn, it wants to go up. Just let people buy it up all day. Fair enough. Don't do it, Pen. Not like these. Not like these. We're doing so good. We're making so much money today. We're up lifetime again, finally. Yes! Or is that just profit and loss at the open? That's not lifetime. We're not there yet.
Alphabet earnings last
I mean, if
night,
Penn's up
and
only
one of the
10%
stark
today,
things was the
it will be
difference
hard to
between
complain,
direct
surely.
response advertising and general
Absolutely.
brand advertising. The idea that direct response is doing better. We heard that initially from Snap. Here's a big
I really need
confirmation
ADMA
on
to
that
fucking pick
general
it up.
idea from Alphabet, and it gives you some read-through, perhaps, to what's going to happen tonight with Facebook. There were other numbers that Alphabet talked about that could have implications for
I think
Apple and their
Facebook's
services
gonna do
number,
good.
certainly for Amazon and Microsoft in their cloud numbers.
Grab
So
some car puts looking for a quick
that
flip.
That intelligence that we're getting, not only for what happened in Q1, but for the trends at the beginning of Q2, Morgan. Is so
Back
important.
open.
Yeah, potentially some read-through for Apple when we get those results after the bell tomorrow, too. Speaking of the big mega cap tech companies that we are getting these results from this week, I mean, we started the
HTZ
week
is
talking
fucking
about the outsized
halted.
leadership of these names. Microsoft, Facebook,
Yeah, it's froze.
Amazon, Alphabet, Apple, and how they've led the S&P higher in recent weeks and accounted for so much of the gains. And now, really,
That's a
in the
good
last
date.
couple of
That's a
days,
good
the shift
quick
is
scalp
focused
right
to
here
the
on
rotation
cars.
that is underway as well.
I
as
mean, it's
investors have
definitely
sold
going
out of
back
those
down to
names
VWAP,
ahead of the
right?
results we've gotten, and the reason we've seen financials, materials, industrials, and in particular energy be the best performing
Did they
sectors
halt cars
for the
too?
week so far. It's a similar story for the Russell 2000, which are the more recession-sensitive small cap stocks as well, up more than 8% week today. And the Dow
Did they
Transport
halt
is up
cars?
something like 6%. They've been engaging more in the rally recently, something we haven't seen until recent days, and something that strategists and traders
Oh,
say
that's cars.com.
is
I'm an
positive
idiot.
at least potentially positive, at least from a technical level.
I'm an idiot.
Carl?
I was on Cars with an S.
Indeed. And then, meantime, we'll continue to watch the
Look
pace
at
at
this
which
nice
the economy
scalp.
reopens.
Look at this nice
Testing-wide, in terms of nationwide testing, we could double. We've
HTZ
doubled it in 10
moving again?
days. Likely to go 3x in
God.
the next 4 weeks or so, according to projections. The New York daily case count is below 2,000 for the first time in about a month. And then you got all the vaccine chatter from Oxford University and J&J and Pfizer, and then Dr. Gottlieb this morning, Morgan, saying that maybe late 2021 for national scale vaccine, but you could be looking at millions of doses available to deploy in areas where there is an outbreak. We'll see, depending on trials, but that timeline, in his view, is more accelerated than we might have thought in the past.
That's a good.
Absolutely, and I'd throw Moderna in there into the vaccine discussion as well. But it's really
Yeah, I mean, it's waiting for Hertz to tank, probably, right?
Vaccinations that are driving the market
I mean,
action.
maybe the play was just Hertz
Gilead
Direct, waiting
before,
for it to
and
open.
Also driving potentially how quickly some of these different economies around the country can really get up and running
Yeah,
in
'cause
the
it's
meantime. I
fucked.
think the key thing, especially given the fact that we did get that GDP read, that first GDP read for the first quarter earlier today, 4.8% decline, bigger than had been anticipated, is that this was essentially a recession we knew was going to come as the government and as people shut in and basically shut down the economy.
How low will it go? Oh my
That
God.
comes back online, where it comes
Does it
back
go to
online.
0 today?
And it speaks very much to some of the commentary we've gotten from CEOs on the heels of earnings just this morning.
Yeah, the GDP.
Hertz if you own Hertz. Sorry, I had to.
Declines, which is strange in a pandemic, but
Below
all those
$4.
non-COVID,
Wow.
procedures that did not happen resulted in healthcare down 4.9. We did ask a number of CEOs this morning who appeared on Squawk on the Street when they thought the economy would begin to reopen. Here's what they said.
We do have different shifts coming in at different times. So
Man, I was just congrating Options Noob. What, did you have calls on Hertz? Options Noob.
For a quarter or two, and then I think we can achieve the kind of stability and maybe even better stability than we had pre-virus, simply because of the reduced rates. I'm feeling a bit of a thaw, and I'm hoping it's a thaw, and we're going to continue to work towards reopening.
In the first
Car
quarter,
scary,
we saw a little bit
dude.
of softness in China as they were shut
Take
down.
your scalp profits
That's
if
now
there are
come
any.
back a bit here in April, but overall, I would say all things considered,
Car scary,
very,
dude.
fortunate that we're in markets where people need more
Hertz.
computing. So that's
Is it-
really our focus.
Is it just froze
Starting next
again?
week, here in the U.S., we are going to open a significant number of Starbucks stores. By early June, plan to have over 90% of our stores open in the U.S.
We're talking about something that has billions of consumers around the world.
That 300 chairs
that are
I
now
just sold for
moving, their
$437.
behaviors online. Something
Oh.
like COVID will likely accelerate that trend. For us, we're really just in the growth stage of trying to capture that growth.
I think traffic will continue to improve, and I don't think we need to have the economy back to 100% to have
Pen
reasonable
bros, dude.
returns. Again, subways are much smaller.
It will be a challenge in 1,000 different ways, right? As we rethink the way work is performed in a factory, at a job
Is this
site,
like
in
a
an
splice
office.
of every CEO talking
But
about how
again,
shit's changing?
Safety will be the overarching priority here.
Interesting, John.
I'm even
you
on the
look
puts,
at
might
some
let
of
it
the
ride till they
mobility
expire May
data out of
15th.
Google and Apple all around the world in the past couple of weeks. It is clear that you're sort
I
of
had 300 chairs I
past
just
the
sold
peak
for
of the
$437. I
health
bought for
crisis as we
$387. Oh
have been
shit, you
talking
made a
about
nice
it.
little
Now's
profit.
the time where we're going to start paying
Shit.
closer attention to second order effects,
Take
like
it.
cost cutting, like layoffs, like employment, the way we would in typical recessions.
did. That's what's
Yeah,
up.
no, not only that, but this earnings season is bringing us new layers, new nuance in data, not just on an individual company's results, but on how results in different segments break down and shed light on the types of businesses that are doing better than others, the types of consumer behaviors that continue, and maybe even a little bit about the types of businesses that will be able to reopen and give some sort of guidance or at least metrics on how they're doing. Speaking of which, Stifel's Scott DeWitt joins us now to discuss Alphabet's quarterly results. Scott, good morning.
Hey, John.
I want to start asking about those different segments of Google's business. Google being the part of Alphabet that makes the bulk of the money. Now, Direct response, they were saying, the sorts of ads that prompt people to download
Damn,
stuff,
that shit went
those
raging.
are doing better than brand advertising overall. The cloud business also generally doing well. This echoes a bit of what we heard from Snap a few days ago.
That thing was, they were getting pushed way up. The tankers were getting pushed so high, dude.
In this crisis, and how much of its revenue is
And that dude's interview on Kramer the other night, the owner of NAT, dude,
was strong relative.
I don't
to
know if that guy's all
but
there. He's definitely not all
does
there,
have
actually.
70% of revenue that's really tied to GDP growth. So if you look at the search
It was a
business,
horrible,
where
horrible interview.
Buyers are actually
You
buying
loved him?
keywords
The
that
dude
tie
could
to
barely even, like,
specific
answer the
commercial
questions,
content.
dude. What?
That business was very directly impacted, even though that's direct response as well. In fact, there was a 20.
He was the same way 8 years ago in his last interview. The guy's like a fucking space cadet.
Deceleration in the
With
search
like model
business.
ships
And
around him. He's
on
just
YouTube
like a
side as
really
well,
wealthy billionaire fucking somebody
direct response
who just really loves ships.
buyers that are in different categories.
He's like,
So
I don't
travel
care. We're
market,
going public to
indirect
build
response
ships
on
with
YouTube
your
may
money.
decline. Someone else
I
can come
love
behind that and
tankers.
actually spend in that category, whereas you're not going
It's
to have
hilarious. We
someone,
pay huge
a
dividends,
Wayfair,
ton of money,
purchasing
70K per
travel
ship.
keywords on the search side, and then
5K
finally,
to maintain.
within cloud, it's kind of interesting because
Dude,
cloud
but look at
overall
their
grew
fucking-
52% in the quarter. Even the GCP component of that grew faster. But yet Google is pulling back on data center spend, which doesn't actually
look at it over
kind of
here.
jive with the cloud
There we
business
can
being as
get
healthy as it
further.
was at the outset
Larger
of the year.
view.
And here we sit, despite these decelerating trends in the business, and the stock's basically flat year to date. So, we're optimistic long term on
Fuck
Google, but
this
it's just
shit.
kind of odd, the stock's so strong and healthy and stable, given that the deteriorating
Fuck
trends
that.
that continue in the business.
1%, negative 35%, dude. Fuck
color
this
on the guy,
stock.
especially given
Fuck
that
this.
Intel said that they expect
This
the
is
spending
worthless.
from mega scale cloud
Dividend
providers
history?
to continue at least into Q2.
Jesus
though the
Christ!
second half
Look at that.
is a
Nothing. You
little
were
bit
getting nothing
hazier.
before this.
Does
You weren't
that
even
mean
getting
you think
anything.
the others might be spending or allocating resources differently
Fuck
than Google
this.
is, or do we just have to wait and see?
I think it's a wait and see. It's really hard to know exactly why Google is pulling back on data center. I mean, of course, they're pulling back on headcount, they're pulling back on marketing and buildings as well.
Negative
So it's
growth.
really across the business. And
And
some would say
2%.
maybe this is an
It's
opportunity to
tankers.
trim fat in an
Fucking
organization. And so
floating
Google's still
steel,
very
dude.
much
No,
leaning into
I'm
growth
out.
in,
I'm super
in the
out.
cloud business, but being more disciplined about it. And that's as simple as that. But if you were to hear this type of commentary in a normal economic
Day
climate,
trade. They're day
you'd be
trade.
seeing a sell-off across the tech supply chain because it would be indicative.
I'm all in
of a
on that.
slowing
I'll be
in
back
cloud
when it's
business.
50.
It's extremely high.
Yeah, to that point, Scott, I'm looking at the stock.
You know, admit save me on HTs. Is that supposed to be a Z?
Businesses and
On
key
Hertz?
metrics within Alphabet overall, and this is not a company
Yeah.
that even in the best of times is issuing
She's hurting,
guidance.
she's hurting.
But that being said, what do you think is
Oh,
driving
dude.
the move right now? Is it that commentary and the fact that it is seen
At least
as
you got out of that mode.
positive relative to the doom and gloom of recent weeks?
How are the airlines
I would
doing?
say
They're
it-
peeling
it,
back
one, it's
now,
better
huh?
than
Everything's
fear.
gonna peel
It's a
back.
little bit of rate of change, meaning things are not getting
Except for
worse.
Penn, baby.
And I think,
Penn was
there's
just
a little bit of
breathing.
Investors wanting to hear what they
Rip
want to
car.
hear versus what's actually being said, because the CFO Ruth Perez
Rip
even
car.
the search
Get
business is improving.
paid.
She said it's
Oven
not
mitts
getting
get
worse, which is rate of change. It's
paid.
not getting worse, but it's certainly not improving at a rapid rate. And if you
Rip
look at our
car.
estimates for the year, we have a gradual
I'm up 40% this month.
throughout
Let's
the year,
go,
but my visibility,
baby.
anybody's visibility into the second half of this year is very limited. So you're making like a significant bet on improvements based on the commentary in that call.
Dude, Tesla's fucked after
it's
hours
debatable.
today.
And
I
so
cannot
we're
wait.
a little bit more cautious at the moment, even though we do love the stock longer term.
Poker or stock market?
Hey, Scott, there was a universe of investors who loved this name and maybe still do because of the optionality behind other bets.
Dude, I like
They
this
call them
contrarian
moonshots, for lack of
Tesla
a better
play,
word.
dude.
When you hear
I
Ruth
feel good
start to
about
get
it.
so
I feel good
disciplined
about this.
on,
This isn't looking
on costs.
strong.
So what does that do to the long-term
This isn't
picture
looking
of things
strong
that
right
they
now.
would bet on, even with a maybe smaller than even.
End of day, baby. End of day.
The spending habits at Google and Alphabet broadly will recover over time. So I don't think that
I mean,
there's
come on,
any
right?
longer-term project that's impaired by this period. But at the same time,
Who's buying a Tesla? Anybody you know
it
buying
is
a Tesla
important
right
to
now?
focus on what's actually happening at the
Anybody
company
buy a
right
Tesla
now,
in January and
particularly given what's
February?
happened with the
Anyone?
equity and equities across
Bueller?
the board, relative, to those longer-term themes.
Anybody
So
buy a
I'd be
Tesla in
constructive
March?
in the long term and somewhat cautious on the near term.
How many Teslas were
Fundamentally,
sold
though,
in
I really
fucking
don't
March?
think that anything will ultimately change at Alphabet. And
How
the
many
projects
how many
that we're
Teslas
now
are getting sold in
analyzing
April
will
with
get the
gas
funding
at
that's required
fucking
to allow them to grow.
$1.50 a gallon?
Scott, a lot of these subscription-based businesses, including the cloud ones,
The money
had
I'm
to
up in the
scale
market is now
during
printing
a
me more money. I'm literally creating
bull
money in
market
thin air
when
just like
GDP, as you
Powell.
mentioned earlier, was growing. So I wonder what specific metrics
I
you
love
think are
it.
gonna be most
The
important
money
over
just
the next
fucking...
couple quarters, whether it's more bookings-related revenue
is
and larger
wonderful.
deals or just revenue in general.
I'm unemployed.
John, we're speaking
I'm
of
not
cloud.
buying shit.
Cloud and perhaps other
Certainly not a
businesses
fucking
in
Tesla.
e-commerce that are subscription-related.
But for some reason, you are gonna go to the casino.
But people buying, customers buying something.
How fucking fucked is that? How fucked is that?
Right. So you want to be,
You will go to the
churn,
casino.
and the health of the underlying business. And I think in Google's GCP business has
Actually, Powell's Money Printer is costing every American more money every time. It turns out more big green sheets of paper. It's true. I love that you see how dumb the market is, but are still playing the momentum of the market. I mean, you have to, right? That's what you have to do.
Everything has a price.
First place on going after all that is a casino.
Recurring revenue growth, and I would argue that Google's not aggressive.
Orthodox Jewish funeral that drew thousands was absolutely unacceptable, NYC mayor says on CNBC.
Yeah, we're going to be talking a lot about cloud
In
this
New York
week. Scott
City,
Devitt
why would they
from
do
Stifel,
that with
thanks for
hella
being with us.
people fucking?
Thanks so much. Thank you.
Well, still to come, markets getting a boost from positive news out of Gilead. We're going to break
Yeah,
down
that
the
is
latest
unacceptable.
next. Stay with us.
I mean, I'm Jewish and that's fucking stupid. Partially. What? That's fucking crazy. It was a rabbi that died from the COVID. The rabbi died from the COVID. Let's all gather and fucking spread some more. So stupid. Mark it up on Gilead. Gilead barely up. I'm learning over here. Let's go, Veritas 618. Let's go. That's why we're here. We're chilling. We're chilling. Wow, that is fucking stupid. That is really fucking stupid. You can't stop them though. That's the thing, is you just can't fucking stop them. You can't stop them. Like, what are you gonna do? Round them all up and put them in a fucking cage? Like, I mean, what's that matter? You know what I mean? Like, it's kind of stupid. Like, there wouldn't have even been that many if you would just let people have funerals and shit. Quick pile into Hertz. No, don't pile into Hertz, right? Oh my god. Is it making the comeback? What about Car? Did you take your profits? Car is just bleeding off, huh? I agree, Moose AA. I'm not orthodox religious, like crazy religious in any direction. I think is fucking crazy to me, whether it be fucking Jewish or Catholic or fucking whatever the fuck it is, Islamic or whatever the hell. Like, I think all religion is fucking dangerous. I am a science-based human being. But but you have to support freedoms. I do. I absolutely do, Chop. Morning. I do. And that's what I'm saying. What are we going to do? Round them up and put them in a box? Like, it's fucking stupid. Let them do it. Let them do it.
We'll get to Meg Terrell, and there's still more information
If they want to be the dumb ones that turn into the fucking case study, where then we look at the dumb group of Orthodox Jews who all got sick, you know what I mean? Like, that's on them, dude. That's on them to be stupid right now.
The news that an NIH trial that is
I'm not going out. You guys see me posted every day. I haven't left my fucking house. I am not stupid.
In a briefing, potentially later today. We're hearing maybe even at a White House briefing, which is not currently on the schedule.
Jesus, this chat is dangerous, dude.
Now, also, Gilead did give an update on that severe study, essentially showing that the two treatment courses, the 5-day course and the 10-day course, were similar.
Do you take your profits in car now?
That was not a placebo-controlled study, so it's hard
All I'm saying is we're giving too much power to the government, and they're not going to give it back without a fight. That might be true.
Half as much time worked as well in the dosing.
I think I think honestly though, people shut down before the government told us to shut down, and people will probably come out when they feel comfortable. You know, well after the government has told us it's okay to come out. People are probably still going to take a second until they actually feel comfortable. I don't believe the American people are that stupid that they need the government to tell them it's okay to come out of your house now. You know what I mean?
Sciences regarding making remdesivir available to patients as quickly as possible.
I've been done doing quarantine.
Now the supply question is going to be the main thing.
Another accidental release.
It can make 140,000 treatment courses available by the end of May. But that's the 10-day course, so that could potentially be doubled based on what we're seeing today. And guys, we are going to be looking for any more details about the NIH trial.
Dude, there's no way a pen goes to $20 this week. I would laugh my ass.
John, back over to you.
All right, thank you, Meg. Meanwhile, we're going to take a quick commercial break and give a check quickly on the major indices. The Dow at this hour up 500 points. That translates into just over 2%. S&P up about 2.5%.
We are cranking it in Penn National Gaming today. We're getting back some of the loss in ADMA today. We took out a short on Tesla, which we will see if it prints at the end of day when they report today. I think we've got a good shot at this one. Our government uses every disaster to take away our freedoms under the assumption that they're just keeping us safe. Look at 9/11. Disaster we're going through exactly. The government is slowly but surely taking away all of our freedoms, and there's not much we can do about it because over the course of our history, we've let them get away with it too big. I think it ebbs and flows. Like everything in life, it ebbs and flows. Like governments build up until they get too big, then the people revolt. Then they change the name of whatever it is. You know what I mean? Used to be like fucking, you know, the Huns would just rule, and then there were like kings. Now we have these people that call presidents. But does it really matter? Are we really changing anybody? Dude, in my lifetime, I'm 34. Think about it. I've had 2 Bushes, a Clinton. Is Hillary about to be vice president again? You know what I mean? Clinton twice. 2 Bushes twice. You know what I mean? Did Bush 1 go twice? Like, like, in my lifetime, there really haven't even been that many rulers of my country. You know what I mean? Bush 1, only 1 term. Alright, Bush 1 term, but I was alive for that shit. Clinton 2 terms. Bush family for 2 terms. Bush 3 will be 3 terms. Like, I mean, it's not like I've had that much fucking variety in my life, you know? Like, can I get a little variety? You know? It's the spice of life. Like, give me a little fucking variety here. Bush, Clinton, Bush, Obama, Trump. That is exactly what it is. We are getting Trump, dude. We are getting Trump. If he picks Hillary as his running mate, I can't say I'm going to vote for Trump, but I won't vote for the other guy either. So, I don't know. I don't know what to tell you. Like, that's why I didn't want Hillary last time. I was like, no, this is fucking stupid. Bush, Clinton, Clinton, Bush, Bush, Obama, Obama, Clinton, Clinton again? Fuck no.
Thanks, Morgan. Yes, I'd like to welcome Harvard professor Ken Rogoff. Thank you for joining me,
Biden
Professor.
picks Hillary, the
I'd
Dems
like
are
to get
asking to
right
lose.
into it.
Dude,
Down
Biden is
4.8%
here.
First look on
Didn't he
Q1
tweet that
GDP.
shit?
Fed's
Didn't they,
balance
like,
sheet will
meet
know
together
more
and
tomorrow
shit?
afternoon, but it is approaching $7 trillion. And arguably, Japan, debt to GDP, around 250%.
Spy is
what have
popping
we learned
right
from
now.
Japan? What can we learn from Japan? And the big question is, can
Hillary
we actually
endorsed
get growth
him.
at a time of debt, the type of debt we actually need, not bailout debt, but survival debt?
Well, I think we're
Poor kids are just as smart as white kids. Biden, that's a quote? That's a horrible quote.
I think the Fed is a little bit different issue. How far
That is
should
such
it
a
go in
horrible,
guaranteeing
horrible quote.
private credits, municipal
God.
credits? If we can come out of this quickly, it'll
Wouldn't
look
it just
great.
be like poor kids
But
are just
if
as
this
smart
drags on, which
as
seems
rich
very
kids?
likely, that game plan's just
How
not
did we go
gonna work.
from
They're gonna
money
do
and
something
economic
else.
situation
I think
to
negative
race?
interest rates, but
It's
I don't know what
money,
they're really going to do.
just as smart as,
Negative interest rates,
or no
obviously,
money,
is
just as
something
smart
that,
as money.
You and I and many have
Right?
discussed it, not necessarily in a positive light in the past.
McLovin, what's
Maybe
good?
There's no choice. I'd rather not go there.
That is true.
Once again,
RHJF, that needs to be absolutely mentioned. Grab her by the pussy isn't exactly a much better quote. We have horrible options, dude. It's like South Park said years ago. It's the choice between a douche and a turd sandwich. Pick one. You can have a douche or a turd
That would
sandwich.
be a
Pick
market-based
one.
mechanism for at least, if you're not making it when the Fed's cutting to -3%.
Trump doesn't make sense. What are you talking about, Chaw? He just told people to fucking inject disinfectants in UV light.
Massive restructuring.
Are you fucking smoking rock? That was like the best meme for weeks, dude. For a week now.
A huge floodgate.
Pretty
of
sure since Joe
problems
Biden has
if we
Alzheimer's,
don't
can't remember what he
recover
said, then it
quickly
means he
and we
really
don't
never
do something
said
about the
it.
debt markets besides try to guarantee everything.
Is it just like the president is just like doesn't actually do anything, and like Pence is doing shit, and like vice presidents like Joe Biden did shit years ago when he was less into Alzheimer's? The arc of people eating and shooting disinfectants is really peak survival of the fittest.
Servicing the debt when it's this big really does get to be quite scary.
I think that was misconstrued though. There was a guy on Joe Rogan's podcast, the last podcast he did, and it made sense. Like, cleaning supplies are getting purchased in record numbers in houses, so obviously those calls are going up, and it wasn't necessarily from Trump doing it. Like, the number of calls been going up from poisonings and things like that. Everybody's also at home. Kids are stuck at home and stuff like that. So the number of poison control calls have been just going up. Hence, you better get Space Force up and running. We don't just want a website, we need recruitment and action. Oh my God. Dude, Moose, hey, you crack me up every day. Oh my God. We need the Space Force, dude. That's what I need in my life. Space Force, dude. ADMA taking a fat shit. How's our old buddy in LABD doing? 650. I mean, maybe it's on its way to 20. Who knows? XBI does want a tank. There might be something to that guy's bet. As much as we're making fun of that dude, it might be the play, dude. You think about it, last 10 years, what president made sense? That's true. Absolutely. I don't know what the fuck is going on in the world. This dude Snap calls me. We have 8s. First ace queen, we need one to flip, and we don't. He flops an ace. We need an 8 on the river. No, 2 levels away. 2 levels away. That was unfortunate. That was unfortunate, chat.
a response. The question is whether ECB President Christine Lagarde what she can do in the coming months. We have seen the Eurozone currency weaken by 3% against the dollar so far this year. Now turning to Italy, Fitch downgrading the country's credit rating to one notch above junk, citing the rise in debt levels stemming from the coronavirus. Fitch expects Italy's debt to GDP ratio to soar to 156% this year. The downgrade, though, sending yields on the 10-year in Italy as high as 1.8%. Carl, back to you.
Oh, I don't have
Seema, thank you so much.
Like,
Seema Modi. Let's get a coronavirus outbreak update this morning with our Sue Herrera right across the room. Hi, Sue.
Indeed, I am. Thank you very much, Carl. Good morning, everyone. Here's what's happening at this hour. A new study of coronavirus patients in China shows men are twice as likely to die as women, although both men and women had an equal chance of catching the virus. German airline Lufthansa is making mouth and nose coverings mandatory for all passengers beginning Monday. Travelers will need to bring their own masks. JetBlue announced earlier this week it will also require all passengers
Financials
to
are
wear face
raging
masks.
today. Bank of
And
America.
China's National People's Congress in Beijing now set for May
Morgan.
22nd after the initial
Let's
March
go,
5th date
dude.
was postponed. As many
Visa.
as 5,000 delegates from all over China will vote
go,
on laws
baby.
and
Hard like
appoint
rock.
new officials. As always, you can get more on our coronavirus coverage by heading to cnbc.com. Morgan, back to you.
And there is always more. Sue Herrera, thank you so much. After the break, how one of the world's biggest advertising companies is dealing with the coronavirus impact. We'll speak with Interpublic CEO Michael Roth. Stay with us. As the
Michael Roth. Dude, Penn wants to go to $20 today. Let's get it there, baby. Let's get it there, baby. Let's get back up to fucking $40 by January. That'd be so sick. These would be worth so much money. We paid $475. It's worth $460 right now. We're down $15. If Tesla gets to a new high of the day, I'll join you. Doesn't look like it. Lower high, lower high, lower high. Barely. I would just consider that consolidation on the ride up really from this one. Lower high. This is going up. Higher lows. But then we start to consolidate real close here, and now we're peeling back to it already. Tesla looks extremely weak, if you ask me. Right? All while the SPY's been going up. QQQ. How you doing out there, QQQ? Is SQQQ the play today? Because isn't Tesla a big part of the SQQQ? QQQ is up today, though. NASDAQ in general is like, fuck you. Nobody cares about Tesla and their damn self. I'm getting my money back right now, dude. I will day trade the fuck out of this. If it tanks going into the end of the day and we're up like hundreds of dollars, like before they even report, I will take the day trade, call them up immediately and be like, remove the fucking strikes. I understand. You know what I'm saying?
We turn now to our Julia Borston, who brings a very special guest. Morning, Julia.
Good morning to you, Carl. That's right. We're joined now by Michael Roth. He's the CEO of IPG Interpublic Group, one of the largest ad conglomerates in the world. Michael, thank you for joining us this morning.
Michael, are you there?
I'm not hearing you, Michael.
It's my pleasure. Nice to see you.
Oh, yes. Okay, now we've got you. Now, when you reported earnings, you warned of a very difficult second quarter and more layoffs ahead. When
Who's
are
this
you
guy?
expecting a recovery, and what does that recovery look like
On
for
Penn?
an ad market that is
$3.48 is my average in.
IPG and the rest of our
It's
sector
at
and
$5.15 right now.
We really don't have visibility into the rest of the year. My comment was referring
Oh,
to
my strike
the
price on
significant
Tesla.
impact the immediacy that many companies, particularly our clients.
Oh, well,
as
the
well as
price
other
that I
major
bet. Oh, I
corporations,
bet on
took action to
565
protect their P&L
by May
and their
15th.
liquidity,
But I'm obviously
and
going to
the
sell
biggest
it
hit probably will be in the
regardless
second
of what
quarter.
it does tomorrow. If I take a huge hit, it is what it is.
We're
I don't
basically,
care. If it
looking
fucking,
at the second quarter
if it
as
drops,
a sign
we're
of
going to
what's gonna
fucking
come
print
for the rest
money
of the
and be
year.
happy.
But I do believe we're starting to see, working with our clients. You know, our model is a consulting model, and we work with our clients in terms of how they should spend their money, where should they spend their money, and what the content of that spend should be. And 95% of our people are working
What's
from
Elon
home,
Musk saying?
but that doesn't stop us from communicating on an everyday basis with our clients to
Has
see
he
when
said
they
anything
can best,
since?
reach their consumers, if you will. You know, this recession is a consumer-driven recession, so it's very important that the overall economic health, if you would, recovers, and we're sort of looking at that more towards the end of the year, if not a little bit later. But it depends on the sector and where our clients are. Obviously, airlines and travel and cruise lines, we're not going to see a big recovery in those markets. Sports and marketing took a big hit in terms of events as well until we can get back safely to those venues, if you will. So it'll be a mixed bag in terms of how the recovery comes back, but we do see it coming back. And now more than ever, the advisory model that we have is important because the clients are looking to spend, you know, like many, we're spending a lot of time on TV, but we're also continue to use search and social in a big way. So all of these different venues.
Speaking of search,
Damn,
Michael,
then car fell back down below 17. Are you about to fucking keep that shit?
There, but they were less steep than anticipated. Do you think we'll hear the same thing from Facebook this afternoon?
Yeah, I suspect you will. Look, as I said, it's a consumer-driven recession, so you know certainly people are looking online for e-commerce, if you will, but they have to have money to spend. So until we see a recovery in that front, we're going to see cutbacks from advertisers. So I suspect you'll see a pullback, just like you know many marketers are pulling back until they have clarity in terms of where this economy is going to go and how soon people are going to be getting back to work.
Jesus, Penn wants to fucking
your clients,
rage.
where are you
Killingbird,
telling
what's
them
up,
to
brother?
put their advertising dollars right now to have the biggest impact?
I'm missing out on this crypto rally with you. I feel like shit about it.
Which are the sectors here that are going to suffer the most and potentially those that are going to benefit as dollars move around through this
Bitcoin's
crisis?
about to soar,
Well,
isn't
even
it?
before this crisis, we saw a shift, as you know, from linear
Bitcoin
TV
is about to
digital.
soar. Crypto to the moon, dude.
And we believe that
It's the new gold,
this
isn't it? It's
crisis
gold
is
up, gold's
accelerating
down.
the fact that this is a digital world
Dude.
and will continue to be.
So
there's no
crazy.
question that
Silver
working
up,
from
copper,
home,
platinum, palladium, all up
consumer
though. Gold
behavior
barely
in terms
down.
of e-commerce have all going to
Crypto
change
to the
dramatically,
moon.
and it's all been accelerated. Our role is to find the consumer.
So wild,
Whether they're
dude.
watching TV, we know they're home, or on social media, or search.
Penn National
And
Gaming
that's
is
why
printing
our
for us
investments in
today.
data
Thousands of
analytics,
dollar day.
are so important. And
$2,000
working with our
day
creative
today.
teams to get the relevant message out to the right consumer, and more importantly, to the right
We need
audience.
this bad boy to push up
We
over
have the
20 right now. It'd
capability
be
now
sick.
using our Axiom and Kinesso offerings to really target market that message to the right consumer with a reliable, trustworthy message in terms of
Dude, this thing's about to
connecting
break a
to
new all-time
brands.
high right here.
And brands are going to be more important now than ever, especially on e-commerce platforms, because if you don't have brand loyalty and brand purpose, why would you buy one brand over another in terms of the e-commerce platforms that we're seeing so much growth? So I think it depends on the sector, and it depends on what the clients are looking for. The good news for us is that that's our sweet spot.
1850 seems to be
how we advise
the
our
level, huh?
clients.
Hey, Michael, you know, one of the more bearish outlooks about advertising, even though viewership of all kinds of media is up, is that clients didn't want to be placed next to virus-related content. Is there a stigma to that or not?
There's
not
no
so
question
hot.
that's an issue. In fact, I've spoken directly with the senior executives of Google, to be specific, about that concern. Because, clients are looking to us and helping them navigate that. We have, in fact, in our media brands organization, a chief safety officer who helps us find where on YouTube,
Jesus,
which is where
this
you're
is
referring
ripping,
to,
baby.
some of these ads can be placed.
You
and
cannot
it's,
stop
it's
Penn
very
today.
important to us that they get that right. We certainly don't want our clients' brands being associated with any of the negativity and offensive work that is shown on YouTube. And Google and Facebook have committed to working very closely with us to make sure that doesn't happen. And we see a good partnership with both those organizations.
This guy runs like an ad company.
Michael, this is Morgan. Daniel Eck of Spotify was on our air a bit earlier today, and one of the things he noted is that he
IPG,
sees
is that what
some
it
of
is?
the trend lines around advertising being accelerated, so specifically physical to digital,
Jesus.
linear to on-demand, and he believes that once we get through this crisis, or as we come through this crisis, that you're going to see that those trends move even more quickly. Is that
They pay
your
dividend?
expectation as well, and are the conversations you're having already moving in that direction?
Well, as I said before, there's no
Oh,
question
wow.
that the world is shifting more dramatically to a digital world. It was already starting, and we knew that was going to happen.
That's a really nice
And one of the
dividend.
other things about digital right now, it's much more flexible in terms of how the ad spend, frankly, can be canceled. One of the things we were facing was once this crisis hit, and the cancellation of a lot of sporting events on linear TV, which is a big deal. The question is, what do our advertisers do with those dollars, and whether they can be shifted into the third or fourth quarter, or how can they reach their consumers right now? So therefore, the ability to use our data
They've been
and
paying a
analytics
dividend? They
tools
stopped
to help
paying
them
though.
reach
Look at
it,
that.
lends itself
2002 to
to the addressable
2012.
market on the digital side of the business. But that said, TV is more time is being spent on TV now than ever, and it's chasing content. So in the end, we're agnostic in terms of where our clients spend their money, and we just want to find the best value and reaching the right consumer with a great message, which is why all of our PR services and our creative services really come into play, as well as the data and analytics.
It's kind of like apps, isn't it?
This is John Fort. I'm wondering if you're seeing particular bright spots in what your clients need marketed. And I'm thinking about, our parent, another unit of it, Universal, had Trolls World Tour do particularly well. I imagine that sort of thing needs to be marketed. ESPN's Last Dance. Also, work from home furniture and equipment doing better than some might have expected. Are there things like that you're seeing that clients need marketed in different ways digitally because of the situation we're in?
Oh, there's no question. Obviously, e-commerce platforms, and we work very closely with your parent company, by the way. And of course, they're launching Peacock and all the different offerings. Some are ad supported, some aren't. So there's a whole host of opportunities for us to reach those consumers.
We really need to bust this fucking 302 level, don't we?
If brands aren't investing.
Look at how important this is. It's been fucking resistance. We broke above it and we've come down. We're trying to build support here, basically. Is that what we're doing before we take off into earnings? Come on.
When we had the financial crisis, we found that brands that didn't spend going into 2010 were at a disadvantage with respect to the recovery that we saw in 2010. So there's, I'm a little biased, but there's no question that if you're spending on
look
your
at how
brand
much
and
time
the
we
brand
spent
has
at
a
$3
purpose and
every year.
loyalty, and of course the efficacy of the product is critical. But now's the time.
Are we
brands
just
should be
stuck in this
spending
trading
because
range right now?
Their competitors are spending, and they don't want to lose out on market share. Now, of course, there are brands that don't need advertising in this environment because of the demand cycle, and some of them actually are running out of supplies. But even those companies realize the importance of maintaining that loyalty. And that's where our creative capability and our ability to reach the right consumer with the right message becomes paramount.
Now, Michael, I'm hoping you could just give us a sense of how your business is really changing because of this. You're creating commercials for your clients from home.
And the whole advertising world looks like it's really changing, the end of the upfront ad buying period, et cetera. How is your business going to be transformed by this?
There's no question about it. Just as an example, just the other morning, I had a global Teams meeting.
Tournament up here. We were waiting for the 660. We forgot to get into it.
Speaking to our associates in India, in China, in Brazil, all at one time. And the same thing, they're telling me that the same thing is going on with our clients. We're actually developing closer relationships with our clients as a result of us working home and using the digital tools that are available. Now, the question of how we produce work, we have a global footprint and we have global production facilities all over the world. So, for example, in China, we're back at work in China, but we're still 95% working from home. And we've done some surveys, and frankly, our people are enjoying and I think that, and they're actually more efficient working from home. So we've already started looking at what our footprint should be going forward. And there's an interesting dichotomy here. On one hand, you're going to say, well, if everyone's going to be working from home, we don't need the footprint that we had before, and certainly we're looking at that. But the other side of it is when we do come back to work, those agencies are going to have to follow social distancing. So the space that we're going to need is basically going to be more if we're going to have the same amount
Car?
of
Did we
people,
get out of the car?
in that location. So we're looking at staggered work hours. So all of these factors. But I can tell you one thing. We're not
highs, kind of the
back our
same
people
low.
till we are-
Just
till we're
consolidating
assured
down there.
of
Who
their
knows
safety.
what it's going to do?
Frankly, there's
How's
no
Tesla
need to.
doing?
Given how well our people have pivoted to using
Nice.
technology to work from home, we're just not going to bring
Car
our people
looks
back
super
until,
weak. Car
they're
looks
comfortable.
real weak.
Some of them may not even come back anyhow because they're concerned. So we have to deal with that reality. And how many people can fit in an elevator safely?
It does.
So we're addressing
It's going
that.
down.
We're addressing
Bring
that
Tesla down with
as
it,
we speak
baby.
right now, actually.
Certainly, so many questions.
I don't know
about
how
what
they're
the
related,
future,
but-
not just of advertising, but the future of the workplace looks like. Michael Roth, CEO of IPG, thank you so much for talking to us this morning.
It's my pleasure. Thank you.
In New York State, meanwhile, out with its latest numbers on COVID-19, here is Governor Andrew Cuomo just moments ago.
What's Cuomo saying?
Hospitalization rate ticks down. Good news. Net change down. That's good news. Intubations down. That's good news. COVID hospitalizations, new ones per day, just about flat. It's not great news. Actually up a tick. So that is not good news. What we're watching now is how fast the decline, how low does it go? We don't want to see 1,000 new cases.
How fast the decline?
We'd like to see that in the low
No doubt. Or is
hundreds,
it up a tick?
ideally, of new cases every day. Death rate, terrible news. 330.
Deaths
You
are
see
down.
The decline has been slow at best and still disgustingly high. So we're making progress, that's for sure, but we're not out of the woods yet.
All right, that is New York's governor, disgustingly high, as he points to metrics of new cases on a daily basis, at least. As for the markets, though, stuck in a very, very narrow range with some decent gains here. Dow's up 500. We'll take a break.
So I want to watch it. I want to watch that again. Look, we're live now on YouTube chat. I don't know if anybody's watching, but
Workers are at risk. So we're going to do additional testing. And we have to watch the hospitalization rate and the diagnostic testing rate. How many are positive, how many are negative. 2.1 book out, right? How many people that is now on, which is where we are. So we have made, could have increased. When you pin areas that are elected folks who are out there every day, so every
did they miss
they're
it?
the ones who are really doing.
Time missed it. I'm gonna go work out. We'll be here. On break, we're gonna do some push-ups. That's actually, we need to do that. It's good you say that.
their editorial comments. Well, I think this, I think this. No. Let's just start with the facts.
Start with
Just
the facts.
ma'am. That's what we do. Joe Friday. Get to know them. Hospitalization rate ticks down. Good news. Net change down. That's good news. Intubations down. That's good news. COVID hospitalizations, new ones per day, just about flat.
Flat.
That's not great news. Actually up a tick. So that is not good news.
Barely up a tick.
What we're watching now is how fast the decline, how low does
People
it go.
keep hitting on my girl. I gotta
We
be
don't
more
wanna see
intimidating
1,000
even
new
though I'm
cases
6'4".
every day. We'd like to see that.
Yeah, I need to be
in
working
the
out.
low hundreds, ideally, of new cases every day. Death rate, terrible news. 300
What did he say here? What
new
was right
cases
before this?
every day.
Okay.
Death rate,
It's
terrible
down.
news. 330. You see the decline has been slow at best and still disgustingly high. So we're making progress, that's for sure, but we're not out of the woods yet. And we're proceeding with caution, and there are caution signs out there that we should pay attention to. Singapore is talking about a second wave with 900 new cases. This is after they controlled the beast. They were on the decline. They're now looking at new cases. Germany is a situation that we should also watch and learn from.
Oh, we have a
They
straight.
relaxed
We had a
and
straight.
started to
Thanks,
reopen.
thanks.
They're now
We
seeing
win
an
that hand.
increase.
We win that hand.
And these are interesting. The rate of infection, which is what we watch, was at 0.7.
Tesla dumping off now?
One person infecting 0.7 of a percent. Obviously less than one person.
We're in a really tight trading range today.
1% infection rate is one person infecting one person. They were at 0.7.
Off in ADMA.
They started to reopen. In 10 days, they went up to
Stimulus check just came.
1
Poker Chef Jeff is
for an
rich,
infection.
baby. Damn, I should see if I got one in the mail today then.
That's troubling. Shows you how fast the infection rate can increase.
They're gonna be like, "Fuck you, Rand. You ain't got shit."
If you don't do it right on the reopening. So proceed with caution. Our reopening is different. We don't have a conceptual plan. We don't have an abstract plan because there is no conceptual plan. There is no abstract plan.
Wait, it didn't come
You
or
have
it
to have
did
a
come?
plan
If
that is
only.
based on facts,
what?
based on specifics.
Mine
This is
came
not
into
about
account directly.
politics.
Oh, no,
This is not about
fuck.
spin. This is not about emotion. There are no
Did I check my
conspiracy
bank account?
theories
There's
at
no
work
way.
here. We outlined a 12-step
not
plan that is
I'm not
factual,
gonna juice
that is
myself
based
up
on
about that.
numbers,
There's no way.
based on data, and then it has a numerical circuit breaker that is not subject to personal emotion or desire, but just
Tax returns,
checks
damn, that's
and
what's
monitors
up.
that infection rate that we
Poker
just
Chef Jeff
saw
is
in
rich.
Germany and is watching for those increases. And if there's an increase, circuit breaker stops the reopening at that point. Some of the specifics we're looking at: you must have 30% of your hospital beds available. We can't go back to where we were, where we overwhelmed the hospital system. We have to have a 30% buffer. We have to have 30% of ICU beds.
Dude, Cuomo
We have to
for
have that
president.
buffer before we start bumping up against total capacity. And we have to watch the hospitalization rate and the diagnostic testing rate.
Where is it?
How many are positive, how many are negative, which we'll take on a continuous basis. You see that number start going up, worry. But it's all based on the data and the numbers. I'm sorry. And the rate of transmission, RT, rate of transmission, not road and track, rate of transmission has to be 1.1 or less. We just said Germany
Did you
is at
delete that
0.1.
tweet?
Because the 1.1, that is textbook
Here it is.
outbreak.
Damn, it was an hour. Damn, he's been tweeting a
So
lot. My
watch the numbers and watch the transmission rate. And how do you do that? You do that with testing, right? And that's why everybody's talking about testing. The testing allows you to continually test, sample, how many people are positive, how many people are negative. You see the positive start to increase through your day-to-day testing. That is a pause sign. We were doing about 20,000 tests. We said we wanted to double
Maggie
that.
blocked you on Twitter,
We're now
what'd you
on
say?
average about 30,000 tests per
Guac,
day,
remember me? I told you to look
which
at
is a
UAVs.
dramatic increase, not where we need to be, but
What was that? Were
dramatic
those the
increase.
airlines?
Where
That's
we
what we
are
were trying to
now, you
remember,
should know, is
UAVs.
New York State is
We were
doing
trying to
more
remember
than
what that
most
was. Is it up like
countries
crazy today?
are
Yeah,
doing.
it is.
So we have been very aggressive.
Yeah, all
in
the
testing,
airlines
and we
really
have
did
made
well. We were
great
talking about it
progress,
earlier. That's
and
what's up.
New Yorkers should feel good about
10%
that,
in
but
here.
we
What is
have
it?
more
What
to
was it?
do. On elective surgeries, we had canceled all elective surgeries so we could have increased capacity in the hospitals.
58%.
When you
My
cancel
God.
elective surgeries, hospitals feel
I'm
financial
around it. We're doing all right.
pinch because
We're
that's
doing
where they
all
make
right.
their money, is on elective surgeries.
Oh, no,
So
wait, this was just the
for
aerial
areas
systems
that don't
company.
have a
This is the drone
fear
company
of a
that's announcing a
COVID
commercial
surge,
deal. Wow.
we're going to allow elective surgeries
I
to
mean,
begin.
yeah, I
That's
think so. We
primarily
just
in
took a
counties
bet.
upstate.
We just placed
Again,
a bet on
counties where we're
Tesla
still
sinks
worried
after
about a
hours.
surge in the COVID
So
beds.
I'm gonna probably have to stay
We're not
streaming
going
until
to open
late.
it up to elective surgery until we
might as
know
well
we're out of the
fucking-
woods on the COVID virus. And this
Other
is a list of
tech
companies that
companies
are
and
eligible now
Silicon
for
Valley
elective
stalwarts that
surgeries. I'll
are
do an
looking at
executive
all of
order
this
on
and
that
developing
today.
capabilities
We've
right
been
now
worried
as well.
about frontline workers because they are the heroes.
Who the fuck is this?
Conversations are
Look
at
at
some
his
of these
green screen.
companies
This guy looks like
around
he's
that
trying to
balance
sell you
between
something. He's got the
health
Trump
and
come
safety
over going.
protections and being able to help enable
Tesla
the
likes
economy
report
getting up
late
and
as
running
fuck,
again
though.
versus
like they're not gonna
the
report right at
surveillance
closing or
piece
anything?
of this puzzle and what that could mean in terms of civil liberties, privacy, data protections, even
No longer moving to
constitutionality.
LV. That's probably smart.
Yeah, well, I know at companies like Citizen,
Nobody suggested
the
for
idea
new
is that people
ideas.
only opt in, and then the data is completely deleted after 30 days. I think that's generally the right strategy. Is people should control their own data, should be able to decide how it's used, and you have to be really careful with that. So I think all these companies that work with data, the whole framework is that they are privacy engines, and they have to be very, very clear about who can see the data, what's done with it, and make sure that's being controlled by the people making the laws, and make sure those people are being watched as well.
This guy's in space right now.
And
Yeah, I know
he's
you've been
also
pretty
in
critical.
on space.
Go ahead.
He's 100%
Joe,
in on
I'm
space.
curious what you're doing as an investor during this period.
So actually
I have
isn't doing
heard
that bad
some
somehow. What the
investors tell me during difficult periods like this, the volume of deals that they're looking to do actually goes up. Maybe they're smaller deals. They feel that discipline-wise, during good times you should do fewer. During bad times you should actually do more. What's your take?
You know, I think there are some really great companies that are selling way too cheaply right now. We don't usually play too much in the secondary markets. I'm the chairman of an exchange called Zimbato, and it's interesting. Airbnb, for example, I think it was trading at 165 on that per share before this. It's now trading in the 70s. And, there's a big question of, have some of these big names sold off too much? On our side, we're mostly doubling down on our favorite companies we know well. It's really hard to make a decision
Say
with a company you
Tesla.
don't know well.
Let
we
this
get to
dude
know
say
people
fucking
in our
Tesla.
space.
I
We're
will
betting on
laugh
the
my
team.
ass off.
So
Who
for
the
us,
fuck
it's
is
mostly
this
about companies we know well, and doubling down on the best things in our portfolio. In a lot of cases, you see companies reopening rounds from a year and a half ago, which allows them to get enough runway to put off the next round conversation for another year, because Series Bs and Cs are not looking very good in this environment if you're on the entrepreneur side.
Joe, great to get your insights. We're going to have to leave it there. We're getting some breaking news. Joe Lonsdale, thanks for joining us.
Thank you.
Joe, thanks for your fucking weird green
Yeah,
screen
Morgan, we're going to
background. Get
start
out of here.
watching some policy. We're getting some comments from Fauci and the president regarding Gilead, but we are going to turn to Eamon Javers to talk more about that executive order on meat processing plants yesterday. Hey, Eamon.
Spy has
yeah,
been
Carl, I've been
fucking
talking to
running. Look
labor
at the three-year
about
chart
this.
on
They're
this mug.
expressing some real concerns here about what happens to the workers in these meat processing plants who are sort of caught between a government on the one hand, which is now ordering those meat processing plants to stay open, and employers
Are
on
we
the other
gonna for
hand,
real have
who some of
a
the
food
labor leaders
shortage?
feel are not serious enough about
Like, I didn't
safety
think so,
of the
but-
workers here. I talked to Rebecca Rendell, who's the Safety and
make
Health
the
Director
call.
of the AFL-CIO, just a short time ago over email. And what she says is this is absolutely awful. She says there will be absolutely no accountability in these settings where workers are already paying the COVID-19 price with their lives. She says the administration is telling them they have no expectation of safety when being forced to work and no enforcement to hold their employers accountable for unsafe working conditions. The workers are pinned between the two. What she's concerned about here is a Department of Labor guideline issued yesterday talking about OSHA and CDC
Tesla
guidance for workplaces. And what they're saying as of yesterday is because of this new executive order by the president, they said to the extent employers determine that certain measures are not feasible in the context of specific plants and circumstances, they are encouraged to document why that is the case. In the event of an investigation, OSHA will take into account good faith attempts to follow the joint meat processing guidance. That is, they're going to be lenient here with plants that say they simply can't follow all the safety guidelines that they've been given by the federal government because of this new order now from the president in order to stay open. So some concerns here from labor about what happens to the workers in all of this, Carl. Back over to you.
Yeah,
it's
and
the
OSHA
hard.
Inspectors themselves, Eamon, whose ranks
down
have been
like
hurt over the years,
Tyson?
really. I've seen some statistics that about a quarter of pork processing capability has been taken offline, about 10% of beef. But I did read some lines from senior administration officials who said that would have been closer to 80% if the order had not been put in place.
Is that it? Yeah.
Sure, and the question is now, what do the workers do? What is their recourse if there are these liability protections put in place that have been discussed? If you can't sue to enforce the safety procedures, what do you do, right? And then the question is, will the workers vote with their feet? That is, will they just simply stop showing up for work if they feel like they're putting their lives on the line here? That's a real problem in terms of the meat supply in the United States overall, John. So the question here is, what happens in the wake of all this? And we just don't know. Uncharted territory.
Eamon, thank you. Meantime, ride-hailing company Lyft cutting 17% of its workforce. Deirdre Bosa has more on that. Deirdre.
Hey, John, this comes after Uber report yesterday saying that it was considering cuts of up to 20% of its workforce. So this is according to a filing. Lyft is cutting nearly 1,000 jobs. As you said, that accounts for about 17% of its workforce, so nearly a fifth, and it's due to declining demand for ride-sharing amid the pandemic. As we've been reporting, as we know well, those ride-sharing numbers on a year-over-year basis are way down, and in some cases, for some weeks, is down as much as 80 to 90% year-over-year. So clearly, these ride-sharing companies are struggling. Lyft cutting nearly a fifth of its workforce. Back to you.
Yeah, just in the past 24 hours, TripAdvisor, Boeing, Lyft, and we'll keep our eye, Juul, according to the Journal, and we'll keep our eyes open for others. We'll watch these Fauci headlines on Remdesivir. For now, let's welcome back the judge and get to the half.
Crazy that stuff's up to me.
I appreciate it very much, Carl. Thank you. Our breaking news coverage of the markets continues right now. Welcome to the halftime report. I'm Scott Wapner. Very good to have you with us on this Wednesday. Stocks, as you know, nicely higher after Gilead reports positive news on its drug to treat the coronavirus. That is overshadowing a very big drop in GDP. At the same time, the S&P now on track for its best month since 1974. We're going to discuss and debate the markets with our investment committee, which is with us as always. Joe Terranova is here along with Steve Weiss. John Najarian, Jenny Harrington is the CEO and portfolio manager at Gilman Hill Asset Management. Rob Sechin with UBS Private Wealth Management is one of Forbes' top 100 financial advisors. And Rich Saperstein is back, Hightower Treasury Partners CIO.
This piece
he
of
is
shit,
well
though.
A top financial advisor.
This I
at
can
Barron's
expect to
in the
keep
top
going.
100 there. Let's get to the
Give me my
board, show you where we are
fucking
currently
money back,
trading.
baby,
Pretty
man.
much highs of the day, 550 we'll call it for the Dow, 2.25%, 24,646. S&P 500 trying to push towards 3,000, believe it or not. That's a gain of 2.5% today. It's a gain of 73 points. NASDAQ, the outperformer
on,
of
Judge?
the
How we
majors at
doing
3%.
today,
And there's the Russell, which is having a good day as well with a near
Airlines are
5%
cranking.
gain, some 61 points there. Dow going for its best month since 87. The question is what all of this means for the coming days, weeks, and months ahead. So, Joe, I'm going to go to you first. You know, if you look at the drivers today, I mentioned the Gilead news, and that is clearly overshadowing what was a dreadful GDP number. Fauci now is talking about the clear-cut positive effects of this remdesivir trial. Boeing's Calhoun, the CEO, saying the thaw is beginning. You've got Starbucks talking about reopening stores when they'll try and get to even greater capacity by early June. I mentioned small caps, the home builders, going for 6 days in a row. All of that is overshadowing that GDP number. So where does it take us?
Well, Scott, I think it takes us to a position where you're reacting to the messaging from the market, and the messaging from the market is very difficult to digest relative to the economic news that we're going to be receiving. So that's where you have to have the discipline to stay focused on the investments. Obviously, as we've been talking about in the last couple of days, it is the cyclical component of the market which is moving higher in anticipation that some of the economy will be reopening here domestically. So financials, industrials, energy, that is where the leadership has been in the last couple of days.
Weak.
The Russell, which you mentioned, that's up about 10% in the last 5 days. It's now trading at its highest level since Monday, March 9th. Remember, that was the Monday we came in with the OPEC lack of a communication. The market came in much lower. So what you're doing here as an investor, a trader, as a steward of capital, is you're listening to the message of the market and you're trying to mine for opportunities.
That means lower overhead for rideshare drivers when people start using the service again, right? The drivers have to fill their own tanks. Yeah, absolutely.
Confidence in with a longer-term fundamental
lower
perspective,
overhead for rideshare drivers for sure.
Opportunities
I don't think a lot of rideshare drivers.
Bear with me just one second, gang. I'm going to go back to our Meg Terrell, who has some updated material regarding Dr. Fauci's comments on this Gilead study. Meg, what can you tell us?
Hi, Scott. Yes, this is just coming out of a pool report on some comments that Dr. Fauci just made, and he actually seems to be detailing some of the results from that NIAID trial of remdesivir. He says, quote, "It's quite good news." He says that, so the primary endpoint of the trial was the time to improvement, and we know that the study met that goal. Dr. Fauci, according to the pool report, saying the time to improvement was 11 days compared with 15 days on placebo, saying that 31% improvement is, quote, very important. He's saying that this is a drug that can block this virus. He also, according to this pool report, notes the mortality rate trended better, 8% in the treatment group versus 11% in the placebo group. He's saying when you know a drug works, you have to let people in the placebo group know so they can take it. That comment probably explains why we got these results earlier than expected from the NIH. We weren't expecting this trial to read out until the end of May. We're also learning from the pool report that Fauci has compared this to when they first found HIV drugs. He's saying this will be the standard of care.
Tesla down.
So this is the announcement that NIH had planned to make later today. The president, I guess, told Dr. Fauci to describe this just now, and we'll bring you, of course, any more news that we get. But this is the first read of that positive NIH study on Gilead's remdesivir. And guys, this Dr. Gottlieb saying this drug could get FDA emergency use authorization immediately based on these results. So very encouraging news. Scott?
No doubt. Meg, thank you very much for that. All right, Steve Weiss, you know, I'm wondering if these comments from Calhoun today at Boeing are more of a metaphor for where we are in terms of where the narrative has gone. And that is that the thaw is beginning. You can see a thaw perhaps in the way that some of these cyclical stocks have traded. Who knows if it's long-lasting, but at least you seem to be putting together something here. The narrative appears to be getting better. You've got the Fauci comments on Gilead and remdesivir. What now?
Well, you had some more comments. So in general, I would say the earnings season has been better. One of the comments that I focused on more so than actually Boeing was MasterCard. They said that spending has begun to stabilize, and they put up a very good quarter, which of course lifted Visa as well. So it's often said, and I've said in the past, hope isn't an investment strategy. But clearly, hope is an investment strategy here,
so
and it's being rewarded because you can't justify the move on valuation.
Look
at the stocks and say, hey, nothing's really exceptionally cheap. Maybe Google is, but
that was the most confusing fucking statement.
Quarter, 2 quarters.
Shut up. I don't even want to hear the rest of whatever that guy's got to say, dude. Just shut the fuck up. You know, hope, but not hope. But hope. You can't trade on hope, but you can trade on hope. Let's go hope. Let's go hope. Now, why don't you hope on some HTZ, bro? Car's leveled out. Did we take our profits? ADMA looking better and better by the second, dude. Getting some of our fucking money back. Give us some of our fucking money back, chat. We hit an 8 on their 7s. We had 8s there. We take it down. We got 36 big blinds. Going into the last level of late registration right now. Got out of car an hour ago. He's like, fuck yeah, I took my motherfucking profits, Rand. Get your fucking head on straight. Apps is climbing like crazy. And what was that other dude that came on, that actually came on the show today? What the fuck was his shit? IPG. IPG fucking raging even after that dude's fucking spoke. Jesus, Chad. Wow. Is this something I need to buy into? Pays a dividend and shit? This was the advertising guy that was on CNBC, IPG. Pays a dividend? Pays a fat dividend? Right now it's paying 6% with a 19% growth rate. Like, I almost want to add that to the fucking M1 account. Right? Dude, we're on the comeback in the M1 account, baby. We're on the fucking comeback over here. What sector would that go into? Tech? Do we add them to the tech sector? Crude oil jumps up. Maybe we'll buy some with our profits over here. How about just 2? How does 2 sound? Two shares purchased. We'll start a position in IPG. Tesla's fighting me.
Ability to come unquestionably, but the market's discounting a lot of good news without validation. And while in the short run, I think we're going to focus on some of the narrative as it relates to earnings and economic news, but most of what we're going to focus on is what happens in 2021. And so these pieces of positive news have the ability to draw investors that have been on the sidelines, have this fear of missing out into markets, and it's that delta that matters, and clearly why price performance has been so strong. Now, I'm really happy that, you know, markets are moving higher. Obviously, that's good for everybody that sits around this table. But I am a little concerned that we've come too far too fast. You have the good signs on the news flow front. You have good signs just from a technical perspective in the broadening out of the breadth of the market into small caps, into some of the more cyclicals. But somehow I just do not believe that earnings are not going to be impacted in 2021. And if you just look at flat year over year, meaning 19 to 21, even if you had flat earnings of 165, which was the peak, you would be trading at nearly 18 times. And given everything, that, all the uncertainty that still exists out there, I think you have to pay attention to it.
Yeah. Weiss, I don't know if that was you trying to get in, but, you know, it's not. Look, David Kostin of Goldman Sachs today has a note which headlines from fear to FOMO. And it is what Rob was talking about, this intense fear that we were all, dealing with from a market standpoint. Let's just say, we're still fearful of what people are going through as it relates to this virus and how we think about Main Street, and then also from a health crisis standpoint and how people are dealing with that for themselves and their families. But from a market standpoint, we've gone from this fear now to fear of missing out, according to Kostin. And he says his baseline case, Steve, is EPS decline, growth decline of 33% this year, but a rebound of 55% in 2021. Now, you tell me, do you think that is an accurate view of how the world may look in what is a decidedly different new normal in 21?
Well, it wasn't me. Somebody else may have something to say as well. But look, nobody knows. Guidance has been pulled by even companies that are beating consensus this quarter and guiding for second quarter. They're still not guiding for the second half. If you look at his numbers and take them as the base case, up 50% next year from a down 33% this year still puts you down 15% because you're not recovering all of it.
Yeah. Hey,
so,
hang on to that thought,
look,
Weiss. I apologize. Forgive me for interrupting you. Let me go to Steve Leisman right now. He has breaking news regarding the Treasury Secretary, Steve Mnuchin, speaking to reporters just moments ago. Steve, what can you talk to us about?
Hold on, I'm getting a phone call, Chad.
Scott, thanks very much. Steve Mnuchin, the Treasury Secretary, holding a Zoom conference call with reporters, talking again about those large loans taken by some companies. And here's a direct quote. He said, "I like the Lakers and I like Shake Shack, but I was shocked that both of them took loans," talked about them giving back those loans. Further, he said, "If things turn out where the economy doesn't bounce back as planned and reopens, as we have done a lot of contingency planning." There was a lot of talk about what comes next on this call. He said the direct impact payments of PPP as relates to money we're investing in a base case scenario, we'd expect to get that money back. But unallocated money, there's some money they expect to lose and some taxpayer money they expect to get back, some places where they may end up making money, others not. Of the unallocated, $250 billion. Remember, the Treasury has now made arrangements with the Fed for about 190 of the money Congress gave him. He said that money, they could give additional money to existing programs or start new ones. Mnuchin said he purposefully kept money back to use in the event that it's needed in different places or in different areas. You're just talking about the airlines. He said there should be no bailouts for the airlines. He's happy with the way these loans have been structured to the airlines, and also said no additional money, Scott.
Update. Weiss, I'm going to come back to you in just a second. I want to jump to John Najarian, though. I haven't heard from him yet, and I apologize, John, for that. But so you've heard collectively now from the committee on where they view, the markets here and where they think we may be going. What do you think it means for volatility and the way you look at things?
Well, Scott, as soon as we started hearing what we all heard, or what anybody that was reading newspapers or checking out what was going on in states across country, as they stopped the, we'll be shut down for 2 years, like Northam was saying in Virginia. And we started hearing more measured comments about maybe we'll start dribbling out a little bit of the businesses opening up in May and so forth. That's the kind of optimism that had turned the market. Obviously, Gilead, further optimism, especially if it's endorsed by Fauci. So volatility, Scott, dropping dramatically. It's not going to break hard. It's not going to go into the teens, I don't believe here, Scott. But it has dropped all the way back down to the March 4th lows, maybe even touching March 3rd.
I'll tell you what, Doc. I'll tell you what. I mean, 30 is the new 15 compared to where we were.
Yeah.
I mean, if when you were like at 80 and now you're at 30, that's pretty amazing.
Yep. Well, I'll quote you on that one, Scott. 30 is the new 15. And I think you're right. I think instead of bouncing back and forth from 12 to 18 and saying 15's right around the middle of that, I think we're going to be more like 24 to 36. And the 36, of course, is if when people start going back, we do see what we all expect, and that is that the graph lifts a little bit
on the amount of folks that end up with COVID, but hopefully, especially with either not a vaccine, I'm not saying that yet, Scott, but some sort of treatment. And if it's remdesivir, all the more power, and Gilead's certainly really been working this one hard. That is going to be, like I say, the new normal will be 24 to 36, with that 30, as you say, being the new 15.
So, Rich Saperstein, the question becomes, if you, and I know you sound to me to be a bit more negative on the market, questioning how it could possibly be where it is relative to your own earnings outlook. But if you are positive on the market and you're inclined to put some kind of money to work because you do have a fear of missing out at this point, where would it be? Would it be, as Tom Lee suggests, in the epicenter, the so-called epicenter stocks, the discretionary names, and that's what he is recommending and he continues to recommend? Or would it be in the high concentrated tech names that have in large part brought us to even where we are? When you have names like Facebook up 31% from the 23rd of March low, Microsoft 28, and Apple and Alphabet and Amazon all with sizable gains since then, which is the right place to be in?
I think there's a lot of different sectors to look at right now. I would definitely have a component of assets in the technology sector. That's what's led this ability for us to conduct business, the cloud, online shopping, software. But I would also look for industry groups that the business has been deferred, such as medtech, devices. So Stryker or Medtronic, these are elective surgery procedures that will pick up once we get back to normal. I'd also look at considering some long shots, whether it's a Disney, a Boeing, or even the oil sector right now, if you wanted to take a longer 1 to 3 year outlook. At the same time, we should always have staples, whether it's a Johnson & Johnson, Clorox, Kimberly-Clark, or I'd also, of course, have healthcare. Big pharma is a very important part of every portfolio, and every pharma company now is sort of a moonshot whether they're going to come out with some kind of a drug to help fight the crisis.
Interesting. It's Cowan's talking about Disney being a safe haven, which Joe sounds to me like a contrarian play, right? Using a consumer-facing company as a safe haven, so to speak, when you're dealing with theme parks and all sorts of other issues as well. Where do you put the money, Joe? Do you go beaten down cyclicals? Do you go beaten down epicenter stocks? Or do you go tried and true big tech names that have already shown you why they are where they are and will likely be the winners on the other side of this?
Yeah, it's interesting that you mentioned Disney, because that's a name that I'm looking at, thinking of getting in. It's up to 110 right now, so I'm going to probably wait on that. But, you mentioned before hope and despair. In an hour and about 44 minutes, let's not forget the Federal Reserve is going to release a statement and have a press conference. I don't know whether the market's trading on hope, despair, or liquidity. And liquidity happens to be the most relevant word right now for me in the investments. The corporate bond market in March was down 7%. Scott, it's basically gotten it all back in the month of April. So I'm trying to find opportunities in the equities market with companies that have very strong liquidity positions.
Yeah.
If you do not have a strong liquidity position, I can't have you in my portfolio.
Let's be clear. We wouldn't be where we are without the Fed and the L word, as Joe uses, liquidity, right? We all agree with that, right? Everybody's nodding. Yeah, we wouldn't be
100%.
We wouldn't be where we are.
Yes.
So we'll be paying attention
sure.
to the statement, and I don't think anybody's expecting any, if you're long the market, upsetting news coming out of the Fed today. What are we buying? Steve Weiss, what are you buying?
Yeah. Well, first of all, I'd say the Fed is sort of an after-statement. It's the first time on Fed Day, when the economy's in such trouble, we really haven't led with that. To me, what's going to be more important today is what happens after the close, with the companies going to report, Facebook, Microsoft. I'm staying with the ones you've got to look and say and assess what companies are going to not only survive this environment, but are going to do better. And you come back to the same names. You come back to Microsoft. You come back to Facebook. The decline in advertising is temporary. You go to an Akamai, which reported, which I thought was a good quarter. They beat this quarter. They guided higher next quarter. But what people were paying attention to and what the market's ignoring is that they spoke about 20% of their verticals, which are in hospitality, transportation, and retail, and reserved against that. 5 million, not a big deal. That's a great buying opportunity below its midpoint multiple historically. So I'm buying those names. I'm buying Lulu, as I mentioned. I own it. I'm not buying any more. The XHB is something you have to buy. Look at how depressed that is. So when we talk about where the market is in terms of the multiple, we don't often accompany that with free money, low interest rates. So we're at a premium to where the market was trading before this started, which was about 18 times. Now we're 20 times forward. Is that unreasonable considering that we thought the Fed was done cutting and they cut like we could never, ever imagine?
Jenny, how should a dividend hunter be treating this environment if the environment feels like it's getting somewhat incrementally, let's use that word, incrementally better in some respects? Are we less now worried about companies cutting their dividends, or is that just going to be on the table now until it isn't?
I think it's already on the table and it's been there, so we know who's going to cut, right? Like GM cutting last week was the most obvious thing ever. This week rather, there was no way that wasn't going to happen. So we know those things. But then what we've also seen is companies come out more strongly than they've ever been protecting the dividend. And we saw that on the IBM earnings call, on the AT&T earnings call. In fact, Kinder Morgan was out. So when you were saying, where are you buying? I'm buying some of these pipeline companies. Kinder Morgan was out, and they actually increased their distribution. So what's happening now is there's, again, increase in clarity. We know who's going to cut. For the most part, we know who's going to. And we also are getting much more comfort and clarity with who's going to keep it. And they're the obvious players, the ones who are minting cash. So I think the pool of dividend companies is narrowing, but the quality of those who are continuing to pay is increasing, and the confidence that you can buy those with is much higher than it was even 6 weeks ago.
Yeah, Rich Saperstein, I want to be clear too, and I want to make it awfully clear to our viewers. Your cash position right now is the highest it's been all year. It's 15 to 18%. That's right? Yeah.
Yeah, our clients typically have 50% in equity. That consists of around 10 or 12 different active and passive strategies. So in one of the strategies, we're running it right now with a 15% cash position, which we've been building over the last month.
At the same time, though, you mentioned some names, but let's be clear. You have put new money to work, right, in Medtronic and Stryker and Pfizer. So it's not like you've got this overweight position in cash, unlike you have had in an awfully long time, and you've stashed it under the mattress or that couch behind you. You're looking for opportunities.
Yeah, all the time we're looking. And, one of the things that we're checking also are credit spreads in the bond markets, because a lot of companies, well, what happened in March, there was a dislocation in the fixed income markets and credit spreads gapped out. And so they've since come down, and there are those that are trading now with much narrower credit spreads. And those are the companies with high levels of free cash flow, good coverage on the dividends, and they obviously will have more growth characteristics. So when you ask about how do we want to allocate new capital into the stock market, I think the companies that are going to be continually rewarded are those with high free cash flow rates of return, and those have the lowest credit spreads.
So Rob Sechin, it's just interesting to me as I look at your notes. If you're reducing your exposure to cyclical stocks and going into what you call strength, the areas that have already had a nice run. If you have a more glass half full view of the market, I think, but your positioning seems interesting to me.
Well, as I said, I think long term we're optimistic, short term we're cautious. I think, just going back to what Steve said, we're not talking about the Fed today, and that's because of the remdesivir news. The fact that,
well, the Fed's spoken, right? The Fed has already spoken. That's why we're not talking about the Fed.
Well, but my point in saying that is it's because Facebook, Microsoft today, Amazon, Apple tomorrow, the earnings narrative. But really, the Fed's the most important institution in the room. Typically, low rates mean low PEs because growth is uncertain. This time that is artificial, so growth may be actually higher than rates imply. That is why we have that longer-term optimism. The short-term caution comes from the fact that we've moved very far, very fast, and we're discounting good news without verification.
Yeah.
When we talk about positioning and the cyclicality of selling the cyclicals on a week where the cyclicals have really outperformed, meaning the small caps, the values have outperformed this week. We're tweaking that a little bit. I wouldn't say we're selling it. We're keeping some of that cyclical optionality in client portfolios, but we are hiding, and I think it's really important to know that the new defensives of communication services, healthcare, and technology, even though it's not an overweight of our firm, represent the beneficiaries of the stay-at-home economy and a really defensive way to play staying invested in this market when we sit here in the consensus and everybody is negative. And I'd say we're overbought versus negative, and I'm cautiously optimistic. I hope that clears the view.
Yeah, I hear you. Rich Saperstein, so Microsoft after the bell, if we're talking about these big glamour stocks and where they've been, that's your biggest position.
Correct.
And you have no desire in any way to maybe cash in some of the gains that you've realized and reduce the size of that position relative to where it was?
Well, we've held Microsoft for probably 6 or 8 years, and we've had to trim it over the years to keep it within boundaries of a prudent position.
Mm-hmm.
So at this point, we think it's a great holder here. We love the cloud. We think there should be cloud exposure in everyone's portfolio. In addition, software is very important, and online shopping. I mean, there's a lot of technology which I believe everyone should hold because of the high levels of free cash flow. We talk about growth versus value. A lot of value stocks are going to be impaired because they've got to cut the dividends and they don't throw off enough free cash flow. So if we look for free cash flow, it's clearly in a lot of the tech-related names.
Joe Terranova, you've got some new moves you've been making. I want to know the names that you've bought.
Sure. So again, I mentioned at the top of the show, it's very difficult for me to have confidence fundamentally to step and add further to industrials, financials, energy, or consumer discretionary. But I was able to find a couple of names. In financials, I went back to an old favorite, PGR, that's Progressive Insurance. Consumer discretionary, I bought Nike and I bought Starbucks this morning. I was tempted to buy a Chipotle, and I possibly will step into Chipotle in the near term here, but I would have to raise some funds to do that. In the industrial space, a name I used to talk about, Scott, Copart. Copart trading around $80, $85 within that range. Got back into Copart. I haven't done anything in energy, and I want everyone to think about energy this way. Keep in mind, the spot price of oil is down about 30%. Energy equities are actually up 20% in the month. So thinking about energy, I was going to buy Chevron. I didn't buy Chevron. But look at the energy banks, whether it's Cullen & Frost, whether it's Texas Capital, or whether it's Independent. I think that's your first step in a very small position into energy equity type of names. I might consider doing that. Haven't done it yet, though.
Wow, you don't think that there's going to be more energy company blowups and the exposure to those little banks that you've just talked about is going to be severe?
I do think there's going to be much needed consolidation in the energy space.
As a result of major issues.
Well, keep in mind, though, Scott, as it relates to debt maturity, it's a 2021 story. So the energy sector is actually getting a break here. It's not a 2020 story. The 5-year cliff goes back to 2016, the last time oil was below 35. So you've got about a year before that wall of maturity comes. I think the real challenge for the energy sector is a labor condition, where you're going to see a significant loss of labor. But again, I said, I haven't stepped into those banks just yet. That's a very tepid and judicious way to play it for a trade if you're going to.
No, I hear you, but if you're talking about them as recommendations of things to look at, people may take that as a sales pitch to buy those banks now. When I just want to be clear about
small positions,
sort of what we're talking about.
Yep.
Sorry, guys, I was on the phone with my brother
I agree
there.
With that, but small positions, and I'm not stepping away from saying that's the way to play it.
I'm sorry.
You could take a small position there, and understanding that the debt maturities are coming in 2021. They're not 2020 stories.
Yeah. No, I hear
sorry,
you.
Guys.
All right.
That was a long phone
We're going to take a quick
on the phone
break.
with
Coming
my
up,
bro.
GE posting mixed results. Shares down more than 35% in 2 months. We have the #1 industrials analyst on Wall Street. He is with us next. That's Steven Tusa from JP Morgan. We're back in 2 minutes.
High buy-in on ACR today. What with all the high buy-in on ACR today? I don't know. Is there a bunch of big shit popping off? Is it big shit popping? Oh, it's High Stakes Wednesday, that's why. The mic, the video's louder than your mic. Oh shit, sorry. We had to change, I always do that for fucking... Sorry about that. What's going on, Danny K. Golden? Ocean, Cat Savage, Poker Shame, Veritas, Ericola. Thank you guys. Sorry, I was on the phone with my brother there. Hopefully it'll be much better now. We're raging in Penn. We're hoping ADMA can hold above $3 today. Would be very nice, actually. I'd be happy. Be super happy. We took a short out today on Tesla, which is currently down $15. We're okay with that, though. Waiting for earnings. ADMA needs to climb out of the hole. How's the SPY doing today? SPY is just climbing. We will get through this. Car. IPG. IPG ripping. I mean, it pays a fatty dividend. When is ADMA going to shoot to 10? I have no idea. That would be sick, though. I would fucking shit my pants. I mean, they were going to report. They report here, like, next week? 2 weeks? They report on the 15th, I think. The 15th. 2 weeks from now? So... I don't think they shoot to 10, but... But hey, LABD, bleeding off. Bleeding off. What was it? The XBI, slowly climbing. Whoa, this was loud, huh? Loud in my ear, fuck. Is that good volume now?
Welcome back. Excuse me. Strong session for stocks. Let's get to Sue Herrera now with the headlines. Hi, Sue.
Hello, Scott. Hello, everybody. Here's what we know at this hour. Britain now has Europe's second highest death toll from the pandemic. Government officials release new figures that include fatalities in all locations, including nursing homes, that take total deaths above 26,000. Here at home, New York's Governor Andrew Cuomo is warning against trying to
can't raise
too
this.
quickly.
We're one away from the money, dude. Somebody else has to go.
Sharply in the 10 days since that country relaxed its restrictions. And take a look at this. If you are wondering what yesterday's flyover of New Jersey, New York, and Pennsylvania looked like from the cockpit, here you go. 12 jets from the Navy's
That's
Blue
wild.
Angels and
Whoa!
Thunderbirds.
Oh my God, they were so close there.
On the front lines of the fight against the pandemic.
Did you see how close they came?
So awe-inspiring. As always, you can get more on our coronavirus
Dude,
coverage
fuck.
by going to CNBC.com. They went right past the building. It was fantastic.
Yeah, it sure was. Sue, thank you. All right, that's Sue Herrera. GE shares in focus today. The company reporting earnings with, not surprisingly, a big decline in its aviation unit. Steven Tusa is the
Doesn't
top-ranked
Facebook
analyst in the
report tonight as
industrial
well?
space. Joins us now on the phone as he says today the worst is yet to come for the company. Steven, welcome back. Hope you're well.
I think Facebook's up too. I think
the worst is yet
this
to
is
come.
great.
Why?
It's probably gonna fucking rage.
Yeah, so these are long cycle businesses. Aviation is definitely one of the longest cycle businesses. And so when you have, kind of a crisis that will, play out to a greater degree coming here in the second quarter,
This is like
as
take me back to
airline
VWAP.
customers, really turn off the spigot, from a cash perspective.
SPY is raging right now.
First quarter
new highs.
Not have been this bad of a reflection. I mean, the company was out guiding in early March, and while they had talked a bit about the headwinds from this, to kind of have this kind of thing happened over a period of a month, clearly things happened very late in this quarter, yet had a pretty greater more substantial impact than we had been expecting. So yeah, this first quarter is bad, but second quarter is going to be, I can't really find words to describe how bad the second quarter is going to be.
So let's talk in terms of what the company is doing now to deal with it, and what
GE's fucked
over the medium to longer term, as we think about what this crisis is going to be. Will you listen to what Larry Culp said on our network earlier about GE's liquidity position, and we can respond and react to that on the other side. Here's Culp from Squawk on the Street just a short time ago.
Dude, the SPY is ripping upwards.
From a liquidity perspective for what we see in front of us. We're pleased to have that liquidity position. Again, the cost and cash actions will help us a great deal here in the short to medium term. And we will we'll play it forward from here, mindful that we want to make sure that we continue to bring those leverage levels down.
So, Stephen, does Culp's description of GE's liquidity position match your own?
It is ripping.
Yeah, I've never made this call about liquidity, and as I think I've said many times on this show, it's not bankruptcy or buy. We aren't bond investors here. We're equity investors.
And look at Tesla, dude. Tesla's gonna take a huge shit tonight. I almost want more Tesla puts.
Doesn't have much, in the way of resources to grow or differentiate, as a bit of a big time over leveraged company into the next couple of years.
This thing can't even get above VWAP, dude. Can't even get to VWAP.
They put up this year, and where debt's going to be at the end of the year. I mean, you're talking about a company that could be, their target was 2.5 times levered. You're talking about a number that could very well be comfortably above 5 times levered when all is said and done, when the numbers shake out. I don't quite understand how the ratings agencies can kind of continue.
This is the volume-weighted adjusted average, VWAP. So this is the average price that people are paying, and it's adjusted for volume. So if like 26,000 shares moved here at the high of 1867, but only, wow, a lot of shares moved.
This is not bankruptcy or buy, and the same is true today. So
it just adjusts depending on the volume. How many shares? Wow, 18,000 here, 30,000 that minute though, you know what I mean? So there's more weight when the 30,000 shares moves that minute, there's more weight to that price than the minute before that only had 20,000 shares moved.
Do you think the company will be successful in doing
and this price, obviously, it's only like 13,000, 12,000, so they have less weight pulling it up.
I think whatever they do,
right
just
now,
like with the GE Bioprocess deal, they sold 20 billion in assets, 20 billion in proceeds, and leverage will be higher likely at year-end 20 than it is at year-end 19. And ultimately, what was interesting about this quarter is
we're in the money finally.
GE Bioprocess operating income this
Andrew,
quarter,
have a good hand.
okay, which is now gone after this quarter, was more than 100% of the company's earnings, if you include restructuring, which you absolutely should. So anything you do, any asset you sell, is going to be further dilutive to the future cash and earnings of this company. So the answer is they may be able to delever some, but right now they're not generating any cash. We can get to that in a second.
SPY is cranking right now.
Likely negative this year after seeing this print.
This is called VWAP.
So you have a negative
this is the RSI. Right now it's overbought. Right now we're in the overbought on the 1 minute.
I understand where the ultimate run rate of cash is left as you sell, your best assets.
How do you view Culp's move to? They're taking $2 billion off the cost side out and $3 billion on the cash side.
Yeah, Larry is an expert at running businesses, and I have no doubt that he is, operating with urgency. He's a fantastic operator. I don't really know how you come up with $2 to $3 billion of pure, solid, somewhat structural savings when you cut restructuring by 50% last year, and you basically spent $100 million of restructuring in the quarter in the businesses. You look at other companies like Emerson, for example. They're getting $1 billion of cost saves structural in the next 3 years. They're spending hundreds of millions of dollars. Emerson is spending more than GE in their restructuring by by multiple. So
all in here. We're calling. Ace jack suited. King queen, ace 10.
3 times the
King
savings.
queen, we need a 10, we need a 10, we need a 10. No.
What is actually structural and what is actually just a natural decline in costs as revenues go down, which are two very different things.
It's interesting, and lastly, I hear. I mean, are you intimating you expect a downgrade of GE's debt, and that sounded like to me what you were suggesting? And even though you say you're an equity analyst and not a credit analyst, are you viewing
what's the MTT? This is just a 660 on demand. We're all in here.
Debt downgrade.
No, I'm not
ace
saying
9, we need a fucking 3. 3, 3, 3, 3.
They do their own work. I'm just saying that, they provide
take our $8, fair enough.
The company has, provided their own targets, 2.5 times net leverage, and they have successively missed these targets over the years, yet we're still sitting at kind of the same rating. So all I'm doing is kind of, scratching my head around, are there goalposts here or are there not? So again, I'm not making this about a debt rating. This is more about, the construct of earnings and free cash flow going forward. And after today,
it's another 660 on demand.
Positive free cash flow this year, and as they said on the conference call, or at least how I interpreted the conference call comments, that this will not be a snapback in the next 2 years, which is what all the sell-side bulls who recently upgraded over the last year have embedded in their forecasts. And that's really, key to the stock, is that forward consensus estimate curve is going to absolutely collapse from an expectations perspective, and that is not reflected at $7 a share.
Understood. Can you, before you leave us, because you are the #1 ranked industrials analyst on Wall Street, can you just leave us with a broad brush view at this point of how you view the industrials complex in the context of this virus and what the other side may look like?
Yeah, first of all, I'm not sure that's an audited ranking, just to be clear. And second of all, I don't necessarily feel that way because we're definitely more cautious as we see this play out. It is our numbers. We cut by 20-25% over the last month and a half on the back of all the macro data, and I guess COVID.
Penn is holding over 18 really well.
Some of the macro indicators as the most important driver of stock valuations. I do think this is as bad as advertised fundamentally. I do think it's fantastic that we're kind of seeing a peak perhaps in the virus. But I think with the unemployment that's kind of left, the lack of investment that we're seeing, every single one of my companies has cut CapEx by 20% this year. That's an annual number. You don't just turn that off, 1 quarter and then turn it back on. And then to the degree that things don't snap back here in May, these companies have yet to make structural changes in their employee base, and that's, I think, the real risk to making this, significantly less of a V-shape than is priced in. So we're approaching this in a very measured way.
This guy's killing it. Like, why you got to kill the market?
Where maybe some stocks are getting a lot of credit for a serious V-shaped recovery, and some stocks that aren't. And that's.
Have a good Randy. I gotta run. We'll see you later. I'm around here. How's Tesla doing?
I readily admit to not being.
I appreciate you stopping in. I'm around. We'll see you later.
Obviously, that's the most important thing right now. So we're really trying to play these record divergences in some of these names, and that's how we're. That's kind of how we're positioned going forward.
Yeah, part of what all of us are doing are guessing on where things are going to be. Stephen, I appreciate your time so much. Thank you very much. You be well. We'll talk to you soon.
Yeah.
All right, that's Steve Tusa from J.P. Morgan. We mentioned top of the program that Dr. Fauci had made some comments today that were positive about Gilead's remdesivir. Let's take you back and let you listen to that now.
Oh, yeah, please. Okay, so a trial that the National Institute of Allergy and Infectious Diseases, which is the institute I direct, sponsored, called the Adaptive Covirus Disease Treatment Trial, ACCT-1, was started in February 21st of this year, and it was a randomized placebo-controlled trial comparing the Gilead drug remdesivir with a placebo. It was highly powered with about 1,090 plus individuals. So it is the first truly high-powered randomized placebo-controlled trial. It was an international trial involving multiple sites, not only in the United States, but in various countries throughout the world, including Germany, Denmark, Spain, Greece, the UK, etc. The primary endpoint was the time to recovery, namely the ability to be discharged. When you have a study like this,
this is interesting.
You have a Data and Safety Monitoring Board, which looks at the data. And they are independent, so there's no prejudice on the part of the investigators because they're doing the trial or the drug is from a certain company. The Data and Safety Monitoring Board on Monday afternoon contacted me on April 27th, first on Friday the week before, and then again on April 27th, and notified the study team, namely the multiple investigators who are doing the study throughout the world, that the data shows that remdesivir has a clear-cut, significant, positive effect in diminishing the time to recover. This is really quite important for a number of reasons, and I'll give you the data. It's highly significant. If you look at the time to recovery being shorter in the remdesivir arm, it was 11 days compared to 15 days. And that's a p-value for the scientists who are listening of 0.001. So that's something that, although a 31% improvement doesn't seem like a
and it's taken off quietly.
It is a very important proof of concept, because what it is proven is that a drug can block this virus. And I'll give you an example in a moment of why we think, looking forward, this is very optimistic. The mortality rate trended towards being better in the sense of less deaths in the remdesivir group. 8% versus 11% in the placebo group. It has not yet reached statistical significance, but the data needs to be further analyzed. The reason why we're making the announcement now is something that I believe people don't fully appreciate. Whenever you have clear-cut evidence that a drug works, you have an ethical obligation to immediately let the people who are in the placebo group know so that they can have access. And all of the other trials that are taking place now have a new standard of care. So we would have normally waited several days until the data gets further, dot the I and cross the T. But the data are not going to change. Some of the numbers may change a little, but the
damn. So that shit is popping off.
will not change. So when I was looking at this data with our team the other night, it was reminiscent of 34 years ago in 1986 when we were struggling for drugs for HIV, and we had nothing. And there was a lot of anecdotal reports about things that maybe did work, maybe not. People were taking different kinds of drugs.
Damn.
And we did the first randomized placebo-controlled trial with AZT, which turned out to give an effect that was modest. But that was not the end game, because building on that every year after, we did better and better. We had better drugs of the same type, and we had drugs against different targets. This drug happens to be blocking an enzyme that the virus uses, and that's an RNA polymerase. But there are a lot of other enzymes that the virus uses that are now going to be targets for this. This will be the standard of care. And in fact, when we look at the other trials we're doing,
we're going to beat this.
With another antiviral.
Puts
Actually,
are
it isn't an
fucked.
antiviral, it's an anti-inflammatory, a monoclonal antibody. We're going to now compare the combination of remdesivir with this. So as drugs come in, we're going to see if we could add on that.
Dude,
So
that guy was shorting this
we'll be
shit?
hearing more details about this. This will be submitted to a peer-reviewed journal. and will be peer reviewed appropriately. But we think it's really opening the
Bye
door
bye LABD. Where the fuck is that dude today?
of treating, and I can guarantee you, as more people, more companies, more investigators get involved, it's going to get better and better. So I'll stop there, but I'll be happy to answer any questions.
Why don't you go first, and then you go.
Does any of this data change the timeline of the development of vaccination?
No, this has nothing to do with vaccines. This is treatment for people who are already infected. Vaccines is to prevent infection in those who are at risk.
Do you have new data on that?
No, nothing more than that. What I continue at the press conferences that we have regularly, keep you up to date, that everything is on track with the phase 1 study. We're in the third part.
How many people are... Where's the social distancing here? What is going on?
Press conferences.
About Oxford. We know Johnson & Johnson's well
That's
advanced.
another candidate, another one of several candidates that are moving along, because we're going to have a lot of shots on goal when it comes to vaccines.
That's good. That's great. Yeah, please go ahead.
How does this news influence your thought process on states reopening for fitness? Do you think people should be more comfortable knowing that there is a drug that is proven effective?
Well, I think it's a beginning. I thought Tony explained it really well. It's a beginning. It means you build on it. I love that as a building block. You know, just as a building block, I love that. But certainly, it's a positive. It's a very positive event from that standpoint. And we're going to be very careful as we open. A lot of people, a lot of governors are opening. I know you're very advanced. You're going to be very advanced in getting it going. But we're doing it very carefully. We've learned a lot over the last couple of months. And if there's a fire, we're going to put it out. If there's a little ember burning, we're going to put it out. We're going to put it out very quickly. And I think we've learned how to do that. There have been some areas that have really started up, and we put it out very quickly. So we've learned a lot.
All right, we'll take you out of the Oval Office now.
We've learned a lot.
Speaking there about what Dr. Fauci was just talking about, giving us all an update on this positive news regarding Gilead's remdesivir. Dr. Fauci saying it has a clear-cut, significant positive effect on the recovery time from the coronavirus. Also proof positive in his mind that a drug, any drug, will eventually be able to block the virus. It's significant news on Gilead's remdesivir, but also in the way that this sort of trial and this kind of data at least tells scientists and those in the healthcare industry that ultimately a drug will be able to block the coronavirus. That in terms
I'm on break real quick. I'm going to run upstairs. I'll be right back.
The president was meeting there with his economic advisor, at least one of them, Kevin Hassett, alongside the governor of Louisiana, whose state, for that matter, has been hit rather hard by the coronavirus as well. So you saw perhaps the market was rallying a bit more during the commentary from Dr. Fauci there. We're at the highs of the day. We'll call it that. S&P is good for 85. We're working on the best month, by the way, for the S&P since 1974. It's been that kind of V-bounce for the stock market over the past several weeks. There's the Dow. It is higher by some 617 points. That's a gain of better than 2.5%. Rob Sechin, so, you know, that's the word from Dr. Fauci, and it is undoubtedly good news, whether you're simply talking about remdesivir itself or the optimism that a drug will ultimately block this virus and that comes down the pipeline.
100%. I mean, the progression in diagnostics, therapeutics, and ultimately a vaccine will create levels of optimism. I think you know the effectiveness of policy, but it's really the impact of the lockdown that will allow us to see whether the V-shaped recovery in the market is...
Said I'll be back when it hits 15.
...in the economy, and at this
we will
point,
see him there.
We're probably 12 weeks out from knowing if that's going to be the case. So I think we have to watch all these things and react accordingly. And like I said, right now, I think from a market's perspective, we're a little ahead of ourselves.
Yeah. Jenny, do you want to just comment again? We're running to the end of the runway here of our program, but we're bookending it today with this positive news about Gilead, and it has had a significant impact.
How's
on
Tesla
the stock
doing?
market.
Rand, you got any good resources to link a beginner investor right here? Ask questions away. I think the best place, YouTube, other Twitch streamers, asking questions. There's tons of good info on YouTube. Sign up for that M1 account right there. That is the most important, dude. Sign up for an M1 account. Start yourself a dividend account full of stocks that pay dividends and you're very certain are going to survive and things like that. Healthcare, and banks, and things that you just you can get basic understanding of and get a flow for the market. Now's a good time still. We're not back to the all-time highs. And get some dividends rolling in and start to learn and pick some stuff. And then start to day trade and, you know, start to swing trade a little bit, you know, but you got to build up your bankroll first. Everybody wants to go for the quick fucking fix, the day trade right away, and it burns. Trust. I have $500 in Robinhood. There you go. Keep going. Keep going. How are my fucking stupid cannabis stocks? That's where I started, and they're doing awful, aren't they? Yeah, cannabis stocks are stupid, dude. Don't buy cannabis stocks. That's all I gotta say. M1 is pretty much for dividends only, yes. I mean, it's basically for long-term buy and hold. It's not for day trading or swing trading at all. It's completely free trading. It's got the auto invest feature and the pie feature, and you only get one trading window a day until you get $10,000 in the account, at which point you only get 2 free trading windows a day. So it's not meant to be day trading in and out of things. It's specifically meant to be your long-term snowballing dividend account. And you can buy fractional shares on here, which is nice. I mean, there are some things I throw in here for growth because I'm young, and I have Google and Amazon in here, and you can buy fractional shares of it. But mainly dividend accounts, because dividends grow and roll over and they're the fuel to the fire to buy more Amazon and Google. You know what I mean? Right now, we've got almost $39 in earned dividends in this account. We started it on September 9th. In the past 30 days, we've earned $10 in dividends. So we just want to see that grow and grow and grow and grow and grow. Diverse long-term dividend long-term investing, absolutely. The best place to start. Best place to start. Would be the first thing I'd buy, and I would make a diverse portfolio. I can show you the pie I have, and I would buy into everything at once. It buys into all of it at once. So what happens is if you deposit $100 in M1, it'll take that $100 and split it up into everything you do there. So it'll take $15 and put it in my healthcare pie, $15 in my real estate pie, $15 in the tech pie, $13 in the financial, $13 in the retail and food, $12 in basic material, $9 in energy. You know, it'll buy a small amount of all 90 stocks. And then within healthcare, you know, it'll break down that money and buy some Johnson & Johnson, some AbbVie, some Amgen, some Pfizer. It'll buy it all at once. Yeah, it's super for a long term where the only activity I do over here is straight up click deposit. That's all I've done since I started this thing is fucking click deposit. Okay? The ex-dividend date? What do you mean? You just buy, don't worry about that, but you can always look it up. I would go to Seeking Alpha. This is where I like to look up all my companies and kind of see how they're doing. Like that's where we looked up IPG today. So it doesn't matter, dude. You're buying into it long term. What matters is when they do report, take a glance at it, pay attention, make sure dividends are going up, the company's fine, financials look good and stuff like that, and just let it roll, dude. Just know you picked companies that are going to be cyclical. They might go up, they might go down a little bit, but in the long term, like I love to reference Johnson & Johnson and P&G. I mean, look at this over the long term. They're not even really down from the fucking peak anymore. They're back all the way back up, and they've paid dividends forever, all the way through this whole pandemic, through the last crash, through all the crashes. They just fucking pay dividends, and the dividends go up. So the longer you hold, the goal with this account, the first 10 years mean nothing of M1. The first 10 years really mean nothing. But 10 to 20, 20 to 30 years, that's where the dividends really pay you off as they grow. Those companies grow their dividends, they grow their sales, and they start paying out more per share, more per share. And that's the end game. this number to grow. I want this number in 20 years to just pay my bills. You know what I mean? Like right now, we're getting $10 a month. That's fair. Let's 10x this bitch. Let's get $100 a month. You know what I mean? Trying to invest it all. That's what's up. Roll it. It's the way. It is the way. SPY raging. Pen's about to break into a new all-time high. SPY doesn't want to quit, dude.
But I wonder, even if the news is all that great, for people who get coronavirus...
Still working, so the new extra would just be extra. That's what's up.
Is of course good news, but is it enough? Same question about, you know, the window here for recovery, 11 days versus 15. You know, again, any little bit of this is good news, but, you know, do you think the market's making...
But,
well, it'll be difficult to say until we see a deeper dive into the trial results. This trial enrolled patients at very sort of a spectrum of severity of disease. So some of these patients were on ventilators, other patients were less severe. They were all in the hospital with breathing issues. But what does seem clear, and Gilead released some of its own clinical trial results today as well, is that treating earlier is more beneficial. And so what you're going to see, those top-line results from the NIAID study right now, that is a blending of the results for all of those different patients. And as we get more granularity in that trial, we're going to see patients have great benefit from the drug, and some patients didn't have a great benefit from the drug. And what they're going to be working on now is optimizing when to give the drug, the dose to give the drug, to whom to give the drug, all of that. So there could be for some folks, and it won't work as well for others.
Right, but it would be great if it turns out, you know, giving it earlier helps a lot, and all of this obviously plays into people's reopening decisions.
damn, people are so hype right now. The market is hype as fuck.
The latest there has mentioned some huge news. Let's get to more on the rally. Bob Bassani joins
The market is so hype.
Gilead news feeding into this, but there's a lot more going on today.
There's three things going on. First, we've got the reopening of the economy rally. Then we've got the better testing, expanded testing rally. And now we've got the hopes for expanded treatment modalities. You heard from Meg rally. Got three different things going on here, and it's pretty powerful. 10-1 advancing to declining stocks. It's not 5 stocks in the S&P 500.
Right now, we're bringing in $10 a month, but that's going up every month. That goes up. We just started this account in September. September 9th of 2019, I started it, and we keep depositing, so that goes up. And it lags. Dividends lag the deposit because you buy the stock, then, you know, sometimes a month, 2 months, 3 months until they pay the dividend. You know what I mean? Depending on if you just bought it after the dividend date or not. So the dividends lag your purchases. I try to deposit $400 a month, $100 a week basically, but I do it normally in $200 deposits, so I try to deposit that. And then anything, dude, anything you guys, subs, biddies, if you guys watch ads to give free bits to the channel, you know what I mean? You can watch ads to get bits. If you sub to the channel, if you use your Twitch Prime to sub to the channel, all of that money, and we should get a payout here May 15th or so, all of that goes into this M1 account. Every last dollar goes into it. We don't gamble it on poker. We don't gamble it over here on options. It's going towards dividends and keeping this stream fucking going.
Corporate bonds, asset-backed securities, including mortgages, muni bonds, commercial paper, credit securities.
Dude, I appreciate it, brother.
On and on. The Fed, of course, is
I'm out here learning, dude. I'm new to all this. I have a rental property. I own part of a microbrewery that's about to open, but I'm new to all this stock stuff. I'm just trying to fucking retire one day, right? And be my own boss, control my own funds, and learn. I'll be able to watch ads in 2 days. Damn. Boochies. Dude, Killingbird dropping some biddies. Let's go. Boochies gifted a tier 1 sub to Danny K. Golden, man. Boochies, let's do a dab. I appreciate it, brother. Let's fucking go, Chad. Killingbird, I appreciate it. Boochies, I appreciate it. This IPG is interesting. pays a dividend, it's just like apps killing bird. I'd look into IPG, brother. Pays a fat dividend.
Maybe the JP Morgan and the Andrew Carnegie put them both
Bought 2
together,
shares, just 2 shares.
What
Kind of beer will the microbrewery make? I think he's gonna focus on Belgian style. But he'll have all different types though. He likes to mess around. He's very serious about it though. There's a lot of money involved. Way more than what I could put up.
Derek Camp from Morgan Stanley writing the Fed will increase the size of its asset holdings by an additional
I'm only
65% or $4 trillion.
I'm only 0.88 of a percent of 1%. I'm not even a full 1% of the microbrewery. So I'm just along for the ride, baby. I'm along for the ride. Let's go.
Okay, what are the big ones that the market's waiting for? The Main Street lending program not yet launched. 600
dude, Penn is ripping, dude. If Penn gets up there, I mean, come on. What's going on here?
Asset-backed purchase, 100 billion. Muni bonds at 500
Shit's
billion.
popping.
Treasury Secretary Steve Mnuchin on a call.
Gotta run in a little bit. Personal matters to take care of it. I'll be back here online. Oh, we're gonna try and be online all the way through Tesla earnings tonight. We're gonna try. We'll see you guys later. Tough spot. Let's go. Boochies with that gifted sub, man. We appreciate it. Cheers.
Not only responsible for the credit market stuff, but also much more directly to the American people.
Killing Bird for the biddies too. We appreciate
Steve,
it.
to jump ahead,
The morning lurk from Killing Bird.
all of this, you know, as we hope to look beyond coronavirus and the Fed's
Slurpee.
$12 trillion balance sheet next
Chill at 100 bits. Let's go, baby.
speculate about whether they could just extinguish the debt. Does that debt really
Bell to bell, daddy. Bell to bell. And beyond. If we're rolling deep in poker, we'll keep this mug going all night. Let's go, baby. Someone tell Phil Daggy to drop some a little extra in the account. Let's go, baby.
Some of that stuff it can let roll off as well. I don't think the Fed is even thinking
If you want to play poker with us, chill it up real quick. Click on the link for ACR. Oh, did it not go in the chat? Didn't do the thing. Do the thing.
About what we're doing right now. Remember, that was a big break on the Fed's.
Woo! Come play poker with us. Woohoo!
Hey, we're ending this. Hey,
Doted.
We're going to go back to normal rates real soon. This time, it's all out, all open, whatever it takes, for as long as it takes.
Real quickly, Steve.
All out, all
because
open.
The data, is more promising from Gilead today.
Whatever it takes.
15% from its all-time highs. Is it possible the Fed never
Woo! Tough spot still out there. Looks good, dude.
That's a wonderful question.
Push to a new high. What are we doing here? Come on, let's go. Can't get greedy though, dude. We're up fucking over $3, $2.69 in Penn. What am I asking for here? That's crazy. It's just insanity. ADMA would be nice though. Tesla taking a fat shit tonight would be amazing.
It'll be interesting as we see more of the details. Steve, thanks very much. Steve, please, we'll see you.
I think it's more likely that it goes down than surges to 1,000. What? Oh my God, could I possibly be so lucky?
Interest rates are hovering near
would you possibly? Wow, I fucking love you, girl.
And Subhadra Rajappa is Societe Generale's head of U.S. rate strategy.
Lunch on the way, chat. Lunch on the way.
Gonna kind of pick up on
Chili cheese fries, yo.
Does the Fed even need to
not the healthiest. Dude, I said on break I was gonna do some push-ups. What the fuck? Man, when we get on break or in between tournaments, I should just get my ass down and do some push-ups right the fuck now.
That's clearly proven that they're all in. It's really, they came to America in a crisis of confidence where the communication from elsewhere.
I am a bum. I'm about to eat chili cheese fries, dude.
Have the Fed come in and do this. I think the broader question is coming
like
out
seriously, I didn't order them. I didn't order that. That's just what I knew. That's where she's going. I didn't order.
That during and following
me. This is on me. I didn't.
Slowest, brandiest economic recovery in history, and so many people thought the Fed would be more active in 2011.
We're gonna go ahead and bust out the fucking push-ups right now. Jesus
line,
Christ.
than most people are thinking about. But
Can't be fucking. I need space. I don't even have any fucking space over here. Fucking chairs. I got 1,000 fucking chairs. It's only me over here. I'm the only one by myself in fucking quarantine. I've got 1, 2, 3, 4, 5 fucking chairs around me. I'm not even fucking kidding right now. Like, what the fuck is the point of this? Give me some fucking space.
Stock buybacks, you have companies with a lot of debt who have issued more equity, and so you're taking a big.
Like, who's sitting around me? Nobody's fucking sitting around me.
Talk to you as whether you're a bull or a bear.
I'll come through it too. It's quarantine.
And if
It's
you're
quarantine.
sharing those concerns about a slow recovery, what do you think that means?
We're gonna definitely have to do a meetup though. I was thinking yesterday, people were like that were from Ohio. I'm like, meetup, yeah, we'll meet up, play poker. Fuck that, we're gonna meet up at the microbrewery. Right? Meet up at the microbrewery. We're all in over here. We are all the fuck in over here.
And we've been very clear.
I have a poker table too. I could set it up in the back, dude. Damn, I'm in Boston. That's what's up. I've been to Boston.
We also caution investors that everybody
I have a friend I call Boston Pete.
Everybody would want to see a retest.
I'm in Canada, but tell me when. Tough Spot says.
We can't invest like that. So what I would caution investors is do this. Stop
I'm serious.
Market points in time and be an investor. Look at free cash flow yield. Look at the balance sheet. And per your question in terms of buyback,
Maybe Run It Up Reno or that WSOP in the fall in Vegas would be tight. Ace Jack versus King 6, he gets a fucking 6. We hate you.
Yeah. In the eventual
Jesus. King 6 makes the call there. Really?
Small cap energy.
Now we can definitely get the push-ups out. Jesus.
Okay, Subhadra, let me turn to you on the issue of
Jesus.
If we take the 10-year near historic
Penn, oh my God, Penn's pushing new highs. Let's go, Penn. Push up time.
What level do they want to see the 10-year at? Do they want it at 0, like we've seen from the Bank of Japan, because they think that's stimulative, or do they want it at 3%, because that actually suggests people are much more bullish on the prospects for the economy? What do you think? What would you make of rates and where they're going from here?
Well, I would argue that they're probably happy where they are right now, around 50 basis points.
Oh my God.
There's really no.
I'll be back in an hour or so. Drop and give me 15 to my fat ass. I need to work my way back up to 15. 10 is hard right now. No proof, never saw shit. Fuck you. Fuck. I smoke and shit. I'm dying over here.
In some respects, I would say that 10-year Treasury yield 50 basis points is a very, very positive sign for the market, and that's why you're seeing some risk-taking in equities as well as.
We're up almost 2K in fucking Penn National Gaming right now. This shit is fucking on wildfire, baby.
Up 30-40% off its lows, but the bond market's telling you we're going to
wild.
The lows, and
it's going apeshit. How does it do it?
Interpretation seems very different. Why do you think that the level of bond yield is actually bullish?
We're gonna do more of those.
Well, I think that they're keeping rates accommodative. You're not seeing
do some fucking static lunges, dude. That's what we gotta do. Oh shit.
And you know, for the most part, the Fed is providing a
could I do forwards and backwards?
Tapered their
impossible here.
Of treasuries ever so slowly. It's going to be very hard for them to sustain the same pace of asset purchases. So really, what we'll be looking for
that's what's going to help my fucking back.
Today is the way forward. What are they thinking about asset purchases, broadly speaking? Are they going to sort of switch to a monthly purchase program as opposed to a daily size that they've been targeting, given that they've already bought over $1.5 trillion in treasuries?
Yeah. It does, Tough Spot.
And,
it does.
Giving us some
I haven't been doing any working out.
And I saw you nodding in agreement there, Belsky.
It's perfect for midday like this.
3,400 on the S&P. We'll see if we get back up to those
I need to
levels.
start doing
we'll
it.
Leave it there for now, though, and I thank you both for
Tesla also needs a fucking tank.
Subhadra Rajappa of Societe Generale. Let's get to Boeing now. The shares are soaring about 11%.
Tank Tesla. Fucking tank, you piece of shit.
Quarter and cutting 10% of its workforce.
Whew.
CEO Dave Calhoun
I'm fucking tired.
Frozen by coronavirus. Phil LeBeau joins me now with more from his exclusive interview. Phil?
frozen, but in the midst of
Other leg, dude. You gotta do the other fucking leg, bro.
CEO Dave Calhoun. Let's talk about the numbers for the first quarter and the announcements today. Yes, it was a loss, wider than expected, but frankly, first quarter people knew it was not going to be good. So when they lost $1.70 a share, people said, "Okay, that's fine." What kind of moves are you definitively making to cut costs? They are going to be cutting 16,000 jobs. Most of those are going to be in the commercial airplane division, in part because they're going to be reducing the production rate in commercial airplanes. Here's Calhoun talking
One fucking more, dude.
About where Boeing is when it comes to the commercial airline industry.
All right, I'm tired now.
A little bit like we're the tip of the spear.
I'm tired as fuck. I need water. I have no water. I'm so cottonmouth.
Pretty much everywhere.
Oh my god, I'm so cottonmouth right now.
The ramifications are big. For the most part, the
Agua.
industry is not interested in taking delivery of airplanes at the moment and or prepay against contracts that we have in hand. And so as a result, there is this moment in time where everyone is sort of frozen, trying to contend with the dramatic reductions.
And those reductions and the fact that they're going to see fewer deliveries for commercial airplanes over the next several years, that's one reason why they burned through more than $4 billion in cash. Liquidity is the focus. They had $15.5 billion at the end of the quarter, Kelly. And Dave Calhoun says they will be accessing the public markets in terms of getting more capital. And then there's always the option of potentially borrowing from the Treasury. That has not been determined yet, largely in part because they don't know what the terms are from the Treasury Department. So those options are still out there, but more certainty is the reason the stock moved higher today.
All right, Phil, thank you for bringing us that interview. Phil LeBeau, we appreciate it. Coming up, Battleground stock.
My shits is on fire. My shits is on serious fire.
Than ever from this crisis, he'll tell us why. Plus, Battle Royale, a fight is breaking out between AMC and Universal that could turn the movie industry.
My shit on fire.
We'll have the details. The exchange.
Cardio is. Hey, the other guy's bigger than you. Looks like he could beat your ass, then you're able to outrun him over a distance. Tesla's going up. Not good. Not good for us. Not good for us. ADMA. Barely hold VWAP. I need to shave. Lord Wilfried. Thank you so much. Coxie, thank you so much. Slurpee, thank you for the bits. Fuck. Get it together. Breathe. Breathe, my man. Breathe. Think it's gonna shoot through the moon. Think it's about to fucking rip through this bitch up to 800. And I'm gonna be like, fuck. Fuck. Are you joining me? Like you said, if it gets all-time highs, do you join? Could you join? I don't think you do it. Ugh. If we get an intraday high, I'll probably join you. Oh shit. Here we go. Here we go. Oh. Oh. My shits is on fire after all those fucking... That wasn't even that much, dude. Fuck. 565. May 15th. Hey, I just want it to go down overnight. It either goes down overnight and I make some money or I don't. It is what it is. Like I told my brother on the phone, we turned $4,005 on a short into almost $5,000 on Tesla. So if I lose back this whole thing, great. I gave a tenth back betting it was doing the same thing. You know? And I own Tesla. Again, this is a hedge for me. Because I own Tesla over here. So I'm just hedging my profits.
Welcome back. Tesla is reporting earnings after the bell today.
Well, would you look at that?
Some volatility. It's had
what are we going to say?
Back up 60%. Since revealing it built almost 103,000 vehicles and delivered 88,000 in the first quarter, the shares are just around $792 today. My next guest says the company could emerge from coronavirus stronger than before. For more, I'm joined by Joseph Osha. He's an analyst at JMP Securities.
Who the
Joseph,
fuck is
welcome.
Joseph?
You know, your note certainly
Joseph?
caught my eye the other day. Why do you think that a company like Tesla, with all of its reliance on capital markets and so forth,
This guy's gonna pump.
stronger?
Thanks. There's a couple of points I'd make. For starters, I think there's a perception that hangs over from last year that Tesla is not financially stable. They have made enormous headway. You know, they're going to come out of this quarter with more than $7 billion in cash, so they're not really that dependent on financial markets. The more important point, though, is the idea that I think Tesla's competitors are going to pull back from their commitment to developing electric vehicles, particularly in the U.S. And so I actually feel better about Tesla's market share and competitiveness than I did 6 months ago.
I take your point that GM is making ventilators right now instead of, electric vehicle batteries. I thought you also emphasized the fact that Tesla's workforce is not unionized. So at a time when, workers are demanding more protections for coming back to the office, as we know, Tesla was forced to close down its operations in California after really trying not to.
They're trying to pump it up for retail.
Yeah, I will step away from making any comments about workplace safety. I believe Tesla will do what's necessary, but they do have some flexibility in terms of the ability to furlough that unionized shops do not. But I'd like to return to your point about ventilators. I think it's more than that. Gasoline is under $2 in a lot of parts of this country. And
so who's going to buy the Tesla?
Strong temptation at GM, at Ford, to return to selling big pickups and SUVs.
No, we know the future is electric. Shut the fuck up.
Programs they have on the EV side, which they're going to have to do
Shut
if they want to catch Tesla. So I think it's more about what happens at GE and Ford over the next 18 months, not whether or not they're making ventilators right now.
No, I take your point, and a lot of people thought, after 2008 that we would all be driving small, more fuel-efficient cars because oil was at $100 a barrel, and instead we had the SUV boom, and so
depends on how much it goes.
Surprising ways. Do you think
depends
that
on how much down it goes
poses a threat for Tesla, or changes the number of cars, especially the mass market cars?
If it dropped to 700, it would definitely be profitable tomorrow.
That's an interesting question.
To sell my options, because there would be some idiot going like, "It's going down."
The overall size of the market for electric vehicles maybe has been impacted a bit by cheap gasoline, but then on the other side, pardon me, you have to model where you think market share
is
going.
My long-term dividend account on M1.
Is Ford
and then I use TD Ameritrade or Robinhood.
And I think the answer is that
TD
those companies be less competitive.
So
I guess
Corona.
To answer your question,
M1,
I see Tesla having
signing up
bigger
for
share,
Robinhood,
potentially slightly smaller.
You sign up for Robinhood, we each get a free share of stock.
What do you make of this move for
you
Elon
can
Musk
options
to
trade on there,
self-insure
day
his
trade on
directors?
there. I have a
Because he
Robinhood
said the
account
insurance
over here
costs
that
were
I
too
use.
high. I mean, does that tell us something more than just, hey, this is kind of a quirky story?
I think it's just Elon being iconoclastic. He certainly has plenty of money, and he's
it's
very,
Elon
very
being iconic. I love Elon.
The message
I'm all in on his company.
Conviction in his company. So I think that's just him being iconoclastic. It's going to be very interesting to hear what he says about his commitment to the business.
You have any Bitcoin? Very little, the janitor. I would like more, though. I would like more.
I think that's what investors should
I am interested in cryptocurrency very much. So someone Twitter got a free share.
So an $840 price
Facebook,
target,
I'm over here
about
getting a share plug.
from where we are now.
BTC
Joseph
going
Osha, thanks
ham
for joining
today.
me.
Is it really?
Thanks.
From JMP
Even further,
Securities.
It is. Wow.
Coming up from layoffs
Tezos
at Uber
is back
to
to
WeWork
$290.
and
Wow.
Airbnb. The sharing economy is suffering big time throughout this crisis. Are we over the whole sharing thing, and what does that mean? If so, we'll ask. Remember, you can always watch or listen to us live on the go.
BTC may beat away. It might beat away. What's gold doing? Nobody's buying gold, dude. Gold is worthless. BTC'd away. Wild. Super wild, yo. I don't know if that's legit for fucking... Oh, didn't we start a tournament? Do we have a tournament going? Oh my god. I Scream, thank you for following. Car made a comeback. They're like, excuse us, we didn't go bankrupt. What about Hertz? We'll fold. Pen. Die Zoom.
Welcome back. Let's get the very latest in the coronavirus pandemic. Over to Sue Herrera for the headlines. Sue?
Hello, Kelly. Hello, everyone. Here's what we know at this hour. The World Health Organization's Michael Ryan says the proportion of people with antibodies is quite low, even in hotspot areas with intense transmission of the coronavirus. That, he says, is a concern.
Die Tesla.
New York's Governor Andrew Cuomo unveiled a collage of homemade masks sent in from people across the country for New Yorkers on the front lines of the virus. He calls it a self-portrait of America. And a tattoo enthusiast in Stockholm has put the face of Sweden's state epidemiologist Anders Tegnell on his arm. The man said Tegnell has dealt with the outbreak in a, quote, admirable way.
Who cares?
It's a novel way to do it. As always, for more on the coronavirus coverage, you can head to CNBC.com. Kelly, back to you.
Okay, Sue, thanks very much. Maybe some Fauci tattoos.
I'm sure there are going to be
some unable
Fauci
to
focus.
Sue Herrera, we appreciate it. An epic battle taking place on the silver screen. AMC, the world's largest theater operator, is threatening to not run Universal movies in its theaters. This in response to Universal saying it plans to release movies both in theaters and on demand. Let's get to Julia Borston for the latest. Julia?
Kelly, that's right. AMC, laden with debt and suffering from current theater closures, is showing its concerns about Universal bringing in some $77 million in revenue from its digital release of its film Trolls World Tour. AMC saying that its ban of movies that are also
McDonald's
offered
cheeseburger.
on
Do we have any
demand
call
during
plays
the
for today?
theatrical
We're shorting
window,
Tesla
quote,
today.
extends to any movie maker who
I don't know. Going into overnight, I don't know,
practices,
man. Day's
absent
halfway
good faith
through today.
negotiations between us, so that they, as a distributor
I
and
don't know what
reason
people are
exhibitor,
looking at.
both benefit and
Airlines
neither
have
are
been
hurt
popping
from
back.
such changes.
I don't know.
Now, Regal just
a lot of
today
stuff out
telling
there.
Variety it will also boycott Universal Films. We have reached out to Regal for comment on this. Now, Universal saying in response to AMC that it wants to reach the widest potential audience. Quote, going forward, we expect to release films directly to theaters as well as on PVOD, paid video on demand, when that distribution outlet makes sense. Now, the effective deadline for Universal and the theaters to reach a deal is September, because that's when Universal is doing its next wide release movie. And just a reminder, Universal is owned by CNBC's parent company. Back over to you.
So I wonder, Julia, if AMC feels like it can throw its weight around here, or that it absolutely has to. In other words, we were talking a few weeks ago about whether this company could make it through coronavirus. The equity was trading very, very low levels. So you might not think they're in much of a position, to be waging this battle unless they think it's truly existential, and that if they don't, then they're going to go out of business.
Well, look, this seems like this is going to end up being a negotiation, and you're right. AMC does not have a lot of negotiating leverage right now.
Who the fuck is going to go to the theaters?
Look just at the box office market share of the first part of the year before.
Theaters are done. Release it online. I watch it at home. I smoke weed. I press pause. Nobody else is bothering me.
Market share there. So AMC arguably really needs these movies, but they're also so scared about losing that all that movie going and all of those movie tickets that are sold. So what we could end up seeing here is some sort of agreement where Universal agrees to give theaters a 3-week exclusive window instead of a 3-month exclusive window, or saying that some percentage of their movies will have that 3-month exclusive window, and a smaller percentage of their movies, they'll be able to do whatever they want with them. But I think what's really interesting here is that Universal putting those numbers out there, confirming that they got $77 million in revenue from video on demand, that shows that there is massive demand by consumers.
Yes.
And that's really what's going to drive this.
Yeah, and that people like that experience. It does feel like this will change as a result. Julia Borson with the latest on that battle. Coming up, the Fed has committed trillions in a dozen or more programs ahead of today's meeting. Is there more ahead, and could the next step involve buying stocks? We'll debate that. Also, shares of Starbucks are moving lower today after reporting earnings that showed a bigger than expected drop in same-store sales, are down about 2%. But CEO Kevin Johnson is focused on the path forward for the company.
Starting next week, here in the U.S., we are going to open a significant number of Starbucks stores.
Versus Queens.
We'll be, by early June, plan to have over 90% of our stores open in the U.S. And so we are beginning the monitor and adapt phase, which now is the path to recovery.
All right, Oven Mitts. We'll see you later, brother. No one able to help you? What is that, ice cream? Do you do call plays here, or do you just eat and play poker? I do both, McDonald's cheeseburger. It's lunchtime. If I get in, I'll put it in Discord. Let's go, Oven Mitts.
Welcome back to the exchange. Markets are near session highs, rallying about 2.5% to, in the Nasdaq's case, 3.5%. Biggest mover there of all the major averages. Let's get a check on some more of the big movers with Dom Chu. Hi, Dom.
All right, so Kelly, what you're seeing right now, like you said, pretty much the highs of the day for the stock market. The gains are broad-based, no S&P sector in negative territory. But the real outperformers have to do with the optimism around the path forward after economic shutdowns across the country start to end. Anything travel related, check out what's happening right now. Shares of Carnival Cruise Lines up around 15% on heavier than average volume. The future consumer spending story carries over the cruise lines, also big airline stocks as well, so watch those. Then there are the really beaten up energy stocks, like the oil refiner Valero Energy, up about 12% on heavy volume as well. And then there's the consumer finance companies. Check those out, like Capital One Financial, up 11% or so as the outlook for the consumer spending picture gains some more traction there as well. Then you're also going to want to keep an eye on some of the shares of Facebook stock, Microsoft, eBay, those names among a headline slate coming up after the closing bell in terms of earnings reports. By the way, Kelly, eBay shares up some 50% since the market lows on March 23rd. Back over to you guys.
All right, Dom, thank you very much, Dominic Chu. Meanwhile, Lyft announcing plans to cut 17% of its workforce and furlough hundreds more as it deals with the fallout of coronavirus. This after the information reported that Uber is discussing plans to lay off about 20% of its employees. And WeWork is going through another round of layoffs as it cuts nearly 100 workers at its San Francisco office. Meanwhile, Airbnb's CEO is telling NPR he's still, quote, very confident the company will have its IPO this year, despite lowering its valuation. So how big of a setback is this pandemic for the sharing economy? For more, I'm joined by Santosh Rao. He's head of research for Manhattan Venture Partners, which was a mid to late investor in Lyft and Airbnb. Our dear Jabosa with us as well. Santosh, let me just start with you. I mean, you seem relatively optimistic still on the likes of Airbnb.
Yeah, absolutely. Thanks for having me, Kelly. I think let's see how the dust settles on the other side of this whole thing. But I think overall, I think the gig economy is going to be around. It's going to do very well. It might take a different shape slightly. They're going to add added cost layer there because of safety and security features in there. But at the end of the day, I think Airbnb, Lyft, and Uber will do well. They are going to be round of layoffs, and understandably so. Every sector of the economy is going to get hit. So they're cutting costs. So I'm not worried about them cutting costs as expected, but I think overall they'll come out of this stronger on the other side.
You know, Deirdre, I just look at the Journal, front page today. They're talking about the bargain with the devil. The people are furious with Airbnb. I hear this all the time as well. Maybe you can just say, hey, it was a learning experience for everybody going through this, but I do wonder not so much about the gig economy, but the sharing economy, this part in particular where you're sharing your home, you're sharing your workspace, you're sharing a car, if that has some serious challenges ahead.
Done.
Yeah, Kelly, I love how the Journal put it. They called Airbnb, these property owners that own numerous amounts of homes or apartments and rent them out. They call them the upper crust of the sharing economy because that's really what they were. There's a whole economy behind Airbnb itself that includes interior designers, maintenance people, cleaners. But looking at the sharing economy at large, I think that what you're seeing right now is a lot of these weaknesses were already becoming exposed. The coronavirus pandemic is just speeding that process up. Even before the coronavirus decimated demand for ride sharing, you saw that public market investors were demanding more visibility into paths to profitability for the likes of Uber and Lyft.
It's all right,
they were
though.
burning through, and
if
they
they
still
want to be a viewer,
burning through billions
let
of
them
dollars
view.
a year. And this
just
pandemic
helps.
happening right now doesn't give them a lot of
Viewership
opportunity
helps,
to get on top of it.
It
So
doesn't
what
really
you're seeing
matter
now
to me.
is demand decline.
As long as you got the tab open, you're listening.
You know, in some cases,
We're doing
Lyft
great.
this morning, 17% of its workforce, that's nearly a fifth. So they're in a lot of trouble. And while I understand that perhaps they come out of this stronger, they have to come out of this. And the rate at which many of them are burning through cash, another example is WeWork. I think that that's still very much a question because we don't know how long this lasts.
Right. And Santosh, I knew you guys were mid to late investors, like you said, in Lyft and Airbnb. I assume, that probably leaves you still a pretty good margin, of money on these equities. But I guess you tell me, even though the CEO says Airbnb can still go public this year, you doubt that can happen. What are some of the valuations that you think are more realistic post-coronavirus? Are we talking about valuation cuts of 50% or more?
Yeah, I think, it's a lot of things are moving. It's too many moving parts at this point. It's very difficult to pin a valuation. Of course, there is a fear factor that is driving valuations down, but I don't know if that's permanent as yet. Yes, some trades are going off early, according to some estimates. But I think overall, you'll see that things will settle. We need to see some clarity as to where this whole thing is going. If we have enough safety features in there, and if there is a cure, the health risk goes away, then if slowly business reverts back to normal, which might be maybe 3 months, 6 months, we don't know yet. So I think the valuation is going to depend a lot
Tesla
on
right
how
now.
things settle on the other side of this. So I think Airbnb, yes, I think right now there is headwind. They are burning cash. They have some issues with the hosts and the guests and all that. That'll play out. That was expected. And like Deirdre said, the fault lines have been exposed. There were some fault lines before, but they were working through them. But I think they will settle it. I think what this has done is really exposed all that. We need them to come out stronger on the other side, and the market will force them to come out stronger on the other side because we need them. The sharing economy is an integral part of our lives, of our economies, and I think they will come back, they will innovate, and they will come out stronger on the other
Deirdre
side.
will give you the last word.
Well, Cal, I disagree with Santosh that you can't put a pin on these valuations. You can. They're becoming very, very clear. Airbnb last raised equity a few weeks ago at a $16 billion valuation. That's about half of where it last raised money. Uber right now is trading at a less than $55 billion market cap. At one point, it was pitched as a $120 billion company. It was worth $76 billion on private markets. Lyft also trading far below. So these are critical times. And I also would just add lastly, who's the biggest investor in these names, the biggest backer of the sharing economy? That would be Masasan and SoftBank. So you have to look at the role that they have
SoftBank.
played in boosting up these valuations that now seem very, very much at odds with how public market investors and even some private market investors are putting on them.
Santosh, just real quickly, is there any company that you would now invest in because of coronavirus? You know, I'm thinking of the likes of Instacart. I mean, there is going to be a whole new economy that crops
Donald's
up.
cheeseburger and ice cream.
Yeah,
with
I
the
think the delivery
follows.
companies have come out strong in this whole thing. They have proved themselves. So we are investors in Postmates and a number of other companies. There are a lot of
I
opportunities.
got one contract.
Lower valuations, like we
315.
talked
Oh
about
my
earlier.
God.
So I think there's great opportunity for investors to get in here.
$315. Oh, for 662. 51662. That's what's up.
It's all reflecting the fear factor in the economy. I mean, at one point there was almost a death sentence with this coronavirus thing, and that's going away. And we saw the press conference just now. I think looks like things are opening up.
Yeah.
I think the valuations will pick up as well as we get more clarity on the other side of this whole thing.
All right. Well, maybe an opportunity, like you said, Santosh. Thanks for joining us. We appreciate
Thank you.
it.
Thanks
Santosh
for having
Rao
me.
of Manhattan Venture Partners. And Deirdre, thank you for the great reporting as well. Our Deirdre Bosa. We've got some breaking news on the small business lending program. Let's bring in Kate Rogers. What's going on, Kate?
Hey, Kelly. Well, the SBA has just sent out a new notice to its lenders saying that to ensure access to the PPP loan program for the smallest lenders and their small business customers, starting
I get what
today
you're saying.
at
If we go back down to
4
VWAP
through
here and it breaks
11:59
through there,
p.m.
you're just going to
Eastern,
take your money
SBA
and
systems
bail.
will only accept loans from lending institutions with asset sizes less than $1 billion. Please note, lending institutions with asset sizes that are above $1 billion can still submit PPP loans outside of this time frame, and lenders with asset sizes greater than $1 billion will be able to submit loans today outside of that 4 p.m. to midnight window. That's reserved processing time for smaller lenders. Now, SBA and Treasury also say they're going to reevaluate whether or not creating a similar reserved time frame is necessary once again in the future. But here they're really reserving a processing window for smaller lenders with less than $1 billion in assets. We did reach out and ask why this is necessary. There's been some, concerns about potential loan prioritization. Small business owners and banks both have a lot of questions on that.
Holy shit,
Yeah, and this
dude.
suggests that the people in charge of this share those concerns. So an 8-hour window starting at 4 p.m. today for banks with less than $1 billion in assets. Kate, thanks. Kate Rogers. Up next, we're going to get to some of the bold market calls of the day, including why an uptick in consumer deliveries might not be a good thing for UPS. As we head to break, here's a look at the biggest gainers on the Dow today. Boeing tops the list, followed by Amex and Visa. Boeing now about 9.5%. We're back in 2.
My God. We have queens here. We're all in. Fives, ace, king. Hold. 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 83 big. Pro in first place. That's wild, dude. Guac killing it. Can't buy into it now, my man. I don't even know what this is. That was just like an auto. Like nobody knows what it is. Nobody knows what it is. Jesus Christ.
welcome back
I'm
here.
in
Your
shock.
calls of the day. We begin with the name everyone's watching lately. Tyson Foods downgraded by Piper Sandler to neutral, lowering the price target to $66. Despite the meal-oriented portfolio, they face headwinds from the lack of food service sales, plant closures, and higher costs. Still, they say the government reopening calls will help them in the longer run. The shares of 1.5%.
Like what?
Interesting one. This one, UPS downgraded to underperform at BMO, lowering its price target by $10 to $85. They're saying that while COVID-19 has grown the consumer-oriented delivery business, it might not be a good thing for UPS. It means higher costs. They say the structural decline in profitability there was already underway, but the shutdown has accelerated it, and UPS shares are down a little less than 1% today. Finally, BTIG initiating Under Armour with a sell at a $5 price target, saying the company is experiencing a negative trifecta, losing relevance with key customers, management turnover a sign of instability, and limited brand building resources. Wow, a tough one for Under Armour today. The shares are up nearly 3% nevertheless. On this reopening talk, Under Armour trading over $11. We're just moments away from the Fed's rate decision. While rates may remain unchanged, Chairman Powell takes on the role of shutdown financier. His remarks at the 2:30 news conference will be monitored closely. The key things to listen for next.
Seems like a huge pump and dump. There's no news. What's the news? What do they do? I don't know what they do. I can't invest in something I don't understand. What deal? Supposedly Amazon? What do they do? Do you work for them or something?
We're moments away from the Fed's decision on interest rates. Will we see more aggressive moves, or has the Fed already done too much? Joining me now are Greg Ip, the chief economics commentator at the Wall Street Journal, and Bill Lee, chief economist at the Milken Institute. Greg, welcome. We haven't even seen the Main Street program get off the ground yet, and yet the news flow in the stock market is turning more bullish.
Looks like we hit it.
Yeah, and I think you have to give the Fed some credit for that, because the Fed obviously can't solve the pandemic, much less reopen the economy. I think its programs have resolutely demonstrated that it's not going to allow a liquidity crisis among financial companies or corporates to become a solvency crisis. That's clearly had, I think, a positive impact in the credit market. That's probably spilling over somewhat to the stock market. I mean, I'd love to hear what Jay Powell has to say in a half an hour from now when he comes out of this meeting. Obviously, what he's going to do with Fed policy is going to be important. I mostly want to hear, though, what he thinks about the economy. There's just so much uncertainty out there, and he is one of the people that people still trust to give it to us in a candid way.
Yeah, Bill, I thought your observation here was interesting, that the Fed missed an opportunity to distribute funds authorized by the CARES Act more efficiently. What do you think we're learning as we navigate this early period?
Well, the Fed learned its lesson to go in big and go in early from
Wow, is
2008.
Penn
So it's
holding above
managed to
18 for
reassure
a
markets that
rally into the end of
everything's
the
going
day?
to
This
function
is
right.
going to get
But what it
crazy.
didn't seem to take into account were the bureaucratic snafus and loan issuing policies of these big banks, and that's sort of misdirected funds and delayed funds from being dispersed. We could have used securitization and have a whole host of financial engineers out there directly issue these loans to the companies that were asking for them, and then have it securitized. That would have bypassed everything. And since the Fed is in the markets reassuring everyone that they're going to be a buyer of last resort, even in corporate Main Street loans, we had a guaranteed market. And so the distribution would have been done much more effectively, efficiently, and fairly.
But Greg, you know what? I listened to that. I think Bill is most certainly right about that, but that the Fed would have gotten all of this criticism about simply bailing out big business and not helping Main Street. They specifically chose to call this a Main Street lending program, and it's aimed at companies with 500 to 10,000 employees. That is vast swaths of America.
Holy
that can't necessarily, issue the kind of debt that Bill's talking about.
I'm still
the
holding
Fed
it.
purchasing. So I understand the intent here, but do you think that it's going to end up? Are they going to be able to distribute this $6 trillion efficiently?
Well, first of all, I don't think we should be blaming the Fed for the problems we've had with the small business lending program, which actually does not involve the Fed.
Right.
That is entirely funds by the Treasury via the Small Business Administration.
Yeah, we're up.
And in fact, you would
we're up 1,600 on the
that some of
trade.
the administrative problems the SBA has been having are actually
holding
the decision of the Fed to go slowly. It hasn't even launched the Main Street lending program yet.
Right.
And as for the corporate lending programs, they're already having a positive effect. But that said, as they roll out these programs, absolutely, they're going to encounter some of the problems that you and Bill have just discussed. There will be people who said that the program was too scattershot, it gave money to people who didn't need it, and those who will say it was too narrow and didn't get to where it was needed. I think the attitude of the Fed right now is let's err on the side of doing too much, and it will be a nice problem to have. At the end of this process, we're saying we help the economy too much.
You know, Bill, at the same time, like Greg said, there's been a ton of criticism about the PPP program, and I definitely think it's going to play in to the election season this fall in terms of who gets the blame for how that was administered. Even if the majority of the funds were well administered, the impression everybody's left with is that the money was misappropriately allocated. So how does the Fed, which has been trying to take comments and not repeat those mistakes, they're still going through the banking system, how do they avoid the same outcome?
I think they're hoping to promise a lot and do very little. And I think that's the notion of having to allow a lot of financial institutions, banks and non-banks, to package small business loans and then have a market created for it and have the Fed be one of the buyers. That's one way to distribute small business loans much more effectively than having to go to Chase and all these large banks where they get chopped out by their Chase's big clients.
No, that's a great point. So you're saying use a securitization, but bundle up all the small business loans and sell them off. You always come with good ideas, Greg. I will leave it with you, which I thought was a clever thing that Bill just said, and I've been thinking about it. Is it better for the Fed to promise a lot but have to do very little? Look, they haven't even launched some of their corporate bond support programs yet because the market just simply knows that they have a backstop. They can just say whatever it takes and not have to do much.
Don't you remember when Mario Draghi said, we will do what it takes and believe me, it will be enough? The Eurozone crisis was over before they bought a single bond. Look, the central banks have this amazing thing. It's called a printing press. And if they're willing to run that thing fast, they can do a lot.
That is...
Nice.
That is food for thought as we get this decision today, guys. All right, thank you both, Bill Lee, Greg Ip, with some bigger picture thoughts on the Fed's involvement here. We're just moments away from one of the most anticipated.
I can't imagine a better time to get the fuck out of that leaf. What do you mean it's going to continue to pay, dude?
Action they've announced and initiated lately.
I'm not fucking leaving, brother.
On the other side of this break.
You know what? I'm not leaving. I'm not leaving. I'm not fucking leaving!
We're not leaving. We sold one today and put it in a Tesla put. Damn, ADMA's got a little gas to it. ADMA said, "Don't count me out." Ah! It's falling apart. The English Gent. Thank you for the follow. I appreciate it. IPG, dude, I love it.
Voice.
And welcome back, everybody, to a very special edition of Power Lunch. I'm Tyler Matheson. We are just moments away, as you probably know, from a Fed decision on interest rates. Something, nothing, we don't know. We're expecting it right at 2 p.m. We'll have full team coverage as that news breaks.
How do we watch that?
Are in rally mode, we should note. Despite
Scott
GDP
comes in right as he says it. You
of
gonna
this
watch
year
that, bro?
You
gonna watch that, bro?
since the financial crisis.
You gonna be
And
watching that,
Fed
Fed, bro?
That would not be good news.
Fed
But investors
announcement?
instead are focused on a positive trial.
can't fucking
Data coming out
fucking-
for Gilead's coronavirus drug, remdesivir, and we will
Federal
have more on that
Reserve
in just a
has their
moment,
own
too.
channel?
But let's start with what to expect out of the Fed and from Fed Chair Jerome Powell.
Damn, they be
He has his
balling.
press
We
conference
print
at
money.
about-
Oh shit!
From the Federal
That was
Reserve.
loud.
David Kelly from JP Morgan.
I almost fell out of my fucking chair. That was so loud.
Right now, we are very happy
Fucking
to have
A,
both
my
of you
bad.
here. David, I'm going to let you start
Oh,
off.
shit.
It really has been a month like no other for the Fed. What should we expect today? Action, no action is what really
That
matters
was so
this statement
bad.
in the press conference.
That was so bad. I'm sorry, chat.
Yes, I think it's all about messaging. I think the Fed wants to show some empathy, acknowledge the extraordinarily weak situation the economy is in right now. I think they want to express some determination to do whatever is necessary to help
Damn,
the
do we
economy
take
through
our
this very
profits in
difficult
pen?
period. And I do expect that Jay Powell will also express some optimism that we will get through
Yeah,
this,
yeah,
and
you
that the
got
economy
this.
will bounce back strongly in 2021 once we have dealt with this medical issue.
Dude, we're bringing
You know,
in some
Mona Kelly
bank
was just having
today,
a very interesting
baby.
conversation with her prior guests, including Greg If, where she said, does the very fact that the
We're
Fed
bringing
says
in the bank
we'll do whatever
today.
we need to do mean that maybe the Fed won't need to do
What if he
whatever
goes
it needs
negative?
to
There's
do?
no way.
Yeah, you know, clearly
That would be
messaging from Jay
insanity.
Powell is important. It's always been a driver of the markets. I think many people would like to
I need
hear
Tesla
what
to
they're
take a
thinking about
fucking
for the second
shit.
half
Take a
of this year. You
fat
know, keep in
shit.
mind back in March, we didn't get the usual summary of economic projections that outlines the Fed's view on GDP, on
Nobody's
employment,
buying a fucking
even
electric
inflation.
car.
So I think a lot of people would
Who the
be
fuck is
interested
buying
to
a
hear how
Tesla right
he's
now?
seeing the path of recovery, if any. And then also it'd be interesting to hear, you know, what he thinks of market conditions currently. You know, clearly he might even take a little bit of a victory lap. He's had financial conditions ease quite a bit. We've seen the VIX and a lot of volatility indices come down from their peaks. Clearly on the credit side, you know, investment grade and high yield spreads have also come down from very spikingly highs.
Damn, all I know this is Tesla is controversial as shit.
We are very
I know
close
that.
to that decision, and I'm going to toss it back to Kelly, who has a much better read on exactly the number of seconds until that decision. We should
We
point
either
out that the
fucking
Dow is
hit
up
fat tonight
550
in a
points.
couple
Kelly.
hours,
Yes, it is
or
on
we just
NASDAQ,
burn a little
is
bit of
up.
cash
It's
back.
the outperformer today up 3.5%, also keeping a close eye on rates near historic lows. Steve Leisman here with the historic Fed decision. Steve?
Thanks very much, Kelly. The Federal Reserve saying it's leaving rates unchanged at that range of 0 to 0.25%, and saying it's going to keep rates there until it's confident that the economy
So
has
he already
weathered
knows? So what
the
do we need to
impact
watch
of the
for?
coronavirus and is back on track. Federal Reserve saying in a statement it is committed to using the full range of
We're
food,
back
and you
on
see
track.
that
I
in
still
the,
haven't left my house yet. What the fuck
programs
are
that
you
have been announced.
talking
And
about back
continue
on
to purchase
track?
treasuries, the Fed says, and
What?
mortgages,
We are
quote,
back
in
on
the
track.
amount needed, end
Facebook
quote,
is
and will
raging
continue to
today.
offer
Facebook
large-scale
calls,
repos
dude.
as it has
Facebook
been
calls.
doing. Goes on to describe
Or
the
you think it's a
impact
sell
of
the news
coronavirus
thing?
on the economy the way it sees it.
I think
causing
Facebook does
tremendous
good.
human
Facebook
and
ads
economic
up
hardship,
during
the
this
statement
time,
says,
dude.
and measures to protect
Facebook.
health have been causing
Nobody's buying a
the sharp
Tesla.
economic
Facebook
declines
up.
and the
Puts
losses
on
in
Tesla,
employment
calls on
and
Facebook.
jobs. On
Those
the
are my
inflation
fucking
front,
bets
the
of the
Federal Reserve
day.
notes muted inflation, says weak demand and lower oil prices are holding down inflation. Disruptions to economic
Suckers,
activity,
dude.
it says, have
Robin
impaired
Hood
the
suckers
flow
are
of credit.
buying
The
fucking
public health
Tesla
crisis
right
will
now.
weigh heavily, it says,
At the
on
peak.
economic
It's going
activity
back to
and
1,000.
employment.
It's
And just
going
a bit
to
of analysis
1,000.
picking on something that was just said there. There is
It's
no
going to
forward-looking
1,000.
aspect to this statement here. Generally, the Federal Reserve says this policy will lead to X, continued sustained expansion, things like that. There is nothing here where the Fed says the policies we have now will lead to X in the future. It's all about the Fed chronicling the damage to the economy from the coronavirus.
They are important.
Explaining that it will
They let me
use
get in that put
tremendous
for
tools
cheap.
to get back to where the economy was, but not forecasting when that will be or even characterizing how that will be. Tyler?
What does that suggest to you, Steve? That they just don't
the
know, that they don't
data.
want to step out on the
Get me that
edge
data.
of a long diving board?
You nailed it, Tyler. I think the outlook is as uncertain as
You
it
nailed
can
it,
be.
Tyler.
I think the Fed has all of the
Fucking
information
nailed
that
it.
we have provided on
Tyler,
an ongoing
brother.
basis as to the median estimates of Wall Street economists with a 35 or a 40% downturn. What the Fed does say, and I'd like to read this because I think it really speaks to how unusual the time is. The ongoing public health crisis will weigh heavily on economic activity. This is what I want to read. The committee will continue to monitor the implications of incoming information.
Eat
for the
shit,
economic
Tesla.
outlook,
Eat shit.
including information related to public health. So they're watching the spread
Can you
of the
imagine if
disease,
I had
the
kids one day
hospitalization
doing
rates,
this?
the
Like little fucking
infection
me
rates,
being like,
the news
eat
about
shit,
the drugs.
eat shit,
Public
Tesla.
health now is an
This is
absolute
horrible.
key to monetary
Jesus.
policy.
All right, Steve Leisman, I know you'll be hanging in with us for most of this half hour and then through the press conference. But to get some market reaction, let's bring in Bob Pisani. Hi, Bob.
You know, Tyler, I'm looking
Everybody
at the
knows this
headlines
is
here
bullshit.
Steve has presented them, and he's right. There's no forward guidance at all here. I'll tell you what, I talked to on the trading desk today, want to know a little bit more on the pace of the bond purchases. And covering ETFs, I'd like to know a lot more about what they're doing. You know, they made this announcement. We don't really have any details at all. They're going to be buying corporate bonds, corporate ETFs, high yield ETFs as well. And a lot of people in the ETF business have been very interested to get more information, and we really don't have it. We don't have it here either. Hopefully this will come up in the press conference, but I have a sneaking suspicion that Chairman Powell is not going to provide a lot of details on the actual numbers. We've got a lot of programs that were announced. Some of them aren't even online yet. So frankly, there's a lot of questions here, and I'm not sure that we're going to get all of the answers today. The one thing I'm quite sure of is that we have a very powerful rally going on in the last couple of days. Call it a combination of an opening of the economy rally, expanded testing hopes, as well as today, better treatment. You heard Meg talking about that.
Oh my God, this thing's falling off
how
a cliff.
much we're getting an
This thing's falling
outperformance
off
from
the
the
cliff, dude. You
previously
gotta be very careful
lagging
with
sectors
chat,
here. So here's the S&P
People
500
coming to
banks
pump their
sector.
pump.
The banks are doing great this week. They're
And then
outperforming
dump on you.
dramatically, up 7, 8, 9%. We're getting small caps outperforming. The Russell 2000 hasn't been outperforming in ages. It's up about 12% this week. The small cap index, the S&P mid caps up 10%.
Ripping the blips, you know what I mean? Ripping the
The S&P
blips,
500 is only
baby.
up about 3% overall here. So we're really getting a broad rally. Today we have
Gotta be
almost
careful.
10 to
You
1,
gotta be
almost 10 to
careful
1
out there.
advancing to
Gotta be
declining stocks.
careful.
That means that this is not a FANG rally, folks. We're really broadening out for the reasons that I mentioned. So obviously there's a lot of hopium going on right now.
Hopium! He said hopium!
And advancement in science. Guys,
What a G!
No, it's a great point, Bob. And of
Bob
course, all of this early
Pisani.
reaction still
I know he
waits on
loves the
press
Grateful
conference
Dead
we're
and
gonna
shit.
have
He
around
said
half past
hopium.
the hour with Chair Powell.
Dude,
Let's
he
check in on
probably
the bond
calls
market
hippies
first, see how
looks
it's
and
responding
shit.
to the
Oh my
statement
God,
and
they
what
probably
its
get so
expectations
weak.
are.
Him
Rick
and
Santelli
fucking
here for that. Rick?
the other dude. Oh, do we call here?
If
We have
you
a
look at the
fucking set of
intraday
nines.
charts,
Do
look
we
at the
call
dollar
your
index,
bitch
we've
ass?
given up
Yeah,
a little
we
bit of
do.
ground. You look at 2-year notes,
6-7,
we were at
get
19,
wrecked.
we're
No,
still
no,
at
no,
19.
no.
You
Okay,
look at
thank
10-year
you.
notes, we're at 61, now we're at 60 basis points. The point is, stocks have done so much to the upside. Interest rates have come down and stayed down. Why are they down? Well, because the Fed pretty much has set the table for anybody who needs some extra meals. But they still, as you pointed out, they really haven't bought any ETFs. They really haven't bought any munis. But those programs, and just knowing that table's set, seems to be doing the
We're in
trick.
first place.
But many want to know what signals
with
would the Fed
$100
pay
up top
attention
too. Let's go.
to maybe either pull back on some of these policies or programs or add more? Would they be looking at average hourly earnings? What part of the jobs report are they going to look at? Initial claims going down because maybe some of the PPP policies are putting people back on the payroll.
Means
like,
Tesla
what are the
breakdown. It also
for
means
the Fed
pen breakdown.
to move out of the zone of being the backstop for everything? This is what investors want to know, and I didn't see it in there. But suffice it to say, while stocks rally, the Fed has pretty much put interest rates in permanent ink with very little volatility, and I'm not sure that's going to be changing anytime soon.
All right, Rick, stick around. Let's bring our Fed panel back for more reaction to the statement. David Kelly, Mona Mahajan from Allianz Global, and Michael Schumacher with Wells Fargo. Michael Schumacher, kind of pick up on the rates point here as well.
You should.
Where's the 10-year heading? What are you looking for in terms of detail on the Fed's asset purchases there?
Yeah, Kelly, we think the yields are too low, probably going up in the near
term.
Not really, Brad.
We've kind of been spiraling this trend line for days.
And if you read the Fed statement and think about what the Fed's been doing over the last month and a half,
we're like tightening around this trend line.
It's really trying to buy bonds to make sure liquidity is there and companies have market access. It doesn't seem to be trying to depress yields for their own sake. So we think that does set the stage for yields to go up. Now, not astronomically, but our call, for instance, at year end is that the 10-year goes to 1.25. So we think that's in play, and it wouldn't require too much of a shift in the Fed stance to make that happen.
Well, I'm glad that you articulated what going up a lot looks like, because you're right, it could double from here, and we're still talking about 1.25. Does it stick around, though, Michael? I mean, what kind of recovery, what kind of economy do you think we're going to have as we look out a year or two?
Yeah, not very good for a long time, I think, is the takeaway. And people can debate between V, U, L, W, who knows, some sort of odd letter. But really, when you've got 26 million people out of work, it's hard to imagine a super fast recovery. Our economics team thinks it's going to be a little more challenging than they thought initially, but even so, considering the backdrop of yield...
But everybody's going to go out and buy a fucking Tesla, though, right?
Perhaps even a little bit higher.
Everybody went out and bought their Tesla.
Very feasible.
Mona, what would you add on that when we talk about what the recovery will look like and what the stock market has already priced in? How much does the Fed even play a role in that, or is it just down to the science?
Yeah, you know, it's interesting. I think it's going to be a very sector-specific story. It's not a beta story, and it really hasn't been. If you look at year-to-date performance, the S&P's really been driven by two sectors, healthcare and technology. Those are really sectors that benefit in this post-COVID environment. What's really been lagging has been the cyclical value sectors, the energy, financials, parts of industrials that we talked about earlier. If we start to see more hope building around a real recovery, economic reopening, economic stabilization, you may start to see some of those cyclical sectors start to perform better. And we saw a little bit of that just this week. But generally speaking, when we look also at the more recession-proof defensive sectors, REITs and utilities, they continue to lag, perhaps talking about or seeing that the peak fear of the recession is behind us.
Yeah.
You know, we talk about positioning going forward in a post-COVID world. We continue to like tech and healthcare. That stay-at-home or more stay-at-home economy does well. But we'd like to balance that with a little bit of the financials and energy, but also a little bit of the more defensive. We like treasuries and gold still here as well.
David Kelly, buying gold?
I think it's something to think
Nobody's
about
buying
in the long
gold.
term. I've never said buy gold, but I am. The thing that I'm most interested in is not so much what the Fed does during this, what I think is going to be a U-shaped recession. We know they're all in. They're going to keep rates low for as long as we've got an unemployment rate in the teen. But if this economy comes roaring back in the second half of 2021, at what point will the Fed say, look, we can't just accommodate fiscal largesse forever here. We've got to be somewhat responsible here. If the economy is coming back, we've got to move out here. And to me, that's the really important question, because if they wait too long, we might end up with inflation, in which case real estate, gold, maybe equities. If they move quickly, then I think the bond market may be in some trouble. So I do like equities, real estate, even gold in this environment for
Real
the long
estate.
run, just because rates won't stay
Real
this low.
estate. Is real
once
estate
we go
like
full
gold?
recovery
Is it
from
like
this
gold?
terrible recession.
Is it better than gold?
I was going to ask you about inflation, David, and maybe you can elaborate just a little bit. We can't really know whether the economy is going to heat up and come back quickly.
Dude, buy me out of my house. I would love if somebody bought me out of my house.
Or can mean inflation.
Oh my
But
God.
The one thing you can't dispute is that there's a lot
Should have
of
gone and
money
got a
that
house
has
in Deer
flooded
Park
the
for half the
system.
price. Somebody
A
could buy
lot
me
of
out of this
money
right now. I could
chasing
get a house
goods,
free and fucking
chasing
clear in Deer
services.
Park.
What are the odds
Free
we get
and
into
clear,
an
baby.
inflation situation down the road?
That's what I need
Do we
to
just
do.
not need? It's not something we need to worry about right now, but maybe down the road.
Deer Park is not where I live, folks.
I think the odds
to,
are higher than
it's
we
cheap.
think. I mean, we've been, we've tested the inflation bomb in the last 11 years. It never went off. But I do think we're going to have even more fiscal expansion, even more monetary expansion this time around. And if we get a more rapid decline or a rapid decline in unemployment, if we get enough momentum in the economy, then that could actually push up inflation. And then one other thing, I want to see if the next government is a little bit more committed to dealing with inequality, whatever government we have at the end of this.
Inequality.
Because I think that the secret to keeping inflation low has actually been income inequality. If more money goes to middle and lower income households who are really suffering right
this
now,
away.
in a
Get myself
rebound,
some more
you
water.
could have demand
Take some
outstrip
allergy
supply, and that
medicine.
could finally bring inflation back. So there must be a limit to how much money you can put into the economy and not generate inflation. I think we'll discover that limit
Be right back.
over the next few years.
All right. Let's bring Steve Eastman back into the conversation. Steve, jump in.
I think David is talking about a lesson that the Fed learned back in 08 and 09, and one of the hallmarks of that policy was really a push me, pull you kind of policy where they say, we're wide open now, we're going to be buying treasuries, we're going to be buying mortgages, keeping rates at zero, but we're very, very mindful of inflation, and we're going to take this stuff back as soon as we possibly can. One of the lessons that central bankers learned back then, Tyler, was that second part of that statement, the halting aspect of it, made policy less effective. I don't think you're going to hear that from Powell today. I don't think you're going to hear that from many central bankers right now. The idea is that we're wide open. We're going to be buying all of this stuff for a very long time, and we're not looking over our shoulder about the potential ghost of inflation tracking us down. We'll have to handle that when it comes, but we're a very long way from that. Not only that, Tyler, they were already thinking about letting the economy run a little hotter above 2% even before.
Oh my God.
And Michael Schumacher, I'll bring you in on that point finally. As you said, with you see the 10-year going to 1.25. That doesn't factor in much inflation, though, I would imagine.
No, that's right. And maybe a little bit, but not a heck of a lot, Kelly. And
Heads up, fun player gets it in with this, huh?
Powell will address this. Inflation would be a high-class problem. So if the Fed has to worry about that in 6 months or 18 months, that's a great thing. So I think that the Fed will be pretty tolerant of that going forward.
Sorry, heads up, fun player.
Thank you all today. Michael Schumacher, Mona Mahal.
Had to do it.
We'll have more coverage throughout the hour as we get ready for
Had
Fed
to
Chair
do
Jerome
it.
Powell to host what will actually be a virtual press conference, of course, Tyler, at 2:30 p.m.
All right, Kelly, the other big story of the day, some positive results coming out of a trial of Gilead's coronavirus drug, Remdesivir. It's helping to boost the markets in a big way today, and Meg Terrell has the details. Hi, Meg.
Hi, Tyler. These were the results we were waiting for from an NIH study, a double-blind, placebo-controlled trial of Gilead's Remdesivir, the gold standard. And we were not expecting these results for another month. But we got them today from Dr. Anthony Fauci in an Oval Office briefing just a little time ago. He told us that in this trial of more than 1,000 hospitalized patients, they saw a 31% faster time to recovery for those on the drug, about 15 days for those taking Remdesivir versus about 11 for placebo. He also described a suggested survival benefit. 8% of those on the drug passed away versus 11.6% for those on placebo. And he called it suggested because it wasn't yet statistically significant. Now, the New York Times is reporting that the FDA plans to announce as soon as today that it's providing emergency use authorization for this drug in the United States, citing a senior administration official. Now, that matches up with what we'd heard from Dr. Scott Gottlieb, who said he expects that authorization immediately based on these results. The FDA, for its part, says it's been engaged in sustained and ongoing discussions with Gilead regarding making Remdesivir available to patients as quickly as possible, as appropriate. Now, these are obviously very positive results, you guys. There are other data coming out today. There was a Lancet study of that Stopped China trial, which don't look as good. However, That was stopped due to not being able to enroll enough patients. So Dr. Fauci obviously saying their trial of 1,000 patients, which was completed, is the gold standard. And guys, we could see this drug get emergency use authorization today.
What do we know, Meg, if that kind of authorization were to come through so quickly? What do we know about Gilead's ability to produce in sufficient quantities and distribute to the patients who could benefit?
What do we know, Meg, about Tesla getting fucked?
That's a really important question, Tyler.
Tesla
so the company has said it
down.
hopes to be able to supply 140,000 treatment courses by the end of May, based on a 10-day treatment duration. But they also put out their own study results this morning showing a 5-day treatment course did appear similar. So that could double the supply to 280,000 doses. Now that's by the end of May, so that's a couple weeks potentially to getting up to that supply. We don't know exactly where it stands with Gilead right now. And they did say they plan to make that supply available at no cost, guys.
What about Amazon?
All right,
wow.
Meg.
All right, thank you very much, Meg Terrell. Cal?
Yeah, Gilead
Google
shares
way
up just a
up.
little more than 6% right now, Tyler. Thanks.
Google's
Coming up, we'll
crushing
take you
it.
to a very different kind of Fed news conference, but there will be Jay Powell and there will be reporters asking questions. It'll be a virtual press conference in about 13 minutes' time. But first, new questions about how companies can spend their PPP money and a potential bright spot for housing amid some dreary data. Stay with us for updates on both.
I almost want to sell another pen contract and get Facebook calls at market close, right at close. I feel like it's going to bleed off till the close from here, from that daily high there, down to VWAP. And then they're going to report amazing numbers and it's going to fucking soar in after hours. Right? That's how they do this, right? That's how they trick the people, right? Do I walk the walk here? Of my calls on Facebook. We already have the puts on Tesla. ADMA gets wrecked. Punch ADMA in the face. In the face! Dude, Penn is a monster. Penn is a monster. Well, we have pocket tens. We call you. King Jack, hold. King, we need to. Queen, give us Jack. To Jack wouldn't have helped us anyway. That's alright. We still have a lot of big bets. Good call on the pen, dude. Pen is raging. Let this shit get over $20. My God.
Welcome back. Here's a check on your markets. We're a little off session highs after the Fed decision. Dow still hanging on to a gain of about 2.2%. That's 530 points. NASDAQ up 3.25%. Russell 2000 small caps having just an insane session, up more than 5% today. And many small businesses are tapping PPP round 2 for cash to keep their companies going, but they want more flexibility in how they can use the funds. Kate Rogers has that story for us. Kate?
Hi, Kelly, that's right. Well, many small businesses are still in wait-and-see mode over this funding.
No, I mean, I like the Barstool Sports acquisition. I like that they're doing Barstool Sports sportsbooks. I think Davey Day Trader is taking off. I think it's smart. I don't think small, because they own a lot of American casino properties. A lot of American casino properties that I don't think are going to hurt that much, like Vegas, like the ones in Ohio and Pennsylvania and stuff like that. Like, I think the old retirees in that area are going to go right back when it's open, you know what I mean? And I think the sports book and the sportsbook app and how much he has an army of buyers behind him, I just think is what's pushing it up, you know what I mean? I think Barstool Sports, dude. Barstool Sports has put an army of eyes on this stock, you know.
With more than $1 billion in assets, they're basically saying to ensure smaller lenders and their businesses have access to PPP. This, of course, raises questions here about why any of this is necessary at all. And remember, this is a first-come, first-served program. Tyler, back over to you.
All right, thank you very much, Kate Rogers. Big drop in pending home sales. Those are ones that have been signed but not closed. But there could be a bright spot for housing in all this, and Diana Olick has that story. Hi, Di.
Hi, Ty. Yeah, pending home sales tanked nearly 21% for the month in March. Not exactly unexpected, but some spots were even worse. The West region dropped 27% as California and Washington State were early to see the coronavirus start and then among the first to lock down. Now, the numbers will probably be even worse in April, but we did get a promising side today from the mortgage market. Mortgage applications to purchase a home jumped 12% for the week. And while they were still down 20% annually, that's actually an improvement from last week when they were down even more annually. Now, mortgage rates also hit a new record low last week, giving buyers even more incentive despite the fear in the economy. And just yesterday, in its earnings release, D.R. Horton, the nation's largest home builder, reported improved sales in just the past 2 weeks. Now, this is by no means a massive rebound,
away from the money here.
Potential
Stone
bottoming.
bubble.
The realtors today forecast total 2020 sales will be down 14% from a year ago. Back to you guys.
So, Diana, anybody who's closed on a house or done a mortgage knows that that you sign your name or you put your initials hundreds of times. How the heck can you close on a house when you can't go to the lawyer's office?
On the hood of your car, Tyler, that is how people are doing it right now. They're doing drive-through closings on both refinances and regular home purchase loans. They're driving up to your driveway, putting the paperwork out. You use your own pen, you get it done there. They are actually doing a lot of closings now and making a lot more e-signings and virtual closings in states that allow it, but it can be done.
All right, Di, thanks very much. Diana Olick reporting. And still ahead, we await the live comments on the state of the economy from the Fed Chair, Jay Powell. He'll tell us what he sees. We usually show you a live shot of the empty podium as we wait down there in Washington at the Fed headquarters. But this, of course, is a brand new world and a virtual Fed meeting. And as we head to a break before that meeting begins, check out
Danny K. Golden, what's good?
Up 2% for the Dow, even more for the S&P 500. You see the 10-year note.
BTC is on a serious run. I wish I had some.
With more.
Dude, I just fucking heated that nail. So clean. Jazzed out, but clean. Having coming soon. It's interesting, let me tell you. Dude, chili cheese fries were fucking amazing, Tough Spot. They were M's-in. Like the stock right here. They were M's-in. Google just killing it. Facebook's probably gonna kill it. We need Tesla to shit the bed tonight, dude. Shit the fucking bed like a toddler. Alright? We need fucking Elon Musk to be begging for his life and loan when he's out of money today, okay? We need him out there like fucking Richard Branson is. Going like, I'm a billionaire, I'll put my island up, but I don't have any money to actually make it. That's what we need. If that happened, it would be awesome. Oh my god, I'd shit myself. Puts are options that count on the stock falling, right? Yes, Danny K. Golden, we have a put on Tesla. We need it to burn, baby. Burn, baby. Get wrecked, Tesla. Just temporarily, you know what I mean? Just temporary hardships we want them to have. We are long in our dividend.
Let's go over to Sue Herrera and get the very latest on the coronavirus. Hi, Sue.
Hello, Ty. Hello, everyone. Here's what's happening at this hour. President Trump holding a meeting with executives to discuss
my strike price is like 500 and something.
Sources tell CNBC that Wynn Resorts, Toyota, and Waffle House are among
well,
some
it's
of
like
the companies
560, 550, or 570
in Brooklyn,
or
New
something.
York last night, police broke up a crowd of thousands lining the streets for the funeral of a local rabbi. A spokesperson for the
I want him to get
Orthodox
wrecked.
Jewish community accuses the city of having a double standard for enforcing social distancing. Well, today, Mayor Bill de Blasio called the dense gathering, quote, absolutely unacceptable.
But in reality, if they drop 50, 100 bucks,
put in danger with
cost of my put will go up. I'll sell it
what's
tomorrow
shocking
morning.
to me
You know what
is
I mean?
that after all the warnings, something of this size would happen. And that's where I'm making very clear, unapologetically, that the next gathering will be met by summonses.
Wow, it's super loud. Yeah, we got it up.
All right, Sue, thank you very much. We are just moments away from the Fed's first, in my knowledge, I think it is absolutely the first, virtual press conference with the chair.
Virtual press
It'll be an
conference,
interesting
baby.
experience for everyone included. And let's get a quick check on the markets right now. As stocks are near
grams
their
of
highs
shatter
of
for
the session,
$25
with the
Canadian
Dow
good?
up more than 500 points right now, on 2.3%.
I don't know. I
The
can't.
S&P
I
up
can't tell the
even
difference
more,
by the
on
cost.
hope both
I gotta
from
see
Gilead
it.
on
I
the
gotta know where it's
coronavirus
coming. You
treatment
know what
and
I mean?
optimism
I
about
can't help you on
reopening
that.
the economy. Let's bring in
They're on
for
Zoom.
more conversation right now. J.P. Morgan's David Kelly. David, welcome back. You know, one of the things that I've been thinking about a lot is the amount of debt that is being piled on by the federal government, the amount of money and obligation that's going to be taken on. We seem to have stopped worrying about that debt, but I guess the total debt in the United States is likely to top, in percentage terms, the GDP in a couple of years. Do we need to worry about that?
We need to worry about that?
Well, I think we do long term. I think, you know, of course, the right time to worry about it was when the economy was very healthy in the last few
Lucy
years.
Vine,
It was
what's
unconscionable
good?
to rack up debt the
How you
way we
doing
did,
today?
you know, from 2015 on. So I think that's a real problem. But, you know, right now is not the time to be thinking about that. I just, you know, once we get out of this, we need to be more disciplined, because ultimately, if we live beyond our means today, we'll have to live beneath our means in the future. But for right now, I think this is about leadership. It's about helping the country move past this crisis and get through this crisis. And I actually think Jay Powell is actually the right man for the job right now. I think he's got a very nice measured tone. He's obviously a very rational, sensible, calm personality. I think he's actually going to do a good job in talking to people rationally about, look, the Fed's here, it's going to do whatever is not going away, it's going to do whatever is necessary to help things out. The main action, I think, in fine-tuning the response to this is really on the fiscal side. We need to see better policies to help businesses stay afloat. To help
King Queen, we take it down. Wow.
But I think Jay Powell
wow. How do we win that hand? That puts us in first place. We're in first place. Let's go, chat.
He's almost been
Let's go. $100 up top. Uh-oh. Shut up. Fed speaking.
I would like to begin by acknowledging the tragic loss and tremendous hardship that people are experiencing.
Audio okay? Audio okay, guys? Good.
The coronavirus outbreak is first and foremost a public health crisis, and the most important response is coming from those in the front lines, in hospitals, emergency services, and care facilities. On behalf of the Federal Reserve,
Fed pal, let's go, dude.
Dedicated individuals who put themselves at risk day after day in service to others and to our nation. The forceful measures that we as a country are taking to control the spread of the virus
maybe
have brought much of the economy
I don't know,
to an
did
abrupt halt.
Did she?
Many businesses have closed, people have been asked to stay home, and basic social interactions are greatly curtailed. People are putting their lives and livelihoods on hold
I don't think he eats
at significant economic and personal cost. All of us are affected, but the burdens are falling most heavily on those least able to carry them. It is worth remembering that the measures we are taking to contain the virus represent an investment in our individual and collective health.
Oh my God.
As a society, we should do everything we can to provide relief to those who are suffering for the public good.
Is that a green screen?
While many standard economic statistics
are they getting good at this shit?
The reality we're experiencing,
I'm gonna have to compete with fucking Fed Pal stream every day now.
Millions of workers are losing their jobs. Next week's jobs report is
What if he
expected
came on
to show
stream
that
like
the
I'm buying
unemployment
Tesla,
rate, which was at
they're going back to
50-year lows
work.
just 2 months ago, has surged into double digits. Household spending has plummeted as people stay home, and measures of consumer sentiment have fallen precipitously.
Precipitously.
Hotels, airlines, restaurants, department stores.
He's actually in his living room not wearing pants.
Manufacturing output fell sharply in March and is likely to drop even more rapidly
Neither am
this
I.
month,
No, I'm
as
just
many
kidding, I'm wearing
factories have
pants.
temporarily closed. Overall, economic activity will
Actually,
likely drop at an unprecedented rate in the second quarter. Inflation is also being held down, reflecting weaker demand as well as significantly lower energy prices. Both the depth and the duration of the economic downturn are extraordinarily uncertain and will depend in large part on how quickly the virus is brought under control. The severity of the downturn will also depend on the policy actions taken at all levels of government.
I was tempted up to 12% on Tesla, but sell that shit. You know we're gonna print overnight, brother. You know this shit is tanking after hours.
Guided by our mandate to promote
We
maximum
know it
employment
is.
and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. We're also committed to using our full range of tools to support the economy in this challenging
We're
time.
gonna get paid tomorrow morning on that shit.
Last month, we quickly lowered our policy interest rate to near zero. We stated then and again today that we expect to maintain
report
interest
earnings
rates
tonight.
at this level until we're confident
My
that the
calls for
economy has
today
weathered recent
are
events
my plays
and
of
is
the
on
day
track to
are
achieve
long.
our
I would
maximum
go
employment
calls on
and price
Facebook,
stability goals.
puts on
Of course,
Tesla.
lowering interest
We'll
rates
see if I'm
will not
right.
stop
I don't
the
know.
sharp
This is
drop
for
in
entertainment
economic activity
purposes. I don't know what the
caused
fuck
by
I'm
closures
doing.
and other forms
You
of
know what I
social
mean?
distancing. And low rates
We'll
will
see.
not effectively spur
I put
the
my money where my
economy if
mouth
those
is on
rates do not
Tesla, though.
feed through to broader financial conditions, or if households and businesses are unable to get credit. The economic disruptions caused by
just
the
buy
virus
SQQ and
created
hope both
tremendous
bust.
strains in some essential financial markets and have impaired the flow of credit.
Oh, I
in the
think
economy.
Facebook ads go up though. I
Without
have a
access
separate
to
view
credit,
on
families
Facebook,
can be
dude.
forced to cut
People are
back
at
on
home
necessities
staring at
and could lose
Facebook.
their homes. Businesses can be forced to downsize.
I
or
think we have to
close,
call this dude.
resulting
We
in
have an
further
ace.
losses of jobs and incomes
It's
and
for
worsening the downturn.
4 more big blinds.
Preserving the flow of credit is thus essential for mitigating the damage to the economy
Hearts
and
for
setting the
7?
stage for the recovery. We have been taking broad and
Fair enough, we're in the
forceful
money.
actions to these ends. To support the flow of credit
We're
to
in the
households and
money.
businesses, foster smooth market functioning, and promote effective transmission of monetary policy to broader financial conditions, we have been purchasing large amounts of Treasury and agency mortgage-backed securities. The markets for these securities play a critical role in the economy, and they came under great stress last month as the scale of economic disruption became clearer and as investors clamored for liquidity. Our purchases have helped market conditions improve substantially in recent weeks. In light of this improvement, we have slowed our pace of purchases. We will continue our purchases of Treasury and agency mortgage-backed securities as needed.
As needed.
While the primary purpose of these securities purchases is to preserve smooth market functioning and effective policy transmission, the purchases will also foster more accommodative financial conditions. We are also undertaking programs to provide stability to the financial system and to more directly support the flow of credit in the economy.
Runners
For
on
households,
vacation, boys.
For businesses of all sizes, and for state and local governments. These programs benefit the economy by providing financing where it is not otherwise available.
Dang it.
In addition, by serving as a backstop to key credit markets, the programs can improve market functioning by increasing the willingness of private lenders to extend credit. Many of these programs rely on emergency lending powers that are available only in very unusual circumstances, such as those we find ourselves in today. We are deploying these lending powers to an unprecedented extent, enabled in large part by the financial backing and support from Congress and the Treasury. We will continue to use these powers forcefully, proactively, and aggressively until we're confident that we are solidly on the road to recovery. I would stress that these are lending powers and not spending powers. The Fed cannot grant money to particular beneficiaries. We can only make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers will benefit from our programs, as will the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer.
You're all in here?
In these cases,
direct
direct fiscal support
cards.
may be needed. Elected officials have the power to tax and spend, and to make decisions about where we, as a society, should direct our collective resources. The CARES Act and other legislation provide support to people, businesses, and communities. This direct support can make a critical difference, not just in helping families and businesses in a time of need, but also in limiting long-lasting damage to our economy.
Not
At
like
the Fed,
this, Chad.
we're doing
Not like
all
this.
we can to help
Oh my
American
God.
families and businesses weather this difficult
Queen
period.
Queen 10.
When the spread of the virus is under control, businesses will reopen and people will come back to work. We will continue
We're
to
melting
use our tools
down.
to assure that the recovery, when it comes,
What happened?
will be as robust
What happened?
as possible.
We gotta
Thank
win
you.
some of
I'll
these
be glad to
flips
take your
here. We can't win any flips.
Gina Smialik.
Uh-oh, don't know what the message
Hi,
is.
Chair Powell. Thanks for taking our questions. You guys have cut rates to zero. You're buying up huge quantities of government debt. I guess the question is, what more can you realistically do to help the economy? And where do you see a need for Congress to step in?
All good, brother. All good.
So let me say that we're committed to using our full range of tools to support the economy in this challenging time. We're going to use them, as I mentioned, forcefully, proactively, and aggressively until we're confident that we're solidly on the road to recovery.
Those were good words. Look at the market
and
pop.
also to assure that recovery, when it comes, will be as robust
Jack, there we
as
go.
possible.
Here
As
we
long
go,
as needed,
baby,
we'll
when
use
it
them.
counts.
And I would just say we have a number of dimensions on which we can still provide support to the economy. As you know, our credit policies are not subject to a specific dollar limit. They can be expanded as appropriate, and we can do new ones. So we can continue to be part of the answer. Will there be a need to do more, though? I think the answer to that will be yes. I would say Congress has also reacted quite aggressively and strongly with the CARES Act and other laws, several other laws, and that's appropriate. With enhanced unemployment insurance and the Paycheck Protection Program, we've seen an extraordinary, historically large reaction. But I would say that it may well be the case that the economy will need more support from all of us if the recovery is to be a robust one.
Who are all these people? Who do we got?
Nick Timrose.
Thanks, Chair Powell. Nick Timrose of the Wall Street Journal. I want to follow up on Gina's question and ask what specifically do you think elected officials should consider in order to help return or hasten a stronger return to full employment? And what policy tools did you discuss at your meeting today that might be used to stop a deflationary spiral?
So let me start. I'll take the questions in the order you gave them. So
I had one, Bucci.
If I can say legislative priorities, we're not responsible for fiscal.
We had to get
policy.
rid
Those
of
are
it. We
decisions
need to
for
become a
Congress to
partner
make.
before we can get
But
more
I would
EMIS.
say
We need
that
the average
policies,
like 75 or
that
100
protect
viewers per
workers,
stream.
businesses, and households
We have
from
an ace here. We're calling.
avoidable insolvency and keep
Jack.
businesses
God!
going.
Ace
so
on the
that they're
river.
able to produce goods and
Fuck,
to
we're ahead,
either
dude. It's a good
hold
call.
on to their employees or quickly rehire them. Those are going to be key policies. They'll come with a hefty price tag, but we would come out of this event eventually with a stronger economy and with less long-run damage to the economy. So that's a key thing that really Congress could do over time. In terms of what we can do, I mentioned we have our credit facilities are wide open. We can do more on that front. In addition, we've had extensive discussions, as I've mentioned, done a lot of thinking about what monetary policy might look like in coming months over a range of potential scenarios for the economy. We do think that our policy stance today is right where it should be for now. As you know, we cut rates to the effective lower bound. And we've said that we'll keep them there until we're confident that the economy has weathered the effects of the outbreak and is on track to achieve our goals. With asset purchases, we're continuing to purchase Treasury securities and agency MBS
first, Queen
in the
6,
amounts
we
needed
hit
to
2
support
pair.
smooth market functioning. So we're doing those things, and I would say that we'll continue to use our tools as needs be.
Ace 9 versus Jacks. No. God, the one fucking card.
Leisman.
Mr. Chairman, question, Steve Leisman with CNBC.
3 outs. The guy's got 3 outs. Give him one.
Give him
one of his 3 outs.
Why aren't you announcing or conducting a specific quantitative easing program? And maybe you could explain what the context is now of the purchases that will be made and the amounts that are to come. The second question I have is the Federal Reserve really taking enough risk to help households and businesses here, in that you just said that the programs that are out there may be best for those who are able to repay loans, but so don't you have a series of programs essentially lending only those
Is Tesla
able
loving
to
it?
repay, which is essentially helping those who may
It's
need
like,
to
yeah!
So
we're not selling shit. Let's go.
Asset
Same with
purchases
space too, right?
Other measures. We do.
We're
think
going to
our
space.
Policy stance is appropriate now. We've had discussions, as I've mentioned, over time, and done quite a bit of thinking about what we might do in the future. We think for now our policy stance is appropriate. We're not going to change it now, and we're really waiting to see more from the economy. There are a range of potential paths the economy could be on, and I think as the time approaches then we'll address your first question, which is about asset purchases. So, but that's not something we're doing today. It's something that we have talked about, and for now we like our current.
We folded Queen
stance.
Jack here.
In terms of risk, we operate under the laws that Congress passes. And there are a number of aspects under Section 13.3, and you can see that they've permitted us to, I think, move very quickly and move into areas where we've never been before and do so quite aggressively. So I think we're going places and providing help in places where we never have, and I'm glad that we are. I think it's appropriate that we are. Nonetheless, these are lending powers, and if you read Section 13.3 of the Dodd-Frank Act, or the Federal Reserve Act, and I know you have, it does require that we be secured to our satisfaction, and we can't lend to insolvent companies. It's clear these are lending powers, and we are ultimately bound to implement the laws that Congress gives us. We do not make grants. We can't make grants, and the reason I raised that in my remarks is that I just want to be clear on that. We can do what we can do, and we will do it to the absolute limit of those powers. We'll keep at it, and I just want people to know that we will be at it with the legal authorities that we have until we get through this thing. We will keep using our authorities, but there are authorities that we don't have, and there may be a need for those authorities to be used as well as ours.
Heather Long.
Damn Tesla raging. They're like, look, if Tesla needs money, we're going to give Tesla some money.
Long from the Washington Post. I have 2 questions for you, both on timing. The first, do you plan to launch the corporate credit facility and the Main Street lending
Tesla was like,
facilities
psych,
in
we don't
May or
actually
early
sell
May?
shit,
You
psych!
could give us a sense on timing. And the second, in the statement you refer today, the FOMC refers today to a lot of medium-term risks from the pandemic. That sounds like you all think this is going to be a long recovery, a long road to recovery. Can you give any more guidance on how you all see this recovery taking shape? Thanks.
Sure. So in terms of those facilities, the corporate credit facilities are near being
Kings
finalized.
versus Ace 9. We need an Ace or 9. We need an Ace or a 9.
Soon, fairly soon.
No.
Main Street facility is. We're close to announcing.
Woke up with Kings in the big one, the fucking dream, dude.
As you know, we put out a term sheet for comment a while back, and we got a couple thousand comments. We've carefully studied them.
Have to get it all in here.
We've tried to reflect those in what we're doing now.
Yeah, they had 10
I
big
think
ones
with
with
Main
an
Street,
ace.
There'll be at least a couple of
and we're
of
fucking
different,
four-handed
kinds of lending going on there. This is a broad area of the economy
Everybody's
with many
tight.
different kinds of credit needs. So we're going to keep at that for some time. I think adding in sectors and lending products. So I think we'll probably be continuing to work and expand Main Street for some time.
Shit like this,
it won't
dude.
be done quite as quickly, but the first part of it I think will be done fairly quickly.
Whoa.
In terms of our statement,
fold.
so
Fold.
what we said was
Walk
that
it. Walk it, baby.
I'll just read the sentence. It says, ongoing
Oh.
public health crisis will weigh heavily on economic activity, employment, and inflation in the near term, and poses considerable
Final
risks to the
table.
economic outlook over the medium
Final
term.
table.
So the medium, what we meant by that over the medium term. So obviously, what we're talking about is not right now in the very near term. It's between now and the long term. So the next year or so. And I would point to a couple of risks to the outlook that what we were thinking of. First is just the virus. How long will
You're
it
all
take
in
to
the
get it under
sevens?
control? Will there be additional outbreaks?
Threes?
Will there be drugs that can
Hold.
either treat it or
You
a
hold,
vaccine
you
of some
dirty
kind? So
thank you.
all of that is very much
Back up to
shrouded
10
in
big blinds?
uncertainty.
No
The
big
second
deal, baby.
issue, and this is a very substantial one, is just the possibility of damage to the productive capacity of the economy through a couple of channels. The first is just workers who, if one is unemployed for an extended period, that person can lose the skills that are needed, can lose touch with the labor force, and have difficulty restarting his or her career. So that's a feature of deep and long recessions, and that's something we've got to watch out for. Another is just businesses. You know, these thousands of great medium and small-sized businesses that we have all over the country, they're worth so much more to the economy than the sum of their net assets. They contain, they're job creators. They're really important. And if we see an unnecessary insolvencies, a wave of those, that could be damaging to the performance of the economy over time. So the good news is that we have policies, as I mentioned in my remarks, we have policies that can address those things, but not perfectly. So that's another risk. The third thing I would point to is just the global dimension. This is a very global phenomenon, and we're seeing economic data from around the globe, which is very, very negative, and that too can weigh on U.S. economic performance over time. I would say just on the U.S. economy, there are things you can say. One can say. The first is that in the near term, we're going to see, significant declines in economic activity, significant declines in employment, and increases in unemployment. We're going to see that as a consequence of the virus and the measures we're taking to protect ourselves from it. The next
Fold
phases
in there, dude. We fold there for you.
Uncertain, highly
Ace eight
uncertain. But we
suited,
will
we
go
fold.
through a phase starting fairly soon where we begin to reopen the economy, and probably the economic
the gun
activity will
open.
pick up as consumer spending picks
Under
up.
the gun
Consumer
open,
spending, as I
so.
mentioned, has gone down quite a lot. It'll begin to pick up as people start to return to their normal patterns of spending. But the chances are that it won't go right back to where we were, because people will, until they're confident that the virus is well and truly under control, then they will be somewhat probably reluctant to undertake certain kinds of activity. So it may take some time for us to get back. It probably will take some time for us to get back to a more normal level of unemployment and ultimately to maximum employment.
I got you. Minutes. I got you.
Okay, James Politi.
Thanks, Chair Powell. You didn't firm up your guidance on, this is James Politi from the Financial Times. You didn't firm up your guidance on interest rates at this meeting. And given the risks that you just outlined, under what circumstances would you strengthen the Fed's commitment to keep rates at the lower bound? And is there any danger to delaying that pledge? And on the credit facilities, what kind of demand are you expecting for the programs that were set up under the CARES Act? And are you expecting them to rapidly reach capacity like the PPP plan did?
Okay, so on the first, as I mentioned, we moved very quickly, very aggressively. We were the first to return to the effective lower bound where we are now. We got there essentially right away, and we think that's the right place to be. We think if you look at surveys, you look at market pricing, the market expects us to be there for a good while, and that's appropriate. So, it's not as though the market is pricing in a near-term liftoff or anything like that. And let me just say, we're going to not be in any hurry to withdraw these measures or to lift off. We're going to wait until we're quite confident that the economy is well on the road to recovery. So we don't see. We see our current stance and our current guidance, and I would say the same thing about asset purchases. We see them as appropriate. I've also mentioned now a couple times that we have done a lot of thinking about what monetary policy might look like.
He's very measured in what he's saying.
And that would, depend on where we are in a range of potential economic scenarios. So we were thinking about that all the time, but right now, for now, we think our current stance is appropriate. So we made no change in it today. Second question.
Yeah, I was just looking at that. Like, what is happening here?
So the thing about our facilities,
people are buying puts.
Is Treasury still has plenty of equity. So we've said that if
why would you
demand
sell it
for our facilities is greater than
dude, we're gonna get paid. What are you doing?
And we have the ability to do that. So it won't be the way the Paycheck Protection Program is, where there's a specific amount allocated, appropriated for it, and
that's
then
true. Take the sure 17%. I understand.
Be unlikely to happen here unless we
when I get 1,000 overnight, though,
we're a long way from doing that.
You just fucking.
The second thing I would say is
you be here tomorrow morning because I'm going to be here, whether it's a great morning or a shit one.
It's not just the actual lending we do; it's the
weekends,
build confidence in the market. And
getting
private
fucked.
market participants come in, and many companies that would have had to come to the Fed have now been able to finance themselves privately.
Why is that?
Since we announced the initial term sheet on these facilities, so that's a good thing. Companies are out there financing, they're out there raising liquidity. We haven't made any.
What is Penn doing, dude? Casino's already been open. What is happening?
We haven't made any of them. And yet, there's a tremendous amount of financing going on, and that's a good thing. So for that reason, the ultimate demand for the facilities is quite difficult to predict, because there is this announcement effect that
ladders, baby, pay your boy, pay your
boy.
boy.
We have to follow through, though.
Ladders,
and we will follow through to validate
ladders, ladders.
Hey, Howard Snyder.
Oh, hi, Chair Powell, and thanks for doing this.
We are all the fuck in.
Expansion on the timing of recovery.
Ace King versus Nines. Hold. Low card. Let's go, baby. Let's go, baby.
Robust rebound. Is that now out of the question? And do you think a steady recovery is really possible until
let's go, baby?
Given the patchwork of measures we see taken around the states, is that going to really lead us to a steady path out? Absent a vaccine.
As you know, economic forecasts are always uncertain. Today, they're unusually uncertain, and that's really because so much of the performance of the economy depends on the path of the virus and the success of the measures we take to control it, our success in reopening the economy, and also the time it takes to develop new drugs. And our tools, the things that we do, don't affect any of those things. We're not experts on those things either, but what the experts tell us is that the outcomes are highly uncertain. So this is an unusually new kind of uncertainty added on top of our regular uncertainty. But I will say I think there are
regular uncertainty, Chad. There's regular uncertainty. There's not so regular.
This time from it. So then we will enter this new phase, and we're just beginning to maybe do that, where we will. Formal measures that require social distancing will be rolled back.
Nice, another ladder, baby.
And at different paces in different
ladder.
Parts of the country.
Keep shipping your boy some money.
In time,
first place is $107 here.
People will
There's 7 of us left. We're guaranteed 18.
We'll see unemployment go down.
None of that matters until first place.
And when will that be? It's very hard to say. But let's just say for this purpose that it's in the third quarter.
We're on break. I have to use the restroom.
That could be a fairly a large increase.
This is an on-demand, dude. A 660 on-demand.
The increase could also be substantially larger. Although it's unlikely that it would bring us quickly all the way back to pre-crisis levels. Of course, this is the period as well that carries the risk of new outbreaks of the virus, something we really want to avoid. I think then, after that period, at some point you will have, the kind of formal social distancing measures will be gone, but you'll still be left with probably a level of caution on the part of people who will worry, and probably keep worrying for some time. You would think that behavior will change as people gain confidence. So the sooner we get the virus under control, the sooner people can regain that confidence and regain their economic activity. I think trying to be really precise about when that might happen and what the numbers might look like is, I think it's very tough to do that.
Okay, Steve Matthews.
Steve Matthews with Bloomberg. Chairman Powell, you've noted a number of times over the last year.
This is an on-demand.
Broadening out of job gains.
This is the final table. I don't know why it hasn't switched over to the final table.
Have been left out of the recovery over the 10-year period, finally making job gains, and particularly minorities, but also many other workers. Do you worry that this recession is going to fall hardest on those workers who struggled and just got job gains in the last year or two, and that it may take years from now before there are opportunities for them again?
Yes, that's exactly what I worry about. So unemployment has tended to go up much faster for minorities and for others who tend to be at the low end of the income spectrum, and it tends to come down faster as well, but it tends to go up faster and be much
upper.
And we were in a place only 2 months ago. We were well into beginning the second.
I'm holding. I don't give a fuck. It's not about what's not out there.
And
it's about whatever they
say.
say.
Ongoing. We were hearing from minority, low and moderate income and minority communities that this was the best labor market they'd seen in their lifetime. All the data supported that as well.
I'm muted. You're muted. I'm not muted.
To see that
not muted.
Threatened now.
You're muted.
All the more need for our urgent response, and also that of Congress, which has been urgent and large, and to do what we can to avoid longer run damage to the economy, which is what I mentioned earlier. This is an exogenous event that it happened to us. It wasn't because there was something wrong with the economy.
Damn, Tesla is running.
I think it is important that we do everything we can to avoid that longer run damage and try to get back to where we were, because I do very much have that concern. I think everyone is suffering here, but I think those who are least able to
how is my Tesla put at a profit?
Who are,
what is going on right now?
Losing their incomes and have little cushion to protect them in times like that. So yes, that's a very big concern.
What's Victoria. Happening? What's happening, Oven Mitts?
Hi, I'm Victoria Guido with Politico. The Paycheck Protection Program has experienced some logistical problems because of the speed at which all of this is happening. For the Main Street lending facility, which will also go through banks, what lessons are you taking?
I have a
away
good
from
feeling
that?
about this.
And then, more broadly,
I have a good
you
feeling.
mentioned earlier this year that
I have a good
federal debt
feeling.
was on an unsustainable path. And I was just wondering, for Republicans that are starting to get worried about how much fiscal spending they're having to do in this crisis, whether that should be a concern for them.
So a couple of things. This is different from the PPP, the Paycheck Protection Program, in two ways. One is these are not grants; these are loans. So I don't know that the demand will be quite as strong as it has been for the PPP. I don't know that, but and the second thing is we won't run out of money. It's not a limited pot, so there won't be this incentive to try to get there first and that sort of thing. So I'm hopeful we will very much try to learn.
Yeah, like
as much as possible.
Tesla's
from
definitely
that,
up
that
$10
facility
from
and
when I
all the
bought
other
my
ones,
put.
too. We have a
And
lot
it's
to learn here.
flat.
So we'll certainly be trying to do that. In terms of fiscal concerns, so for many years I've been before the Fed. I have long time been an advocate for the need for the United States to return to a sustainable path from a fiscal perspective at the federal level. We have not been on such a path for some time, which just means that the debt is growing faster than the economy. This is not the time to act.
They're
on
like,
those concerns.
hold the put.
This is the time to
Hold
use the great
put.
fiscal power of the United States to do what we can to support the economy and try to get through this with as little damage to the longer run productive capacity of the economy as possible. The time will come again, and reasonably soon, I think, where we can think about a long-term way.
We bought
to
a
get
put on
fiscal house in
Tesla.
order,
We
and
sold one of our
absolutely need
calls
to do
on
that.
Penn. We still have 10
But
more.
this is
though.
not the time to be.
We
in
sold
my
the call.
personal view,
One of the
this is not
calls
the
in Penn
time
to buy the put
let
on
that
Tesla.
Concern, which
This
is a
is
very serious
crazy.
concern,
Look
but
at
to
it
let that,
raging. Look at Tesla raging.
get in the way of us winning this battle, really.
Okay, Edward, Lawrence.
Oh yeah, thank you, Mr. Chairman. Edward Lawrence from Fox Business Network. Now, given the amount of stimulus on the fiscal side and monetary policy side, how much weight do you give to finding a vaccine, from clearing that uncertainty you talked about around treatment and whatnot, for the Federal Reserve pulling back on some of the Fed's actions and raising the rates from the zero lower bound? Also, when does that Main Street
Does it
facility
break
facility
800?
get deployed? Because you talked about soon.
It's gonna
but,
break.
some
It's
businesses are in
going.
need now.
800. Bam.
So we don't. We're not in a position to make a reliable assessment of when a vaccine or a therapeutic drug would be ready, and so we're not going to set our policies based on our estimate of that. We're going to just provide the support that we can with the tools that we have, and we're going to keep doing
I
that
bought a
until-
put. I think it's going
until the
down.
recovery's well
They
underway.
report tonight after hours.
In terms of
I think
Main
this is
Street,
everybody buying the hype before
so
the news
you know
right
the story.
here.
We put out a
Earnings
term
panic
sheet.
tomorrow.
We got a lot of
Exactly.
comments. We took those very much to
Exactly.
heart. We spent a great deal
Buy
of time
the rumor,
here.
sell the
It's
news.
a challenging space because it's many different kinds of borrowers.
Oh,
They
wow.
have different needs, different sizes of companies, and so we're as I mentioned, we're very close to announcing a new term sheet, which will then become operative fairly
How is my
quickly.
put
My guess
worth
is, though, that we'll
break
keep-
even
we'll
right
keep
now?
looking
What
to
is
add
going on,
products and
dude?
add different kinds of borrowers to that as we
What
go.
is going
We're
on?
well
I'm
aware
not
of the
losing money
importance
while the
of
stock
doing as
price
quickly
goes
as
up.
possible.
What's going on?
We hear we're very much in touch with the urgency.
What do you
of
mean
that
you're not
need.
fucking with it?
Okay, Don Lee.
What's happening? What is happening?
Don Lee from the LA Times. Just wanted to follow up on a question.
What's
the
fucking
question on the
happening
labor
right now?
market.
Can somebody tell me what the fuck
I
is
know you said
happening
that it's
right
highly
now?
uncertain, but there are analysts who think
How
that
how
very
is
high
this?
unemployment until,
How
even
have I
end
not
of
lost
next
money?
year, as high as 9%, and at
The
this
market
point,
knows
what-
something,
can
Oven
you
Mitts.
just
The market
talk a little bit more
knows.
about what you see as
The
path
market
of
knows something.
unemployment, in the coming months and into next
This
year.
is Robin Hood right here.
So unemployment's going to go.
Yes, a put
up
is
to,
yes, absolutely,
high
smart
number
Curry.
in the second
A
quarter.
put is shorting. It's an
Uncertain what
options
the number
version
will
of
be.
shorting.
And that's because so much economic activity has been shuttered, really. As
We're only down
as we
$2.50.
take social distancing
I'm
measures.
totally okay with that.
So
Dude, I want to
sometime
buy another
fairly
one.
soon here, and probably gradually and at different paces at different parts of the country, we'll see the social distancing measures rolled back. People will begin to spend more money. It's really consumer spending has fallen precipitously, and once that starts to happen, people will get hired back, and unemployment will go back down. I don't think
It
it'll
is
get
an option. It is an option.
anywhere near the
There's two types of
historically low
options. There's
levels
call
that we had
options like we have in
as
Penn and
recently as
ADMA,
February,
and there's put
3.5%.
options, which we
I
have
think
in Tesla.
It will take some time for that to happen, for us to get back to anything that resembles maximum employment. But I mean, the main thing we want is we want to get back on that road. We want to get that
Ace 10 versus
that
6
recovery
is
going.
Queen,
and
Ace, or
get people
10.
back to
Ace,
work as
hold,
fast
baby.
as we can.
Let's go.
Not faster than
30
we can,
bigs.
but as fast as we can.
Let's
That's the main thing, is
go,
to get
baby.
into
We
that
got a
stage
shot
where
at
the
making some
economy's
good
healing,
money over here.
where we have the disease under control. where we don't, take too much risk of
Jesus,
second,
how
and
is
third
it just
waves and that sort of
raging?
thing, and get people back.
My
to work.
puts
And,
are worth money.
again,
They're going up in value.
the
What
path
is
of
happening?
is highly
What is
uncertain.
happening right now?
But we will.
What the fuck is happening?
Supporting the economy and supporting that recovery.
How does this work?
Scott Horsley.
Thanks, Mr.
This
Chairman.
doesn't make any
After the
sense,
financial
dude. The
crisis,
stock's
banks
going
were
up.
instructed to
My put
upgrade
value's
capital
going
to
up.
make
Like,
it
what the
weather
fuck?
shock. What kind of steps do you think we need to take for the economy writ large to make it more resilient to this kind of shock?
Can you just say that part? You're a little bit.
No. Yeah, I'll sell them tomorrow.
What kind of steps could we take to help the economy as a whole be more
What is
resilient
happening?
to
I'm
this
not even losing money while it's going up.
This. It's an extraordinary shock, unlike anything certainly that's happened in my lifetime. And a couple things come to mind. I think the time will come for a careful
UAV's still popping.
assessment of the answers to
Holy
those
shit.
questions. It's early to be asking them. We're still putting out the fire. We're still trying to win.
In college
and I think
finals
we'll be
all
at
day.
that for a while.
The hype is
but
they're about
I
to
point a
report
couple of
earnings,
directions.
Mercury. Quarterly
We
earnings.
worked hard to strengthen the banks.
This thing is raging, dude.
Much
I will
higher
give you
levels of
that, man.
capital,
This is
liquidity,
fucking raging.
far
It does,
greater sense of what the risks are they're running.
UAVs,
and manage
unmanned
them.
aerial vehicles.
So, the breakdowns that we've seen in market
Crazy
function
shit.
have really been in the capital markets, and I wouldn't rush in with prudential regulation into the capital markets.
Yeah,
but I
baby,
think,
just got
we
hired for
did
an
plenty
online
of
working
things.
home
You
job.
know,
Let's
tri-party
go,
reform,
Danny
a lot
K.
of reform
Golden.
in the
Let's
capital
go,
markets,
baby.
Money market reform,
VSAT UAV
tri-party
from
reform,
Black Ops 2.
central clearing, all these important things. But there will no doubt be, with this, the size and force of this shock will no doubt reveal.
No,
weaknesses
this is when it
in
was
the
scheduled. Their
financial
quarterly report.
architecture, and we'll have to go to work on those. I also think
six
it.
big blinds. I got 9-10 seated here.
It tells you the importance of getting
I'm
your
over here
fiscal house
thinking
in order.
UAV shit because I'm used to 21 killed.
The U.S. really hadn't gotten back to where we needed to get on fiscal policy, and so we have an already high level of debt to GDP and rising quickly.
It's raging.
When this shock arrived. Now we have the fiscal capacity to deal with it, I believe, but we will need to. Ideally, you would go into an unexpected shock like this.
All in here, we have
with a much stronger fiscal
heart
posture.
Heart would have been dirty, chat.
Mike McKee.
Mr. Chairman, given the demand drop, demand shock, and the drop in oil prices, do you anticipate that we might see any kind of deflation, even for a very short
How much you think's a good
period
amount to
that
dabble
would
with day
require
trading? I'm a college and got like 20K but 10K savings. Dude, just maybe put like a G on or something, you know. I would do, you have a long-term dividend investing account first, do that first.
It appears between the markets and the
Do
economic
that first.
outlook right now. And I know you've said that this isn't the time
Start
to worry
day
about
trading?
all
I don't
hazard,
know, G.
But do you worry with the size of
Probably
stimulus that you and
the grand is a sizable
Congress are
amount of
putting
money to play
into
with.
the economy? There could be financial stability problems as this goes along.
In terms of inflation, we think that inflation is very closely and strongly related to inflation expectations. And during the global financial crisis, there was a concern that we might see deflation, but it didn't happen. Inflation tended to move down a little bit, as it will when demand is weak. And but inflation expectations did not move strongly down here in the United States. They have in other places in the world, though, over the past 25 years. There's been downward pressure on inflation really for several decades now. So I would say as long as inflation expectations remain anchored,
Robinhood has
we
options
shouldn't see
trading.
deflation. And the Federal Reserve is strongly
If you don't have
committed
a
to
Robinhood
maintaining
account, there's a link.
2% inflation over time. So we'll be there
Cup
to
B,
work on
thank
that.
you for
I
the
think
follow.
You
That's
asked
good.
earlier about headline inflation.
You knocked
If-
somebody
if
out here?
en-
Yes, we
low
did.
energy prices, very low energy prices.
Yes, we did.
Were to drop headline inflation negative.
Ladder up.
I would hope that people would see through that and we'll be monitoring it very carefully. We'd see through it though.
Tesla to the moon after hours
is a better predictor of future inflation.
Maybe
so
we will see.
Needless to say, we'll be keeping very close track of that. In terms of the markets,
stick around.
Our concern is that they be
our puts are up $27. What?
We're not focused on the level of asset prices in particular.
What is going on, dude? Somebody knows something, dude. Somebody knows something.
Something that is so uncertain as to be unknown.
A put option is basically a short. A put
virus globally, and it's
here's the trade. These are puts. See, it says puts
very,
here.
Very hard to do. That's
calls. This is betting the stock's going to go up. This is betting the stock's going to go down.
To things with a lot of volatility, but what we're trying to assure really is that the market is working. The market is assessing risks. Lenders are lending. Borrowers are borrowing. Asset prices are moving.
We're making money, baby.
That is really important for everybody, including the most vulnerable among us. Because if markets stop working, credit stops flowing, then you see that's when you see very sharp negative.
I wish I had the balls,
even more negative, economic.
I wish I had the balls.
I think our measures have supported market function pretty well. We're going to stay very carefully monitoring that, but I think it's been good to see.
A put is basically shorting. I don't know if you can short on Robinhood though. I'm not sure on that. Like,
businesses have been able to build up their liquidity.
If you can legitimately sell shares short, I don't know if Robinhood will let you do that.
People have been home, concerned about their jobs, but they're not concerned about the financial system collapsing as they were in 2008 and 9.
Okay,
but
Chris,
buying put options, I mean.
Hi, Chair
same
Powell.
thing.
Chris Rieger at AP.
Tomato.
I guess I had two questions. I wanted to start on the unemployment picture and nail down a little bit how you see things going from here. You did talk about potential loss of
Robinhood
skills,
is a little bit limited. It's a little bit behind, but it's free.
Are you worried about structural changes?
You can buy, you can trade equities for free on here, but options cost money. I paid a lot of money in options.
Beyond the ability of the Fed to do anything about, which is something that was debated, as you know, after the last recession. And then eventually, of course, the unemployment rate did go lower than people thought. Second question is just on the money from Treasury, the $454 billion. It sounds like you want to keep that in reserve for
now they're losing value as it goes down.
Such as
like,
the Main Street program. Are you willing to
here?
use that to backstop, say, a program that is having more losses? I mean, what's your tolerance for loss?
I don't know what's going on here.
$454 billion. Thank you.
So in terms of the labor market, the risk to damage to
he's
people's
3 outs.
skills,
3 outs to the river. God,
is a function of time.
You gotta give him the fucking 3 outs. We had 5s there. He had king 5. Are you fucking kidding me right now?
The harder it gets, I think, and we've probably all seen this in our lives.
Dude,
harder it is to
come the
get
fuck
back
on.
into the workforce.
3 outs to the
If
river.
you ever do get back to where you were. So, and longer and deeper.
Have the motherfucker dominated.
Have left more of a mark generally in that dimension with the labor force. And so that's why, as I mentioned, that's why the urgency in doing what we can to prevent that longer run.
I want nothing to do with Tesla right now.
We won't be able to limit all of it, but
Shit's
we
wild.
do have the tools to do what we can to keep people in touch with the labor force and working, and also out of insolvency too. It doesn't seem fair that people should lose everything they have, including their homes, over this. So, nonetheless, there will be some of that, but we do have some tools to ameliorate that. In terms of the the money, the $454 billion.
ADMA making a push. Oh shit, let's go.
It's a couple things. First, the Treasury Secretary really has authority over that, right? And it stands in front of our losses.
Tracker 6, we hit a 6, baby. Hold. Yes, baby.
But
we're back in it. 19 big blinds.
We're clearly moving into areas where
onward
there
to
is
10, ADMA, please, Chad,
I think
please.
that's what we're supposed to do. This is
still no
a
money
very
in the
unusual
options
time.
though.
And so, but in terms of the way to think about that money, I think that's really a question for the Treasury Department. we set up the facilities and we work very, very closely and successfully and collaboratively with the Treasury on this, but that particular aspect of it falls more to the Secretary.
Particular aspect of it.
Okay, we'll go to Nancy Marshall-Genzer for the last question.
Nancy Marshall-Genzer with Marketplace. Chair Powell, I'm wondering what you would say to savers who are hurt by very low interest rates and maybe going into investments, maybe in the stock market, that aren't so great for them. And also, I'm wondering if you can give us any more of a clue as to how long you think we're going to have interest rates near zero.
So we think that
you should stop using a savings account.
Low interest rates affect the economy through a number of channels in a positive way. Lower interest rates support economic activity through channels that we, overall, through channels that we understand reasonably well. They make it cheaper to borrow. They make they drive it, your costs of borrowing down. They do raise asset prices, including the value of your home. If your saver owns a home or has a 401k, your saver will benefit from that. But for people who are really just relying on their bank savings account earnings, this is that's you're not going to benefit from low interest rates. But we have to look out for the overall economy. Low interest rates support employment. They support economic activity, and those are our mandates. And I think for the overall good of the economy, low interest rates are a good thing. And it's not to say they're good for every single person, but that shouldn't stop us from doing what we think is good for the whole. In terms of how low, I really don't want to speculate. We will turn to questions like that soon enough.
Pen's holding.
In terms of how long we'll stay and under what conditions we'll stay at the effective lower bound, those are just exactly the things we're thinking about. Right now, we like the place we are. We've said that we'll keep our rates where they are until we're confident.
Now he's saving his ass. It's true. It's true.
And is on track to achieve our goals. So that's where we are. We're not changing that guidance today. But it'll be. That means we're going to be very patient. That means we're not going to be in any hurry to move rates up.
Thank you very much.
Thanks. Place we are.
22 big blinds over here. Tesla's sweating me, dude. Tesla's sweating me. Somehow I'm up $12 though. I don't understand, dude. I don't understand. 5 big blinds and we have an ace. Let's run it out. Hold. Hold. Hold! We knock somebody out. We've got 31 bigs. We're in first place. There's 4 people left. We ladder up and get paid, baby!
Welcome, everyone, to Closing Bell. I'm Sarah Eisen here with Wilfred Frost. Stocks are higher. We're just off session highs, Wilfred, as the Fed chairman paints a pretty grave picture of what the economy is looking at, characterizes the hit as severe, certainly on unemployment, on economic growth, on household spending, both in the short and medium term, which is getting a lot of attention. The medium-term outlook has the risk. That was characterized in the statement. And saying the Federal Reserve has already put in place extraordinary action to keep markets working, borrowers borrowing, credit flowing, and is prepared to do more and has more tools if needed to be. It's trying to send a message of confidence that the Fed is here, and also calling on fiscal authorities to keep working as well to support this economy.
Yeah, saying the Fed very much do what it takes, certainly not an optimistic outlook in any way, shape or form for the economy. We did see a fractional tick up in the long end of the yield curve.
Fractional
in
tip
terms of
up.
yields. 10-year note got up to 0.63.
APDN?
Having been at 0.9
What the
earlier
fuck
in the
is
session. It's,
APDN?
somewhere between that 0.61 at the moment. The dollar did weaken a fraction. It was just low, it's now down by about 0.3%, as you can see there on the yield curve. A slight steepening of the yield curve today. Either way, we are near the session high, still up 600 points plus on the Dow. The high of the session was 663. 3% gains for the S&P 500.
How's
almost
UAVs
4%
doing?
for the
Dude,
Nasdaq,
UAVs
Sarah,
is
and
raging,
the
dude.
Russell up
Wow,
5.4%. Certainly continuing a theme
guac.
of late of those
Dude,
that have
what a
underperformed most
killer.
year to date, bouncing
Bucci's
most
later,
sectors.
folks.
Energy,
See you, Bucci's.
top of the list, up 6.7%. Coming up on today.
I don't think. I would just say I don't think Powell said anything that was unexpected in terms of the economic forecast and just how bad it's going to get. What we're looking at, we got a preview in today's first quarter GDP
Tesla.
number, and then as far as the guidance, he
bye.
left it vague, open-ended.
Bye
He said
bye.
multiple times we're not going to be in any hurry
bye.
to withdraw the kind of stimulus that we are putting in place here on this economy.
Sniffles.
So trying to give people confidence. Also, I think Wilfred, interestingly, really tried to message around helping households who need it and why the Federal Reserve is not just trying to bail out Wall Street over Main Street, which is sort of coming up a little bit in the narrative now as the Fed steps into places it's never been before. For instance, buying riskier corporate debt.
Certainly lots to discuss and lots of people to discuss it with. We will break down all of the headlines from that Fed press conference with former PIMCO chief economist Paul McCulley and former Fed Governor Sarah Bloom Raskin, plus a massive afternoon of earnings still coming. Facebook, Microsoft, Tesla, Qualcomm and eBay all reporting after the close, which of course is about 39 minutes away. We'll discuss Facebook's numbers, by the way, with the company's CFO, David Wayner, in an exclusive interview shortly after the numbers
42 to 78
Of course,
cents.
Earnings have mattered
Tesla
over the
is
course of the last couple of weeks.
dying
We've seen
off
quite a lot
here.
of after-hours movers when numbers have hit.
Dying
Joining us,
off
though, to
here.
react to that Fed conference and the rally we're seeing today, CNBC senior markets commentator Mike Santoli, Michelle Mayer, head of U.S. economics at Bank of America Global Research, and David Zervos, chief market strategist at Jefferies, CNBC Steve Leisman as well. Steve, I'll start with you. Of course, you weren't in the room physically, but you were metaphorically. What was your takeaway on the tone we heard there from the
Jack
Fed chair?
8,
Sarah
hold.
said nothing groundbreaking.
No!
It's just hard to gauge
My
whether the
God.
market needed to be
We had
surprised
top
by what
pair
we had to
there.
say on it.
Jesus. No, and Sarah is right for the moment that we're in, but it's worthwhile, I think, and I wonder what Sarah thinks about this, to pinch yourself and remind yourself in the moment that we're in historically, which is a Fed chairman out there. I was struck, Wilf, by the extent to which he talked about the limitations of the Fed, to bring about a recovery. It's simply not up to them. Limitations on the Fed on what it can do in terms of lending and the kind of risk it. In fact, here's his response to my question about, is the Fed taking enough risk? And then I'll get back on the other side.
Jack's first fours. Hold.
In terms of risk,
back in it, baby.
So
We're back in it.
You know, we operate under the laws that Congress passes, and there are a number of aspects under Section 13.3, and you can see that they've permitted us to, I think, move very quickly and move into areas where we've never been before and do so quite aggressively. So I think we're going places and providing help in places
Queen
where
9.
we never have.
No.
And I'm glad that we are. I think it's
Ace on the river! Oh!
So he also said
oh my
earlier,
God!
hey, with this
We knock him out the ladder, baby.
Relatively soon. If you can't repay that loan,
Let's
maybe
go.
that's not the program for you. I thought there was a little bit of a challenge there to the Treasury Secretary about the amount of risk that maybe needs to be taken to really fund this economy.
It's an interesting take, Steve. However, the Federal Reserve is doing a lot, and a lot of I think there are 9 different market programs that the Fed has launched, everything from muni debt to mortgage bonds to treasuries to swap lines. They're certainly doing a lot. I think there's a broader conversation, though, to be had about what all this liquidity does when the economy, yes, we need liquidity right now, but we are facing a solvency problem as well. It only does so much when businesses reopen if they can't pay it back. That's, I think, going to be the question going forward. The Fed is trying to sort of bridge, I guess, some of the pain, but the real problem is the virus and consumer confidence. And when that comes back, that's going to be the question of whether the liquidity works, don't you think?
Get the fucking job done, bro.
I agree with you completely, and I think it's an interesting
Jack 9
metaphor.
versus
The liquidity
6-3.
one,
No, he hits the straight.
It's liquidity, perhaps, for people who can't drink. It's liquidity for people who can't necessarily borrow. these are the places that are the big holes in the recovery effort.
Yeah,
right
I like
now.
Facebook. I said
And I
Facebook
think
calls were the
Powell
play today. I
understands
feel
that.
like
He was very
Facebook
clear
calls.
today about the
Made a play at
limitations
Microsoft today.
of
Looks
the
like I
Fed.
got out way too
And I
early.
think
Pep
we're gonna get
hands.
this additional money, because I also had a chance
MSFT,
to
right?
hear Secretary Mnuchin talk
Oh,
today.
wow.
This additional
Microsoft,
pot
yeah,
of
they
money.
report tonight.
There's
Yeah,
gonna
that's a
be
good one,
debate,
too.
And if it's not happening now, it'll happen
Microsoft
tomorrow or
pays
the
a
next
solid
week.
dividend.
About the amount of risk that needs to be taken with this money from Congress. Should they go further down the risk spectrum to provide more money for the people who need it, not necessarily for those who don't necessarily need it?
Let's bring in some more of the panel. Steve, though, stick with us. Mike Santoli, first to you, just for what's happening in the markets today. I guess not totally impacted by the Fed press conference, but we're continuing to see a strong bounce.
Wow, Microsoft is
some of the
raging.
sectors that have underperformed most doing well, whether that's energy or banks, both performing strongly today.
Yeah, I mean, this open-ended, perhaps overwhelming unconditional support by the Fed, I think, was the premise of how the markets have behaved and recovered. And really, they are looking toward a moment where
Is it too late to get in Microsoft? I don't know. It's at a peak. I mean, if you were just nibbling for a long-term dividend account and just opening a position, I would say it's not too late. But
remedy some of these
trying to
things,
day trade, that's fucking risk, bro.
that we're not going to have that big solvency
risk, bro.
crisis that Jay Powell was talking about, doing everything to avoid.
Queen
so
Jack
I do think this is
fucking
kind of a
tens.
baseline,
Suck
what the Fed
it.
say for the markets.
Suck
And right now, we're kind of
it.
pulling ahead that date
We get second
when I
place
think the
money
market
now,
can try to,
and we're fucking
start to scale
tied.
the wall as opposed to wondering
We get
exactly how deep the
$67
market
here.
is down.
Put in for 100 something.
And I say that
Michelle,
not
did
knowing if
anything
the
stand
market's
out?
correct.
Rest of us, and he said it's highly uncertain, and in fact it's unknowable to predict the outcome right now. But just in terms of how long he's going to be using the tools and how big the stimulus programs that he's put in place are going to get.
Sure. So to me, what stood out is that he said there's going to be considerable risks that remain for the medium term. So he did give some sense of a time dimension here, which is that this is not a V-shaped recovery. It's not even close to that. There's going to be challenges that remain in the economy from the
Ace 7
coronavirus.
versus 6s. We need an Ace or 7. Ace
Or
or 7.
And they are absolutely
Fuck
committed
me.
to keeping monetary policy accommodative in order to ensure that. And I think that primarily, speaks to their commitment to the zero lower bound. It speaks to their commitment to continue with QE and keep the balance sheet large. But even on the credit facilities, they'll do more. They want to keep the credit flowing through the financial system into the real economy. I interpreted Powell to be actually quite dovish and concerned about the outlook, and really trying to reinforce the fact that the Fed stands ready to fight this.
David Zervos,
let's keep going, baby.
Well, firstly, is that your interpretation as well? And would the Fed chair have good reason to be fairly downbeat, given what we saw from GDP
We've
this
got
morning,
King
which
Queen.
was down 5%
We hit the
thereabouts,
king.
Quarter over quarter, when March, of course.
We're pulling out of this, baby. Oh my God.
I generally agree with that. I don't, and I
We're
sort
all
of agree
in.
with a lot of what Sarah said at the opening as well, which is he didn't add a lot new here. He really reiterated, I think, what we all knew, which is there's a massive Fed put.
I want to,
He's
but no.
talking about the put. He's put it into virtually every market that we trade in. He's now put it into Main Street more. I think the market's gonna test that, of course,
Ace
and
4
that's
versus
a
King
lot of
3.
the questions about what Steve was going at
3.
in terms of are they taking enough
4,
risk?
yeah,
Are they
4. I
putting
didn't even know
enough
what I needed
out
there.
there?
Second place
Do they
money,
need to backstop
$67.
more
We'll
things?
take it.
And the market's clearly
We'll take it.
debating things like how far they should go into the leverage loan world or into more leverage spaces. So I think that's more the topic of the future.
Whoa,
but I don't
this
think this
registered
meeting
for
really
one where
moved
I'm
the
on
markets
late.
very much or perception very much. I
2
think
levels
we're
left?
trading
All right,
today
I'll
on-
never click
on
that button
optimism
again. Check.
about Gilead, and I think the Fed gave you kind of exactly what they were supposed to give, which is we're here, we're big, we can print, we got it, we're going to make sure that the good stuff is taken care of. The stuff that's kind of shaky, we're going to venture in there, but we're going to be careful.
Yeah, I mean, using the tools to ensure robust recovery is as bullish as it gets, I think, for the Federal Reserve. On top of the Gilead data you mentioned, and a pretty bullish take from Dr. Fauci, 2 people with very high approval
30 minutes
ratings
left in
right
trading.
now, among not just Wall Street, but Americans as well, according to some of the recent polling. Michelle, another comment that
TJ
stood out
Shaw
to me
working in
from
the
Powell,
Fed for
which I
us.
thought was actually pretty unusual, was he said, now is the time to use the great fiscal power of the United States. The Federal Reserve
That's it,
Chairman's
Sarah.
pretty cautious usually when going into this realm of fiscal policy. He mentioned fiscal policy a number of times and even suggested they need to do more and they don't need to worry about the debt. What do you make of that?
Yeah, you're 100%. I mean, he caveated and said, monetary
Even get on
policy is separate from
eToro.
fiscal
Makes
policy. But he made it very clear that they need
millions.
to be fighting this fight on both
Tell him to
fronts,
break us
monetary
off $1
and
million
on the
then.
fiscal front, and specifically said that more can be done to make sure those that need access to credit get
break
access
me
to
off a
credit, so
bit.
that you don't have insolvencies, so that you don't have companies fall under and make it that much harder for the recovery to start once we're at that point. So, and on the debt side, he said, look, this is not the time to be thinking about a high debt level. That time will come. And he did acknowledge that, one of the lessons learned perhaps in this cycle and this environment is that to prepare for the next downturn, it would be good to get the fiscal house in order at some time. But that time is not now. The time now is to spend.
David, when we consider the fact that the S&P 500 is down 8 or 9% year to date only, the 10-year Treasury price is down 67% year to date. Where do you stand on the debate that, in fact, those two different indices are agreeing with each other and they're saying, don't fight the Fed, or whether they are grossly disagreeing with each other in that one is painting a very dire outlook for the economy versus the other is somehow shrugging it off?
Do we get in the 1654K?
I don't really buy that last argument. I think, look, low interest rates for the Treasury market combined with are going to help with lower interest rates to investment-grade corporates, which the Fed is also supporting through its funding facilities. So you've got good quality corporates that are able to borrow at levels that they never really even contemplated. So this is hugely stimulative for the S&P, which is primarily made up of good quality, high-end companies. It's not the small guys. It's not the high-yield areas. So I think they go hand in hand. The problem will, and we've written a lot about this at Jefferies in the last week or two, is that the real issue for the Fed, I see, and it didn't come up in any of the questions, Steve didn't ask it or anybody, is that if we get a headline that reads something like S&P at record highs or S&P positive on the year, and we're going through the summer with a 15 to 17% unemployment rate, it's going to feel a lot like Main Street got left behind and Wall Street won the day again. I think the Fed has to be very, very careful about that. Very careful. That is a horrible political outcome for the economy, or for the United States and for the country.
I agree. He got sort of a question
That's
from
my
old colleague Mike McKee about this, about the fact that wondering if there are market distortions out there, the fact that the market is sort of ahead of the economic data and there appears to be a mismatch. And I thought Powell's answer was interesting on this, David. He said markets are trying to price in something so uncertain it's unknowable. He said they don't care about the market level. They care that the markets are functioning, that lenders are lending and borrowers are borrowing. So wrap it all up for us. If you're sitting at home wondering, what does this mean for my portfolio, my 401k, did Powell just reiterate that, they're going to be in there to buy, and therefore this disconnect between the markets and the economy is going to continue? As the economic data gets bleaker, the market could go higher because the Federal Reserve will stay in the game.
I think, look, the game plan, I think you're right, Sarah. And like I said, I think there's some danger to it. I think part of the process that I would like to see, I don't know that we're going to see it, is a pivoting of some of the stimulus more toward Main Street programs and less aggressiveness on Wall Street programs. Everybody was talking about, will they buy equities? Will they create an SPV, lend to, and basically allow the Fed
reaction Bitcoin and other cryptos just to spike in the future. I've heard that.
Especially with the equity market where it is today. Now, Powell did say they're looking at a lot more things for the Main Street facility, which I thought was a positive. But again, I think this is a work in progress for the Fed. They haven't really ventured into this area as much. Clinton never ventured into this area of Main Street lending before, but they have a real sort of PR issue to manage. And I think they're a backstop. I think
if you guys want to play on ACR, please
the question is,
sign
do you
up
want
with
to
the
actually
link
drive
below.
it well beyond the strike
First time
of the foot
deposit
to the
code
point
using
where
Bitcoin.
it's
Bitcoin's the best way to deposit.
Not consistent with the solvency
Table grind,
fundamentals.
TBL-GRIND.
Liquefication
Actually,
of
Amazon pre-earnings
the
could
good
run tomorrow, but
quality
might be priced
firms
out.
in the economy to the point where they just bubble up and you create something that looks a little
Amazon
excessive.
pre-earnings could run tomorrow, but might be priced out. I have no idea. Yeah, it's that's a tough one. I think they're going to do good.
So far,
Amazon's going to do good.
It looks like they've tweaked it a little too far to the
New
Wall Street
Stim says
side.
the U.S. is creating a digital dollar. I saw that.
David
I saw that
Zervos
Danny K
in a
called.
T-shirt
Yeah.
without a haircut,
Didn't get a deposit
despite the
bonus when I
zero
did it.
interest rates. You're going to have to do it
It
yourself
doesn't
this
go in
time.
the
Dow's
account
up
right away. You have to
622
work it
points.
off.
Michelle Meyer, thank you. Steve Leisman,
You have to work it off.
thanks
If you go to
you
rewards
as well.
and
We're going to
bonus, if you
continue
go to
the
the rewards
conversation
section
here.
and then the bonus section,
And
you
we'll
should
be right
able to
back on
see
the other
it.
side of the break. We're going to count you down to a huge afternoon of earnings. We've got reports from Facebook, Microsoft, Tesla, and many more. We'll bring you all the key numbers. We'll speak exclusively with Facebook's CFO as soon as those numbers hit. Don't go
Tesla.
anywhere. We're following this rally for you into the close.
These are already up $32, yeah. Should have bought a fuck ton of it. DM me. What's the avatar of The Rock? What's that avatar of The Rock? What avatar? Avatar, page 19. Yeah, I saw it, Danny K. Golden. I saw it. You gotta DM me the link, though. What is that avatar of The Rock? What are we smoking? Avatar of The Rock. I don't know what we're smoking here. Oh. It's like actually The Rock. I'm so stoned. I'm like, Avatar. Do you have a 10, sir? Tesla soaring all of a sudden. Penn is holding 1850, which is fucking insanity right now. Click the name and click whisper. I don't really know how to either. I suck at it too, to be honest. But I know how to receive them. Earnings next Wednesday.
Welcome back. We've got just 22 minutes left of the session. We're not far from the highs. We're up 620 points on the Dow. The high was about 660, 3.1% higher on the S&P 500, nearly 4% higher on the Nasdaq. Russell leads the charge, up 5.3% today, up 11% for the week.
Shorting into close.
Energy,
Good Lord.
top performing sector. Utilities just in the red, the only sector in the red. Some individual movers for you. Shares of GE slumping today. The company reporting a revenue decline of 8%, adding that it expects this quarter to be worse because of the coronavirus pandemic. It's down 2.6% today. Lyft laying off about 1,000 employees. That's 17% of its workforce, and furloughing an additional 288 others. The ride-hailing company also reducing base salary for employees exempt from the layoffs and furloughs for a 12-week period. Lyft says this comes as it makes an effort to
American
reduce operating
Airlines?
expenses and adjust cash flows amid the
I don't
COVID-19
think so.
outbreak. The
The
shares
airlines have been doing good, but I don't
today.
think so.
Sarah.
The Federal Reserve leaving interest rates unchanged at 0, saying they will remain there until there's confidence that they.
And essentially what Chairman Powell is saying is that he is going to do whatever it takes to actually get this economy moving again. Now, of course, we know that the tools that he has are really tools that work through financial markets, that he can't do anything about getting a vaccine. He can't do anything about the flat economic activity that we're seeing, the number of unemployment claims. All of that is much cause for concern. That said, you see him doing really quite a bit. He's got us at the zero lower bound. He has expanded quantitative easing in a way that, of course, has no time limit. It has no duration. It has essentially an open-ended quality to it. And then, of course, we've got these major Fed liquidity facilities. They are all out and they are standing up now, and they are essentially, the faucets are turned on high. So essentially you see quite a bit here. More to come, I think, in terms of the Main Street lending program. We'll also probably see more in terms of the municipal bond facility. But you can see him moving all of these different parts and doing things really to an extent that is fairly extraordinary and, of course, unprecedented.
Paul, clearly the Fed chair said he's willing to deliver more if necessary. But what portion of his available levers has he already pulled? Are we talking 90% or 50%? Is there much ammunition left?
I think he's pulled pretty much everything that he can, and I would certainly agree with Sarah that he's willing to do it with all the vigor he possibly can display. The important thing that he brought out, though, and I think it's really important to pound the table about this, is that there are limits to the Fed's power. The Fed is not a fiscal authority.
Jesus.
The Fed's in the lending business, and they can lend against anything that they deem to be good collateral, and they can be incredibly liberal in that definition, but they're not in the grant-making business. And to the extent this economy needs to have grants from the government to households, to business, to state and local.
All in, what's good?
Congress, and I think Sarah noted when he talked about the great fiscal power of the United States. He was openly calling on the fiscal authority to give him some equity in order to be able to take more risk. So I think he did a really good job of saying, A, we're doing everything we possibly can, but B, there are limits to what we can do, and Congress should use its great fiscal power, that this great Bank of Uncle Sam that's been created, which is a joint venture between the Fed and the Treasury, needs to have more taxpayer dollars for grants and loss absorption.
You know, Sarah Bloom Raskin, this is an issue I know that you're sensitive about because you were at the Fed during the last crisis where, you know, there were questions about who got bailed out and who got relief and what QE did and who it helped and who it didn't. Already, we're in an environment where we're sort of wondering if there's a Main Street versus Wall Street thing happening, whether the big companies that the Fed is lending to and the markets that the Fed has propped up is disproportionately helping the haves instead of the have-nots.
Stopping by the end of the day, that's what's up.
To sort of explain today why his policies, for instance, to help the credit market, help cushion the economic shock that would hurt people at the very bottom of the income scale. But is the Fed going to have a bigger problem here when it comes to the unprecedented size of this package and just who it's aimed at?
I think you're right, Sarah, and thank you for remembering history here in terms of what was done during the financial crisis, which many people will remember did cause quite a bit of political backlash. Now, I'm not feeling essentially the full political backlash at this moment, but you do see signs that it's starting to build, and it's precisely for the reasons that you're pointing out. The Fed is engaged in massive amounts of relief here, and there's different speeds at which this relief is coming out. I think the relief coming from the Fed is on one speed, but there's other relief coming through Treasury, the Small Business Administration, other agencies of the executive branch, and that relief is hitting all kinds of speed bumps and friction points. And that's an issue because the speed with which this relief hits, I think, is going to affect the contours of what our economic recovery looks like when this pandemic is over. So there are definitely differential speeds here coming out in terms of if you think of the water, right? The water in the faucet, I mean, some of the pipes are clogged and some of the pipes are moving pretty smoothly and moving the relief to where it needs to be. But ultimately, the bigger point here
Don't
is
look
that
at what?
the Fed can only do so much. Yes, it is an extraordinarily powerful mechanism, and yet it works through financial markets. Ultimately, it is not a good mechanism for actually targeting particular small businesses, particular households. So the ability of the Fed mechanisms to actually reach the real economy is still something that we're going to have to see. And to the extent we don't see it, or that it's late in coming, I can guarantee you that there will be political backlash here.
God.
The other thing to keep in mind, of course, is
that would have been one I
capital
would have held
markets,
overnight
right?
through
This
earnings
has
for
been
sure.
a
Manning Matt, thank you for the follow.
This has been a failure, really, of capital markets, not just financial firms. And so you wonder, too, at the end of all of this, whether the backlash is going to take the form of some kind of regulatory response. Because, of course, the Fed is now working in markets that it does not directly regulate. It is buying bonds, propping up different parts of the market where it does not have explicit oversight. And so we'll have to see whether there's a call for some kind of regulatory oversight when this is all over.
Sarah and Paul, thank you both so much for joining us. Great discussion there. We have, by the way, just 13 minutes left of the session. We are up 3.1% on the S&P 500. When we come back, we'll have uninterrupted coverage of the final minutes of trade.
TMX 259 gives us the hand. 34 big blinds. Let's go, baby. SPY's holding up nicely into the end of the day here. We've got, what, 10 minutes left. Pen raging into the close. ADMA raging into the close. This is just a 660 on demand. Manning Matt, we just took second place in one for $60 right before this. If you play on ACR or don't have an account yet, use that link below. Sign up. Helps the stream. $42 on Tesla puts. How? It's gone up in price and my puts have gone up in value. Really makes me think the numbers are going to be fucking bad after hours. They're trapping a bunch of people right now. Trap them. Global Poker. ACR, brother. ACR is so much better. Higher guarantees to play. These on-demands are like amazing sit-and-goes, dude. They take better care of streamers. They take care of the small community so much better. I kind of like Global too, don't get me wrong. I have a bankroll over there, Manning Matt. I'm not totally against it, for real. I'm just an ACR stormer. I support ACR. ACR supports me, you know? But I like the Golden Blazer and stuff. I like some of the global poker streamers. I'm not against it. We're all in the same family here, you know what I mean?
With over 10 minutes left in the trading day, we are now in the closing bell
Sniffles,
market
thank
zone.
you for the 1 bit. I'm sorry,
Of all
I
the
didn't see
action
that.
going into the
Manning
close.
Matt,
CNBC senior markets commentator Mike Santoli here as always to break down these crucial moments of the trading day, along with Josh
Mike,
Brown.
break it
today.
down.
Let's kick things
We got
off.
Josh
The
Brown
market
today.
rallied
Let's
at the
go,
open,
baby.
Have added to those gains all day. The Federal Reserve this afternoon leaving interest rates unchanged at 0. Chairman Jerome Powell weighing in earlier on the Fed's plan of action
Audio
from here.
good.
We're committed to using our full range of tools to support the economy in this challenging time. We're going to use them, as I mentioned, forcefully, proactively, and aggressively until we're confident that we're solidly on the road to recovery. And also to assure that that recovery, when it comes, will be as robust as possible. As long as needed, we'll use them.
As long as needed,
Strong
we'll
rally
use
today,
them.
up 3% on the S&P. Josh, to me, today is a day that encapsulates why the market has been so strong, and we've seen this now more than 30% bounce over the
Mike
last
Cash out
month.
there.
We got the hopeful signs from Gilead's Remdesivir with an added plus from Dr. Anthony Fauci, who sounded very optimistic about them. And you've got the Federal Reserve, who is already all in. And
Amazon
today
is just
you heard
running
from Fed
it
Chair
up.
Powell that they're going to be all in for as long as needed. And those two powerful forces have really been hopeful signs for this market. What do you make of the action we're seeing today?
It sounds like our work is all done.
Yes,
here.
it doesn't
Everything
just
will
come to
work
you
out
right away.
happily
It
ever
doesn't.
after,
It
right?
doesn't get put in. It's not automatic.
I think the
yeah,
big thing
you have
that
to go to
changed this
rewards.
week for a lot of people who look at markets technically or look at the internals is what's happening with
And then
small
bonuses.
caps is absolutely breathtaking. We're in the midst of a historic move in small caps.
I'm
Today,
pretty sure.
if they go out where they are now, would be 6 straight days for the Russell 2000.
And then
of more
also
than
in the
1%
rewards,
gain each day. Which
if you have a
is
new account, you get
rare.
free money.
Small
Go to the
caps are
spinning
now
card section, and every
40%
day you
off
select
of
a
the
card to
lows.
get free money.
Huge comeback, and remember, they were hit harder than the S&P in March. And if you actually look at small caps relative to the triple Qs, which my colleague Michael Batnick did yesterday, they just had a 2-day outperformance event that you have to go all the way back to March.
It doesn't get
2001
deposited immediately.
to
You have
find
to play
anything even
through.
close. So
You have to
this is
play through the
important for a
rake a
couple
little
of
bit
reasons,
before
Sarah.
it releases.
Number one, I think you have to think about regional banks when you think about the Russell. There's an almost 1-to-1 correlation, Russell value versus the KRE, the Regional Bank Index ETF. That is precisely the area of the market that we want to see enthusiasm for. And I think funneling another $300 billion worth of small business loans, many of which will go through regional and smaller banks
Tesla
this
holding
time,
strong,
it's probably
though.
helping those stocks.
SPY
But
really
that is what
taking
you
off
want to see. If we're really going to have a recovery and it's going to get underway soon, it's going to happen with banks being able to make loans, people being able to borrow. So I'm happy to report that. I think it's not getting enough attention on the air today, and I really think people should think about this idea that
Why is there
smaller
all this
companies
color on him?
are now a big part of the rally. It's not just the 5 names we talk about all the time.
Even if those laggards are playing catch-up over the last couple of sessions, worth pointing out that Alphabet, Facebook...
Is that them?
For the last couple of sessions, worth pointing out that Alphabet, Facebook, 4% or more today, and that's all around earnings, 2 of which are coming at the close today. But first, let's touch on that other positive stimulus point for the market today. Gilead shares rallying on new hopes for its potential coronavirus treatment, and Meg Terrell has all the details we need to know about that. Meg.
Hey, well, we got the NIH's clinical trial results on Gilead's Remdesivir today. Those were the ones everyone was waiting for because they were the gold standard placebo-controlled trial, and they came a month early. What they showed was that the drug accelerated the recovery time for patients. This is not a cure, but the results showed
Already
that
lost my
patients on
$10.
Remdesivir recovered from their illness in the hospital around 11 days as a median versus 15 days for placebo. It also showed a trend toward...
You can click on the cards, though, and get free money every day, right?
8% of those on Remdesivir passed away versus 11% on placebo. However, that was not statistically significant. The New York Times is reporting that
all in
the
on
FDA plans to
ACV.
potentially authorize this for emergency use as soon as today, guys. So this is not a cure, as Dr. Anthony Fauci said, but it is a building block. The first drug
5 minutes
to work
left,
for this
chat.
disease.
5 minutes left.
Meg, thanks very much for that. Mike Santoli, I mean, the obvious debate point here as it relates to the market is that this is not a vaccine. It doesn't necessarily drastically change people's economic behavior. It is
LAPD,
potentially
baby.
an aid when it comes to treating people that have the disease.
Was a
doesn't
good
really
day.
go
That's
to
what's
whether
up.
We're going to be going back to sports stadiums or movie theaters anytime soon.
All in ACV, that's how you lose it quickly.
The nuances necessarily, to be honest with you. I think for the purposes of right now, investors are kind of seizing on any incremental news.
Cannabis can't do anything
we
good.
can draw the reopening of the economy sooner than we thought a little while ago.
I just checked. My Tesla put did the same thing. What do you mean?
Cover story for
It's up
what
in
this
value.
market's up to right now, the Gilead news was fine. And I do think that you
do
can't
10
have
more and
this
actually
kind of
fall
rally
and not
that
be
Josh
dumb.
talked about too, without you having had
You gotta have
extreme
patience. You
caution
have to have
set it up.
patience.
And this rally has started to seem like a bit of a chase. There's been very
You
grabby.
should.
There's
You
been
have
a gap
to.
higher for 5 or 6 straight days in the S&P 500. So it does seem as if there's a lot of positioning, maneuvering going on as people kind of assimilate this idea that, hey, maybe we weren't looking in the right places for exactly how we can look across this valley of the economy. Once again, this is a collective bet the market's making. It could be proven wrong. We're getting up to levels where it's going to have to prove a lot more. But I think that's what's been going on to this point.
I'm not sure I agree with you, Wilfred. I mean, I get it's not a vaccine, and therefore, you know, it won't create immunity, and it's definitely not a cure. But anything incremental to get consumers more confident from the place that they are right now, which we saw a record drop in consumer confidence, hearing about drugs that are out there that can actually improve your chances of staying outside the ICU or not coming close to death, I think are important psychologically, especially if we hear the backing from people like Dr. Anthony Fauci, who is all over the public sphere about going out and you know, taking the first steps into a restaurant or into a retailer. And it's not just Gilead's remdesivir, which is for very serious patients. There are hundreds of other drugs that at least are being looked at, anti-inflammatories, anti-arthritis, and that sort of thing. And at least it just helps incrementally improve, I think, the confidence in the absence of the vaccine, which is going to take a lot longer.
Of course, incremental, absolutely the key word though there for me. I mean, listen, I think we're both sort of along the same lines. It depends how you put a spin on it, but a 12% possible death rate changing to 8% is not the drastic change that would alter behavior in a huge way. I think it's certainly marginally positive. But again, you come back to the point, Josh Brown, that the economy declined about 5% quarter on quarter in the first quarter of the year when we were only in lockdown for a couple of weeks. So again, we've still got an enormous amount of bad news for the economy to come through, even if behaviors can improve going forward.
Last minutes here.
It's going to get worse. And I think one of the key things, and this is a discussion we had with clients this week, actually. We put out a letter to clients answering the number one question they were asking their financial advisors at our firm, which is, how the hell, excuse me, is the stock market down 11, 12, 13% given what I'm seeing in my hometown, given the stories I'm hearing about people losing their businesses, their job? Like, how does any of this make any sense? And we gave a couple of answers to that, but the main one I would bring out is
wow, pen raging
really
into the close. Let's go, baby.
Linear connection in terms of depth with what the stock market and the economy go through.
How? Because money printer go burr.
So in the 07-09 crisis, GDP contracted by 5%, but the S&P was cut in half. It was down 57%. So by 2008 logic, does that mean we should be down 90%? If we're seeing a quarterly GDP for Q2 about to fall 30 or 40%? No, it doesn't really work that way. That's one. And then lastly, I would just point out, we had these dramatic reactions in the stock market on the way down already. So I just think like people should think about this in totality, not one versus the other.
That's it.
All right, up more than 500 on the Dow. Off-session highs. Mike, what else are you seeing in the
That's
market
it,
internals
baby.
today? It looks like a lot of the losers are coming up on top.
Yeah, that's been a trend, Sarah. Definitely continuing today, although not nearly at the expense.
Just been 10 more on poker.
Winners, yes. Breadth is strong. You see about 80% of the volume to the upside. That's good, not stellar. Take
Slow
a look
and
at
steady,
the equal
brother.
weight
Slow
in
and
consumer
steady.
discretionary this week against Amazon, which is by far the largest weight in that. So you see that the troops are really working here. The generals are taking a back seat, and then the volatility index receding once again. Still not what you'd call at normal levels, but it's cooperating to a degree down in the low 30s.
Mike, thanks for that. 30 seconds left of the session. We've come a little bit off the highs
It's
of the
over.
session. We're
Session
up
is
550
over.
now on the Dow. The high of the session was up 660. Nonetheless, still a very healthy 2.3% gain. S&P 500 up 2.7%. NASDAQ 3.6%. And to Josh's point, the Russell up a healthy 4.9%. Energy, the best performing sector today, followed by communication services, up 5%. And two sectors in the red, staples and utilities.
Tesla, Rand, you bought Tesla puts?
I did. You guys, I'm talking to Stock Stream over here.
You did? You bought one? Oh, dang. All right. Let's go here.
It's remdesivir drug to fight the coronavirus and
We're
also
gonna let him
from
chill. Tesla puts, that's cocky! You're dang right I am. Let's go, baby.
no hurry to withdraw any of the stimulus and remains there to provide more. There's the Dow finishing up 2.2%.
Tesla in 30 minutes. 30 minutes, chat. We have to survive 30 minutes. Tesla puts. Go with God. Go with God.
And as we mentioned, it included some of the stocks that have been hardest hit throughout the
Microsoft.
sell-off. Energy on top up more
Microsoft
than 7%.
rips
Communication
up.
services strong on the back of those Google results.
Of course, dude.
But the banks
Microsoft.
also continuing to rebound here. Materials, consumer discretionary. The only two groups that were down
Facebook is gonna
were
rip up
defensive, like
too.
utilities and consumer staples. The
Microsoft
Nasdaq
ripping though,
ahead of
baby.
Facebook earnings, and the Russell 2000 index of small caps continuing its own recovery. It has been the loser all year long, and it has had some pretty strong gains, as Josh Brown was just telling
We
us.
should
at
have
the
done
last
some
two
fucking
sessions today. No
Microsoft
exception,
calls,
nearly
baby. We
5%.
should have done some Microsoft
Coming
and
up,
Facebook
another
calls.
huge after-hours earnings session for you, featuring results from not just Facebook, but also Microsoft, Tesla, Qualcomm, and eBay. And then we're going to speak exclusively with Facebook's CFO about the social media giant's latest results and how digital ad sales are
Damn,
faring
Microsoft
amid the
crushing.
coronavirus crisis. Also, this hour, President Trump set to meet with industry executives at the White House. We will be monitoring it for you and, of course, bring you any news and any highlights. First, let's talk about the market today. Ritholtz Wealth Management CEO Josh Brown is here. First to you, Mike, on the strong rally, what you noticed inside and the catalyst that got us here.
Yes, Sarah, certainly very strong. Certainly also started to seem like a little bit of a grab and a chase, and people's feeling squeezed and forced in because the rally was just not letting people in
Now
at a
down.
decent dip. We had a 5% pause like early last week, and that was about it.
What about
That being
Facebook?
said, got the S&P up to a level in this broad rally where we first, peaked in the summer of 2019, and then we were at almost exactly 1 calendar year ago as well. So we got back more than 60% at this point of the total losses. We're getting into May. It would make all the sense in the world to actually see this thing flatten out or pull back right now, but I've said that before during this rally, and it didn't give you much. So I would just put that out on the radar. That today seemed as if almost kind of in a
Tesla
capitulation of
803, oh
abundance of
fuck.
good news. Market does best when it can basically go from bad news to less bad news, and when the Fed seems to be giving more support than absolutely needed. I think both those things were top of mind today in the rally.
Josh, I know we've seen a great run for the likes of the Russell, the likes of the regional banks over the last couple of sessions, but is
Dude,
there
Microsoft
still room,
ripped up and then
regardless
gave
of what
half
the
of it
overall
back already?
pack does, room for
This is
there
looking
to be
weird.
a closing and narrowing of the gap between the big tech outperformers and the banks and the small cap underperformers?
Well, there's always room, and anything can happen. It's going to be tough because the fundamentals of large cap tech are just significantly better, and I don't understand a scenario where that would change on a dime. So what could change? Sentiment around what will look better a year from now. And so if a lot of money starts thinking, you know what, I get it,
804, we're
Google's
fucked.
doing great, Facebook's doing great, but what's next? If that mentality takes over, then sure, you could certainly see that gap narrow more.
We're starting to get some earnings out. Qualcomm first. John Fort with the numbers. John.
Hey, Sarah, just those numbers just out. The revenue has come in at $5.2 billion versus $5.03 billion for fiscal Q2. Non-GAAP earnings per share at 88 cents versus 78 cents expected. So those numbers better than expected. Also, the guide is to $4.4 to $5.2 billion in revenue for fiscal Q3 and to between 60 and 80 cents in earnings per share for fiscal Q3. I want to note that MSM chip shipments, which is a measure of the overall health and volume
Facebook ripping
of the smartphone business.
I said Facebook
globally,
calls.
That number came in at 129 million
Facebook
units. That
calls
is below
Tesla
the midpoint,
puts.
the range that Qualcomm gave
Oh,
last quarter before we knew that this coronavirus crisis was spreading worldwide. The range that they gave was 125 to 145 million units. But let me go through some of the detail on the quarter now. I did just get off the phone with Qualcomm CEO Steve Mollenkopf and CFO Akash Pakwala before the call. They had some very interesting detail here on the quarter. For one, they did manage to sign Oppo and Vivo, those two Chinese licensees, to 5G agreements, which is important. Mollenkopf told me that China is well on its way to recovery.
Big red lines in Tesla, baby.
And so that's
huge red lines.
Long term, he says he sees no fundamental change in the desire globally for 5G.
Let's go,
Qualcomm is maintaining its 5G handset estimate for the year of 175.
Let's go.
Right now, put boys, we have 9 more minutes before first 15 minutes of after hours on earnings. Don't celebrate too soon. You guys remember what happened with Netflix? You guys remember what happened to people with Netflix calls?
Let's go.
It seemed like amazing, and then by market open the next day, chill.
Facebook
765.
That Roy beats.
Oh, did we get a precise 765?
All hell Red Court, biggest of balls. Let's go, baby. Facebook calls would have been the fucking play, though. Jesus. Tank this bitch. Who knows what's gonna happen?
765.10. Okay.
Earnings per share here of $1.40. That's first reporting Q3 earnings per share here of $1.40. That's versus expectations of $1.26, and revenue of $35 billion versus expectations of $33.7 billion. So beats there on the bottom and the top. Just quickly turning to the segments here: revenue and productivity and business processes, $11.7 billion in the quarter. That's an increase of 15%. Within that, it looks like Office 365 commercial revenue growth 25%. LinkedIn revenue increased 21%. Revenue in Intelligent Cloud division was $12.3 billion. That's an increase of 27%. Its cloud service Azure saw revenue growth of 59%. Of course, there Microsoft going head-to-head with Amazon's AWS. And revenue in
Facebook
raging. $11 billion. That was an increase of 3%. Windows OEM revenue, so what device makers are paying Microsoft to license Windows, that was relatively unchanged year over year. Guys, back to you.
Josh Lipton, thanks so much for that. Microsoft up 1.4% or so after hours trade. Let's get to Facebook's numbers. Revenues, a slight beat, 17.7 billion. The forecast 17.4 billion. The EPS coming in at 171. The forecast was 175. You are seeing, though, a slight uptick in engagement relative to expectations. So we've got daily active users 1.73 billion. The forecast 1.7 billion.
Facebook
that equates to an uptick of about 9.3% year over year. Last quarter was an 8.8% uptick. Monthly active users 2.6 billion. The forecast was 2.5.
We need to really see it tank.
That's an uptick of about the same as what we saw last quarter, about 7.5%. In terms of the ad revenue, the number directly related to advertising, that's held up well. So you've got engagement up, but advertising revenue doing all right. 17.4 billion. The forecast was 7.3 billion. That's up 17% year over year. Last quarter was up 25% year over year for ad spend, but to still be up 17% in this environment is not
Get
bad.
to Tesla.
Headcount up to 48,000. It was
shit on fucking Tesla if you would.
Quarter. So a decent set of numbers, up 7% in after hours trade after a decent move already in the session today. So a pretty strong 24 hours for Facebook stocks performance. Julia, you've got more on these numbers.
Yeah, I think it's really important here to look at the guidance. Facebook does not traditionally give any guidance in the earnings report, but they are talking here this time. They're changing that. They're including a section here in this earnings report on the impact of COVID-19 on their outlook. They're saying we are facing a period of
fucked.
unprecedented
We're fucked,
uncertainty
chat.
in our business outlook. They expect business performance will be impacted by issues beyond their control, including the shelter-in-place orders. Now, in terms of engagement, they expect this better-than-expected engagement to continue. They say they're seeing the better-than-expected daily active users as well as users of their family of apps reflect increased engagement, and they expect that they will lose at least some of this increased engagement when various shelter-in-place restrictions are relaxed in the future. So strong now, but they're saying it's not going to necessarily last. They're also saying they experience a significant reduction in the demand for advertising, as well as related decline in the pricing of their ads over the last
And it's gone.
quarter. So they're not providing specific revenue guidance, but rather just looking at snapshots of what they're seeing so far. They do say expenses will decline.
Oh my goodness, dude. Oh no.
And it's gone.
No.
And it's gone. Did they kick ass? What happened? That's what's up. Use the link. If you use the link, we each get $10 in our account. You have to deposit $100 and keep it there for a while. I think you have to keep it in there for like 90 days or something like that. What is going on here? Now it's going down. I'm gonna have a fucking heart attack before this is over, chat. Stimulus is clear tonight. Let's go. What is going on here?
Doing in literally a global shutdown with a third of the population stuck inside their homes. It's not an accident. It's not the Fed manipulating. It's literally business fundamentals being incredible. All of these names. I don't own Facebook, but I own Alphabet.
I own Alphabet.
Mike, what's your take so far on some of these big tech names? I mean, Facebook adding to huge gains in the actual session.
Let's go, baby.
It is, and look, we have to be clear. There was some anxiety about the ad picture built into Facebook. It did underperform.
Are we gonna talk about Tesla? Like, what the fuck, man?
Businesses. It was supposed to earn 190 2 months ago this quarter, and it got revised down to 170, and it beat that. So all that makes sense. We basically kind of preloaded the anxiety. Stock is down fairly significantly off its highs. Now it's rebuilding that because the resilience of the business is now on display, and people are willing to bet that, you know, there really isn't a lasting hiccup in terms of the overall outlook. Plus expenses going down. That's a different part of the story too.
I just want to get in here to Mike's point.
Facebook and Microsoft. Go ahead, Josh.
Yeah, I want to get in here. Mike makes a really good point. Pull the lens back a little bit.
Tesla beat. Did they?
6% over the last year. Facebook is only up 2%. The XLK, the broader tech sector, is up 20%. So I think that's right. There were already concerns about growth rates for these companies dating to before the pandemic, and it's not as though these stocks have been leading the parade. They've both underperformed their space. So I think even though they beat slightly lowered guidance or they're a little bit wishy-washy, it's enough for the stocks to justify the rally they've had in the last few weeks.
Guys, just going to quickly hit the Tesla numbers, and we're going to get back to Facebook.
There we go, hit Tesla.
And Tesla coming in with a slight beat on each line.
Slight beat.
6 billion. Forecast was 5.9 billion. They've, of course, already updated stronger than expected deliveries for the first quarter. Looking like that playing out on both lines. We'll have to come back a bit later in terms of the expectation for deliveries for Q2. The EPS, though, beat on the bottom line, $124 adjusted compared to an expectation for a slight loss of 36 cents. Looks pretty strong. Revenue slightly ahead, Sarah.
All right, let's hit Facebook again, which is
Tesla beats.
Fuck. Get back to Tesla after a while. This is a crazy earnings session so far. Julia Boorstin back with us now, along with a special guest, Facebook CFO David Weiner. Julia, take it away.
Sarah, thanks so much. And Dave, thanks so much for joining us right now on the heels of those earnings and before your earnings call. We appreciate it.
Thanks, Julia. Let me start by saying that our thoughts are with those facing challenges right now.
Dave, I want to really hone in on what you're seeing right now in terms of revenue. You report that there was a pretty steep decline at the end of March, but then in April, things
doesn't seem to be helping them, though.
Into what's happening with Facebook's
doesn't seem to be helping.
Sure, I think you can see that in our results, Julia, that we're not immune to this from this crisis. We did see a steep decline in advertising revenue starting in about the first week of March, and that sort of continued. Now we've seen some more recent stabilization. As part of the earnings release, we did include information about the first 3 weeks of advertising performance in Q2, so in April, and that's about flat year over year versus the performance in 2019.
So to have a stabilization, though, does that indicate to you that things will start to turn around by the end of this quarter, into next quarter? What's your outlook going forward?
Well, I think the outlook here is really uncertain, and that's why we're not providing guidance. We're really just giving the data that we have up through the first 3 weeks. We know that economists are calling broadly for a GDP contraction in Q2 that's pretty substantial globally. We know that advertising tends to be very sensitive to the macroeconomic climate. So we're really, have a very cautious outlook on how things are going to develop.
Now you have both small businesses on your platform and the biggest
Facebook missed its expected EPS.
Especially when it comes to small business. I know you've made various efforts to help small businesses right now, but are you seeing them fall off a cliff or just stop advertising?
Facebook's crushing it, though. That was my call of the day choice.
I mean, we're seeing that. We're seeing advertising, pull back, but we're seeing it fairly even across both large and small businesses. So we know that this economy is hitting small businesses particularly hard, but we are seeing there are small businesses who are digital natives who are advertising on our platform, who are going after sort of online conversion outcomes, whether it be app installs or e-commerce transactions. So, we're seeing strength in those sorts of verticals, and that's true for small businesses as well as large businesses.
Now, are you making any changes now to sort of take all these areas that Facebook is seeing increased engagement, whether it's more video calls or people live streaming on Instagram? And are you going to be able to introduce new ways to monetize that? Because a lot of these areas with the biggest spikes in engagement aren't actually being monetized very much right now.
Well, Julia, first of all, we're really gratified that our products are helping people as they shelter in place. That's really important for us, and we're seeing that with people engaging with, Facebook Live. I've done exercise classes on Facebook Live. We're seeing people use our portal products.
Exercise classes on Facebook Live.
I think we're seeing, a ton of engagement. We'll see, obviously, as shelter in place restrictions come off, and hopefully, we're looking forward to that. Like everyone, we'll probably see some of this engagement fall off. But
Big Sweat Boy, thank you for the follow. DeRoy Beats, thank you for the follow.
Many of which have advertising. So Facebook News feed is doing well. Instagram feed is doing well. So I think we've got a lot of opportunities from a supply of advertising inventory point of view to grow the business. But demand is obviously very weak in this economic climate.
Certainly. Now, I want to get your sense of expenses.
Wow, it's raging.
That expenses in the quarter
rage
were
mode.
Lower
Bye, put.
Also, going forward, operating expenses are not going to be as high as you previously forecast. Give us a little sense of why that is, and where you see the expenses actually shifting, if they are shifting as a result of this crisis.
Sure. So, we're maintaining a strong but more focused investment program. So we're continuing to invest heavily in product development and recruiting technical talent. So we talked about adding 10,000 people in the workforce in those areas.
Dude, it's going to zoom over $1,000 tomorrow, isn't it?
Certain areas like travel, events, and
it's going to zoom over $1,000, isn't it?
We'll see slower headcount growth in our business functions. So overall, we did bring down our expense guidance range for 2020 by about $2 billion.
David, it's Sarah Eisen here. For years, at least the last year, probably more than that, the headlines and the narrative around Facebook have been around privacy concerns and fake news, toxic content, and legislation, investigations. To what extent are you guys inside the company seeing this as a moment to really pivot and convince the public that you're an essential tool for bringing information about the outbreak and connecting people to each other that could have a long-lasting
Tesla puts
impact on your
gone.
company?
Well,
Fuck.
we know that there's a real need here and there's a real opportunity for us to focus on how we can help in the COVID crisis. And we think of the three things that we can do there. First and foremost, we can help people stay connected to the people they care about. We've got 3 billion people using our products across, Facebook, Instagram, Messenger, and WhatsApp. Second, we're helping the public health response. So we've connected over 2 billion people to our COVID Information Center on Facebook. And then third, we think we can play a role in helping small businesses and the economy recover. We made our own. We're also announced that we're putting $100 million of grants towards small businesses as part of that. But more importantly, we're helping small businesses be able to have a presence online and connect with people, drive online conversions where they may have been doing, in-store
This is
sales.
fucking interesting.
So we think we have an important role to play for both people who use the platform, but as well as for businesses.
David, I wanted to ask about Messenger Rooms. Clearly, all of us are using video conferencing apps much more than we have done in the past. There have been some questions with some rivals of yours about security with some of those calls. How confident are you about the security of Facebook Messenger Rooms? And what can you tell us about your approach to privacy and whether there will be in any way analysis of what is being said, whether that's by algorithms or anything else or AI at Facebook?
Yeah, we don't listen into calls and monitor things like that from a privacy perspective, Wilfred. So really what we're focused on doing here is expanding our free video calling options that we've had for a number of years on both Messenger and WhatsApp. So Messenger Rooms we're really excited about. We think it provides a great way for people to engage. And
Shots fired at Zoom right there.
In this crisis. And then on WhatsApp, we've expanded the number of people that you can have in a video call from 4 to 8. We again think that's really important right now. Facebook Live, doing great. It's got 800 million people engaging, watching Facebook live streams.
Hold.
So,
Hold
we're really excited
for.
about the different, video offerings and the expansion of the video presence.
31 big blinds, 6 out of 24. 2 levels left of layer edge.
David, as we try to figure out how we're going to open up these economies and the path forward,
Can we talk about
one of the
Tesla,
key
please?
Features that we need, according to all the medical professionals and the leadership, is contact tracing. How are you guys thinking about that at Facebook? With such a critical mass, so many Americans and people around the world on Facebook, can you be a part of this?
Facebook
or do you worry about
raging.
the privacy implications of that? Identifying people who have the virus and letting people who've had contact with them around them know that they've been exposed.
Well, sir, I think, we're focused on where we really think we can add value from a public health response point of view. And there, again, I point to the work we're doing to connect people with information that's important for them to get. So the COVID Information Center is part of that. There's other places that I think we can make a contribution as well. But that's the focus that we have.
And one question I have is, as you think about the work you're doing around COVID, but also around your own workforce. I mean, Facebook was one of the first companies to have its employees work from home. How are you seeing this changing the way your employees work going forward? Do you think
the last one we got, it was 100 for first, 60 something for second. Right now it's 65.39. This is the last level of layer edge though. So.
Well, we don't know the answer in the long run, but I will say that we've got 95% of our
just a little 660 on demand Web Z90.
So we've got a small amount of staff who's having to go into data centers and into the offices, and there obviously the focus is on safety.
We sell this thing now.
What we're pleased with is our ability to continue to operate in this environment. We're able to ship products. We're able to, stay in touch with our business customers. We're able to operate the business, review content. So. We think we're doing relatively well from an operations perspective in this work from home environment. It means we're going to be more cautious as we bring people back into the office as well. We're going to make sure that, we have a paced approach to that. And obviously we want to make sure that the shared resources out there in terms of transportation infrastructure are for those essential workers who need to get to their jobs. If we're able to do our work from home, we'll probably be slower to roll back in.
And Dave, just a final question about Facebook's recent $5.7 billion in India's Reliance Jio. Tell us about how this investment reflects your interest in emerging markets and where you see future revenue growth coming from.
Absolutely, Julia. India is just an incredibly important market for us. It's been one of our top growth countries for a number of years. It's our largest MAU country, monthly active users. So, India is right at the center of the long-term opportunities for Facebook and the whole family. And obviously, WhatsApp's an important part of that as well in India. We're really excited to be partnered with Jio platforms, with Reliance. Jio's been an incredible story.
Go to the Tesla numbers. God, they're killing it.
It's great to be partnered with them. We think there's a lot we can do with WhatsApp and with Jio in India. So, we're very excited about that. We were able to make that investment even in this tough economic climate because of the strong balance sheet we had. So, we're really pleased to be able to move forward with it.
Great, Dave. Thank you so much for joining us, and we'll let you get off to... Thanks, Dave.
All right, thank
Sarah.
you.
Facebook
Thank you, Julia Borsten.
Up about 9% after hours, adding to the 6% gain today. So extraordinary kind of...
Jesus! Look at Tesla raging.
Another set of earnings results or a deeper dive into them. Tesla's numbers, Phil LeBeau.
Hey, Wilf, the reason the stock's moving a little bit higher here is obviously coming in with a profit when many people were expecting a loss. Profit of $1.24 a share. The estimate on the street was for a loss of 36 cents a share. As always with Tesla estimates, they're all over the street. Let's run down some of the key metrics that came out in the report. Remember, they always report their quarterly deliveries in advance, and it came in as expected. Remember,
they're killing it.
Going to be the case. Just
they killed it.
Vehicles delivered in the first quarter. No change in the production guidance from Tesla, which is a bit of a relief. I think some people thought perhaps they might dial back their expectations a bit, but that is not the case. In terms of their cash on hand, they increased it by $1.8 billion. Remember, they had a capital raise during the quarter. Now have $8.1 billion in terms of cash on hand. Automotive margins, 25.5%. Then you've got the near-term profit guidance being put on hold. Now, some people will look at this and say, makes sense given everything going on with coronavirus. I'm not sure it's going to have a whole lot of impact on Tesla shares after hours. And finally, the Tesla Semi. Remember that truck that was expected?
They're killing it.
First deliveries this year. That's going to be pushed out until 2021. So again, that's why you've got Tesla shares moving higher. Overall, guys, at first blush, this is going to be better than many investors expected. But as always with Tesla, it's the earnings call that really moves the stock, and that will be starting at the top of the not at the top of the hour, 6:30 Eastern time with Elon Musk.
6:30 Eastern.
Morning. What news, if any, comes out of that call?
All right, for now, a big shooting higher move in the stock here, up 7.4%. Phil, thanks. eBay earnings also out. Deirdre Bosa with those numbers. Deirdre.
Raging.
Hey, Sarah, it's a beat on
Matt Taggart, what's going on?
Coming in at $2.37 billion, higher than the $2.32
Good thing we only bought one.
Expected.
Jesus.
Earnings per share also beating by 5 cents, coming in at 77 cents a share. Gross merchandise volume, this is key for any e-commerce company. The estimate was $2.34 billion. That's coming in nearly $1 billion higher at $21.3 billion. Keep in mind, though, that this
Wiedemann's, what's good?
And it's expected to decline again this year. Looking at the forecast, better than expected for both Q2 and the
Damn!
So that is positive. In terms of capital allocation, share repurchase plan will be completed later this year. The cash dividend is also intact. On COVID, some pretty generic comments from management saying that their strong balance sheet and stable cash flow gives them strength and flexibility in a tough economic environment. Shares, they were initially down by nearly 4%. They're now down by less than 1%. And it may be because...
Happy as a Tesla employee, watching my options go up. We have it in our long-term portfolio. We're not totally against it. It was kind of, it was a hedge for us. So I actually don't really care. And we also shorted it when it was at the peak and made over $4,000. So we just gave back 10%, not even, because obviously we'll sell our put.
And you can tell they're not really reacting much. They're down a little bit lower in the after hours despite beating on both.
But yeah, we do hold Tesla long.
Thanks so much for that. Thanks also
We do hold Tesla in our long
account.
Today.
A lot of big after hours earnings.
It was a little hedge we did. Nice little hedge.
Microsoft, Facebook, all markedly higher. And up next,
What
much
are you guys
more
doing,
analysis
huh?
of those movers.
What are you
With
animals
various
doing,
analysts
huh?
joining us. And as a reminder, you can always watch or listen to us live on the go on the CBC app.
Huh? Hopefully the call goes good. SPY is soaring after hours. Holy shit. Holy shit. So is ADMA up to 317. Let's go, dude. Tomorrow we're going to make some good money. Who cares about the one Tesla put? Who even cares, dude? It doesn't mean anything to me. Most of the purchases for cars were pre-purchased online orders. Also, most don't talk about it, but energy is how Tesla stayed afloat forever due to how profitable that market is for us. Damn, that's what's up. Dude, Penn is raging for us. Yeah, dude, congrats. That's a good job to hold, too. Dude, wow. How does Penn do it? It's true. My plan is to retire there due to stock options. It's a great idea, dude. It's a great idea. I can't hate on it at all. Let's see what the call does. The call's not till 6:30 though. Obviously they beat on everything, so. XPI me. How's the UAVs doing? UAVs online. Qualcomm up and then down. Oh my goodness, it's
Welcome
so
back.
crazy.
Time now for coronavirus update with Seema Modi. Seema.
Sarah, let's start.
Facebook up and
on
down.
Death toll. The U.S. death toll from the coronavirus has gone above 60,000. The number of fatalities has doubled in the last 2 weeks, even
Amazon
though the rate of
Wildin'.
new deaths is slowing in hotspots like New York. In Washington,
Shouldn't the QQQ be going raging right
to go
now?
along with Senate Majority Leader Mitch McConnell's efforts to get virus liability immunity for businesses to make them less fearful about reopening. And NFL Commissioner Roger Goodell told league employees to expect furloughs and salary reductions according to a memo seen by CNBC. He's also giving up his own salary for now. Volkswagen is indefinitely postponing plans to resume production at its Tennessee plant. It wants to further assess the availability of parts and market demand. Production had been scheduled to resume on May 3rd.
Rage
and Norwegian Cruise Line
mode.
furloughing 20% of its workforce through the end of July. Last week, Norwegian Cruise Line canceled all of its cruises through the end of June. CNBC confirmed last week that it was
No more
also
shorting
looking at
Tesla.
incentives
Fair
to
enough.
explore financing options.
Fair
As always,
enough.
for more coronavirus coverage, head to CNBC.com. Sarah?
Well, we call. We have aces.
Seema, thank
We have
you.
an ace
New
and
hopes
an
for
ace.
Gilead's potential coronavirus
King
treatment,
Jack,
helping that
Queen
stock
7,
and
no
the
hearts,
overall
no
market
heart.
rally today. Meg Terrell has the details. Meg.
All us, baby. Let's go.
Hey, Sarah, this was a trial we didn't expect to get the results from until next month.
My
But they came in
God.
early. Dr. Anthony Fauci
This thing
from
is
NIAID,
ripping
of
it.
course, which ran the trial, saying that they have a responsibility, an ethical responsibility, if a trial is positive for the drug, to tell the placebo patients that the drug is working. So here's what the trial showed. It enrolled more than 1,000 patients who are hospitalized. And what the drug did was accelerate the patient's time to recovery. So they showed, on average,
It's not stopping.
drug group who got remdesivir a recovery of about 11 days versus 15 days for those on placebo. There was also a trend toward a mortality benefit, meaning the drug could potentially save lives. I say a trend because it was not statistically significant,
Taste
but it showed
the
that
poison. Thank you for the follow.
There were 8% who passed away in the trial versus 11.6% on remdesivir. Dr. Anthony Fauci, as he disclosed those results in the Oval Office,
TLSKB, thank you for the follow.
Remdesivir has a clear-cut, significant positive effect in diminishing.
Did you get into poker first or stocks? Poker. I just started trading stocks like a year ago. I own real estate. I own a rental property. I own the house I'm in now. I started in Robinhood in like January of last year, buying fucking cannabis stocks like an idiot, and then we shorted Tesla here. This big spike was shorting Tesla for like $4,700 profit when it first hit 960.
It essentially allows doctors
then we made some other shorts, and we also have this dividend account on M1 we started in September 9th. So we're just learning. We just pour into the accounts.
In terms of manufacturing it, Gilead has already started working to speed that up and to ramp it up. And supply is going to be a big question here. They've said that they can supply about 140,000 doses by the end of May, but that's at a 10-day course. And what they also showed today in Gilead's own trial is that a 5-day course may work just as well. So that would double the supply of this drug, guys.
Meg Terrell, as always, thanks so much for that. Still to come here on Closing Bell, we'll get back to these after-hours earnings moves. Facebook up more than 10%, adding to a significant gain already. In the actual session today, it was.
I showed the stocks weeks ago, not throwing around much money, but up so far, that's what's up. A little bit at a time, man. I started $100 deposits on all these accounts. You know what I mean? Except for this TD Ameritrade, I made so much on Robinhood, and then I got froze for day trading, so I took the money out of Robinhood and put it on here. Say what Elon Musk is saying right now. He's probably like, fuck you guys. Just got my stimulus check. That's what's up. Starting to pull back now. Wiedemann's, where do you work at Tesla? What do you work at, like a plant or? Ocean, let's fucking go, Ocean. How you doing this afternoon? Microsoft raging. Facebook raging. Tesla raging. Start pulling back because of something.
Shares of Microsoft moving higher after reporting its Q3 earnings, beating on both the top and bottom lines. Revenues up 15%. One of the stocks that continued to power this rally. Alphabet, Facebook, Microsoft are actually now all higher so far for the year, going against the market there. Joining us now to break down the numbers is Timothy Horan from Oppenheimer. Tim, expectations were high going into this report.
I work at the Gigafactory. I work with robots. That's tight, Wiedemann's. That's tight.
It's all because of their hybrid cloud strategy. They're in the perfect position to help enterprises move to the cloud, and that's incredibly important for enterprises right now because it's great for disaster recovery. It enables employees to work together a lot better, suppliers, customers, all because you're moving your IT to a centralized cloud, and you can access it much more easily from remote locations. And they make it seamless and easy for CIOs to do this.
It's more than just a short-term benefit for some of these cloud-related companies with more people working from home and engaging on the internet, but also a longer-term implication if various companies now having experienced the possibility of working from home dramatically reduce their office space.
Waiting to verify bank deposit, then referral will be complete. Let me see that pie.
So said in their press release, they saw basically 2 years worth of cloud adoption in 2 months. And the way
That's the link to the
is
pie,
really
sir.
This is recurring business model. So the sales they saw now will really continue to pile on over the next kind of couple of quarters. So they should have a very few good quarters ahead of them, and frankly longer term, a decade ahead of them. And we also surprisingly saw quite a bit of operating leverage in the model this quarter, despite all the disruption. And I think we're going to see a lot more of that over the next couple of quarters, because it's actually a little different.
I think this is the first Q1 Tesla's ever been profitable in the history of the company. That's pretty dope. That's pretty dope.
That's highly scalable with massive amounts of operating leverage.
Mike Santoli in the conversation as well. Mike, this was one of the outperformers. The fact that it's actually now gone positive for the year 2020 shows you about where the market thinks this stock has been, and the fact that these numbers just proved it. In the line, there's a line in the press release that says COVID-19 had very little impact on our revenues. You don't see that across many companies right now.
And you know, you also don't see what's probably surprising to most people, that the largest stock in the market after hours is trading only 4% below its all-time high from a couple of months ago. And that all-time high for Microsoft, by the way, represented a pretty high valuation.
That's pretty wild.
To its own history, and it seems like it was the can't lose, everybody loves it, bulletproof stock. So that just tells you what an exception to the overall kind of macro picture and the broader market that this company is. And you know, you don't want to say that that somehow the market is being too optimistic here, because it really is keying off of what's happening in the business and with a view to what might or might not change. And it seems like not that much has changed.
And so, Tim, the stock now is up about 15.15% year to date. What are you going to be looking for in the call, and how will it inform what your current recommendation on the stock is, which is what?
Oh, we do have a sector outperforming the stock with a $195 price target. The call is critical. We're looking for body language. We're looking for
body language.
And that body language and guidance is really going to dictate what happens to the stock tomorrow. They do have some businesses that can potentially be under pressure. They have a little bit of advertising revenue. They obviously sell some hardware to consumers. LinkedIn could maybe see a little bit of a slowdown. So I think they're going to be cautious on the guidance, but they can only be so cautious versus the results that we're seeing here. I mean, they just beat earnings by 10% on a very widely followed stock. And, you know, we think what they've said here on 2 years worth of cloud sales in 2 months, this is really going to build up into very strong revenue the next 6 months with very high
Jesus, look at Amazon ripping it.
But they're not going to be cautious enough to really reduce the stock price.
So do they give, it doesn't look like there's any guidance in the release. Are you expecting to hear that on the call? Is there any chance they pull guidance like so many other companies are doing? And what would that say about where they are?
They said in the release they'll give it on the call. They always give it.
We made a couple grand. I think we made like a G on Wendy's. We're out of it, but it's way up. That was a good play.
Timothy Horan, thank you for joining us. With Microsoft shares up 3.6%.
Wendy, we should have held that. We definitely should have held that. We would have made way more.
Tesla shares jumping after reporting results moments ago. We'll dig into that report.
There we go. Let's dig into Tesla. They killed it, dude. They killed it. Strat is to just continue to deposit every month as often as you can, Donnie K. Golden. Just keep piling it in there and pay attention to your stock. Obviously, pay attention to what you hold, you know. But pile it in there and let the dividends roll over. Let's really get into the numbers here. We have 21 big blinds. We're like 6 away from the money, does it say? How many does this one play? Pays 7. There's 15 left. We're 8 away from the money. Oh no, it pays 9. Okay. $78 to first.
Let's have a check on some of the biggest movers after hours, as we've been discussing. Microsoft up
Tesla.
4%,
Tesla's up 8%.
Facebook up 9%, beating again both lines in monthly active users and daily active
buddy.
users.
We're screwed. We need help, little dude.
Increase. In fact, the EPS
Someone
line
help
Facebook,
us.
A slight miss. eBay topping estimates and issuing strong full-year guidance. Qualcomm also beating on both lines. Tesla also both lines, including a big profit beat on the bottom line. As you can see, all moving higher, other than eBay down about 1%.
It's been a positive session for after hours earnings. We've got some breaking news now on Exxon. Dom Chu with the story. Dom.
All right, so Sarah, Exxon shares are up 1% in the after hours session after
Tesla crushing all new highs. We're so fucked.
Session, and the reason why partly is because Exxon
How do I sell these?
Quarterly dividend of 87 cents per share. That means they did not cut it for a stock that has seen a 32% decline year to date on falling oil prices. Still, Wilfred, Sarah, this move by Exxon, not a cut, a maintaining of their dividend. I'll send things back over to you.
Okay, Dom, thanks very much for that. Tesla shares, as we said, jumping about 8 or 9% after hours, posting adjusted EPS 124. The expectation was for a loss. Revenue top analyst estimates just about. Joining us to break down the numbers, Jed Dorsheimer, Managing Director and Analyst at Canaccord Genuity. Jed, thanks for joining us. Clearly the bottom line is what we're focusing on.
Yeah, I mean, I think it's the bottom line and then the commentary around guidance, the specific commentary that they'll still deliver over 500,000 vehicles. So there's a lot of moving parts to this one, but net, I think that's what's driving the stock higher.
What did we learn about cash flow, Jed, which is always important with this one?
So that's going to be the big question, and we're going to need the call to kind of dig into that. The free cash flow was, I think, just under $1 billion, and they've got $8 billion in cash on the books. So right now, that looks like they're well positioned. But what we need to figure out is you only have Shanghai operating, and so we need to understand the carry cost of Fremont, which is shuttered right now. And I think that's going to be the key investor questions on the call.
Jed, Q1 deliveries clearly was strong, and we got an update on that a few weeks back. It doesn't look like they're having to reduce estimates for Q2 deliveries. If they deliver on that, is that better than you would expect?
Interesting.
Yeah, I mean, we moved to a hold on the name in February 6th, on the COVID impact. At that time, it was still China related. So I think if they're able to do over 500,000 with Fremont being shut down for the better part of a quarter, that would certainly be better than expectations. Again, we're going to have to dig through a lot of this, and we need to see when the economy reopens what people's appetite is going to be for buying vehicles.
Yeah, I was just going to ask, Tesla during a recession, are there going to be demand questions?
Certainly. I mean, I think IHS, one of the other market research firms, is projecting auto sales to be down by 50% in North America. So
that would include Teslas, right?
Tesla's better positioned being on the electric vehicles and where things are
going in the future.
They're better positioned in the marketplace
for the future.
They're part of the solution going forward. And
I agree with that.
A GM or one of those companies. But that being said, you're still going to have people aren't sheltering in place right now, wondering about should I buy a Model 3 or Model S, or I don't think most people are. And so we need to see how that plays into the picture.
Jed, thanks so much for joining us. We appreciate it. Tesla moving higher by about 8 or 9% after hours. We've got some breaking news on Boeing. Phil LeBeau's got it for us.
Hey, Wilf, S&P is cutting the credit rating for Boeing from BBB to BBB minus. Now, that is the last notch of investment grade, so it's not been knocked down to junk status. Still investment grade. The outlook is stable. We're waiting for the full report from S&P so we can tell you exactly what they have to say here. Not having a whole lot of reaction on the stock. Again, S&P cutting the investment rating for Boeing from BBB to BBB minus. Guys, back to you.
BBB to BBB minus, huh?
The CEO of Boeing this morning on Squawk on the Street. Did he confirm anything about whether they're going to go to the debt markets versus the government? I know he was a little bit reluctant to say, but I guess this comes into question, the rating, when it comes to the bond market and whether they're going to have to raise a bunch of cash.
Well, it certainly will have some type of an impact. How much it's going to be remains to be seen. He was pretty clear that they look to tap the public markets. Now, that did not mean that they are closing off any thought of working with Treasury and taking out potentially a loan from the federal government. I think the key there, Sarah, is they want to know exactly what the terms will be with any money that they take from the Treasury Department.
I'm with you, Edelmans. I'm long-term, I'm in it, bro. Long-term, I'm in it. It's in here. Trust me. I'm not against it at all. It was a hedge, little hedge bet.
That's really the one that it's pretty clear.
I'd like seeing a little dip while everybody, you know, gas is cheap. Nobody's buying a car right now. It made a little bit of a sense as a hedge bet to me. You know what I mean? I understand I could be completely wrong. I'm okay with that.
Debt markets in the last month or so gives investors hope.
I'm okay with that, dude.
If they do have to go to the government, it'll only be on reasonable terms.
For sure. And I would also say that, you know, Boeing looking to raise more debt potentially.
30, 40 bucks. Pen sniffles.
That additional leverage would enable it to preserve the investment grade rating. That would be my guess, that there's kind of an interplay between the companies and the debt rating agencies to try and make sure that everyone's on the same page about what the implications might be. And if you're within investment grade, whether you're BBB or BBB, this market's not making tremendous distinctions.
You're not wrong in my opinion, just a quarter too early. Q2 might be not be as profitable. That might be very true, Wiedemans. That might be very true. I could be a quarter too early with hearing the reporting on it. We'll see what they do on the phone call. If they're shaky on the phone call, it kind of makes sense they might drop. Other than that, I'll take my little bit of a loss, no big deal. You know what I mean?
That's right. He hasn't even started buying. Up next, honoring everyday heroes. Mattel making a big effort to raise money for frontline healthcare workers. The details and the rest of your good news.
I think you misread LUI. What is LUI? Microsoft just fucking crushing. Pen to the moon too. Sometimes, Sniffless, it just depends. It depends. Let's go. I'm all in. I'm all in. You want to play the game? We're all in. They fold. We take it down. We had nines. We had nines. We had nines. Oh, Bud? Way less. Like half that. Way less, way less. The chainless one, thank you for the follow. What a rage up. What do you want? Are you locked down here or something? What, you guys can go out? Somebody needs to let you out of here? You guys locked down here? 1 second, guys. Tesla's still going higher, and I can't even get out of my contract till tomorrow. Now I'm just stuck with it. It's going to be like, you lost a fuck ton, sir. You are a millionaire? No way, the chainless one. No way. I wish. I wish. That would be tight if I was. One day, hopefully, maybe?
Time for our daily good news rundown, where we highlight positive stories in the wake of the pandemic. Honeywell, for instance, shifting its manufacturing operations at 2 chemical facilities to produce hand sanitizer for government agencies suffering shortages. Utah launching a program
Bulls
to
are
issue
shaking
free
hands
face
selling now.
masks
Wait,
to
what?
every resident of the state who doesn't already have one.
And Mattel unveiling new action figures to honor everyday heroes on the coronavirus front lines. All net proceeds
Where the hell is the money pouring into the stock come from?
First responders first. And World War II veteran Captain Tom Moore made headlines earlier this month when he raised millions for UK healthcare workers. The 99-year-old has received more than 125,000 birthday cards from fans, including Prince William, Duchess Kate, and England football captain Harry Kane, ahead of his 100th birthday.
For his target 400.
As is always the case in the UK, he'll also get a birthday card from the Queen.
Wow. That's quite a collection. Up next, your Wall Street look ahead. We're going to break down the biggest earnings report every investor needs to be paying attention to after a crazy session of after-hours earnings, which will hit again in just a few minutes.
Wow. I'm not guaranteeing it, but I've seen huge fades during conference calls. Who knows what's happening here? Started investing less than 2 weeks ago. That's awesome. That's what's up. Never too late to start. Never too late to start. Spy raging. Any advice? Start small, open a dividend account, cost average your way in, buy quality dividend accounts, don't shoot for the moon trying to double up overnight, you know what I mean? You're not buying more shorts in the morning, there's no way. Tesla is popping off. Slow and steady, my man. Are you day trading? Yes, I day trade. We're live every day around 9 a.m. to 4 or 5 p.m. Today we stayed a little longer.
Stocks making moves higher.
It exploded like crazy.
Just got a lift after Wynn CEO made some remarks in this ongoing event with President Trump, saying he hopes Las Vegas will be reopened by Memorial Day, which is just a few weeks away. Hard to believe. Those stocks all getting a little bit of a boost, Wilfred, after hours as the president hosts a number of business leaders to talk about reopening the economy.
Dude, Penn's gonna rip tomorrow.
Be in Vegas on Memorial Day.
Probably not.
Right.
But I think the point is, look, these are encouraging signs. I think it's encouraging to hear that there are good results happening with a lot of these drugs. And by the way, remdesivir isn't the only blockbuster drug that's out there. There are a number of other trials treating anti-inflammatory symptoms and all sorts of other things. Even unheard of companies like Fluorostem or Fuji.
We're trying to make this our full-time job, though.
So We're just starting to hear these results over the next few weeks.
Mike, very quickly, we're going to see the NASDAQ open positive tomorrow?
Yes, we will. I think the question is, Amazon, will that be kind of, the crowning moment for this rally? We get the report tomorrow. Every reception so far to the FANG stocks has been positive.
We are out of time here on Closing Bell. Thanks for watching. Melissa Lee, got you covered. Thanks.
Fast Money starts right now. I'm Melissa Lee. Our traders tonight, Guy Adami, Tim Seymour, Karen Feinerman, and Pete Najarian. Coming up on Fast, a flood of earnings hitting the street. Facebook, Microsoft, Tesla, all on the move, all surging after reporting results. We'll break down the big headlines.
All surging.
A Gilead game changer, what the company said about its experimental coronavirus drug that sent stocks surging today. And later,
Penn is
Grammy
ripping.
winner DJ Khaled is here, and he's going all in on the fight against the global pandemic. The big money he's bringing in to help those most in need. But we start off with an earnings alert on two major tech titans, Facebook and Microsoft, both on the move after reporting earnings. And we've got full team coverage lined up for you. Josh Lipton standing by on Microsoft. Loop Ventures, Gene Munster's gearing up for Facebook's call. We kick things off, though, with Julia Boorstin for more on Facebook's big quarter. Julia, quite a move.
Quite a move, Melissa. Facebook
Who's going to win the sports
on better than expected
betting fight, you think, Rand? I have no idea.
Dave Wehner reassured
I have my money on Penn.
the outlook is uncertain.
My money's on Penn.
Is stabilizing so far in April.
How's D King doing?
We're not immune to this from this crisis. We did see a steep decline in advertising revenue starting at about the first week of March, and that sort of continued. Now we've seen some more recent stabilization. As part of the earnings release, we did include information about the first 3 weeks of advertising performance in Q2, so in April, and that's about flat year over year.
Facebook also lowering its expense guidance for the year to between $52 billion and $56 billion, down from a $54 billion to $59 billion range as the company spends less on.
They just said something about Win said something about
user growth and engagement.
Yeah, Tesla killed it, oven mitts. I got fucked.
2.36 billion people using one of its apps every single day.
I mean, we'll see how they report on the call.
They will lose at least some of that increased engagement when the stay-at-home orders are lifted. Melissa, back over to you.
All right, Julia, thank you. Julia Boorstin. So we go to Guy Adami first. This is an extraordinary move in the after-hour session. Let's be clear. Between Facebook and Microsoft, we are talking about 7.4% of the S&P 500 ripping higher in the after-hour session.
Damn.
Staggering move on top of what has been a staggering move. So now the question is, how do you trade it? I think the all-time high was 224 and change back in January. It absolutely feels like it wants to go
about Penn, Mr. Stoney. What about it? I just think Barstool Sports and their sports books and their owning of physical properties as well as the Barstool Sports betting app is going to kill D King. They also pay a dividend and they've been around longer. D King hasn't reported. Yeah, Microsoft is killing it.
Take a powder, I think, and see what happens. Listen, if you listen to them carefully, they said we're not immune from the potential reduction in ad spend. So I think if it gets that 225 level, you pull the ripcord and live to fight another day, Mel.
Not immune, but to think that the most recent 3 weeks in April were flat year on year. I mean, that is extraordinary to think that basically year on year. Same, Tim.
Yeah, I would have. Definitely, you have to flag that number. It's amazing to think that they're flat, and that. So this is more than stabilization. This is really actually seeing no change in their business. If you look at the engagement, that was up a little over 9%. Guy pointed out those average revenue per user metrics, which are really important. So I think you get back to a place with Facebook and you decide what multiple you need to put on the stock, because relative to itself, Facebook here is somewhere 27, 28 times for a stock that's been trading 21, 22 times over the last couple of years. So this has been a V-shaped recovery. Let's be very
Tesla
clear.
is taking all 400 of my dollars. They're like, we're taking all that shit, bro.
So you start to wonder the delayed response to ad revenues, which we have to expect. It's one thing to have that stabilization, but to expect that the advertising revenue trends are going to hold in there, and this is one of the first stocks people want to go to. It's part of the reason why the reaction's been so strong, because this is extraordinary in the short run, but I'm not sure you want to chase it.
That's true. D King is already in the running. I'm not against it. I'm not hating on it. I mean, look, it's up like crazy.
But Karen, if you think that Facebook is the place to be, then maybe ad budgets go down.
When things IPO like this, I like to wait till they report numbers, till they report a quarter.
Right.
You know what I mean?
Down less. I mean, the flat year over year is pretty amazing. But just when I step back and think about what were some of the things that were weighing on Facebook before the pandemic, it was revenue growth, the pace of revenue growth, which I
right
think
now,
they
Penn
addressed
stock
really
is
nicely
killing
here,
it.
considering the global environment. And then it was also expenses, which oddly from this, they're actually going to be able to reduce expenses. And then the third thing was the political climate surrounding Facebook and others on privacy and issues like that. And what antitrust sort of actions would be taken. I think those latter ones are
Shooby Jagger.
completely gone. So if you remove that headwind from them and think, all right, they were flat in April, year over year. So if just a year later, and this
Thank
is where
you for
they
the
are,
follow.
I think that's pretty good. So I'm long. I do think it's been quite a sharp, very sharp rebound. That makes me a little hesitant, but I think this shows just the power of that business. And remember, balance sheets like theirs, like Google's, like Microsoft's, are where you want to be. So I'm going to hang on to it. I'd love to hear what they say on the call. I'm very impressed so far.
The context of the move, Pete, I think that's important to keep in mind, and that is it bounced significantly off in March 23rd.
SPY is ripping up.
20% or so. It was up 6% in the regular session today, and then in the afternoon.
Carnat Twitch, not my city. Thank you for the follow as well.
Now, in terms of Facebook's valuation,
my May 1st SPY puts are toast.
Assuming that flat year on year for the most recent 3 weeks.
Supposed to be Shinobi.
I'm not sure if that's
Jaeger, like Ninja Warrior. Lol, what's going on?
I don't know that it's the coast is clear, Mel, but I think what we're seeing here, and everybody's using the word stabilized, and that's because that's the
Penn is murdering it, Poker Chef Jeff. We took a put out on Tesla though, which is failing hard. We gave back some of our Tesla winnings, basically.
People wouldn't expect them to, and I think part of that is because we talk about the verticals all the time. So when we talk about the verticals, it's not just a Facebook story; it's the other companies.
Savage, look at that. They destroyed us on that one. That's okay though. No
the usage growth in those throughout the month of March was
ADMA looks like it's going to be up. Penn is raging in after hours here.
Oh, and by the way, the idea that they want to go in competition with Zoom and the effects that had almost immediately in terms of Zoom stock price versus Facebook's, I think that says a lot about who they are. And I
We're
think
3 of 10 here. We just took second in one of these 660 on-demand, Poker Chef Jeff. These things are little bankroll builders.
Cash that they've already got on the books, and now that's over $60 billion, plus very minimal debt. This is a company that makes so much sense. It's why so many have been flocking towards it. It's why it had made this big move off the lows before this earnings report. Now, to Tim's point, though, I would agree. I don't know that you want to chase it here. With the 224 high or thereabouts, I think you're looking at a stock that's really traded almost to perfection. So I feel like there's more room to the downside from here than the upside. Doesn't mean I'm going to sell out of my position, but I certainly don't.
Doesn't mean I'm going to sell out of my position.
If I wasn't in the stock, this is not the time that I would be approaching it to try to put in a new position. I think this is something where you manage a position, but I don't think this is time for a new position right now here.
All right, let's get more on Facebook's.
What's TOS?
20 friend with Ventures, Gene Munster. He's been
curious if my SPY is on another endless bullish run. Oh, definitely it is.
So Gene, you went into this report.
Seems like it.
Near-term, neutral, long-term on Facebook. Does this quarter change your mind?
Well,
Thinkorswims, yeah, I use Thinkorswim, yes, this is Thinkorswim, yes. Sorry, I just started Thinkorswim when I got locked out for day trading on Robinhood but it's not a Robinhood thing, it's just I just did it.
Your team has properly enumerated that. I would point out that longer term, I do see there's a deja vu aspect to this related to Google too.
But right here at the end of January, early February, and March, we were making a bunch of money shorting stuff.
What are the types of businesses that can be trillion-dollar type of companies? And this, of course, is
nice.
an
We're in the money here.
Business. And when you ask the question, how do I feel longer term about this? I'm still neutral. I still believe that for those winners, this is now going to be a $600 billion market cap. To really be $1 trillion, you have to change the world beyond what is going on in advertising. Yes, they have growth drivers around Messenger and WhatsApp that undoubtedly will boast the revenue growth.
Really?
A solid business.
I just got to it. Like, literally, I just started buying stocks a year ago in January 2019.
Around investors and how they view this story longer term.
So I own a rental property. I own part of a microbrewery that's about to open. It's not open yet. I own a very small percentage too. Not even 1%.
The most recent 3 weeks in April stabilizing, Gene. I mean,
dude, I'm fucked on that Tesla put. Just take all the money.
Advanced advertisers have to lock in whatever they're buying, and at what point do you say, you know what, people, if they are going to cancel, we're seeing it in the results.
Microsoft peeling back though.
You can we did back into the numbers. So in Google's
at
case,
what point does Tesla peel back?
Up 20% to flat over the final 3 weeks. In Facebook's case,
I love Thinkorswim. I love this platform for sure. I'm gonna slowly phase out the Robinhooder. I might just file the paperwork to have it all brought over to.
This did see an impact greater than what.
Take off for now. We look forward to future streams. I appreciate it. We'll see you, man. We're here every day. We're here every day.
In their mission, this bounce back is impressive, and have to give them credit for that. I just think that the central question for long-term investors should be, what is their encore? Messenger is probably not that. I do think one piece that Facebook can be transformative and really advance how humanity interacts is what they're doing around virtual reality and augmented reality. That to me is the big lever. That is something, as they progress, that I could get more optimistic about.
Tesla's killing it.
Karen, I'll bring you in and I'll pose that question to you, and you can also ask Gene about this. But in terms of what is their next encore? I mean, when you were
this big gain here, was this $4,000 gain, that was fucking a Tesla put though. So.
Well, I think payments in what I'm not talking about Libra. I'm talking about they're getting in the middle of transactions. That is one area of growth. I will see how they monetize, WhatsApp and virtual. I mean, virtual reality has been sort of for a while now. Since Oculus, which I don't remember now how many years back that is. So that's not sort of. I don't see that in the very near term, but I guess what I think more about is
getting my face ripped off in Tesla.
Would a company like this have in this kind of environment, instead of and that being somewhat of a floor for them, as opposed to where's the next giant revenue growth going to be from?
Gene, quickly, you want to answer Karen?
Yeah, it's more about augmented reality. We've been looking down at our phones. The future, and Facebook talks about this, is figuring our heads up with glasses and augmented reality. That's the real fundamental piece here. And I think that for investors, ultimately the multiple is about what's on the come in the next few years. If you look at Google's lineup versus Apple and Facebook, it needs more than just WhatsApp and Messenger.
All right, Gene, we'll say goodbye for now. We'll talk to you about Tesla in a few minutes. Meantime,
Tesla!
Microsoft, that stock is popping after reporting an earnings beat. We get to Josh Lipton with the details. Josh.
So, Melissa, I checked in with a Microsoft bull, Kirk Materne over at Evercore ISI. I just wanted Kirk's quick take on the quarter. He says good quarter.
Is Snap killing it?
It's commercial cloud.
Oh yeah, it's bringing Snap up with it, isn't it?
Cloud business, in his words, marching forward. He does have questions about guidance here, given the uncertain IT spend.
Dude, I gave up on this. That's good. That's good.
Did decelerate from 30% to 12%. So he wants to know how much of that is COVID related. He's expecting to
this group hates on Tesla.
Guidance range on the call. Just quickly through the segments, Melissa, revenue in productivity and business processes, $11.7 billion. That was better than expected. Revenue in intelligent cloud clocked in at $12.3 billion, also better than analysts have been looking for. Within that segment, the cloud service Azure saw revenue growth of 59%. Of course, that's where Microsoft goes head-to-head with Amazon's AWS. And revenue in more personal computing also beating forecasts at $11 billion, increasing 3%. Call kicks off at
it just keeps going.
Melissa, back to you.
When you mentioned commercial bookings, Josh, does that include cloud?
So I'm not sure. I hope to get more color on the call there. I did think that was an interesting metric that Kirk pointed out, that it did decelerate. Obviously, bookings revenue downstream. So hoping to get more color on that from CFO Amy Hood on the call, which kicks off in about 15 minutes.
All right, Josh, thanks. Josh Lipton. Pete Najarian, I go to you. You've been a longtime Microsoft fan.
Yep, I like this name, and I love what they just put up. I thought the quarter was really impressive. I think from everything across what Josh mentioned, a couple things he didn't mention. Teams. I look at Teams and the fact that they absolutely have gone right after Slack and others to compete in that market. and not only compete but win in that market. I think that's really impressive. But on top of that, LinkedIn actually had.
I need them to say some abysmal shit like sales are way down on Tesla on the call, right? I'm fucked. Can the call even turn this around? Is that possible? Has that ever happened?
Move a little bit closer and a little bit closer from a market share perspective, and I think that's really important.
Like, is it even possible?
We'll hear more about Amazon in the future, but right now I think you could not have presented much better of a quarter given all.
I haven't cashed out of TD Ameritrade yet, but I would imagine that you can just cash out directly to your bank account like Robinhood or anything else. I would imagine it's just as easy and there overnight. You know what I mean?
So fast into this number, and yet still, I think, got better than people ever would have expected, and that's why we're seeing the stock up as much as it is.
COVID has had a quote-unquote
does, but not when Elon pumps his own stock. It's true.
Revenues, and I thought that was pretty extraordinary, Guy, until you really think about when CIOs greenlight deployments, right? I mean, they're not. I don't think that they're going to pull the ripcord on things that are mid-deployment during the quarter. I mean, the proof will be probably in this upcoming in the next couple of quarters.
And things that are essential. And then you look at it, and Pete spoke to it, but one thing he didn't mention was operating margins now approaching 69%, which is a pretty astronomical number. You know, the knock on Microsoft.
What's up top here?
Correctly, has been valuation.
$78 for first. There's 9 remaining. We're barely in the money here.
Would you rather Facebook or Microsoft? Obviously, two very different companies. I'm more inclined to stay with Microsoft here. You know, this is one we actually did a good job with. We thought it would trade down to 140. It got down there, if you recall. That was sort of the level that we topped out last summer into the fall. Made a lot of sense. It's bounced from there. I think 191's the all-time high. You know, I think Facebook is going to fail at its all-time high, and I think there's a very good chance that Microsoft continues through it. So I thought it was a great quarter, and I think there's further upside for the name.
Amazon, by the way, not that Amazon is directly related to either of these names, is up 1 3/4%. But I bring that up, Tim, because we thought that there was this reversion trade out there, and now we've got MAGA, we've got the biggest names on the index, all tech names, posting better than expected earnings so far, and the other ones riding the coattails of the better than expected earnings. Do we go back to growth is it?
Pretty extraordinary, and you talked about the weighting of the S&P here, and if you look at Microsoft and Facebook.
All right, if we get this $1,000 a month stimulus, I'm ripping it in half every month and putting it in blue chips. Let's fucking go, Danny K. Let's go, baby. That's the way to do it, my man.
Right, that's the triple Qs.
You will thank yourself 10, 20 years from now.
Yes.
You'll be like, damn, that was the smartest shit I ever did.
For the market, and I know we're going to talk about this when we get to Gilead later in the show, but the impact on those stocks that were really shut down on a longer term, kind of quarantine dynamic for the economy in the country are the ones that are really flying high. So I think we are at difficult valuations for these mega cap tech stocks. I think we were 2 months ago. But I do think that the balance sheets that are very defensive, these two companies, I mean, Facebook has $60 billion of cash. They're spending $6 billion in India in the middle of a crisis because they can be aggressive here. So these are defensive stocks no matter what you want to say. But no, I don't think... I think the story right now for the market is that we are coming out of this faster if there are vaccine certainties, or at least the question of people getting back to work. That's so much better for the value trade right now than it is to me for mega cap tech.
But MAGA plus F, Karen, and I'll create a sub basket for you because certain stocks are just simply not in your wheelhouse in terms of possible investments. But Apple, Facebook, Alphabet. Are you getting concerned about these sorts of valuations here?
I mean, I guess I'm concerned to the extent that the market's bounce back has been so sharp that, and these obviously have bounced back, they're not far at all from all-time highs, that creates a level of risk. However,
do not buy Gucci belts and Yeezys. Stop that.
I'm too excited about the V
pointless.
And it's not a V, it's some other letter. Then I think they will outperform. Will they go down in that?
One
tape?
person
Yes,
got
they
knocked
will.
out. Ladder, baby, ladder.
Some of the growthier ones, certainly than the airlines and the restaurants and the hotels.
Guy down me quickly. Is this going to be a sell the news sort of event, or earnings being the news?
Could happen with Amazon. Oh, apologize. Sorry, Mel. It could happen tomorrow with Amazon. So one thing I've said for the last couple of weeks, and I guarantee I'm going to get fricasseed for this if I'm wrong, because that's typically what happens. But I said you own Amazon into earnings tomorrow, probably make a new all-time high, then you pull the ripcord ahead. I do think there's a chance that Amazon, the one that, although earnings will be good, will disappoint in terms of stock performance. Think about the move that's
Amazon and not Tesla? That doesn't make sense to me.
I think there's a real good chance that you see Amazon trade back to the previous all-time high of 2170. So I think
they're the biggest company. These companies are recession-proof, and they're the biggest companies in the market. How do we ever go into a recession? I have no idea.
The company posted surprise profit. Gene Munster's back with us. Why he is calling this quarter a blowout. And later, we're getting you ready for tomorrow's big report from Apple. Why options traders think there might be some pain ahead for the iPhone maker.
Great. Now somebody's gonna come on CNBC and pump this shit. My puts are fucked. Dude, so fucked. Could I have traded it? Like, let me out. Could I have been trading this the whole time? Can I just get out now? Look, now it says $200 negative. How do I just get out? Like, I will happily just take the loss. Can I make it after hours? Why did it update how much I lost then? This didn't get updated. How are these moving? They're moving right now.
Welcome back to Fast Money. We've got an earnings alert on Tesla. The stock is surging, hitting after-hours highs after reporting a surprise profit for the quarter. Phil LeBeau's got all the details.
Give me my money.
It is a nice move, Melissa, and when you look at the earnings report, remember the expectation, and they're all over the place with Tesla. It's still not one of those stocks you look at and say, yeah, this is pretty much what people are expecting. People were expecting them to lose 36 cents a share. They ended up earning a profit of $1.24 a share. No change in the production guidance from Tesla. This is all about what they're planning to do in terms of deliveries this year. And I know there are people who sit there and say, well, they haven't changed their guidance in delivery, so that's good news. There was simply no mention of this. Not a reiteration that they plan to deliver at least 500,000 vehicles. They did deliver 88,496 vehicles in Q1. By the way, that was...
I don't understand what's happening here.
Reported deliveries at the end of March Q1 delivery, so we were not...
How are these moving?
There, a few people had 89,000. A couple other numbers.
How is this moving right now?
Cash on hand. Remember, they had the capital raise in the quarter. $8.1 billion.
Help me, oven mitts. Somebody help me. Does anybody know what's happening? What is happening?
A few people are also talking about the fact that the free cash flow was negative $895 million. And one last note, guys, has to do with the Tesla semi-truck. First deliveries, which were scheduled to begin at the end of this year, not going to happen. They're going to push that out till 2021. I know that guy was hoping to see one of these bad boys out on the road, driving all over the place in New Jersey, but that is not going to be the case for some time. Those deliveries.
What is happening?
2021. Melissa, back to you.
Phil, thank you. Phil LeBeau in Chicago with the latest on Tesla and this move at this point, Guy. Guy, can you wrap your head around why the stock is up 10% on this report?
Can I wrap my head around it, given this environment?
Can you think of why?
No, I think because, you know, with the fact that they're actually making money now, I mean, their cash flow is better. I mean, it's incredible the seemingly turnaround out of nowhere that they've pulled off. Full disclosure, and I think people watching know absolutely. I mean, I couldn't have been more wrong with this stock for the last, I don't know, $400, $500 or so. You know, I got it up to 320, but up to 900. That's completely out of my bailiwick.
Should I call support?
I mean, people have cut them slack, and now they're sort of delivering on the back end. So good for Tesla, bad for me.
It's about $90 below.
Should I call the support line and see what the fuck is happening?
How would you think about Tesla? And I know you've got calls in a competitor.
That's really not a bad idea. Like, I'm fucking curious. What is going on?
Yes. You know, the interesting part about this name is I've been very lucky a couple of times, only because the options world has actually dragged me in there. Because, like Guy, I look at this stock and you look at it and you have a really hard time breaking it down. How do you actually analyze it? But I think the one thing that's helped me out a little bit over the years, and actually thanks to Gene Munster, years ago he and I were talking about this stock, and one of the things that stuck out for me, and I've used this ever since in terms of my description of Tesla, is it's a tech company. It's not a car company. Now, everybody will push back and say, hey, well, why do you care about how many got delivered and all the rest of that? I get all of that. But when I look at this the way I look at Apple and the iPhone, and that's the hardware. And then on
I'm sorry, I'm muted. It's like trading right now.
They've got the expensive version, they've got the cheaper version. They've got all of this technology with the battery and all the data that they've collected. And when you get in there, you're literally sitting in a computer as you're driving. So for that reason, I continue to look at it more as a tech name. That's helped me out because there have been times where I've been able to be bullish on this name, despite the fact that I realize that their market cap is significantly different and significantly better than GM, than Ford, than some of their competition that's out there in the auto industry.
I get that argument on paper, but when you really think about it, the difference is that Apple makes money off of services. Tesla doesn't make money per se off an over-the-air update to its software in a car that it has sold.
Right. You're exactly right on that perspective. But think about how long it took before Apple actually started getting into the services, then got into the wearables and all the rest of that. There might be something more to come, I think, in Tesla. But for now, I agree with you, Mel. And it's hard to really you try to break down this stock in so many different ways, but that's been the only way that's actually helped me out, because there have been times when I've been able to be bullish on this stock. Right now, I haven't touched the stock probably at least 200 points, but I had a couple of runs on the way up here that I was happy with. But it's so hard to get your arms around what this company really is.
Maybe Gene will help us. Root Ventures' Gene Munster joined us again. Gene, what's your take on this 9% move? And if you take a look at the chart, it is a V-shaped recovery for Tesla stock.
We're all in.
Melissa, I think it's actually going to be going higher. It's $160 billion
King or queen?
market cap.
King or queen? King or queen?
Mobility and transportation, despite all of its issues around
$18 for us.
Everything that people can point to as the negatives on Tesla, I think that this company is fundamentally changing how people move around. I want to enumerate why I believe that the stock is up. There are three basic takeaways. First, free cash flow was negative, much worse than people had expected, but that was because of channel inventory build. Basically, they weren't able to deliver at the end of the quarter. That's understandable, so you give them a pass. The second is they basically cashed in a bunch of EV tax credits. These are essentially other automotive companies that aren't producing enough electrical vehicles have to basically pay Tesla to get through regulatory hoops. And those tax credits triggered a profit in the quarter. This is the fourth consecutive quarter with a profit, which is one of the hurdles to be inducted into the S&P 500. It is likely that they will be added to that. I think that is in part moving the stock. And then the third thing is some encrypted language around deliveries and production. There is a distinction between actually reiterating their delivery guidance and saying that they can produce enough to deliver. Those are very different comments. But I think what one can take away is the street's at 403,000 deliveries for the year. Many have thought that that was in jeopardy given everything that's going on. But my sense is now that they will probably fall short of that original 500,000, but comfortably exceed that.
That's crazy.
403,000.
Well, it's definitely moving in value.
And think about the future of Tesla.
It says I'm negative $209.23. Now it says 208.66. Now it went back to 209.34. Now it's 212.23. The option's trading at $2.57.579 right now. It keeps moving. It's moving around. Now it's 2.512.
One last question, Gene, because you mentioned the credits. And
Yep, May 15th, the 565 put contract.
Recurring. That's not recurring. It's sort of a one-off thing.
2.607 now, it says is the mark. 2.499, 2.522. 2.525.
By the end of the year, how high would that probability be?
Are you on the website or Thinkorswim?
I'm on Thinkorswim.
Desktop or mobile?
Desktop.
Yeah, that's weird.
All right, Gene, thank you. Always great to get you on.
Strike put, May 15th.
Gene Munster of Loose
Mine's
Ventures.
completely still.
Is that a reason to buy the stock?
What?
Guy?
Yeah, I don't know what. Mine's completely still. Bid of 390.
Clearly the reason to buy the stock was years
Dude,
ago.
do you have access to the web?
Short Hills Mall,
Go to twitch.tv/Randcorp and you can literally see it live.
Yeah. Good times.
Oh, okay, but you're not seeing it live on your Thinkorswim?
No, I'm streaming live. You can see me physically and my desktop.
When it comes to Tesla.
Oh, okay.
If you can long the
But
stock,
it's not
God bless you.
Like
See
your
what happens at
Thinkorswim
all-time
showing it move.
highs.
It's that other website.
No, Thinkorswim is showing it moving.
You just can't get in the
I'm telling you, if you go to twitch.tv/Randcorp, I'm live streaming my account and my date. So you can see it. You can see it moving in the Thinkorswim platform. Yeah, it's super weird. I'm like losing money by the second, which is why it's kind of like, well, can I sell?
No. Yeah, that's really strange. Let me see if any of the guys on the trade desk know anything about
The Treasury Secretary also chiming in and saying that it will not be a bailout.
Yeah, no worries, man. I appreciate the help. I'm just curious, you know.
A veiled reference to the ability, potential ability of these companies to access $17 billion in loans with strings attached that are provided by it.
It's like you're losing more money by the second. Sell mine. Take whatever you want. Let me out. Damn, there was a moment where I was only down 200. Like, what? I'm literally losing money as we speak. How's this working? I can't, yeah, it won't let me even do a market order. It won't let me do a market order. It won't let you do a market order. There's an order. I have an order out for market. Sell. Yet the price is fluctuating. Look at this price fluctuating. Can you go outside? 1 second. Yeah.
I gotcha. So the options there are times where we will shut off the calculations using normal time value and volatility on an option. So it will move dollar for dollar on the stock. We will only do this during earnings normally when big movers like Tesla, Amazon, even Apple and Facebook sometimes. We'll only do it for them so that you have an idea of when the stock moves up or down in the extended hours of where your options are at. They're not actually trading. It's just going to adjust based specifically off of the dollar for dollar movement of the stock.
Okay, so that's just like a projected estimate of what my losses will be at where the price is right now.
Right, exactly. We do that so you have an idea because these things moving so much in the after hours, there's so much that can happen. You have up to an hour and a half to exercise contracts after the market closes. So on days like this with earnings, we shut it off so, like you said, you have kind of an estimate of where you'd be sitting at.
So wait, but I could, you can, wait, can I, what do you mean? You have an hour and a half after market, can you sell them or no?
Not sell them.
You can just exercise them.
Correct.
Okay. Yeah, no worries. Okay, that's good to know. I was just curious.
Yeah, no, absolutely. It doesn't happen too often, but, something like Tesla on earnings, I bet you next earnings you'll probably see the same thing.
Okay, all right. I appreciate it.
Yeah, not a problem. Anything else I can help with today, David?
That's all.
Awesome. Well, I appreciate you calling in, and if you need us for anything else, you give us a call anytime, okay?
Thank you. Have a good one.
All right. Thanks, sir. You too.
Easy peasy, easy peasy. All right, hold on. All right, guys, I got to how to roll. I got some things I get to do. Who do we ship it to? I'm gonna ship it to Loan Car, dude. Dude, give Loan Car some love in the chat. We will see you guys tomorrow. It was fun. Peace.